but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Thursday to you both.
Hello.
Hello.
Hola.
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 No, at least this morning we don't have any stocks that are up 100 points.
Hooray.
Check.
Any stocks that we sold calls on.
There we go.
There you go.
There we go.
What a crazy day yesterday. Oh, my goodness.
It was a crazy day yesterday in a very nondescript day. Like it's business as usual. Every day is the 15 to 20 handle move. And inside those moves, you've got these runaway trains like we had yesterday and many other days. So
Yeah.
kind of crazy.
Yesterday
You
was
called the stock pickers market. Very old saying. I'm surprised you used it, but with your age, I understand. But yes, you were correct. It was a good way to describe it.
Did you get your laptop, more importantly?
I did.
Oh, that's nice.
I waited all day.
Thank you, American.
What time did they come?
American sent it? Delta?
3:12.
So you could have come to work. So you could have been here.
But how do I know that?
No, I'm just...
Everything stopped because you had to.
They
Right,
left
you're
it
wrong.
outside. They didn't even require signature.
Wow.
Wow.
Risky.
So anyway, got the laptop. I'm back.
Next time you need to deliver it to my house because we can leave stuff on my porch. It's okay. It's
Okay,
no
sorry, I
problem.
got it.
Nothing. You know, in the shitty where you live, you have problems. You can't do that.
I have my laptop. That's
Yay! Is that courtesy of American Airlines? Was it Delta? Was it
United.
Oh, United's customer service is actually top notch. You can't complain about it. It was your fault that you left your laptop.
They did a good job.
Yeah.
They have a whole policy. You know, they have a plan.
They have a plan, yes.
They do, because guess I'm not the first person to leave a.
You are not. You are not the first corporate
do is
diva
pay.
that they've had.
All you have to do is pay shipping.
Yeah. That's not bad.
Not bad.
So are you going out tonight or you're not?
I have a 6 a.m. flight tomorrow morning. I have to head to the airport at 4.
Oh,
Don't
yeah.
worry, Nick Batista's going to be with me. We're going to have a wonderful show, Vanetta. It's going to be awesome.
Wait, does that mean I have to come in tomorrow?
Game day decision. We'll see how you.
But I'm doing a show in New York City tomorrow.
Yes.
So I have a 6 a.m. flight to get there in time. So the answer is, I don't think I'm going out too late tonight.
Yeah, that's probably for the best.
Yeah. There's Thursday Night Football start yet?
Yeah, there's Thursday Night Football, yeah.
All right.
I don't know who plays,
I
but
didn't look yet.
yeah.
But yeah, I doubt it. But I have meetings up until 5 o'clock tonight. So,
Uh-oh.
ruh-roh.
Are you packing something nicer than a t-shirt to wear to New York City?
So funny. I'm doing this conference, and it's like a fireside chat. And I probably send everybody, but I don't know if they send it to, I don't know. But to me, they send emails with whatever their dress code is.
See, that's nice.
Did they send you a dress code?
They send me a dress code.
And how was the dress code received by your team?
I deleted it.
So you're so it's don't ask, don't tell. Are we back to that?
We're not back to anything. I don't abide by anybody's dress code.
He's like the dude.
Did you take a look at what? You must have glanced at it.
Those are just like your rules, man.
It's like we were in Mexico and every single person had a black suit on. We were like, looking around this room, every single person has a black suit on.
Sure.
And I was like, there's like, a lot of people in the room and everybody's got a black suit on. I'm like, I missed the black suit memo. I guess I missed the black suit.
Do you own a black suit?
He probably has one wadded.
I don't think he does. Not that fits him.
The tuxedo?
Yeah.
For Case's wedding. That's
Yeah.
all I have.
Yeah.
Okay, wow. That's a little overdressed. But you should abide by the rules so you could get more opportunities like that. Okay, never mind.
Please.
All right, well,
Okay.
that's fine.
Not abiding by anybody's.
Okay. All right, well.
Not you.
I am straight out opposed to the stupidity of dress codes.
Okay, okay. Well, good luck with that.
Good luck with that. Is
Try
right.
to get into Louboutin. Not Louboutin. No, what's the one in New York?
Oh,
11
Le
Madison.
Bernardin.
Oh, Le Bernardin.
Le
Bernardin.
Bernardin. Oh, wow.
Yes, you're gonna make some old-time viewers of Tasty Live very happy.
So when we went to years ago I went to Le
But
Bernardin.
you got a Carbone.
Years ago, Carbone give me where. Years ago I went to Le Bernardin, and when you make the reservation, they say have to be you have to dress a certain way. No jeans, right?
Sure, of course.
So I'm like, I got to bring a stupid pair of pants to go to that restaurant, blah, blah, blah. So then JJ met me there and he's wearing jeans.
Oh, no.
And I'm like, how'd you get in with the jeans? And he's like, what do you mean? They didn't say anything. And I'm like, so I go to the girl. I go, look at this guy.
Yes, but he's still very put together I
go to the mix shop. I'm like, look at this guy. He's in here. He's wearing jeans. And the guy goes, in a French accent, he goes, he slipped by.
JJ's just very put together and not a disruption like whatever this is.
Anyway,
you take a lot of liberties there, but go ahead.
he got in without jeans is my point.
Right,
I mean, he got in with
jeans.
With jeans, yes.
Hard to keep up with him.
Le Bernardine.
I thought there would be other places from TikTok that would be on the top of your list to eat in New York City. I don't know.
I'm not eating in New York City. I don't have time. But
you don't have time to eat at all in New York City.
No.
Maybe a hot dog on the street.
Yeah.
Okay.
But
Green Bay, Washington tonight. That's a good game.
Ooh, that is a good game.
Oh, that is a good game.
Green Bay coming off a decisive
Where's
win
the game?
on a Thursday night.
Where's the game?
In Green Bay.
Interesting.
They like it.
What do you think the line is?
What?
What do you think the line is?
3.5.
Green Bay is.
Give it to the lady in the flowered dress.
I was going to say Green Bay by 3.
Welcome to my world, Vanessa.
Way to carp my market.
Basically means a pick'em game if you give 3 points to the home team advantage.
I love Green Bay laying 3.5
on a Thursday night at home.
See what happens. Things are exciting.
I like the fact
your Monday night dog bear thing didn't work.
It should have.
It did. It really should have.
I like the fact that the Bears. I like the fact that that the league put some home games in Green Bay in September.
As opposed to like February?
Opposed to December.
Yes.
When the Bears play Green Bay, it's the end of December.
Yes.
The frozen tundra for a playoff spot.
Yeah.
The Bears will be like 10-4. I mean, I'm sorry, they'll be 15-1 at that point.
Oh, the
Maybe
Delulu.
14-2. Let's say 14-2.
Well, we're headed to Detroit this weekend. You want to make any pick 'em market there?
Detroit?
Yeah, Ben Johnson back. We're
Where it all began.
Yeah.
I don't know the line. I'm going to say Detroit is, based on the Bears' performance, Detroit's a 5 or 6 point favorite.
Because both teams are 0-1, so somebody's got to.
I don't know the line. Do you?
I would say 5 or 6 points.
I don't know.
If I was making the market, I'd say Detroit's 6 points.
Yeah, I don't.
But it could be 5.
I don't have any intuition on that.
Let's see what the line is.
You tell me it's 3.5, I'm going to be really weird.
Sorry, I didn't get it yet. Looks like it's Lions are favored by 5.5 to 6.
There you go. I said 6.
Wow. Okay.
5.5 to 6. Are we going to talk about what's happening to the Bears?
What's happening to
Probably doesn't know.
I should be.
What, they're coming to Arlington Heights?
They are going to Arlington Heights.
Yeah, but the governor's like, okay, that's fine, but you have to pay what you owe Soldier Field before you can leave. So
they are going to Arlington.
I hope
Heights.
they don't make that.
And it's self-funded.
I hope they don't do that.
You will see. As long.
Buy the McCaskies. You asked yesterday, you're going to pay for it, Bat. I don't have to. They're going to pay for it.
I hope it's not true.
Yeah, I hope that's not true.
But I think they can't get out until 2030.
Yeah, 2035 or something.
2030.
2030.
I don't know.
I think it's 5 more years.
Yeah. I don't know.
2030. Is it true that you and Scott are going to buy Soldier Field?
No, it's not true.
That's
no,
not
it's
true.
not true. No, it's not true.
Because that'd be a cool place that'd be a cool real estate purchase.
Yes, it would be. Yes, it would be. I'm sure it's worth something.
Good lakefront property.
Not a lot of it.
Yeah.
Not a lot of it.
How about you, Bat? What'd you get up to? Would the electrician come?
Electrician came. I think his $1,500 bill is going to be a little bit padded. He was there from 8 to 5, and I got to tell you something. My backyard faces south, and it was an 80-degree day in Chicago. It was 120 degrees inside the sauna. He worked there all from 8 in the morning until 5 at night. He didn't take a break. I asked if I could buy him lunch. He says, I'm fasting. I only eat one time a day, after I'm done with work.
Whoa.
He worked basically through lunch. It's working. It's on. It's good. He's got
So
one.
I just thought it would just be like.
bang
I just want to say one thing. This person, not an American.
Oh no, yeah, no. He actually went to Naperville High School. Yeah, no.
Wow, that's weird.
Yeah. No.
But I thought it would just be like a plug and play sort of thing.
No,
but
you
like,
gotta pull a 220 line.
oh wow,
Yeah,
that's
You
bonkers.
should have them put a 220. You should have them put a 220 thing up there so you can plug your
Tesla in
electric car in. When
your
Back
Cybertruck.
of my house, I have to drive through my yard.
But it's your Cybertruck. You could drive over it.
everything.
Yeah.
I mean,
But-
if you're gonna get a 220, put it in. You might as well just
Put it up to 165 just to see if it would work yesterday. It took about 20 minutes.
to 165.
165 degrees.
What are you, a turkey? That's. Don't you cook
I'm as
turkey?
brown as one.
Don't you cook turkey to
Get up
165?
165?
I think it up to about 190. I think the highest it goes is 175, but with the heat,
I thought, how hot can you handle it? I'm just curious. I don't know.
that's about it. That's about it. It's just
How
how long.
hot is a normal sauna?
About 155
Oh,
degrees.
it is.
Yeah.
I didn't know that.
That's bonkers.
Yeah,
You want to boil your insides? Go right ahead. I guess.
20 minutes?
A little less actually, but it
Does
was
it have a thing on where you can like throw
I
water?
have it remote, so I could. Yeah, and a thing on. You mean a ladle with a bucket of water?
Yeah.
Yes, of course.
You
Yeah.
can make a little steam.
Nouns are not his forte.
Bucket with water.
A thing with the ladle.
A thing with the thing. Yeah.
the thing that you put
with the
water on
thing.
it? You're
with the
funny.
thing. You know that.
You're funny.
That's good. I'm glad it's working
Yes.
though
You
now.
got one little
so-
thing to do. Says take about a half an hour, and he's all done. Can't wait to see the bill. Gonna be good.
Want me to make a mark on the bill? I'm a market maker.
Sure.
Just be careful. There's not a way, like on the front of it, that your wife could just stick like a wooden spoon in there and just be like,
No, the door opens out.
okay.
It opens out,
I'm
yeah.
just checking for your safety because,
Thank
like,
you, thank
you
you, I
say something
appreciate
like you
that.
pop off and you think you're being
If it
clever.
opens in, I didn't think about that, but
Yeah.
it does open out, so I'm good.
Listen, I listen to 20,000 minutes worth of true crime every year.
That's
Yeah, you should have an escape hatch on the back or something.
Yeah.
But yeah, my market on your thing actually is going to be better than you think. It's like I'm going to say it's going to be. I'm going to go 23, 24.
Yeah, I'd be happy with that. I just hope you're my electrician. We'll see.
Yeah.
Good day.
That's good.
I'm all good. So, want to come over, get naked with me?
Hey.
Go anywhere near your sauna for any reason.
Come on. I got a nice hat from you. A viewer gave me one, and I actually have
I
other
just
ones
wanna
too. But a
know,
viewer
how
gave
are
me
you
one
gonna run from
in
inside
California.
The house? How are you going to run from inside the house?
Robe.
Yeah, he's got a robe
Oh,
and like slippers, slides, and then you just hang the
What'd you
robe
think?
up.
What'd you think?
I'm just asking.
You think I was just gonna free ball it out there?
Oh, hey, no. Nobody
Omaha.
wants that. Nope.
Let it flap in the wind
no,
kind of
no.
thing, and whoa!
I'm not sure how much flapping there is, but yeah.
No. No.
Is that what you
No.
thought?
No.
Is
Oh,
that-
that delusion. That delusion. No.
I did think you're going to make the mad dash. I don't think you're going to go get a robe. There's no
Yeah,
question.
robe. I already bought one. I brought a few of them. Dude robes, they're called.
Dude robes?
Yes.
I'm sorry, how are robes gendered?
Yeah, no, they are now. So they're a little bit shorter. They have like a tighter sleeve.
Why?
There is
they're
nothing
big.
worse than a dude in a robe.
What'd she say?
Nothing.
Don't worry
Dude
about it.
robe. Look it up. You can.
So it's shorter and tighter? I mean, you do.
Pockets, different places. You'll love it. It's
I don't-
great.
I don't
Dude robe.
judge.
Check it out. Just
I
ladies and gentlemen,
don't.
get one. Very good.
I don't want to get my computer
Watch.
confiscated by Lester because what you're describing sounds.
Like Halsted Street.
Yeah. I was trying to find a nice way to say that. Again, I
Dude
don't
robe.
judge.
Check it out.
Okay,
Very
great.
good. Bat recommended.
All right, this segment brought
I'm
to
not
you
getting anything off for recommending them.
by dude ropes. Hey, we got a great show for you. I literally don't know how to pivot out of this, so I'm just going to go full speed ahead. At the top of the 8 o'clock hour on this thrilling Thursday here at Tasty Live, we have trades from the research team. The world's greatest financial think tank presents their trade ideas to Tom and Bat. Are you guys excited?
Yes.
Do you have a favorite researcher?
Do I have a favorite researcher?
Yeah.
Like
you guys gotta play favorites.
Tom, as your consigliere, you should not answer this question. Plead the fifth.
I didn't ask
I
who
would
it was.
plead
I
the
just
fifth.
asked if you had a favorite.
No, I love all my children the same.
Okay, but you can't though, right? Like again, I don't know. I'm an only child.
Nobody.
So
does.
I don't know. Like you can't love your children equally.
You're right.
Right.
I mean, everybody's got.
Why can't you love your children?
No, I'm just saying it's just I don't know that's possible.
I mean, they're all overrated. So it doesn't matter.
Like your children.
Wow.
Yeah.
Wow. Okay.
Oh, everybody's kids are overrated.
Well, the overrated research team is coming in at 8:00 a.m. Then at 8:40, we got Hear Me Out, Dylan Radigan in the house.
In about 2 seconds, I will get a thanks, Dad.
Dylan Radigan in the house. No, because your kid's favorite is their mom. They don't watch the show. Dylan's going to be on at 8:40. What are you going to talk about with Dylan today?
We have.
You're percolating.
It's a Hear Me Out. We have a bunch of questions that we're going to fire off at Dylan Radigan. We're going to get his perspective on what's happening around the world right now.
Great. That is wonderful. And then 9:00 for market measures, part of our Zero DTE series, being directional with Zero DTEs. Gonna look at that.
Yes.
That's at 9 a.m.
It's a compliment to what the ladies did yesterday on the SIBO.
Very nice. And then we got live from the trade desk. Scott Sheridan is gracing us with his presence today. That's going to be at around 9:30. So counting down the top trending tickers over at Tasty Trade. So good stuff all around.
Yes. I'll be on around 9:30.
Yeah. Also tomorrow is hashtag Fan Friday. So the Bats will be holding it down. So if you have a trade idea for the Bats that you would like them to execute, we would love to hear from you. You can
make it risky too, because I'm using Tom's account.
Oh yeah.
I want
No, you're
to
not.
bang him out. Bang him out.
No, you're not.
Oh
Yep.
yeah.
Yep.
Get in there. Do you want your daily dose? I got a lot of news.
Sure.
Hit me with my theme music. Let's go.
Our leading story, breaking news, coming
news.
across the wire. Our leading story, top story, just in.
In today's headlines.
This just in.
Breaking news.
All right, everybody. Today is Thursday. It is September the 11th. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Ready for the news.
Earnings, Mr. Bat.
Adobe.
Yeah,
ADBE. IV rank of 98 on its butt. Sosnoff, what are you thinking? On surface, sounds pretty good. $350 stock. It is up $6 already this morning.
Oh, wow.
It does have a $34 expected move. Just looking at October markets, they're about 50 or 60 cents wide.
A little
bit
there.
wide. Maybe something with defined risk.
I had an iron condor in a couple days ago. I closed it in there just because I knew I wasn't going to be here tomorrow morning. So it's hard. I don't know if I'm going to trade it because I'm going to be on an airplane.
that makes sense.
But my concern in Adobe is the downside. Stock's been a pig.
Okay, and
So
it's
you're
in that
going with
AI
the trend here.
I am.
Okay.
trend is your
But
friend.
I said my concern is the downside. I also said I'm not trading it because
Because you're gonna be on a plane, you're scared. Don't worry about it. Nicking out though.
And it's considered like an AI play, so interesting things.
Oh,
Hey,
can I tell you something?
I cannot stop you.
You know, it's
Go ahead.
tonight after the close, so you're not gonna be on a plane. Well, you'll be on a plane in the morning.
Yeah, I can't trade the opening.
I'll take care of it for you.
I'd rather let Steve butcher it.
Wow.
So Steve is a foregone conclusion that he's gonna butcher it,
100%.
but having me do it, I am capable of butchering it more. Like Steve, you know your issue is basically just the opening, go bang you out.
Here's all my problems. Steve's just going to butcher it. Scott's going to forget about it. And you, I'm not sure.
I would forget about it. That's 100% correct.
And I'm not sure, like,
Where my head is?
yeah, it depends. If you're mad at me after today, I got to be careful.
Can I get to my first headline? Oh, no.
because I want to tell you something.
Okay, go ahead.
So, we answer a gazillion emails. That's what we do.
Yes.
So this morning, I got 2 emails. I didn't get them this morning. I got them overnight.
Uh-huh.
I got 2 emails overnight that I didn't know the answer to.
Okay.
Impossible. What was it about?
It is the first time that's one of the first times that's ever happened to me in answering a
Okay, false, but go ahead. Yeah.
because they were questions on tokenization and the processes behind the mechanics of how they're processed and things like that.
Right.
I'm not sure where the questions came out of because I got 2
Okay.
different people.
So where's this going?
I used AI.
Oh, interesting. And did ChatGPT know the answer?
I have never, okay, and I want to say this. I've never answered a gazillion emails.
Yes.
Never used AI or ChatGPT, whatever you want to say.
Right.
Mostly Google. It's not ChatGPT.
Sure.
I've never used AI to help me answer a question.
Okay.
They're all trading questions.
Sure.
But this morning, they were really tough questions about crypto mining and things like that.
Yeah.
That I didn't know, like,
Sure.
the inner workings of.
Sure, of course. That's valid, reasonable.
Yeah. And I wrote to the person, I said, I had to use AI to get this answer. And so I just wanted to go on record saying no jobs were lost in the process.
Okay.
Okay. I mean, I'm just saying you can use AI without,
Sure.
jobs or anything.
Can I get to my news, please?
Okay. So I use.
Do you want a parade? I don't know what the proportionate response is here. Hey, getting to the first headline, because we have a number coming out. August CPI will be the most crucial data for stock market investors this week. A stronger than expected inflation report may cause investors to recalibrate their expectations. What are you looking at based on what happened yesterday with PPI?
I've never.
If PPI, if that's the, and I wish Ilya was here right now so he could debate me, but if that was the effect of PPI, nothing happened.
Right.
Business as usual.
Right.
I mean,
And I have never tried to guess a CPI or PPI number in my entire life.
Sure. No, I know that you're just guessing, but I didn't know like what you thought of the move yesterday and what the
I would think that today.
tape action yesterday.
I would think that today will be the opposite of whatever yesterday. So what did they actually do on the number yesterday? Were they up small?
yeah, I mean, it was a non-event.
Yeah, I know.
One
It's
way
up
or the
small.
other.
Okay.
They're up small yesterday. I think they'll be down small today on it.
What are you guys doing in bonds?
Bonds 117.14, down 8 ticks right now, but at near its highs. I mean, recent highs.
Yeah, and we have no bond position. We covered.
Okay.
I mean, I shouldn't say we covered. We sold out our longs.
Hey, this is interesting. Companies that accumulate and hoard Bitcoin and other cryptocurrencies have suffered sharp drops in their share prices as the crypto mania that has gripped investors for much of the year recedes. I think that this is interesting. The number of companies, now I think it's over like 65 companies now that are digital asset treasury companies. And I was just surprised, 61 publicly listed companies that are they're not primarily engaged in digital assets, but they adopted Bitcoin treasury strategies. So it's 61 companies. I didn't know that. That's the point I wanted to get across. And then investors are now retreating from those companies. So it's not just MicroStrategies. But I thought it was only, half a dozen companies, but it's 61 companies that are doing this.
Yeah, and there was new people every day, and some of them, like there was some crazy stock Tony showed me the other day that was up like
8,000% and
it went from
Yeah.
like
6,000% or
That was their.
something.
By the way, that was their model too.
What's
Yeah.
They had that was their model. They just did a convertible bond to buy
Right.
crypto assets.
Right. Yep.
I just thought that was interesting. Hey, in other crypto news, the SEC is punting on BlackRock Ethereum ETF staking and Franklin XRP and Solana fund decisions. The SEC has delayed their decisions on the addition of staking to BlackRock iShares Spot Ethereum ETF and on a Franklin Templeton proposal for separate funds tracking the performance of Solana and XRP. What are your thoughts?
What are your thoughts?
When you say the SEC punts,
Yes.
I'm not sure what.
So they're delayed. It was like they didn't make a call, no call. So they're just
They tabled it.
yes. Okay.
Punting.
That-
Punting on it's different.
Okay.
The SEC tabled.
I'm sorry, the Yahoo Finance author doesn't know his sports analogies. I did not write this headline.
So when you punt on something, it means
Sure.
you're getting rid of it.
Okay.
But
Well.
when you table it, it means you just delay it.
Okay.
So what they did is they.
That's like saying, honey, actually when your wife is talking to you,
Right.
comes up with a great thing for you to do, but it's going to take probably most of your weekend.
Sure.
You say that's an excellent
But
idea.
if you
Let me
punt,
look into
but if
it.
you punt on
That's a
something
tease.
though, you'll get the ball back after the next team's fourth set of down. So that's
Where
not
is
like
this ball? I've been
it's
hearing
not. No,
about
it's
this
not.
ball
It's
in
not going
business.
away forever. No, so punting works. I'm going to push back. Punting works because when you punt the ball, it's not like your team never takes the field again. You just punt it for now.
You could punt
and
on
you
first
get
down.
you get another set. One.
I'm sorry, counselor. I reject that argument.
This is why she was a debater. This is why
Yeah.
I got a full
care.
rep.
Nationally ranked.
You would lose this debate.
Let's talk about then just an Ethereum ETF staking.
You know,
A staking ETF. Sorry.
it doesn't surprise me because I think that there's right now all the crypto regulations are being rewritten.
Yeah.
And so I think this makes sense that they table it for a little bit.
What are you doing in Ethereum? And we'll also talk about Bitcoin and.
I mean, we're just long it.
Okay.
You know, we've been sitting it, but I don't really trade it. I bought it, 6 months ago, a year ago. I'm just holding it.
All right. Getting to some other news, Klarna's stock jumped 15% in its New York Stock Exchange debut after pricing their IPO above the range. Klarna opened at $52 after pricing the IPO above the company's expected range. The IPO is the latest in a growing list of high-profile tech listings this year, including Circle and Figma, now valuing the company, I think, at around $17 billion. Let's talk
I can guarantee you the insiders at Klarna right now are saying, please just stay up here for 6 months.
Yeah, well, good luck.
Yeah.
Yeah, they're valued at $17.3 billion, so not too shabby.
Yeah, I'm sure insiders could not sell, but who knows?
Who knows? I don't know if you're doing anything in a firm or.
Well, it actually closed. Didn't it close at like $46 or something? I don't remember.
A firm.
No, not a firm. Klarna.
It did drop, yes.
Yeah, a firm is $85 up small. What do you want? Klarna was that?
KLAR.
Thank you.
You're welcome.
You're right. So it's 45. Well, it closed at 46 and change. It's $45 this morning. Looks like down 50 cents or so.
All right.
Opened at 40, I believe.
Also, breaking news: ECB bank, the European Central Bank, is leaving rates unchanged. So, huzzah!
Well, there you go. Much ado about nothing. Even the S&P's up 12. Bonds
That will not change.
down 10. I know.
In a bonkers move, OpenAI and Oracle announced they're now signing a $300 billion computing deal. At first, it was just like $10 billion, and then yesterday that number was like $300 billion over roughly 5 years. The move in Oracle. It's the biggest day in Oracle since 1992. The stock gained 36%. It added $244 billion in value. One point briefly, Larry Ellison was the richest man in the world. Now he's around like $1 billion behind Elon Musk. How do you describe this move in Oracle?
Bullshit.
Up $5 more this morning, 333.
Total unadulterated
It traded as high as
bullshit.
345 yesterday.
Hated that move. Cost me
Hated it.
a lot of money. I hate Oracle. I hate Larry Ellison. I hate everything about that company right now.
So Oracle
I've
is
always
now
hated Oracle.
Almost $1 trillion company.
Always hated those guys.
Okay, well,
And they were $9. I hated that company.
I never liked them.
that's
liked
crazy.
Those. Never liked. They were the most. I've told you my Oracle stories, but they're the worst company to have to deal with. They have good software,
Sure.
so I don't want to take that away from them. But dealing with them and their support contracts,
The worst.
the worst. They basically you have to sign your children away to get a support deal with them.
That's okay. You didn't want them anyway. Hey, but also on this news, NVIDIA, Broadcom, TSMC, and other AI names rallied yesterday just because a rising tide lifts all ships. Let's talk about some of these other chip stocks. Broadcom, NVIDIA?
Hated it.
Hated it.
No, but what are you doing in there?
Nvidia, nothing.
Okay.
Side ranks, TSMC, nothing.
Okay.
And AVGO,
Did you ever think you'd get a chance to sell even the S&Ps again in the 50 handle?
no, 54. I didn't think so. Yeah, I'm selling them right now. I'm waiting to 1 minute before the number comes out so I can just,
Have some pain?
yeah, I just want to be a little bit off.
Well, you are a little bit off.
I was going to say that already. You're a little bit off. You want to be a lot off, is
Yeah.
what I'm saying.
I just want to have a little fun here, just for.
I know. You want to get the juices flowing. Last night you got
juices
turned
flowing.
down. I know what you're talking about.
Yeah.
Gross.
Selling them at 54. Big deal.
Big deal.
Where are they going to go?
So what? Who cares?
This is my number right here 54, 55, 53.
No whammy, no whammy.
Let's see. You got 6 seconds. 5, 4, 3, 2, 1.
Even the S&Ps up 15 at the moment. Bonds are down 7. Even the S&Ps are up $1,
Oh, no.
down 2.
All right. I just scalped them.
Bonds down 13. Good cover on you, Sound off at 37 even. Low is 35.
Sold them at 54 and 50. Sold them at 54. Bought them at 37.
That's correct.
Now they're 50 again. At 37, I might as just scoopy the bottom.
I was going to say the low is 35 and a half, but you interrupted me.
Oh,
Now that's trading, okay?
okay.
Now they're
You're back, boss.
now they're right back to 52.
You're back.
CPI came in at 2.9%. Core CPI 3.1%.
Bonds just down 13, unchanged.
Bonds completely unchanged. SPOO's back to 55.
Correct.
But I had that 1 second there.
You.
People say, how long do you hold your positions for? About 12 seconds.
I can give you exactly. It was about
12 seconds.
47 seconds
Oh,
from your last sale to your
47
cover.
seconds.
Yep.
it's not bad.
Yep. About, give or take.
That's like bat timing.
No, I want to leave. I don't want to be here.
It was actually 38 seconds, and
That's
is
got your
a
number.
record for a Saturday night for the bat.
It's got your number written all over it.
I don't want to talk about your juices. I don't want to talk about how many seconds you guys can last. I don't want to be here. CoreWeave stock has surged 38% in 4 days. The AI play is benefiting from surging cloud computing demand. I mentioned some of the other chip stocks, but CoreWeave stock surged over 20% yesterday alone.
Yeah, I saw it. Crazy. And
Up another 2 points this morning, 119.
it needs to be sold here, but let me just say a couple things.
Okay, break it down.
It's not a great stock to trade.
Okay,
The markets are kind of wide.
okay.
You have to have a very strong opinion in CoreWeave.
And do you?
No,
Oh, okay.
no. It's
Yeah, you're right. Markets are 50 cents wide in there.
That's if you're lucky.
Why are the markets so wide in
Because the
there?
stock moves, it's moved 38% in 3 days. That's why.
Okay,
I mean,
all right.
right,
Don't
yeah.
yell at me because of the move in CoreWeave.
It was a good question.
Like I didn't.
I liked it. It was-
I didn't do anything.
What I'm trying to explain to you
Okay.
is that if a stock can move 38% in 3 days,
Yeah,
your markets don't really matter that. You're not going to make a tight market in there.
I gotcha. That makes sense. Well, hey, wrapping up all my chippy news, ARM is announcing they are launching a new generation of mobile chip designs that is, of course, geared towards AI. Their next generation set of chip designs is called Lumex, and it is optimized for AI to run on mobile devices such as smartphones and watches. What about ARM?
ARM. What do you think
Do
about
not really
ARM?
trade ARM very much. It's another stock with fairly wide markets, but it's not my favorite of the AI stocks.
Okay.
Just because it's
I just wanted to bring it up because we really don't talk about it.
You're
so.
right.
It looks unchanged. Maybe
Okay.
Down nickel, but you're right. It had a good day yesterday.
just missed selling those things. It was off by $2. Could have got them off at 60.
Could have been somebody.
Perplexity, the AI startup, has secured commitments from investors for $200 million in a new round of funding that values the AI startup at $20 billion. I've been doing stories like this all week long.
Can I
The
tell you
numbers are
something?
crazy.
Can I tell you something crazy about Perplexity? I don't know the difference between Perplexity and some other.
And Claude and Gemini and GPT
Exactly.
and yeah,
But-
Anthropic and
but-
sure.
I don't care for the name Claude or Gemini or any of that stuff. Perplexity is the best name of all.
Yeah, but have you ever tried to type out the word perplexity
Never once.
with your fat sausage fingers?
Perplexity.
Yeah, okay.
I
Hey,
like
in other news, Meta and TikTok have won a challenge against EU tech fees, forcing regulators to recalculate. They won the legal challenge to the way EU regulators calculated a supervisory fee imposed on them under landmark tech rules. Meta and TikTok say, of course, they will continue to appeal the rules and decisions. The EU, just more stringent than we are over here on the data and the technology and things that tech companies can use. So,
If the company's not based there, it's easy to be stringent.
sure. Yeah, well,
They don't have any tax. It's limited tax revenue from
Sure.
those companies. I mean, it's just a money grab.
what are you doing in Meta? You can't trade TikTok.
Nothing. We may be a little tiny bit shorted.
Oh, do you want to look it up?
I'm looking right now.
Okay.
Look at my deltas. I'm a little tiny bit shorted.
What's Meta doing?
Up a little tiny bit, about $1.50 or so.
Okay, how's the IV in there?
Changed. IV rank is 6.
Ugh,
Yeah.
gross. Hey, Amazon. Yes, that Amazon is developing consumer AR glasses that would rival Meta. They're developing the AR glasses for consumers. They are intentionally codenamed Jayhawk. No, will include microphones, speakers, and a camera and a full color display. Amazon's aiming to roll out the product to consumers late 2026, early 2027.
We own that name, by the way.
Jayhawk?
Yeah, it used to be Jules' nickname back in the day.
I have so many questions. What is a jay? It's a bird, right?
I think the Kansas are the Jayhawks.
Right, but I didn't it's a bird though, right?
Yeah,
Yeah, but I think they were doing a Jayhawk, not J-A-Y Hawk.
No, their code name is Jay Hawk. Jayhawk.
No,
I'm
that's a
literally
bird.
looking at it.
That's a bird.
Yeah. Why was Jules' nickname Jayhawk though?
Because he liked the nickname Hawk. First of his Jules.
Oh, Jayhawk. Oh, I see. Okay.
But I didn't realize that they were spelling it like the Kansas mascot.
Yes, they are. Yes.
Nikki Bat is a Kansas alum.
He is a Kansas
Yes,
alum.
yep.
What are you doing in Amazon?
What are you doing in Amazon, Saz?
Nothing.
Okay.
You're a barrel of
I'm a
fun.
barrel.
Amazon up $1, $2.31.
Well, I'm trying to find you a trade for your
Amazon
podcast.
was down yesterday. And
Yeah.
you
Amazon was
can't
down.
eat-
Apple
eat
was
IV
down
right.
yesterday. They're both up a little bit today.
This is funny. A U.S. Democratic Senator Ron Wyden requested the FTC to investigate and hold Microsoft responsible for its role in a string of high-profile cybersecurity incidents. He says Microsoft's gross cybersecurity negligence has resulted in ransomware attacks against critical infrastructure. He said at this point, Microsoft has become an arsonist selling firefighting services to their victims.
Wow.
There's a little. That's a tough thing because I don't know the specific case, but that's a really good.
Everyone hates Microsoft,
That's a really
though.
good analogy.
It is. And if you've ever had to, in a corporate capacity, use Teams or use Outlook or use anything or OneDrive, you also would want them investigated by the government.
Doesn't it feel
Microsoft
like Outlook-
deserves federal
Doesn't
prison.
it feel like Outlook is 100 years old?
Yeah,
Yeah.
1990s.
Yeah.
You ever try to search your own emails and it's like, no, we don't have it. And I'm like, I know that.
I know.
What are you doing at Microsoft?
Feels like I can't believe nobody's updated that.
I agree with you. It's still $500 stock, but unchanged basically.
Yeah.
With the market, even the S&P's up 4, volatility in by 11.
And Teams drives me crazy.
Hey,
Mine's up 7.
I found this for you, Tom. I think you're gonna love it because you're headed to New York City tomorrow, and you had to book like 2 plane tickets, right?
Yes.
What if?
Different time plane tickets.
What if you could get to the airport though in 20 minutes? Uber is launching Blade helicopter rides through an expanded Joby partnership. Uber said that they will launch Blade helicopter rides on their platform as soon as next year through their partnership with electric air taxi maker Joby Aviation.
Is Joby up and running yet?
Blade is up and running already in New York City to get to the airport. So you could take a Blade for like $190 and get to the
Is
airport.
Blade fully electric?
I think they're just regular helicopters. So Joby would be electric, yes.
Right.
But still good options though for you.
I'm gonna let Tony try first. I want to see.
But you fly in a regular helicopter though to
I've never
the
been in a
airport.
helicopter.
Oh, I've been in a
Never,
helicopter.
ever?
Never.
I've been in a helicopter.
Did one of those
I know you
romantic
have been
ones.
because you did it for the show.
I did it for the show. Garrett and I got to go. Can I tell you something very humbling? They straight up weigh you before you get in the helicopter. Like you can't fudge it like you do like my driver's license. So they have like this big industrial metal plate, and Garrett and his camera and me and my microphone, we had to like stand on it, and luckily we're small.
You remember that Curb Your Enthusiasm skit?
Yes. Yeah.
They were going on a private jet and they had to get everybody's weight.
Yeah.
None of the women wanted to give their weight.
What are you doing in Uber? And you can trade Joby, Joby. You ain't got no alibi, or Uber. You can trade them both.
I've never traded Joby before.
But you can.
Uber, $94, basically unchanged.
Joby.
Joby, Joby, Sosnoff, trading at $13.38, up around a dime. Ivy rank of 27.
Have you ever traded it?
No, earnings are after October expiration, November 5th.
Might have done did something.
Markets are okay. Ivy rank is 80. You might have done did something for option trades today, every Tuesday and Thursday. Lucky for you, South of today's Thursday. Don't give me that face.
He's got to try. He's trying something. Hey, Open Door taps a new CEO and names Keith Rabois as chairman, boosting the stock 30%. Open Door is getting a little meme stock love. Nikki Batt quoted it in a very nice Business Insider article about his thoughts on Open and its memification. So look at Nikki being a talking head. What are you doing in Open?
I've never traded Open.
Well, stock was up like $1.75, so.
Like I said, I've never traded it.
Okay. Not too
What does
late.
Open Door do again?
Real estate.
Right, real estate.
They open doors, Sosnov.
Yeah, there's just an online real estate platform. Like a Zillow
Got it.
or a Redfin.
Got it.
Also
Like
tradable.
that.
Yeah, like that.
Open Door.
Open Door.
Door. $7.64 stock after being under $6 last night.
Yeah, there you go. Hey, this is great. If you've been a long-time Spotify subscriber, Spotify is finally rolling out their long-awaited and highly anticipated lossless listening in over 50 markets. What happens with the compression of music is sometimes you lose some of the finer attributes of the music, but some companies like Apple Music for a long time has offered lossless audio. So it's a more premium, sonic, immersive experience if you're an audiophile and the music sounds better. I am a Spotify girly because I
listen to
like
Spotify
Spotify.
this morning.
But the thing that I think is notable is Spotify is going to roll out this lossless audio, but they're not going to charge extra for it. What? Finally.
You believe him?
I just think that that's nice. Yeah. Because I pay for Spotify Premium already, and so I'm going to get this.
Amazing.
I love that for me, especially the new Taylor Swift album, Life of a Showgirl, comes out October 3rd. Pre-save it now on Spotify or
Unchanged.
Apple.
Please change the subject. No more Taylor.
How are the markets in Spotify? Not great.
You rank of 15.
Yeah,
You got
that
it.
sucks.
You got
That's
it.
not good.
$700 stock.
Hey, did you hear about this? Convenience store operator Racetrack is buying Potbelly, PBPB, for $566 million. That works out to
Doesn't sound like a lot.
That works out to $17.12 per share. It's a rare move for the
Is it a take
convenience
under?
store operator to buy a
Not
restaurant.
take under.
brand.
It was around $13. It shows a last night of $17 where it's trading right now.
Yeah.
But $13. It's a little bit of
Popeyes went public for well over $1 billion.
yeah.
Billions. didn't
Yeah.
it?
Well,
I mean, that can't be. It's got to be a take under.
Yes.
okay. Well,
Yeah.
What's Racetrack?
they own convenience stores like the Gulf convenience stores. Yes. Yeah, Racetrack, Raceway, and Gulf brands.
Got it.
Yes.
I haven't been to a Potbelly in a while, but except for the green meat, sometimes I used to like Potbelly.
I like Potbelly.
They raised $105 million at an IPO price of $14.
Yeah, but what was the?
2013.
I know, but what was the
They
valuation?
raised $105 million. Shares sold $7.5 million.
Valuation had to be over $1 billion. It wasn't 566.
Not in 2013. I don't know if they're worth $1 billion. I don't know.
Let's see.
It,
Sorry. Potbelly's valuation approximately $525 million based on the IPO price.
So,
so it's a scratch after 10 years.
hey, that's not bad.
Yeah, we haven't had Potbelly in a while. Have you been to Potbelly in a while? Maybe your kids. Yeah.
I go after the gym sometimes.
I was at Potbelly about a month ago. It was absolutely horrific. It was horrible.
Really?
I said I would never go back again. I haven't been about a month.
They have probably one of the best
Jardiniere.
The Jardinaire's good, yeah.
They haven't changed it. It was horrible. It was really bad.
That sucks.
The whole experience.
Yeah, it was really bad.
I used to like their tuna fish.
Okay. Hey, can I finish here? I don't want to step on the
What tuna
research
fish
team's
don't you like?
time.
What tuna fish don't I like?
Yeah,
You like
where
the
have you had
Dunkin'
tuna
Donuts
fish that
tuna
you
fish.
Don't like it.
Whole Foods has the worst tuna fish I've ever tasted.
Don't believe it.
Because it's organic and they don't
Because
use
they-
6 pounds of mayo.
Whole Foods tuna fish is
Since they use Miracle Whip.
Whole Foods tuna fish is not edible. It's
Hey, can I finish my series? I don't want to step on the research team's time. We're getting a new M&M flavor.
No way.
Honey roasted peanut.
Ooh, I don't hate that.
I don't hate that either. That
I
sounds
don't hate
good.
That sounds good. Yeah.
Yeah. Will be available at select retailers, including Walmart and on M&Ms.com starting this month. Mars owns M&Ms, but I like a little honey roasted peanut.
I'm with you.
Yeah.
You're like a little
salty,
honey
little
roasted
sweet.
peanut, you know?
Yeah.
Man.
Hey, FIFA World Cup ticket pre-sale is now live.
Going?
But people are they turned on dynamic pricing, which I think sucks.
You played AYSO soccer. You going?
Well, it's not Chicago though, is it?
Not in Chicago. There's
cares where it
sites
is, a man
all
of your
over
means?
North America. The tickets for the 2026 FIFA World Cup went on pre-sale yesterday morning. The U.S. set to host the global soccer tournament for the first time since 1994.
You know, all I want to say is I almost feel bad for the rest of the world that we're hosting it.
Sure.
Because it's not the same. But isn't it hosted in like Canada and Mexico?
Yes, in all of North America. So Canada, the
Mexico
U.S.,
too,
and
like-
Mexico.
It's in like, because Guadalajara and Mexico City and Canada, I think it's in Toronto.
Yeah.
Yeah.
Yeah, cool.
But I think
cool.
the finals is at the Meadowlands.
Well, if you had a chance to go, would you?
Yeah, I went to the World Cup in 1994.
You did? Yeah. Oh, because you're in Chicago.
Yeah, we went to Soldier Field.
That's cool.
Me, Scott, Defoe, and one other person. I can't remember. There's four of us.
1994.
1994. We
I'll
walked
tell you what I was doing.
Okay.
That was
the
my
the
heyday.
afternoon. The afternoon
That was
of
my
the World Cup.
heyday, Saznov.
The afternoon World Cup.
That was the apex.
You were crying in your sleep that afternoon. But 1994, we traded all day.
Yeah.
We went to a soccer game with Huey, Dewey, and Louie. Unbelievable.
We traded all day, and then we walked from the SIBO all the way to Soldier Field.
In 1994, you couldn't walk a block. I
We
remember
walked
back
all the way
then.
to Soldier Field.
Wow, that's far. And it was in the summer, so it was hot,
I don't
probably.
remember what month. Yeah.
Yeah.
You,
Hey, can I show my viral video? I want to get out of here.
sure.
This is actually really cool. Believe it or not, dogs enjoy being on motorcycles. My little Chihuahua, I'd put her on the back of my bike.
I
She'd
do
be in a
not believe
carrier.
that.
She would be in a carrier. She did not hate it at all. She'd get right into her carrier. It was securely strapped down, clipped to her harness, so she couldn't like move
I get it.
around.
I know they
But-
do it. I don't believe that they.
No, but
enjoy
the
it.
smells and the sound, like she was very cool on the back of my bike. She didn't.
Goggles.
No, well, because she was in a carrier, so she
Okay.
didn't need goggles. But then
Protect the eyes.
we'd stop at a truck stop and I'd unzip it and she'd like pop out, and then the truckers would just get like the biggest kick out of it, and they're just like,
Oh, it's a. What's the opposite of a chick magnet? What's that what is that called? I don't know. That's.
I don't know, but it was funny. But check out this biker knows exactly what the people want. Watch this. Okay, that video was just for me. So, Bat, what's coming up next?
That was pretty good. Wait, quick. 90-second break. Come back. We've got.
That video didn't work for me.
Okay, I'm so sorry.
What's your assumption next? Back in 90 seconds. Tasty Live.
Really? What's your assumption?
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
$250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto. We got it. We get it.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
I distinctly remember getting an email from Tasty that Lookback had just been released, and I was doing the most laborious back test on the face of the earth before that. And I did 2 or 3, and I saw how quick it was, and I saw how quick the data was, and basically instantaneously, like, I was hooked. I'd always seen all the stuff on tastylive with all the data and all the value I thought that bring, and then it was all of a sudden I could control that and basically make my own segment for myself of what fit. And that democratization technology, I think, drastically changed not only the landscape of what's out there, but drastically changed my ability to learn at such an insane rate. And that's kind of when I developed a little bit more of my own path. I was like, this is the type of trade I exactly want to see, or I'd get some type of inspiration from tastylive to look at that. And that's when my consistency went from like 1 to 30, and I haven't had an unprofitable quarter since.
Tomas, we are back, my friend. Like I said, it's time for Confirm and Send on this, the 24th anniversary, Sadnov, of 9/11. May everybody rest in peace.
Can't believe it's been 24 years.
I know, time heals all wounds. Everybody forgets about it. 9/11.
I didn't forget about it. I didn't forget about it, but I don't think about it that often.
But I know if you see the date, though, it should jar your memory.
I didn't even know today was 9/11.
That's the first thing I believe that you said in this sentence so far. Yes, I believe you don't know it's 9/11. I agree with you there.
I can't believe it's been 24 years.
24 years. Yep. Horrible. Anyway, confirm and send. Let's do it. Like I said, Saznov, confirm and send. Viewer emails.
Thursday, September 11th. Remember the first couple of years after 9/11, nobody would fly anywhere on 9/11.
I remember how kind we were. That's what I remember.
I remember that nobody would fly. So I had a flight 2 weeks after 9/11. I had to go to New York. No. A month after. It wasn't 2 weeks. It was about a month after. I had to go to New York for a meeting. So maybe it's like the beginning of October. And I took, when you're on, I took ATA.
You're going back now.
When you're on ATA, you're on vacation. American Transair out of Midway. And they flew 757s into, they flew mostly 757s into LaGuardia. And I remember getting on a 757, and it was 24 years ago, probably end of this month. And there were 3 of us on the plane going to New York. 3 people.
Unbelievable, right?
On a 757, which got to hold a little over 200 people. There were 3 people on the plane.
Sure. Yeah. I get it.
That's how scared people were flying.
Yeah.
You weren't even born yet, right, Beth?
When?
2001.
Of course I was born. That's cute, Tom.
All right, let's go. Let's see what we got. Spool's up 16. If they get to 60, just let them.
Do we whack them in how?
Do we whack them in how? Emails that came into us overnight. I was short puts in a stock that tanked after earnings. I have since been put stock, and I'm trying to decide what to do. Would you ever double down in a situation like this to lower your basis? Very fair question.
I mean, size kills, and I can't say I haven't done it, but size kills. And if I was talking to you as a person of reason, I would say size kills. Keep it simple. And if you sell 30 delta puts, sell 50 delta puts. That's the way I would ramp up, not go to another contract.
In the past, I did this a lot, but since we started Tasty,
Buy a call spread. Like I would do it smaller, in a smaller way, a lot less.
Years past, I would double down because to lower my basis. But I have since learned that usually when you're wrong, it gets worse, not better.
Yeah.
So I don't throw good money after bad. So would you ever? Yeah, occasionally, but I don't really do it much anymore. The last stock I got caught on, the last few stocks that I've got caught on by selling puts into earnings, none of them have turned around. One is ENPH, end phase, and it's down to 37, hasn't had an uptick in forever. Okay. Another one is TTD that I got stuck long, and that hasn't had an uptick forever. And I'm sure if I go through all my other stocks,
There'll be some others that'll jar your memory.
I think there might be some other ones. So I don't want to waste time, but those are the two that pop up as the most recent two that I sold puts in that blew out to the downside. And they haven't had an uptick since. Let's go to the next slide. I'm new to trading and experimenting with all different strategies. One thing I've noticed is defined risk trades seem to be much more difficult to defend than undefined risk trades. Am I correct about that, or am I doing something wrong?
No, you're 100% correct today. Especially the tighter you go, the more difficult it gets. It's just very hard to do something against it. Rolling out in time picks up pennies. Selling the other side picks up more, but still pennies. Making it into an iron condor, you risk to both sides, which you didn't want to have when you originally put on the trade. That's the drawback to vertical spreads. They're hard to defend. You pretty much have to wait for time to be on your side. Give yourself a little bit of time to be right. Good thing is they can go through your short strikes and your long strike and still be profitable at the end of the series. That's the give and take. So watch them, trade them small.
Yeah, I mean that's the downside to defined risk trades. They're difficult to manage. There's not a lot you can do. You can roll up the spreads, roll down the spread, things like that. You could sell another spread against it, but they have less optionality, as we say. They're less flexible, but you take less risk, and you can kind of wait them out sometimes without doing anything. But yeah, no, you're correct. Not doing anything wrong.
Yep.
Let's go next slide. What do you do when a scalp goes against you? Do you sell puts or a call? Like they're talking about a future here. So let's say I buy a future and the market goes down, or I sell a future and the market goes up. What do? Do you sell a put or call against it? And if so, how long do you wait to do that? Or do you just inventory the position, or do you have a point where you get out?
Right. So they're talking about if I buy a future, I want it to go higher and it goes lower, sell a call against it to kind of reduce your delta exposure, which is certainly a viable strategy to do, and I've done it numerous times. And quite frankly, like it. Matter of fact, in the market that we've had recently, it would be working pretty good. But the market that we've had recently, you had the opportunities when you were wrong to kind of get out of the position. You watched Tom yesterday start selling futures, have an initial small loss, was able to take a positive gain on the trade. So I don't know. I guess it depends on market volatility. If volatility was higher, I would like this a lot more than when volatility is lower. So in this environment, I would say, yeah, you either just inventory the position if you're trading it small enough, or you just close it. You watched Tom, I think 2 or 3 days ago, close positions for 10 or 15 handle losses. It just didn't work.
Yeah. In a perfect world, if I was writing a book about this, I'd probably say, sure, you could sell a put or call against a future and
give yourself time to be right.
Give yourself time to be right. All that stuff. The reality
markets are cyclical.
The reality is I'd rather trade smaller in futures and either wait it out a little bit, inventory the position, or just close it out.
Yeah.
Right now, I have the inventory that I want, so I'm kind of maxed out on some of my short futures. So my preference right now is just to get out.
Yep.
Wait it out a little bit and then get out.
Yep.
Let's go next slide. How do you feel about using double diagonals when the market is going through a period of low volatility? A double diagonal is short a front month strangle and long a back month strangle.
That is correct.
A little bit wider strikes.
Yes. Now, the way Tom explained it is perfectly correct, but it sounds like it's an undefined risk trade. It is actually a defined risk trade.
Oh, it's defined risk.
Yeah, keeping those four legs open. So the question is, when the market is going through a period of low volatility, how do you feel about using these? I have no problem using them. I think they're actually a decent strategy for low implied volatility, especially if the front month is higher, which is typical, than the back month is going to have. So for me, I think it's a viable. It's like, think of it as an iron condor a little bit on steroids. You have an embedded short call spread and embedded short put spread inside the strategy.
Yeah.
You taught me well, Tom. Thank you. I just regurgitated what you told me 47 years ago.
So we don't do a lot of double diagonals, but we actually do not mind that trade at all. We used to do a lot. We don't do a lot anymore. We made up the name double diagonal, just so you know. That was a Tom and TP thing back in the
Really, when you say Tom, you're talking about Tom Preston.
No, I said Tom and TP.
That's not the way he explains it.
So we came up with this together. We made up a bunch of names. Double diagonal was one of them. And so we could put it in a drop-down menu when we built Toss. But how do you feel about using it? We're fine. I like it. I just don't do a lot of them. But again, tough positions to adjust.
Yeah.
But actually, not a bad trade at all. Very high probability of success. You make small, you lose small. The whole thing with double diagonals is you make a little bit of money, you lose a little bit of money. It's not big either way.
You can hold it till expiration, and then you have your chance.
Yeah, sometimes you can make a little more, but most of the time it's small wins. Small wins, small losses.
High probability of success, as you said.
Yep. Let's go next slide. What do you think will be the catalyst that will finally send the market down? Kind of an unfair question.
A very unfair question, because nobody ever knows. I don't know. It'll be something. I don't want to say it'll be something that you don't expect. It'll be some sort of event that, some outlier event that you couldn't explain. Again, don't know.
You know, it's funny.
It's not going to be CPI or PPI or unemployment or any other kind of thing that media will.
It's not going to be
very
anything
important
that you could even guess. Somebody asked me this question yesterday. I was doing this interview with somebody, and they asked me a question of like, what do you think will be the catalyst to send the market down? It was kind of about the exact same question. And I said, whatever it is, it's nothing that you and I could even discuss.
Yeah, that's what I was saying.
Like it doesn't, I have no idea, but it won't be what we're thinking it'll be, because this is the kind of stuff that's not predictable.
Yep.
So, you know, even if you think the market's frothy, even if you're bearish, whatever, you have no idea what the catalyst will be. And it could be something.
I wish I did.
It could be something weird. You know, it really could be something weird. Let's go next slide. And the last one, when trading a put credit spread or a call credit spread, do you still look to get at least a 25 or 30 IVR, or do credit spreads allow for a lower IVR due to their nature as opposed to strangles, iron condors, and calendar spreads?
I would throw iron condors in there and calendar spreads in there too. I mean, opposed to strangles, it would be the way that I would end that sentence. Tough one, because when you do a vertical spread, you are selling volatility and buying volatility. So you are mitigating the volatility expansion and contraction on that trade and making it purely directional or time-based, because you're not going to have that added high IVR contraction that you would in a vertical spread if it was high implied volatility. I'm more inclined to do a vertical spread than I am anything else with low implied volatility. So I would say less important, still important.
You are going to do much better when you're selling credit spreads when volatility is higher.
No question.
Period.
But not
because it's not that you're going to collect a bigger credit. It's going to be, you're going to be further away from the at the money. You're going to give yourself more room to be right. I don't like to sell credit spreads if the IVR is below 30, unless it's a pure directional play. So if you want a pure directional play, doesn't matter what the IVR is. If you want a zero DTE, it doesn't matter what the IVR is. But if you want a short premium play, the IVR matters.
Very good, sir. Are you ready to take a quick 90-second break? Because we got trades from the research team waiting in the wings. There we go. We'll be back in 90 seconds. Tasty Live.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
Regulation time may have expired, but the conversation is just getting started. This is Overtime, the post-market scrimmage for market junkies. Join Chris Vecchio, Ilya Spivak, and me, Dylan Radigan, as we analyze the X's and O's for everything from earnings to politics to macro events and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime Monday through Thursday only on Tasty Live.
Dear Kaylee, hats off to you for being such a culinary genius. I don't think it has ever dawned on our kitchen staff to serve gazpacho hot. Sincerely, Bob.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't want to fact check you with my vagina, but I will.
From the smart mouths at Tasty Live.
Wolf! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Nicky Bat, University of Kansas. Number 20 because that's how many underlines are in my portfolio.
Rick Welch, Illinois Institute of Technology. Number 23 because I'm trained 23 hours a day.
Dr. Data, Louisiana State University. Number, square root of 1/365, because that's the square root of time for one day, which is multiplied times the stock price, multiplied times the implied volatility, which gets you the projected stock price for one day.
I like the looks of that lineup.
Well, being mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live. That's right. Sit back and relax. We've got trades from the research team. Who? The first researcher. I sound a little bit like Star Wars when I do it. But Shark, what's up, my man?
You do a little bit, yeah.
I know. I'm sorry. How are you?
Yeah. Doing good.
I know. What do you want from me? I never had that dialect thing down.
dialect thing?
Whatever. I don't have the sound. I don't hear well.
It's called English.
Oh, okay.
You never had that English thing down. The English language.
Okay. Ye without nouns.
Yeah.
All right. How are you, Shark?
Gad says he can speak 3 languages. 4. You can't even speak one correctly,
Listen,
right?
I speak to Gad all the time. Gad does not speak our language. I can't understand him either.
Oh, okay.
So
Good. I'm glad it's not only me.
Has nothing to do with my hearing, of course, right? We know that.
Good.
What'd you say? Just kidding.
I said,
What do you got for us, Shark? Boom, boom, boom. Gotcha.
that was an old man joke right there.
That was easy.
It's a very old man joke.
That's an old man joke right there.
What do you got for us today?
Adobe earnings ratio spread.
Well, you said you had to be directional. He's directional.
Yeah.
He's a little directional, long-ish.
Little directional, longish, which is a little weird because I put this on kind of yesterday, but it's up right now. I think $5 pre-market. So.
Which means it's going to be worse.
Yeah.
Which means it's going to be better for you, worse for you to put on.
If you don't have it on, it's going to be worse.
Right.
But here's my thing with Adobe.
Would you rather be more on or more off?
Your fills are bad.
What?
Your fills are bad.
No, you could probably do okay on a ratio spread, I'm guessing.
Relatively small amount of delta. Is that why?
What?
Relatively small amount of delta. Is that why?
It is. I just also.
I put the long around the expected move.
I'm
Maybe a
actually
little bit
worried
more.
about the downside in here.
You are worried about the downside.
Yeah, the stock hasn't had an uptick in like forever.
Okay.
So he's directionally.
Also, here's my issue. I'm going to be on an airplane tomorrow morning on the opening. So I can't really
doesn't want me watching it.
Trade this.
I see.
And that means I would have to leave it in one of your guys' hands. And
you don't want to do that. I got it.
yeah, like I can't find anybody at this firm I would trust.
That's great. It's a very big vote of confidence. Everybody appreciates it. You can almost go $12.50 wide and collect a very small credit, but still
That's
have.
a huge credit, by the way.
That's a huge credit.
You want a smaller amount of credit for?
Yeah, you can go $10
I'd
wide
rather
and
go
collect
wider.
$1.50 to $1.80. That's my kind of wheelhouse, especially on a one
I would
day.
go as wide as you go. If you go 20 wide, I go 20 wide.
All right. Okay.
Like I said, I'd like to go 50 wide and collect a credit, but it's impossible. You can go around $12.50 wide.
What's the expected?
Do you not listen to me?
What's the expected move in there?
$33.
And where's the stock trading?
355 right now. 350 last.
There's a couple things I would like to just tell you about.
He's just outside the expected move with his.
Here's a couple things I'd like to tell you about ratios. Number one is the long option. I always do it just outside the expected move.
Okay.
Okay. So for this case, my long option here would be the 315s if they have it. Either if they only have 10, I'm not.
No, they have $5 wide. So
then my long strike would be the 315.
$2.50 wide strike.
No, 2.5. It's the weekly, so yeah.
Yeah. So my long strike would be 315. My short strike would be whatever would get me a credit.
Okay.
And that's how I set up ratio spread. So I'd probably be 315, 295, I'm guessing. I can't tell with it.
Play pretty defensively, high probability profit. Take it.
That's right.
Take it and run. I got it.
That's
okay.
right.
I see.
That's right. For maybe a 50-cent credit or something, or maybe, 315, 300, that kind of thing. I'm not exactly sure. I have to look at and the reason you go to the expected move is because that gives you that one standard deviation of room. That is, kind of your highest probability trade. Now, it didn't work in Oracle because it moved 4 standard deviations. But
That
normally,
means it's a directional trade. You're taking it to the upside. The wider you go, the less
pretty
bullish you are. The tighter you go, the more bullish you are. You're allowed to have your opinion, at least in this room while I'm here.
I mean, the chances of this being a blowout to the downside is probably pretty small, but I do think the stock has been very negative.
All the more reason.
Sound like one of those internet traders, right?
All the more reason it's
Whatever.
undervalued.
Sound like
It's
one of
gonna
those
shoot all the way
internet
up.
traders.
Yeah, I mean, I think it's going to go down, but it could. I don't think it's going to go down too far. If you don't think it's going to go down too far, then it's the perfect
What
strategy.
is an internet trader?
What's that?
What's an internet trader?
You didn't say anything one way or the other.
I said I'm worried about the downside. What else?
Worried about the downside, but you don't think it's going to be a blowout to the downside.
Yeah, that's exactly what I said. I'm worried about the downside. I don't think it's going to be a blowout. So I don't think it's going to be down 100 to 250, but I do think that, it could easily.
Down 35, this would be a beautiful spread. Anyway.
That would be a beautiful spread down 35?
Mark, I'll defend you. As long as I'm here, I'm not going to let him beat you.
Well, you think that'd be a beautiful spread down 35?
Well, I would like it to be a little bit wider and maybe a strike or two
You're
lower.
going to lose a lot of money on down 35. If you did the 315, 295, you'll make money.
Are we done arguing?
He's insufferable as he gets older. We're going to take a break from you, and we're going to go to our next research researcher. You want to do that?
Yeah, sure. Why not?
Who is our next researcher? Sharp dressed man. Gad, how are you, brother?
I'm good.
What'd you say?
I'm good.
I got you too.
Yeah, I'm a little offended.
How are you, my friend?
I thought you loved me.
I know.
But after that comment, I'm doubting. So.
All right. Well, we're still friends. I don't mind.
Yeah.
What do you got for us?
So I got robots.
RBLX bearish. Sadnov, what do you think about robots?
100% agree with him.
You see, man.
You get to live. You
see?
want a job?
I am so bearish on this stock I can't see straight. What are you doing here?
So I'm doing, I'm selling 140 and buying 145.
Yeah, I have that on already.
Okay.
So far, no bueno.
Good. See?
I'm just telling you. So far, nothing's worked. But let's see. You said the 40, 45?
Yeah, I'm selling 140 and buying 145.
Yeah. I'm short the 45.50, the 45.55, the 25.30, 25.35. I have every short spread in there possible. I need the stock. I need the stock under 105, but I'll take by October, but I'll take
take what you get and you'll like it.
I'll take 3 points lower, be happy.
Take what you
okay.
Take
I'm also offering some stock. I will put this more of this trade on, but I like this trade. I agree with it. I already have it on.
Okay. That's great.
Mm-hmm.
I'm offering stock in their pre-market. Nothing done yet.
Very nice.
All right.
Very nice.
All right. We have
Agreed.
We're all in agreement here. Who is our next researcher?
Hey.
Today you have the perfect outfit for what a Dr. Data should be.
You like this, huh?
Yep.
What makes this a Dr. Data look?
I don't know. They can't see, but the Sperry's all the way up to the brownish, bluish, necktied.
You mean the boat shoes?
The boat shoes.
These are Costco. These are my Costco find.
Okay. The boat shoes.
$15.
Like only teachers pair a polka dotted tie with a striped shirt, and it works.
I'd take that as a compliment.
It absolutely works.
Oh,
that's what I'm talking about.
It works.
It absolutely works. But on Tom, it would.
On you?
On me, I'm Italian. I can't wear anything but gray, black, some blues, some solids. We can't do that kind of stuff. Maybe a window pane. That's about it.
Excellent. I like this.
I like it. It's perfect.
Perfect. Excellent. Thank you.
Good job out of you.
Well, thank you very much.
And you look like you slimmed down a little bit.
I did a little bit.
Good job out of you, you handsome devil.
Thank you.
It's all right for a man to say that to another man, isn't
Absolutely.
it? Absolutely.
You know?
Absolutely. Sadnov, did you notice that?
Not really.
What do you got for us today, Dad?
Coca-Cola. So
no, you don't.
Yes.
You don't.
Yes, I did.
No.
Yes, I did. Yes, I did.
It's a perfect teacher stock, Coca-Cola. No.
This is like for widows and orphans. You know.
Where's Shark when you
call
need
this
him?
stock.
Bring him back.
You know, it's got a good dividend too.
No.
But you're not going to participate in the dividend with.
I
this,
didn't
this
even
bull
know
put
anybody traded Coca-Cola anymore.
Oh, I do. I have a pretty nice little position in it. I've had it for like 15 years, something like that.
Coca-Cola.
Yeah, it's still
Is it
okay.
on its butt or something?
It's not doing all that well. I mean, if you look at it multi-year, you know, it's doing okay. But Coke is having some problems. Now, if you look at it, okay, because it was down, and I'm like, okay, so what went on here? Why is it kind of like not looking all that hot at the moment? So I looked at the revenues. Okay, it's going up. Revenues are up. Net income's up. Everything looks very positive on it. So I don't know why this thing is it's on its butt so bad, other than just maybe Coke issues across the world and anti-U.S. Perhaps. I don't know. I couldn't figure out what the reason why this is down. This is a bull put spread, so selling the 67.5, buying the 65, doing this for 86 cents, 1/3 the width type strategy here. It's got a high probability.
So you're doing an at the money, basically.
Basically, right at the money.
$2.50
You can go
move. Yeah, I mean, he's right there.
You're not going to be able to go down very much and get paid on this.
Right. I mean, it has an implied volatility equal to the S&P.
That's right. Plus a nice dividend.
Smaller stock. I mean, 1/10 the size, $67 versus
Stock's up about 10 cents pre-market, which doesn't mean it's going to stay up there.
mean
All right, I'll enter it.
Oh, cool.
Oh,
I'll
I'll
enter it.
take that as a win.
It's a low win, low reward, but
What?
Well, I
passing
wouldn't
grade
say
would you
really-
give him, Sosnoff.
I wouldn't say necessarily. I mean, it's 1/3 the width,
D,
right?
You got a D, but you're in an honors class, and my son tells me that that's a C or C plus. That's how he justifies it.
That's pretty good, yeah.
But the fact remains, it's a D. Right? I got one D, Sosnoff, in all of high school. Do you know that?
But we're the think tank, so this is the honors class, right?
Right. So it's a synthetic C.
Okay. Yeah.
So if you
okay.
get an A in an honors class, what is that?
Yeah, in a normal.
No, if you get an A in an honors class, is the question I
that
gave
means you're
my
pretty
son.
smart.
What's that?
That means you're pretty smart.
Pretty smart. Good answer. He didn't have a good as one of that. Who is our next researcher? Finishing strong with the cleanup there. Julia, what's up?
Hi, I'm doing great. How are you?
I'm doing well, thank you. I am with Tom, but other than that, I'm fine.
I'm so sorry. My curtain fell down. I had a blackout curtain, and now I got this, like, it's the worst possible spot for this light.
Oh, I see it. I see it. It's okay. Don't worry.
I can't be out of frame or they're going to yell at me.
Don't worry. It's good. It's good. It's good. Everything else about you will overshadow that. See what I said?
Well, I don't know
overshadow?
about today. Maybe. I don't know. I'm not.
Well, you're going with something here, Baba, that Sosnoff likes to trade from time to time. What do you think? Here,
I do like to trade. And I put this, I set this trade up before this crazy move this morning. I just adjusted it. But now that I saw this move, it had a very big move to the upside pre-market. And now, because I just noticed this, I'm kind of rethinking it a little bit, but I think there's still something you could probably do. I would personally wait until after the open to put this on, but the strikes are adjusted for the move this morning. So going to find risk in here, especially because it's had a crazy run the last couple, like basically since September. So I just like the protection in that case. I went with the 135, 175 short strikes, $10 wide, collects 266 in credit, 734 in buying power, very weak on the call side with the adjustment this morning, but I'd be curious to see kind of where it opens. The IV rank is 20, so it's not very high, but in this, with like earnings, kind of, I like to stay away from earnings if possible. So this seemed like just tradable enough, although I'm not super sure where IV is going to land sort of after this move.
It's had an unbelievable run.
It's had a really strong run, yeah. And then even more so this morning.
I have some short puts in Baba. I mean, we'll probably cover them today.
Honestly, like just doing the put spreads after this move, I had the condor kind of set up, so I kept the call side on, but it's not collecting very much compared to the put side. So just doing the put spread in there.
There's going to be a lot of call skew. I'm going to see where this thing opens and what the IV rank is, because it's borderline for us right now.
Yeah, we'll see. So, just very big rally in this one. So we'll see what happens.
Oh, yeah. No, I mean, and it's not the greatest trading stock, but after the opening, it should be good.
Yeah, the spreads didn't look too bad.
It does have wide markets
The spreads are not too bad in there. The individual options stink, which is weird, but we've done pretty good in Baba this year, so I'm going to
Maybe give it a go. We'll see.
Roll with it.
So there's that. Good job out of you. We're going to take a quick, good job out of the whole team. We're going to take a quick 90-second break and come back. We got more Tasty Live with the opening bell next.
Thanks, Julia.
Thanks, guys. Peace.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
One of the things that was most intriguing about the financial space to us is just that there wasn't a lot of vision, there wasn't a lot of innovation, and I think that left a door open for us, which we really liked. After almost 20 years of open outcry, standing in the pit trading, I felt like all the markets were moving from kind of traditional open outcry to electronic trading. I saw the writing on the wall, and I wanted to be first.
Building the best technology in the world for traders was one of the coolest things anybody could ever do. I loved every second of it.
Thinkorswim will always be my baby, but this one, it's different. We built ours literally from scratch. It's a much thinner, it's a faster, it's a slicker application. Everything's on one page. So you're always looking at the core page and then bouncing around from there to get to whatever you want to get to. Most of our competitors have legacy technology, and some of them are multiple firms. Their technology has just been rolled up into a single platform. That's not the best way to build a platform. We built ours literally from scratch. It's from the ground up, so we were able to design it in the way that we wanted to design it, with the flexibility that we wanted. And obviously beyond that, we do have, in my mind, the greatest customer service in the industry. It doesn't make a difference who you want to talk to. We're always available, and not only are we available, we look forward to your questions. We're here to support whatever you're looking to do. So you can trade stocks, you can trade options, futures options, crypto. We're agnostic to product. We have the tools that you need to be a successful trader.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live. That's right, with the opening bell. Now, let's take a look at the market. Even the S&P is catching a little bid after the number. You scoopy the low, enough to cover some of your shorts. About 2 handles over the low price of $35.50. We're 58.20.
Let's be fair. I'm still short.
Understood. NASDAQ up 93.
I'm going to get shorter today.
Russell up 4. Dow up 113. Unlike yesterday, volatility is lower, 1811. Yesterday, volatility stayed bid, maybe because of the number. We did have some good two-sided action. Volatility is showing you we're not having two-sided action as of yet. Bonds down 5. They've had some two-sided action. Full point from 18 and change down to 17 and change. They're right in the middle there at 17.17. Bitcoin up $175 after having a good day yesterday. Basically unchanged right now. Ethereum up $90. Doesn't sound as much as Bitcoin, but that's actually a 2% move in Ethereum because only a $4,000 product versus a $114,000 product like Bitcoin. Oil down $1.22. Oil had a 3-day run here, taking back most of that, or a day and a half of that, back to $62.45, about 20 cents off of its lows. Gold down $21 by the dip.
We got out of that gold silver trade just in time. But the other day we were buying gold, selling silver, remember? And in the last 2 days, that trade has completely reversed. Gold has gotten killed and silver's been up or unchanged. So that was a good get out.
Nat gas back under $3 for a quick second.
You PIG pig, nat gas.
Right there.
I am long nat gas here.
Right now. Adobe, KR, Restoration Hardware also for earnings.
Hate that company.
I know you do.
With every bone in my body.
I know. Every ounce of my being.
Every ounce of my being.
Mm-hmm.
Although I like the restaurant.
I know you like the restaurant. Everybody does. I haven't heard one bad thing about it. And OPEN, yes, trading $7.60. New CEO. Woo.
I sold some Reddit this morning, stock. I'm trying to sell some Roblox. I'm going to sell some call spreads and Roblox. It's time.
It's time. You know, you've done well in call spreads, not necessarily in individual stocks, but in like ETFs, like the spiders and the Qs.
Oh, there's your Roblox with 3 seconds to go.
That is.
And they're off.
And they're off. Let's take a look here. Since you did RBLX, let's see where it is.
I don't know where the hell it is.
134.98, up around $1.90 or so.
I didn't get filled there. I got filled at 133.92.
Pre-market RDDT. You got a 2-point profit in there, Sosnov. You sold it at 62.90. It's 60. It's under 60.
What? Reddit?
Reddit. It's only up $1.28. You sold it at 262.90.
Oh.
Oh. Think of that.
I think that could be good, but I'm a PIG pig.
That's amazing.
I'm not going to cover that until it gets to 259.
Back to the 80s where greed is good.
RBLX.
RBLX.
Oh, now my trade looks good. Now it's 33.90. Okay.
Oh, now you're happy now.
I mean, at least
now you want it.
I don't think I got picked off. SPOO's up 20. I am a seller over 55.60. Are they going to get there?
They got to 62 and a Q.
Earlier.
Just a moment ago.
No, earlier. I missed it.
Okay. I don't want to fight with you. It doesn't matter to me. What's the downside? Netflix down $3. Meta down 2 and change. Gold GLD down $1.65. Call the plunge protection team. ExxonMobil down $1 and change. Google down small. Let's see what the upside is bringing us. Sadnov. MU up $11. Huh? 8% move in Micron Technology. That's what I just said. Huh? MU's gone from around 118 to 150 and change without stopping. Sadnov.
I've got a couple little tiny positions on it.
Earnings are $9.23 in about 12 days or so. Baba up $4. Coin up $3 and change. Baidu up $3. Nvidia up 2 and change. What's your beloved Apple doing? Apple up 27 cents, you pig. I mean, the S&P's up 21. You covered your Reddit at 59 like you said you were going to.
Really?
Yes, you did. And you sold your futures at 62 like you said you would. You rolled up putties because you had to. MU.
Oh, that's an amazing trade in Reddit. We'll take that. Lucky.
You were about to cry. You know you were. You know you were.
Let's see what we got here this morning.
Nice scalpy on Reddit. Can I have some?
Yeah, you probably want some, but you're not going to get any.
Yes.
What's Oracle doing? Oh, good.
ORCL up pre-market, down 90 cents right now.
Okay. So I did get one little scalp in today. I sold some S&Ps.
You got 2 scalps in you. Scalp some
little
S&Ps,
scalps.
scalp some stocks.
Short some Roblox too. What time is it?
8:33. How long you been doing this show? You can't read the clock. There's clocks all around you.
Okay, I'm going to make my call. Ready? Bold call.
Can I write it down? Because I can rehearse this. Okay.
Well, I've been waiting till we got up to this level here.
Okay, hold on. All right, go ahead.
What'd you write down?
Oh, tell me what you said, and then I'll show it to you.
We're at 65,
61. That's
65,
right.
61.
Up 22.
Yeah.
We're going to close the day
by tomorrow morning.
Okay, tomorrow morning.
By sometime tomorrow morning, we're going to trade 65.30.
That's 30 handles lower than where we are right now. I said down 50.
So I'm saying down 30.
Right. You were going to say down 50, which I do not believe. Volatility hasn't moved. You got to watch volatility. Volatility down 30 cents. 9/11 is going to be a bullish day. Make it green.
9/11.
Yep.
Let's take a look at some of the stocks here. Google down 70 cents. We're a little short Google. What? Oracle. Let's take a look. Oracle down $5. Good night, you pig. God, that stock just messes.
I don't understand that one either. So
that was
an unbelievable move.
Absolutely, just messes with your head.
Mm-hmm.
What else do we got here?
Bonds unchanged now, actually up 117.23.
All right. Happy with everything else. No other horrible problem children. MU a little bit. God, what a crazy move that was.
MU, IV rank of 45, earnings in about 10 days or so. That is a crazy move, up almost 14. Micron Technology.
Yeah, that is a crazy move. What's happening there? Are you buying the company or something?
Even the S&P's expected move for the day, Sadnov, about $20.
Yes. I think they're going to be down 30 by tomorrow morning. That's my call.
32 by tomorrow. Expected move. All right, you ready to take a quick 90-second break?
I am.
Let's do that. We'll take a quick 90-second break. We got Hear Me Out with Dylan Radigan next. You're not going to want to miss that. Back in 90 seconds, Tasty Live.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Dear Cheapo Airlines, thank you so much for sending my luggage on a magical side quest instead of my planned destination. I am glad that I had the sustenance of the single pretzel I was served on board while I was waiting for my bag to arrive. Looking forward to your reply, because surely the response can't be as delayed as long as my flight was. Warm regards, Bettina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
Every day I do God's work here.
From the smart mouths at tastylive.
If you missed the live show, here's our cherry on top weekly recap.
You became Chicago's most eligible bachelor. What year was that? That was the debate we were having earlier while you weren't on the show to defend yourself.
1988.
88. So Vanetta was right. Late 80s, early 90s.
You mean when I was on the Oprah show?
Yeah.
Yeah. Well, 88. I had flowing locks like Tom.
Oprah just made it.
Oh, here it comes.
I mean,
she felt bad. She felt badly for him. You know, you couldn't get a date.
You get a car, you get a car, you get a Scott Sheridan, you get a Scott Sheridan.
I want the car.
That's right.
Well, he's more public in his mentality.
I'm a believer. I believe that the world is good.
And I know that the world is not good. That questioning yourself and questioning yourself in dialogue with someone you respect is both pleasant and sometimes extremely insightful and useful sometimes.
In road trips, my family, it was like whoever could get the captain seat was it.
That's great. I'm having a great time.
Me too. But, I mean, stay a while. Take your jacket off.
No, I mean, I'll stay, but the jacket's not
Come
coming
on,
off.
take your jacket off.
Nope.
Come on, take it out.
sorry. I didn't mean to.
No, I'm sorry.
You hopped on this cowboy's horse, so I guess you got to hear his tale. In '87, I took it off. There was the market crash. In '92, NBC canceled Blossom. A couple of years ago, I lost it for 2 days, and the Lakers won the NBA Finals. Bottom line is when this thing comes off, bad things happen.
You've got to take it off sometimes. I mean,
Never do.
how do you shower?
And the jacket's kind of gotten used to it. In fact, every few days it needs it.
No matter what, you keep it on.
I can take my shirt off if you want, but I'm not taking the jacket off.
I just don't know if that's something that I could deal with.
It'll be like a teal tornado. Just endlessly washing up on your short.
I mean,
This is moving so fast, and I like it.
My dad, who was trading options in retirement, introduced me to options trading. He said, you have to check out this tastylive site. The way they taught options was very accessible and easy to pick up. I think a lot of people think that options trading is gambling, but it's not. It is simply probability and taking an educated guess. It's more like insurance. People should watch Tasty Live because you can pick up a lot of information in a short amount of time, and it's actually practical. You can use it to make money, most important part.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the Tasty Live core strategies.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live. That's right. With Hear Me Out, my man Dylan Radigan. How are you, Dylan?
Very good. Nice to be seeing you, gentlemen. How are you this morning?
Always a pleasure. Doing well. Thank you for asking. Appreciate it.
Nice to see you.
Hello, Mr. Radigan.
Pleasure.
Yes.
We are excited about today's piece.
Really? Why is that?
I don't know.
Just feeling a lot of excitement?
Yeah, because we're just going to have a little fun with this thing.
All right. Have we seen the questions ahead of time or not necessarily?
Not really.
Mm-hmm.
Not really.
I haven't.
Yeah. No, Tony hasn't for sure. And it's all new.
Yep.
Okay.
So.
Does it have anything to do with advice to my college self?
It does not. We changed around a little bit of the formula here.
Okay.
So, just making sure I got the right position. Fine. Let's do this. Okay, Mr. Radigan.
Here we go.
Beth.
Survey says.
The Trump economy is finally here. Is it better or worse than you expected?
Well, first of all, I disagree with the supposition. I do not believe the Trump economy is here because I believe the Trump economy will be the economy that exists after the tariffs have been fully implemented and are flowing through the production lines of the economy, which will probably take another year. So I'm not exactly sure how to answer this question because I disagree with the very assumption. But with that said, I would say that this economy is more driven right now by the dynamics of the transition of our artificial intelligence, which is changing things for, in the positive end and the negative. I think the biggest negative has to do with the threat to entry-level jobs, as I've talked about ad nauseum, particularly in programming and marketing and finance and things like that. And I think that the robustness in the economy, which I think is sort of is diminishing, is more a reflection of the bigger variables. I don't think the president is that relevant to the economy in general, and I think the presidents take credit for an economy when it's good and make excuses for the economy when it's bad, but I don't know how relevant the president actually is. This president might be more relevant simply because of the explicit economic agenda as it relates to the tariffs, but I don't think that those tariffs have as yet run through the system.
I agree with the last part of what Dylan said. I don't think I think was he been in office a little over 200 days or so, but I don't think any president. I think it's accumulation of past administrations' groundwork and the administration today piggybacking that, helping it, changing it, making it better. Of course, listen, we inherited. I'm market focused. Markets at highs. Markets are 6 months in advance, looking at the economy. I think it looks good so far, but I don't give the credit to any one administration. I think it's a cumulative. That's why we're America.
So my take on this, Dylan, is going to be a little different than both you guys. This is definitely the Trump economy. He implemented the tariffs, and the tariffs have changed the economy in this country dramatically. This is the stock market's high. Tony's right. But this is the worst labor market we've had in over 5 years, and it's the highest rate of unemployment. And if you judge things by the labor market, unemployment, and things along that nature, including massive layoffs and most people looking for work in 5 years, I would say, yeah, that's not a good thing. And that's will be reflected in the market coming up. We lost Dylan. Where the hell did Dylan go?
I'm here.
Okay. But so anyway, that's my answer. It's just this is the worst labor market we've had in a long time, and I attribute it to
the unemployment rate is 4.3 in August. It was 3.4 in April of 2023.
I will give you this. The unemployment rate is 4.3, reaching its highest level since 2021. Period. There was nothing else to talk about. It's the highest level since
4.3 is a relatively low unemployment historically.
If you're going to go back historically, but if you're talking about the last 5 years, it's the highest rate. And the most
one
people,
percentage point.
And the most people ever looking for, in the last 5 years, looking for work right now.
By 1 percentage point.
It's the first time since 2021 where there's more unemployed job seekers than available openings. Anyway.
And that's a cumulative thing, right? I mean
I'm just giving you numbers.
I'm giving you the same numbers. I understand that.
All right. Let's go next question.
Next question.
How have the last 2 weeks changed the world order? I like this. How have the last 2 weeks changed the world order? This is a question that I've also seen posed on in the Wall Street Journal and some other financial, outlets. Just asking that question, and I think they're really referring to, China,
global political stability. Is that the world order?
China, Russia,
the summit, the axis of evil, and the meeting.
Yeah. Kim, the whole deal. Yeah.
I don't think it's changed the world order at all. I think it is a wake-up call that the world order can be changed and may change in the future. But I think it's more of I don't see it as a red signal or as anything that's changed. I see it as a yellow card for America to wake up about the way that it's behaving. It's a signal to the United States to maybe alter its diplomatic or economic relationship with the world. But for in the future, there could be a meaningful change in the world order. But I do not view the mega summit of the individuals in question as having been relevant to actually changing the world order as the sentence suggests. I just believe it is like I said, a warning flag not a penalty flag. So I'd say unchanged, but for the warning.
Tony?
I agree with Dylan, but maybe for different reasons. I don't see it as a yellow flag. I just think that you had a sleeping dog like the United States lying there, the biggest dog in the world, and finally woke it up. Push it enough times, and you wake up a sleeping dog. You should let it lie. But I agree with you. I don't think anything's changed.
I have a slightly different opinion than both you guys again. We are watching something play out in real time right now that I don't think will have any impact like tomorrow, but something that is possibly changing the era of like American dominance, and we'll see. But there is definitely pushback against this administration's agenda, which is isolationist in its core, and it's America first. And clearly, China's taking advantage of that by bringing everybody else together. And I mean, you have to see it. It's not like it's,
But do you think it's changing the world order? I mean, efforts to change the world order, I just feel like are different than actually changing it.
I mean, time will tell, but it's closer than it's ever been before to have the ability to change world order. Let's put it that way. So what you're watching play out is potentially something where, this could be the difference. I mean, this time could be different. And
Just
American
this
dominance
market could be different.
American dominance is not. We live in a world of globalization, and if you don't believe that, you are going to be left behind. That's it. This has nothing to do with anything that we haven't said 100 times on the show. The world's moving towards globalization and towards free trade. And if you think that you can just have closed everything, a closed economy, closed borders, no trade, whatever, it is the
They don't
dumbest.
close, they want free trade.
It is the dumbest policy.
Fair trade.
It is the dumbest policy. As having an economic policy, trying to move forward with that, the whole world's going to turn against you. And I think you're starting to see it. At least there's the risk of it now. Hasn't happened yet. Let's go to the next slide.
China had a wall first with Nixon before we had a wall. Whatever.
What are your thoughts on a regulatory sandbox for AI? The sandbox would allow for companies to apply to be exempt from regulations for 2-year increments to foster innovation.
What are your thoughts on a regulatory?
This is a current proposal in.
And this is for the AI companies themselves. This is for GPT and Gemini, or this is for
this is
JP Morgan Chase using AI.
No. This is for the AI companies themselves. What are your thoughts on a regulatory
the
sandbox
large
for
language
AI?
models themselves?
Yeah.
So, like, if the three of us wanted to do a new AI startup to compete with Gemini and GPT, we would have to apply for a permit, basically.
If the three of us wanted to do an AI startup, we may have to apply for. I'm not saying apply for a permit. I don't know what the size of it is, whatever. But
we want to operate at scale against
right.
Grok or against GPT or against Gemini, or that Gemini, Grok, and GPT, for that matter, should have to get licensed functionally.
If
the same way you get licensed as a brokerage or licensed for a car license or
that's right.
whatever.
If you want to operate at scale, you may have to play in their sandbox and get licensed.
So I like this idea. And the only reason I have any hesitation for it is because I believe our government is so corrupt that I think it's that the implementation of it would probably be available for sale to the highest bidder. And so if there was actual licensing that went to the parameters of behavior and in sort of on what's on inbounds, out of bounds, no murder drones, no whatever, sort of some blacklist activities.
You're hung up on the murder drones, but yeah.
It's an example of something that I'd rather not see. So I think it's a good idea. I'm skeptical of the government's ability to implement it because I believe they're so available for bribes and corruption.
Since when has the government not been subject to bribes and corruption?
I'm not saying that it's a new thing.
Okay.
I'm saying it's the reason why I'm skeptical of any government licensing.
I'll side with Dylan a little bit here too. I just think AI is too much in its infancy, like cryptocurrency was in its infancy, for regulation right now. Like, I think it needs time to grow and breathe with innovation that you probably won't get if there was some sort of governor on these think tanks and the ability to grow. I think it's too soon. That's my thoughts.
So you're saying you don't agree?
I don't agree with it.
And you're saying you don't agree, Dylan?
I am. I'm saying I don't agree.
Can you put the question back up, Beth, for 1 sec? This is good. So what are your thoughts on a regulatory sandbox for AI? The sandbox would allow for companies to apply to be exempt from regulations for 2-year increments to foster innovation. My personal feeling the first time I heard this was I liked the fact that instead of regulating first and asking questions later, they are essentially not halting innovation, but they are suggesting that there may be some regulatory requirements down the road. So for me, I like this because the alternative to this to me is worse, which is regulate first, ask questions later, and then, force everybody to really uncomfortable growth situation like they did with crypto. Crypto, they did it half-ass backwards. And now they're doing it.
It's become a huge market. It's bigger than gold.
It's not, but it's big. But here's the problem with crypto. They did it wrong. They should have done something like this at first rather than have all the tight regulations. And then you open it up. What they've done with crypto is they had all the tight regulations, and now they're going completely the opposite way and taking down all the regulations. So I think having some type of a regulatory sandbox to allow for innovation rather than to create regulations up front is a better way to treat AI. That'd just be my personal thing. I would rather not have regulations first. I'd rather have a sandbox first, regulations later. Crypto did it the other way around. They did regulations first, no regulations later. And I'm not sure that's the best way to do it. That really slowed down.
I'm also skeptical that AI can be regulated.
Well, that's a whole different question. Let's go to the next slide. Trump has signed a memo that would ban direct consumer advertising for pharmaceutical companies. America is the only country that allows the advertisement of drugs. U.S. consumers are basically subsidizing Big Pharma's massive marketing budgets. But seeing drugs advertised allows patients to advocate for themselves. Where should the line be drawn?
I'm not even sure if there's a topic in the Donald Trump universe that I agree with more than this. I could not more strongly agree with the idea that we should ban pharmaceutical advertising, full stop. The world's first billion-dollar drug came out the same year that pharmaceutical advertising was legalized. I believe that the entire pharmaceutical infrastructure is catastrophically riddled with conflicts of interest and subsidizes an otherwise failing mass media infrastructure, that basically the evening news would go away if you took away pharmaceutical advertising, because then all that would be left would really be the car companies. I couldn't more strongly agree with the idea of banning pharmaceutical advertising.
Tony?
I agree, and for the same reason that Dylan stated, and one more. I mean, do you ever listen to the end of every one of those commercials? I mean, they scare the crap out of you. I mean, yeah, this is gonna fix your valve in your heart, but you're gonna have 50 other things that might be wrong with you. So yeah, I have no use for it. None. Zero. I agree with Dylan.
This is kind of fun, but this is gonna be the one time when I agree with both of you. Yeah, I for reasons a little bit different, I'm on this advertising thing. I think it's what pumps up prices.
For sure.
You know, I mean, I think that's all this is. It's just, you know, the person that pays for all these crazy advertisements is just the consumer. And so, you know, the prices are so high because the advertising budgets are so big.
The whole thing is the worst. It's one of the worst things about, it's probably this, you know, there are other things in American culture that are worse than this, but this is right up there. And I totally agree with all movement to ban pharmaceutical advertising on television, full stop. I bet you most, but apparently they hide behind some free First Amendment free speech language, constitutional right speech, apparently, because it's been challenged many times and it tends to get knocked down on free speech.
Okay. I mean, like, we're all in agreement here.
That's why it's still going on. I mean, I think that if you ask 80% of Americans, they'd say this is terrible.
Yeah.
I believe the reason it continues is because they're hiding behind a free speech argument in the First Amendment.
Yeah, well, I mean, the tobacco companies did it for the longest period of time too.
Yeah.
So it's not like you know, we've been down this path before. I think this is pretty much a no-brainer. It's going to happen.
Yeah. Hopefully.
I think that's it, right, Beth?
Yes, I believe so.
The other layup is to end moving the clocks, by the way, which I know it's not a topic for today, but if we're going to do obvious things, stop pharmaceutical advertising and stop changing the clocks in the fall and the spring. It's utterly idiotic.
Agree with you there too.
Okay, we all agree on that. I don't know.
Of course, that's what I'm saying. These are the uniform. These are the things that like are just everybody wants. No one knows why we do this. No one.
I mean, I was told it's because the kids don't like to go to school in the dark.
They make that they reverse engineer excuses because they don't know what they're like. They're like, oh, the farmers, oh, the kids.
The farmers is what I always heard too.
I mean, when we were kids, we
Farmers.
heard farmers, but now I hear that they don't want kids going to school in the dark.
It's still dark out when the kids go to school regardless.
I don't know.
Then start school a little later if it's a real problem. I mean, what are we doing? Anyway, I know that's a bonus question. While we're talking about obvious things where there's unanimous consent, in addition to the pharmaceutical advertising, I'm going to throw the clock changes in the bucket.
Thank you, Mr. Radigan.
As the S&P 500 hits intraday record highs.
You are such a politician. I love it.
Thank you, my friend. Appreciate it, Dylan. We're going to take a quick 90-second break and come back. We got a market measure next. Thanks, D.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80+ Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Tom, when you talk about the good guys, who are they?
They are us. We are the good guys.
When you say they take out the weekend, what does that mean to you?
That means when you're a premium seller and they take out the weekend, that means that all the decay over those 2 days, Saturday and Sunday when the markets are closed, come out of the market Monday morning.
When I say bell to bell, what does that mean to you?
Bell to bell is like in horse racing, they would call it wire to wire. And in trading, they call it bell to bell. So the opening bell to the closing bell.
If you're saying something's thin, what does that mean to you?
That means it's not very liquid. That means that the marketplace is relatively illiquid. That's what thin means.
If you can't buy an uptick, what's happening?
If you can't buy an uptick, that means the market is going down and there's no bounce.
How does Daddy do it?
Daddy does it good.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with Tasty Live to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's Market Measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live. Before we do, let's take a quick look at the market. Even the S&P's up 37, sounding off just about $1 off of their highs. At intraday new highs, NASDAQ up 120, Russell up 24, and the Dow up 447. Volatility in by 36 cents. Hasn't had an uptick all day long. Bonds up 8, sounding off. Oil down $1 and change. Gold down 11, although it is $15 off of its lows. That's all I got for you. Bitcoin basically unchanged.
I don't like what's happening here today.
One-way market to the upside?
I don't like what's happening here today.
Does that sum it up?
Yes, up 37 in the S&Ps. I don't like it.
Well, it's Thirsty Thursday, so so you get a chance to drown your sorrows.
Thirsty. Drown your what is the old thing? Drown your losses in our sauces.
That's correct. That's correct.
Yeah. I am Tom Sosnoff. He is Tony Batista. And this is Tasty Live. We have a live show coming up actually in New York City next week. A week from today, we'll be heading out to New York, going to Webster Hall. And if you haven't signed up yet, please do. It's going to be fun. It's going to be the last time we're in New York City this year. And hopefully...
Can't wait.
Can't wait. We'll see everybody, the old stomping grounds. I'm actually going to be in New York tomorrow, but that's for something else. But we're going to be Webster Hall, Tony and myself, and the rest of the crew. It should be great, and we're very excited about it.
You sign up, and it says waitlisted. Please put your name down. People, fall off as it gets closer to the show. We'll open up tickets for you. I'd love to have you.
People literally fall down?
Or fall off. They fall off.
They fall off the list.
They fall off.
That's it, Beth. Let's go.
Beautiful.
Now, my call might have been a little premature to the downside. It's starting to look that way.
Just like Saturday. Understood. No worries.
Omaha.
Yeah, not happy about my premature call.
You need a sauna.
What?
You need a sauna.
I'm still scarred by the robe.
Oh, if that should even be that should be the tip of the iceberg. It's a scar.
Just the tip.
Don't. Oh, I knew it.
Oh, God.
I mean,
You set him up.
Just the tip of the iceberg.
Beth, you can bring the kids over, the whole family. It's a family thing.
Beth never comes over. I've invited her a million times when I had all my inflatables out there for different holidays. I've invited her when it's 100 degrees in the shade.
Yeah, but you haven't invited her to the sauna.
Just got the sauna. I haven't even used the sauna yet. I gotta vacuum it and clean it out first. Yeah, sure.
You can invite her because she's not coming. You can invite her.
Hey, now.
Wow.
I love visiting Tony.
We need a picture. We need a picture with you in the sauna.
Somebody just wrote me an email. This is great. Does Ilya think we're still in a range?
He was. You're insufferable every day. He took your crown yesterday. He was really driving me nuts.
That was funny. I enjoyed it.
Yep, still in the range.
Thank you, sir. May I have another? Let's see what else we got. We got a little zero DT action today. I did not do any zero DT trades today, and probably lucky thing I didn't because I probably would have been a little bit on the short side. So, yeah. Yep.
I just liked having Dylan on the show. I mean, kind of disagreed with you. I mean, your truth or skepticism. You two have a big love fest. I mean,
we didn't have a love fest.
Kissing each other's arses
we,
over there.
We disagree all the time.
Not when it comes to anything related to the.
I disagreed with him on every single topic today except the last one.
Yeah, I know. I'm glad he had a little. He felt like he could be himself because he had me in the room to protect him.
That is so untrue.
That is so true.
Every level.
That is so true. Okay.
But whatever you say.
Mm-hmm.
Let's do it. Let's see what we got, Beth.
I'm ready.
Oh, being directional with zero DTs. Ready for a little direction?
Okay, let's try.
Let's do it. So far, zero DT research has primarily focused on short premium, delta neutral strategies, which are designed to profit from rapid data decay. Many traders, however, have directional assumptions, like I do today, and they wish to act upon. So while the efficient market hypothesis advises caution in relying too heavily on these assumptions, it also acknowledges that there's nothing wrong with them.
Okay.
The zero DT landscape offers unique advantages, including the speed of results, high liquidity, making it a conducive environment for testing directional plays like out-of-the-money verticals. Today, let's get directional and explore the world of zero DT out-of-the-money verticals, examining how the width and strike selection have influenced outcomes. Tony, I'm bearish today. You ready to do a zero DT directional vertical?
Sure. At all-time highs, give it to us. This is the first thing you did that makes a little bit of sense here.
Okay, thank you. First thing I've ever done making sense.
Today.
2.5 years of research every 10 minutes.
Are you going to put it in? I thought you were going to put it in.
Put what in? We haven't even
Your directional, who cares? We know you have a directional bias.
We have to do the study first, see which works best.
You're gonna miss the move.
That's okay. Considered selling zero DT verticals at 9 a.m. Chicago time. It's 9:13. That's good enough. Every day with a variety of short deltas and wing widths. All right. Winners were closed in the first 10-minute snapshot. They were found over 25% max profit. All right.
Okay.
Losers left through expiration. All trades were assumed to fill at mid-price.
Now, losers left to expiration, which is that day. It's to the end of the day.
Let's go next slide. So, put verticals. I'm assuming these are short put verticals, right? So I'm
short 50 delta at the money. Yes. Short 40 delta, 30 delta.
These
20.
have a ridiculous win rate, and that's
$10 wings.
And that's because the market just goes up. So if you just sold put verticals in the zero DTs, you would have killed it.
Yes, at all-time market highs, that's going to be
you'd have killed it.
Good strategy.
96, 93, 90, 86, doesn't matter what you do. You sell put verticals every day, you're fine. Welcome to the club. Let's go next slide. Call verticals. with $10 wings. 77, 84, 89, still pretty good.
Still pretty good.
Short the 20 delta with $10 wings.
But look at this is the win rate's good, but look at the P&L.
Oh, it's minus. Yeah, I don't like that.
Horrible.
That's because you lose more. When you lose,
The
you
market
lose
only goes up.
Okay, let's go to the next slide. I don't like that. Those results. Iron condors with $10 wings. It's not my thing. But you do really well with the 20 delta. That's what we do all the time. And that does work. Short 20 deltas with $10 wings. We do short 20 deltas with $20 wings. It does work 89% of the time. Tony and I have done that at every live show we've done too. It's worked out really nicely.
Yep.
Let's go to the next slide. Put verticals with $30 wings on the short side. Well, these just killed it.
Mm-hmm.
Oof. Yeah. Sell put verticals in the 0 days, Tony. You'll be okay. Let's go next slide.
I think this is actually the 7th up day in a row that if you had bought the opening and sold, well, I don't know what the close is going to be like, you made money. So yeah, all of these put verticals are going to be great. You scalping Reddit.
I have been scalping Reddit all day long, just so you know.
You could only do that in the other 75 positions you'd have. You'd be somebody.
I know. If I could only do it somewhere else. Yeah, I just scalped a bunch of Reddit. Actually worked out.
Good job out of you.
Yeah. Stock. I don't usually scalp stock. Call verticals. Okay. So this is back where I need to be. Selling call verticals.
Yeah, well, your win rate's going to be great, but your P&L is going to stink.
Oof.
So you don't need to be doing this. What this is showing you
How do you get short in 0 days then?
Both sides and manage them as we've talked about in the past.
Oof. Let's go to the next slide.
Because you're going to have that big win rate. You'll probably be making less on the short call spread, obviously. This is iron condors with $30 wings.
Okay, I'm going to tell you something now after looking at this study, which is really interesting. Basically, and it makes sense, getting short in the 0 days in the last 2.5 years hasn't worked in the 0 days. More days up than now. I have a friend I have a friend that every single day he sells the 20 delta put naked in the 0 days.
Mm-hmm. Killing it.
He's killed it.
Yeah.
He's like, why don't you do that every single day?
Right.
And I'm like, because I don't trade that way. He's like, it works every single day.
Yeah, right.
And he's probably right. It probably works 95% of the time.
Sure.
Let's go to the next slide.
Why doesn't he sell the put and buy a call spread too with the proceeds?
Because what do you need to buy a call spread for? The puts working.
You'll make even more is all I'm saying.
Over the 30-month study, SPX rose over 66%. So it is unsurprising that selling puts has been the most profitable way to play. Comparing puts to puts and calls to calls, moving short strikes out, improved win rates. Improved win rates, smaller winners and smaller losers. As with any defined risk trade with unmanaged losers, wing width was the primary determinant of the downside risk. Directional verticals outperformed delta neutral strategies in win rates. That's what Tony was saying.
Mm-hmm.
But lacked the credit cushion from the opposite side, especially when the trades were narrow and close to the money. While efficient market hypothesis allows for trading on assumptions, it's crucial to be mindful of the trade-offs.
What do you think about that?
I still think if you sold puts or put spreads every day, you've killed it.
855-238-2789 or 855-BE-TASTY. Phone lines are open, as usually happens when markets make new highs. We have a lot of time for phone calls, so please give us a buzz. I've got 4 or 5 lines open. I would love to hear from you. Please, the sooner you call in, the sooner I can make him stop speaking. Please give us a buzz. We'll be back in 90 seconds. Tasty Live.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
How we respond to the most difficult situations is ultimately how we learn to build on our successes.
It takes the guesswork out of retail trading.
Dear Kaylee, hats off to you for being such a culinary genius. I don't think it has ever dawned on our kitchen staff to serve gazpacho hot. Sincerely, Bob.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't want to fact check you with my vagina, but I will.
From the smart mouths at Tasty Live.
If you missed the live show, here's our cherry on top.
Did I see a birthing room?
Birthing room?
Oh, stop. Please
behind
stop.
JJ, is there a birthing room?
That's not a birthing room, you genius. Okay. Oh my God. Yeah, we have a home birthing room. It's called. Oh my God, I think it's called a lactation room. Okay.
No, we have a birthing room. At Tasty, we're delivering babies.
It was a great show, very inspirational and motivating. I feel like you got to know each of the traders a lot better on a personal level. It was awesome.
This is my 10th or 11th live event. I thought the math was really complicated and it wasn't, and then it just made sense.
They've opened my eyes to many different strategies.
And I realized there's a reasoning and strategic planning that you could do to be successful. I love all you guys.
In the world of options, somebody once said, for every gimme, there's a gotcha.
It's all about generating positive expectancy in your portfolio.
Welcome to Option Trades today. I'm Tony the Bat Batiste, and I've got not one, but two trade ideas for you today.
Exploring zero DTE. We promised you we would take a look, and here we go.
If you missed the live show, here's our cherry on top weekly recap.
First of all, I'm sitting in the captain seat. I've never been invited to come sit in the new captain seat. But what I'm concerned with is the size of these screens. And that he's still doing this.
Snow, let's take a look.
They did not hold that rally at all.
Phil, you got a partial. 973.75.
I'm looking at this like I have to move my head to get through the top, the top symbols. I thought he had like a little computer and he was getting down.
He hasn't learned that he could like swivel his head. He has to see the screen. He has to go like this to me. And then you know what? Money goes to money. You did it. Good job out of you.
Yeah. I just drove with him twice. Now I'm really concerned that I was just in the car with him for 2.5 hours.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Tomas, we are back, my friend. And you know what that means? Time for a little more Tasty Live. That's right, with this man. Your friend of mine, the very popular Mr. Scott Sheridan for the Scott Sheridan Studios. What's up, Mr. Scott?
What's up, Mr. Scott?
Mr. Scott, I like that.
Oof.
Mr. Scott. Wait, what's the correct answer? Mr. John No Home. Mr. John No Home. Oh, Mr. Scott No Home. There we go. Thank you. I like that as an introduction.
Oh, Mr. Scott.
How are you? Mr. Scott No Home. I like
him
that.
too. I like him too.
All right. So, wait a minute. Are we talking? Did something come up about music? Because I know we had this whole jazz thing, which I'm not going back there again, but did something come back?
Yeah,
Frankie
and I did forget about
posts-
Aretha Franklin. I should have mentioned her.
Well, how could you forget about Aretha?
Wait, whoa. Are you going to say it's one of us too? Like Steely Dan and Aretha Franklin? That's one of us, a you-ish thing?
No. You people are the furthest away from Aretha Franklin than you can ever get. I mean,
I love Aretha Franklin.
and you know who you people are. Don't make me say it again.
Yeah. I got it. Why are we not close? We got Steely Dan and Hall & Oates. Why do we not get Aretha Franklin?
A different genre. You guys are not there. You guys are not.
Really?
You try to be there, but you fail
I
miserably.
didn't claim Aretha Franklin.
No, I know you didn't. I said I forgot Aretha Franklin.
Okay, I would not go down this road with the six.
She likes
You'll
Aretha
be in
Franklin?
for-
Oh, I could see that.
Loves it. Mary
could
J.
see
Blige.
that.
You go
I
to
could see that.
Yeah. Stephanie Mills, right?
I could see that. I give her
See,
Aretha
not
Franklin.
a smile. Look at that smile. Because
Yeah.
you're thinking, you're going, the things. Stop that. I know what's going through your head right now. Stop that. I can see.
I could see that.
Yeah. Tom, did you get a good night's sleep last night?
Sosnov's never listened to Aretha Franklin in his entire life.
Yes,
sure.
he has.
Yes.
But
anyway, I got-
While doing the deed, never.
I got a good night's sleep.
Omaha.
Good, you did, because I went out again last night. I can't keep doing this. This is like 8 nights in a row for me.
Oh, that's ridiculous.
You went out 5 nights in a row.
Yeah, but that's a record, and I'm paying.
And on the fifth night, he forgot how to reach his hands into his pocket. On the fifth
Wait
night.
a minute. If the 5th night was when you were there,
yes,
I think you were up. You were up on the wheel.
I was up on a wheel.
Yeah, it was your turn.
All right, if you say I was, I was. I
I
don't.
would've ta- I
I
would've
don't
taken care of
remember.
it.
I don't remember the how I got up on the wheel. I mean, I don't remember anybody
because he took care of.
No.
Yo.
I was
Yeah.
buying dinner, and then he pulled a fast one. I invited
went
him.
to the bathroom. Went to the bathroom again.
I invited him out, and I invited the other guy out. So I invited both of them, and then I asked the waiter for the check, and he gives me one of these. And because he got up, went to the bathroom, and stole the check.
got up and went to the bathroom.
It was a rookie move.
I have to say, I'm a little
Rookie
disappointed. I'm a little disappointed that they didn't do something for you.
What do you mean?
Like,
Oh,
Well, you have-
because of his connection that he got us.
yeah, like
No,
that
no.
they didn't like. Yeah.
Don't worry. They were great, and
They were great.
Waiter
Did you
was
have a good
great.
table?
What?
Do you have a good table?
Yeah. And they took us back in the kitchen. They took us to their meat locker. It was nice.
I tried to stuff Sosnov in it. He didn't fit.
I made the mistake of saying, "Do you sous vide these? Because how do you?"
Oh my God, this
How do you
guy
get them
went
perfect?
nuts.
And then
They
got so mad at me when I said, "Did you sous vide these?" That they took us back in the kitchen to show us how they made this.
That's
What?
offensive. That's offensive.
They found it offensive because they wanted to show me how they made the steaks, and they have this amazing open fire of which they have
It's
multiple,
wood, right?
Yes, wood, of which they have multiple levels, and then they move it. They slow it.
Depending.
Yeah. Depending on what part of the cook.
Your
I mean, it's
temperature.
cooked perfect.
It is cooked perfect.
And I thought it had to be
I
sous
need
vide.
to go. Yeah, I need to go. This is really
Oh,
bothering me
why
now.
don't you
'Cause-
invite me? That's the Sosnov trick.
Here's the problem with you going there.
Oh no! Oh my God! Here it comes. I can't wait to hear this. Oh, go ahead.
You'll
Here it comes.
bite
Here
on
it
the
goes.
fish. You'll bite on the
Yeah, they got Dover sole.
You'll bite on the fish.
The six will go for the Dover sole.
You'll bite on the fish until you won't get the steak.
No, I'm absolutely getting a steak. I'm a good sharer, so I like sharing, not with people like you who stick their finger through everything before. Like, what is this? You stick
know
your
what?
finger and
You know
lick.
what? He was in the middle of the table. It was just the three of us. Tom, I was sitting to the right of the father. The other gentleman, Sutcliffe, was sitting to the left of the father.
What kind of table were you sitting at that you were sitting in a line?
It was like a booth. It was like a booth facing out.
So
it was
curved.
Good. It was
Got
good.
it.
It was
Got
beautiful.
it.
It was
Okay.
it was a great table. But the gentleman put the food in the middle of the table, so Sutcliffe didn't have to reach over everybody to grab it first. I mean, it was basically right in front of him. And I watched him. He used utensils and stuff like that. He was on his best behavior because I think John was there. If John wasn't there, he would have just
Hands in.
Have
hands
at
in.
it.
Right. He would have thought he was eating Ethiopian food.
Hands in first.
Yeah, I gotta go. It's just I've heard so many good things about it.
You should.
So
Good. Very nice. You like it?
Yeah. Tom, you are looking rested. You're lean. You got good lean. Got
I'm
fresh,
very
clean white
rested
t-shirt
today.
on.
I'm very rested
Right?
today because I just am because I finally got a little sleep and some. I'm good, but I got a lot of traveling this
You're
weekend.
not good. You got some sleep. I mean, I've watched you.
I got a lot of stuff.
I haven't seen you do anything good.
I got a lot of stuff going on the next couple of weeks, so I'm busy.
You do have a lot of traveling this weekend.
I'm traveling for the next 4 straight weekends.
And do you have? Because this is not your show with Tony. This is something else in New York, right?
Yeah.
So do you have a handler, or do you got to go solo and figure
No,
out?
I don't have a
karaoke?
handler. I'm going solo.
Oof. That's why he has 2 flights out. Not 1, but 2 flights out.
Okay, so when you go,
I prefer to travel.
That's bougie, by the way.
I prefer to travel with my handler, and I don't have a handler.
for sure. Okay, so here's the serious question.
What?
When you go to see your mom, do you pack like extra like nice, or do you still go in a backpack?
Oh no, I pack a backpack.
You can't even for your mother, Tony. Come on, what's for his mom? He can't even get up for it for his mom. Like, Mom, I'm here to see you. Got something nice. Taking her out to dinner.
And the
Do you make
first
the
thing-
reservations?
the
Wait,
first-
do you make her? Do you make her get the
Oh,
reservations?
of course.
Oh, do you make her get the check too? I mean,
Of course.
unbelievable. Of course.
Oh, that's great.
Of course. Yeah, we're going to one of my favorite restaurants, and
Is that the clam? Wait, what
No,
are you-
No, he's missing that.
Missing
You can't
it.
mention that. You
can't get
mention
there.
that to him. You got to depress him.
You can't get to the piss clams?
no,
The piss clams. That's what I call them.
too far away.
Only he's
far
had
is too
whole
far?
belly
How-
clams. Right.
How far is too far to travel for good food?
Oh, it's not too far. You just can't eat anything afterwards. Like,
Oh, got
It's-
it. You're sick. You're sick when you're
it's
done.
like eating a Rico Benny's thing and then trying to go
I
out for
gotta go
dinner,
to Rico Benny's. I haven't.
and then trying to go out to dinner 2 hours later.
I got it.
Yeah.
I got it.
Yeah, no, so it's gonna be good.
All right. Well, safe travels.
Yeah, no, it's gonna be fun. Got a whole agenda planned for Maine. So
An agenda?
agenda.
What? Okay. Now I need to know an agenda. What could you possibly have planned for your time in Maine?
I have
Besides
things.
Your mom doesn't ask you to like fix anything in her apartment or anything like that, right? Like she knows you're not capable, right?
Oh, yeah.
Right. Okay. She calls the super
Like if
or
the
something
faucet,
like that,
the
right?
faucet's leaking or something, could you go fix this? He
Right.
goes,
Like
no.
when I used to go visit my mom, she was like, "Anthony, the door's stuck. Anthony, we got to do this. Anthony." No, nothing like that. Right?
nothing.
You're just where we eating?
You don't let him out.
She's
Well,
handy.
Don't
My
let him
mom's
out.
handy. She's
Your
got-
mom's handy.
No. She can't do anything herself, but she has people to call.
People call.
Okay, easy.
But she'll say something to me like my dishwasher doesn't work or something like that. Like it's broken. Because can I get we got to go. I know last time she goes, we got to go to like she had 4 different places listed out. She goes, well, we got to go buy a new dishwasher. I go, we're not going to 4 different places to buy dishwasher. I go, what size is that? I just got online, called somebody up, and they're delivering it Monday. We don't need to see it. So I
Right.
do that. I do that kind of stuff.
But that's an outing. See, that could have been on your agenda. Go see 4 different dishwashers. I
No.
still want to know what's on the agenda. Bowling, like a hike, like what?
Not hiking. But it depends on the weather.
But you said you have an agenda.
I have an agenda, but a lot of it depends on the weather.
Oh, it's
Subject
flexible.
to change. He has an agenda
Subject
subject,
to
to
change.
change.
My agenda when I go to Maine is more where am I eating than it is like.
Do you have a good iced tea spot?
Oh yeah, literally right around the corner. I have everything locked and loaded in Maine. Like my favorite diners, favorite lobster rolls, favorite fried clams. I got everything.
Mm-hmm. Except for you're not getting the fried clams.
I know, but I got other things.
Okay.
Trust me. I got an agenda.
It's okay.
Next week, I have an agenda in New York City. Tony.
I have an agenda, Tom. It's my mom's birthday. I think I got to miss dinner. I got to go see mom.
I mean, I
That's a good
understand.
That's worthy.
Yeah, I guess.
Where is she in Brooklyn or somewhere else?
She's in Brooklyn.
In Brooklyn.
Just on the other side from Manhattan. But
well,
yeah,
you got to do. Well, you got to do it.
Yeah. Not that I don't want to, but I have to.
Yeah, of course.
Well, on the way back, you can stop and pick us up some pizza.
I won't be in that area, but I can pick up something.
You can stop at L&B's and pick up some pizza.
No, I'm like all the way on the other side. I'm all the way across Brooklyn.
You can pick up some scungili.
I can pick up some scungili for you for sure.
And then throw it at him.
I would like to throw it at him.
Scungili.
Uh-huh.
All right.
Let me tell you something. Well, I wouldn't go all the way to Brooklyn to eat scungili, but it's kind of sounds.
What is it?
It's like a snail.
Oh, it's not like Dover sole. Okay, I'll tell you that.
It's like a
It's a giant
rubbery snail.
Yeah.
It's like calamari, but it's got an Italian name.
It's like calamari.
Grilled or fried?
Italian name. Oh my God, I can't with them. I just can't. I just freaking can't. I can't.
It's like rubbery calamari.
I was gonna say, it's like when calamari goes, like when you get a bad calamari, it's kind of rubbery. That's scungili.
Is it grilled or deep fried?
Could be, but it's usually deep fried. Not deep fried. I mean,
No, it's usually like
in a sauce. Like they cook it in a sauce.
Yeah, they cook it like a meatball in a sauce.
Yeah. Very good. It makes it more tender that way because it cooks forever and kind of gets you.
It's like octopus. Cooked like octopus.
All right, we're moving on. Okay, let's go to some business.
Before we do, 855, because
Yes.
I don't want to interrupt you when you talk, because I don't like to interrupt people when they speak. So I would like to get this
I
in. if
appreciate
could.
that.
855-238-2789 or 855-BE-TASTY. If you haven't had a chance to call in, you can call in right now. And I apologize if you tried to call in. I forgot to turn on the phone lines, but they are open. I have 4 or 5 lines open, so give us a buzz, please. 855-238-2789 or 855-BE-TASTY. Phone numbers below. Thank you.
Nicely done.
I'm done.
Thank you. Top 20 symbols going through the system first 40 minutes a day. No broad-based indices or futures. Time for you, number 20, Netflix at a 12. For everybody else, Oracle at a 53, Open at a 35, Tesla at a 7, MU at a 47, NVIDIA at a 1. Apple at a 14, GLD at a 20, AMD at a 13, PLTR at a 13, Amazon at a 6, AVGO at a 9, Bybit at a 17, UNH at a 32, KR at a 58, TLT at a 7, Meta at a 5, Hood at a 12, CNC at a 68, Goog with an L at a 17, and number 20 for Tom, Netflix at a 12.
Sadnov, what do you have to say about that?
Nothing. I mean, there's not a lot on there that gets me going.
I feel bad about you being able to get going.
Stop.
Poor guy. He's got troubles.
All right.
Got troubles. Even his troubles have
Troubles.
troubles.
I got troubles you don't even know about.
Even his troubles have troubles.
Yeah.
Even the S&P is up 42.5. Sadnov, what do you have to say for yourself? Oh, you're selling more Reddit. He's scalping Reddit stock now. This is what he's become.
I'm short Reddit. That's not working out so well. Is this the best they got at 43? 43 and a half?
All-time highs? Is it the best they have?
All-time highs? The best they got?
Is NASDAQ 24,000 an all-time high? I don't know.
I will give it to you right now. Yes.
I don't know, but do you remember the low
higher
tick?
yesterday, if I remember.
Do you remember the low tick in SPOOs in the financial crisis?
Yeah, in 2008? Yeah, 666. Yeah, right around
666.
Yeah.
No, it was right there. 666 was the low tick.
Okay, what's your point?
So how about 6666?
On the even the S&P, you're talking about 6,000.
80 points higher, and then I don't know.
I mean, it's a good conspiracy theory.
I mean, yeah, it's got.
Right.
I mean, are you one of those people now?
One of the best ideas you've ever come up with.
I'll just throw it out there. That's
it's very
your number.
Jules-like. It's very Julesy. Yeah.
Right. There we go. Okay. There you go.
By the way, speaking of football, I hear
Yeah.
I hear there might be some 8.5s offered. Are you still bid?
Okay.
I'm 7.5 bid.
8.5. Just so you are clear, we got plus 120, not even.
With me?
No, from a betting app.
What do I kid? Last year I got some other things. Who cares? What we did?
No, I'm not 8.5 bid.
Oh.
I'm 7.5 bid.
All right. Just
Not a
and you
lot.
heard about
though, at
Arlington
7.
Heights,
Hey,
right?
Hey, not a lot at 7.5. So if you're going to hit it, you better hit it.
Did you hear about Arlington Heights? Did you hear about Arlington Heights?
What? That it's a done deal?
Bears are going. They're flying the coop.
No, they're not. No, they're not. They're not. The Bears are not leaving Chicago.
It'll be 5 years from here. By then, you'll be living in Florida.
For sure.
You'll be rooting for the.
You'll be Tampa Bay fan.
Yeah, you'll be a Tampa Bay fan if you're lucky.
That's a dark day.
Or a Marlin fan. That's even worse.
Oof, that is worse. Dolphins. Dolphins.
Did you hear about the Marlins?
The Dolphins.
Yeah, it's a dark day.
You'll be a Dolphin fan and a Panther fan. I mean, by then the Panthers will stink.
No, you know my recommendation. You got the U or you got Florida State. Both of them are playing well. You go there. You go to college football. Switch your allegiance.
He can't go to. He's not a college football guy.
I am not. He's right.
Yeah, and
really,
and Florida State's nowhere near him.
Well, he's in Florida. Here's the U, but
in Florida, you go to how far is Gainesville from you? That's Florida. It's like 5 hours. Right?
Yeah. Across state.
Yeah, it's like almost.
What's top to bottom? What's top to bottom in Florida? If you were to drive 8 hours,
like 8 hours at least.
Yeah, 8-9 hours. It's
yeah,
long.
but I could be at Fort Lauderdale in under 3.
You could cross the state in 3 hours.
Yeah, it's a little part of the state down there.
A little tushy.
Little tushy. I'm going to let you go, my friend, before you get me in more trouble with that. 855-238-2789 or 855.
Have a good day.
Still got lines open. I would love to hear from you. I'm going to go to Georgetown. I got Problem Child in Georgetown. What's up, my man? Are your ears ringing?
His ears are ringing.
Hi, fellas. How are you today?
Good, brother. How are you?
Fantastic. Always good to hear your voices. Hi, Scott. I saw that. So, oh man, I emailed Tom like twice already. I don't know if he saw it. The Preds went to Joe's. Did you see that?
I saw it. Yeah. Yeah.
All right. So I didn't hang out with everybody and get the whole scoop yet, but I'll find out probably tonight.
Okay.
Find out if he got the fried chicken or not.
Well, the other thing is, the big thing is, there's like this Tattletale website where they how did the protesters get into the place and be in the dining room? He didn't even eat at the PDR upstairs. So
did you
that's
see?
like someone on the staff like tattletaled.
Yeah, they blasted him. It was brutal. Yeah.
Yeah. All right. So speaking of that, where are you on the whole poly market thing right now?
What do you mean? What do you want to know?
Well, you're friends with the guy. I know that, right?
Friends is probably a stretch. We know each other quite well, but we don't hang out together. That's for sure. I mean, he's 25 years old, 26 years old. Nice kid.
Oh, I didn't realize. Right.
Yeah,
okay.
Yeah, he's a super.
Young.
Oh my God, he's like a baby. He's a baby. He's I want to say maybe 26, and really, really smart kid. I think I've known him I've been talking to him since he was probably 19, and when he started Poly Markets, or 20. Just a kid who grew up in New York City. His parents are teachers. Just a kind of just like one of these super rocket scientist kids who built something amazing.
Total nerd.
Yeah, he's not really a nerd. That's the funny thing. He doesn't come across that way, but he's a kid, and he's he built.
So he's half cool.
He's half cool, and he built a really cool project.
No way.
Yeah.
Well, you're cool. That's why I always liked you as a trader, because you're cool.
Of course, but I have to I have to take it down a couple notches to be with Tony.
No, take it easy. Take it easy. All right. Well, all right. Just, I know this is a side thing, but what happened with the CFTC with the whole Polymarket thing? They cleared them. What happened?
No. So I'm not. So Polymarkets was never legal in the U.S. because it's.
Oh, I know. Believe me, I know.
Okay, because it's all crypto. It's not. It's everything's been digitized there. It's not. They don't take cash. It's a whole different thing. And they had a lot of other firms that were working with the SEC to keep them out of that space. And eventually they got bigger, and then they got some exchange licenses and other things like that so they can go live.
All right. So earlier today, you were saying you were getting confused about all the mumbo jumbo with these tokens and this and that and the other thing. Let's just get something straight. What the hell is going on in here? What are we doing in here?
No. I wasn't confused about tokenization. I was confused. Customers were asking me questions about the processing of tokenized securities and how the back end of it works, like how they're created and how they're cleared. Like, what's the actual mechanism for that? And it was hard for me to articulate that, so I had to look that up because that's hard stuff. Because I'm not, I don't create, cryptocurrencies and digital assets, and we are not a clearing firm. Like, we use a company called Zero Hash, and that's who we process our stuff through.
Zero Hash,
and then they build the back end. So, so they're kind of, that's who we facilitate everything through. Now, we were their first investor, so like we have a relationship with them from day one, but they're the company we use, and we like them a lot. And we're not the only company that uses them. Basically, not every brokerage firm, but
widely
used. Interactive Brokers, Tasty, TradeStation, Morgan Stanley. There's a lot of brokers use them.
Yeah, all right. Hey, so one last question. What the hell, if the Supreme Court goes against the tariffs thing, that's bearish, right?
I don't know. I don't think so, but I don't know. I don't know the answer. Because the market doesn't seem to care. Market doesn't seem to care.
Market doesn't seem to care about it.
I mean, 50% up. Everyone's like doom and gloom, and the whole thing's going up. Oh my God! All right.
Hey, PC,
you gotta get new friends who aren't doom and gloom and are riding the wave.
Yeah.
I'm not doom and gloom. I just like to tease you guys. I'm not doom and gloom. I'm an optimist. I mean, you changed my life.
I mean,
you created a monster. You created a monster. I'm like getting good at this stuff. I mean, forget about it.
Hey, we got to run, man. Talk to you later.
Guys. Okay,
thanks.
bye.
Awesome. Thank you so much for the call. 855-238-2789 or 855 Tasty sounding off. E-mini S&P's up 43. You just did a little piece on 0 days selling call spreads. Is now the time to do it?
As opposed to the 93 other times?
As opposed to the 93 other times or any other time? Highest we've been in the E-mini S&P is about 4 handles higher than this.
It's funny that...
who cares what you think? I'm going to go to Philadelphia. I got Bank in Philadelphia. What's up?
Hey, guys. I remember the first time I met you was the New York Money Show, and I think Tony had like really curly hair. He was doing the big display, and Tom was giving this speech. It was like 6:15 on a Friday, but I'm not sure if I can make it to next week. So I'm here in Westchester, which is the town in Pennsylvania with 2 words, and there's the Rams Diner, which is named after the mascot.
Where are you?
I got to know the owner of that.
Where are you?
And he'll like summon me. Pardon?
Where are you, Bank?
Yeah, I'm in. I'm getting a little bit of an echo, that's why I put the phone away. But I'm in Westchester, but it's 2 words. It's not the New York, it's the Pennsylvania one. It's a college town.
Got it. That was okay. Got it. Because I grew up in Westchester.
Yeah. That's yeah. So
you're in Westchester.
Right, yeah.
You say
the
bim, bim, bim,
Philadelphia
bim, bim,
suburb.
bim.
Oh, he's in Westchester, New Jersey, or Pennsylvania.
Pennsylvania.
Yeah.
Got it.
All right, so I'll try to speed it up here. We got the Rams Diner, which is named after the mascot, and the owner of that is this Egyptian guy. I've gotten to know him over the years, and he'll kind of summon me, hey, come in and bring your computer, and he wants me to look for stocks, under $10. I'm like, look, I don't have the crystal ball. So the last couple of weeks, he's been over this this stock called Open.
Sure.
And he'll text me at night, and last night it went up $3, and
it's up $3 today. It's a meme stock extraordinaire.
Yeah.
Yeah. So I'm just trying to revisit the basic. I know I should know this, but just for the benefit of everyone else, how the old strategy of selling a put to get the stock cheaper. Can you just go over that again?
Tony, the wheel. The wheel.
The wheel strategy?
He wants you to explain the wheel.
So wheel strategy is just selling a put, which is a bullish strategy, right? Typically out of the money, around a 30 delta is where I would go. No higher than 50 delta. That's how I would do it. And then I know Liz and Jenny do this a lot more than I ever would, because I roll my puts before I get the stock. But I'll tell you the wheel strategy. Selling the 30 delta to the 50 delta, usually my wheelhouse. The stock goes lower, it goes the opposite direction that you want it to go, and now you've held it all the way through expiration, and you're taking control of stock. You're being given stock at expiration. Monday when you come in, following expiration, you'll have 100 shares of long stock. You then sell a call out of the money, typically around the 30 delta, and that's what they call the wheel strategy. So they're taking the put, their cost basis is lower than where the stock is now. They're taking the stock, hopefully it's still lower than their cost basis, and they're selling a call, keeping the dream alive, still a bullish strategy. I would prefer you roll the put at 21 days, when there's around 21 days to expiration, take that put and roll it to the next month. It's going to cost you a lot more buying power to take control of the stock, but you will get any dividends that are paid if you do take control of the stock. So this doesn't give me any gotcha.
Okay. Yeah, Tom, just real quick. We got this place here called Jimmy John's. They don't call them hot dogs. They call them Frankfurters. They've been around since 1940. Maybe think of you. I'll send you some pictures. You would love the place.
It's called Jimmy John's?
Yeah, it's not the one. It's not the sandwich franchise. It's another one. They've been in business since 1940.
Wow, never heard of it.
Yeah, I mean, it's a local place. Actually, I think there's a YouTube channel that talks about, the 10 great spots. But I know, your philosophy is a hot dog can solve a lot of life's problems. But they call them Frankfurters. There's a difference. You got to look it up.
Oh, no. We grew up calling them Frankfurters. But my saying was more of not that a hot dog solves a lot of problems. It was that if you can order a hot dog, you can trade.
You can order a pizza.
Well,
or a hot dog. I just remember
you said after the 87 crash, you had a hot dog.
He did.
Oh, yeah. No. There's 2 times I went to the Wiener Circle after work. Once after the 87 crash, I went to the Wiener Circle, and because I wanted to make sure that the world was still in one place. I mean, I left from grown men crying to a hot dog stand where I was just like, okay, nobody here cares that the market just crashed today.
Yeah, it didn't make a difference.
Yeah.
And the other time I went to the Wiener Circle was after my daughter was born, and I left the hospital that night to go home. I stopped at the Wiener Circle. I'm like, okay, this is a celebration.
Yeah.
You sure know how to party, Saad. Bank, I got to let you go, my brother. Appreciate your time.
All right, thank you.
Yeah,
Thanks,
appreciate
Bank.
your phone calls. Everybody, even the S&P is up 40, all quiet. We'll be back in 90 seconds. We got Liz and Jenny next. From the floor of the SIBO. Peace.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
I have made a deal with the devil and I'm long UNH.
What's your most controversial market opinion?
Well, my newest phrase of the year is until proven otherwise, which basically means buy every dip because they've been gobbled up pretty quickly. And even like the tariff stuff, at the bottom of the tariff stuff, I was like, ooh, maybe things are different. And now here we are at all-time highs, like 2 months later. So I think you still got to keep your size in check, but I think the dip buying is here to stay.
Well, I mean, I already told you my UNH trade. I have made a deal with the devil and I'm long UNH. So I think that is pretty controversial. I don't know a lot of people that know about that stock, let alone trade it, let alone want to be long it. And so I feel like it's a whirlwind of just heinous attitude that has to be to the upside now.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
People are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here.
And everybody's waiting for my podcast tomorrow. Option Trades Today every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast.
Option Trades Today. You listening to me? Option Trades Today comes out every day around noon. Every Tuesday and Thursday. You too can stick with the bat.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Clip thy waxen wings, thou economic Icarus. Discard these feathery adornments, thy flight's too vigorous. Rather, garb thyself with the soft fur of the bear, and dwell in low burrows of the valley fair. Forsake thy previous highs and perilous summit, for lo, I am short, so I must needs thee plummet. O market, I implore thee, make no high. Like some comic Fozzie, unclip thy bow tie. If thou dost tumble, I shall offer thee up a succulent hoagie. So, ye markets, remain as bearish as beloved Yogi. Follow thee the lead of Kipling's Baloo, and may the move be sweet as honey to Winnie the Pooh. With joy I watch descending chart lines straighten, run down with quickness and sweetness, like Lord Walter of Peyton. Let curious traders admire thy Berenstein way, and joyfully stealing some porridge, let us now say, sweet bearish market, never would I cage her, but admire her drop like some terrestrial Ursa Major. Come down, ye markets, to this sylvan glade, and let the bears have their day at Tasty Trade.
The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Tony Bat Batista, the John Jay College of Criminal Justice. Number 69, because it's one standard deviation plus one. And you know, I'm the Bat.
John McLaurin, Wisconsin, number 2, because I'm Beth's right-hand man.
Vanetta Logan, the Indiana University. Number 3, because that's how many shots of bourbon it takes to make it through the first hour.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week. with the Forex platform that adapts to your style. And speed. FX marks the spot. Trade it on Tasty Trade.
Hi, my name is Liz Deerking. The beautiful brunette next to me is.
What an intro. Jenny Andrews, and we are about to play a very exciting game. No. Hold on.
No, you're wrong.
I'm Hold on.
She's wrong. I'm right.
High school party, high school condom.
Yeah, because it wasn't high school.
I had friends at my high school who were mutual friends of Liz, and so we were all at the same party.
And then parties for the rest of our lives.
For the rest of our lives. The same thing with college. She went to a different college. I went to a different college. But we both ended up at the CBOE together.
Yep.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it. Some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style. And speed. FX marks the spot. Trade it on Tasty Trade.
I did not like the close yesterday in the NASDAQ or the S&Ps for the good kids. I hung in there all day until right at the close.
I am not an animal. I know that. Don't say I'm.
We're live, dude.
Is this good for the good kids?
But generally speaking, when we're talking about risk-free returns, they're 1 or 2% around the globe right now.
The U.S. government has filed. Do you not care about what I'm doing over here?
I care.
Ignoring the person speaking to you. That's at 7:53 on Friday, and I don't want to say it, but I got bingo! Sazlo bingo! I won! John, can you come in and validate this, please? I would like to have. I have the times and the references.
Yeah!
Good for the good guys.
Woo! We got a winner.
Pounds
Winner,
and claps
chicken
on his
dinner.
desk. You get the free square of the bat in the middle. Accordion hand gesture. You take it right here, John, and then ignores person speaking to him.
All right, who do we need to fire for this?
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it. Some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Hello, everybody, and welcome to the Thursday edition of the Liz and Jenny Show, one of my favorite shows this week because we have Glenn on. Hello, Glenn. Welcome.
Hello. Thank you, guys. Last week of No Red, I promise. I'm going to order a shirt today.
It's Christmas in September with
there
green.
you go.
And let's put them in the middle.
Yeah, I don't mind you and green. Don't go out and buy a bunch of red shirts.
Just one.
You're a guest. Well, look for that red blazer. Look for the red
I
blazer
know.
in the.
Liz, I could probably pull off that cardigan look, too, yeah.
You can borrow mine. I keep this here, Glenn, for specifically for Thursdays because I'm in athleisure wear right now. I throw the blazer on. It's like, then all of a sudden I'm suited up. You just need the blazer. We'll leave it in there. We'll find it for you.
Fantastic.
Glenn, what is going on? Were you out last night?
No? Does it look like it?
I
What
didn't
the
know.
heck?
Don was making some jokes. I didn't know if you were out last night.
No. The only reason why that hurts is because there will be people in the office where I come in on a morning and I'm just like getting coffee, and then they'll say, "Whoa, are you hungover?" And it's like, "No, I went to sleep at 9. Sorry, you just tell me I look bad."
No, you look fantastic, and don't let him talk to you. You let me know who it is.
It's Todd McCarthy. I'll tell you right now.
Okay, I can see Todd McCarthy.
When we first started, we were in a duplex, and it was like a house. So there were couches, family room, and we were all younger back then. And there were plenty of times people would be taking naps on the couch.
Oh, that's us. We were still old when we started.
Hey, we were young-ish, young enough to go out at night.
I don't know. I mean, we had a 2-year-old. We each had 2-year-olds. I had a 2-year-old and a 3-year-old. I didn't go to bed past 9 o'clock.
That's a lot.
You might have, because you might have, but not me. Okay, Glenn. So what's going on in the FX markets? Talk to us. Is the CPI? Are you wearing green because it's Christmas for you with the CPI?
No, I'll wear my Super Bowl outfit for the FOMC meeting next week. But yeah.
FOMC. Okay, FOMC is the Super Bowl.
Yeah, because if Christmas was today with CPI, pretty boring. But it was surprising. We had CPI come in completely in line, except for 1 month over month that was a tick higher. But yeah, pretty nothing burger there after soft PPI yesterday. But the reaction was pretty surprising. We're seeing a lot of dollar selling, more so than I would have expected. So I wouldn't have expected dollar strength to have been priced in there, given that we were still seeing, if you look at the CME FedWatch tool, we're still seeing, or even before this morning, we were seeing around a 10% chance of a 50 basis point cut in September.
Still a 10%?
Yeah, it's a little bit higher. It was 12 last time I checked. So market's still predicting that the most likely path for the end of the year will be a cut at every meeting, a 25 basis point cut, and those odds have increased after the CPI came in line. So dollar selling on that news, but it's good for FX traders, I think, because you're getting more ranges ahead of this FOMC meeting next week. There's also a case where these markets really weren't moving at all the way a week in advance up into this meeting. So it's nice to see some movement, some unique price points. We've got Australian dollar, US dollar at new year-to-date highs, almost near 66.5 cents.
And it's supposed to say, let's pop in. I've got the FX up.
Awesome.
And so we can share with the class what
All
we're
right.
looking.
Yeah, let's pull it up.
Okay, we'll put the platform up. So I'm in Tasty FX, just this little button right here, and you were talking about Aussie US dollar right here,
Yep.
right? So Aussie US dollar right here. There we go. What kind of a chart am I in?
Yeah, so you're looking at the daily, and so you're looking all the way back to it looks like about beginning of March. And if you kept scrolling out, you wouldn't see this price level until November of last year. So through those highs, we've had a pretty consistent range year to date, or since those April lows shook out, of around 64 cents to 66 cents. Now we're seeing a possible breakout above there, definitely through the highs that we previously hit. But it's still just 1-2 days, so I don't know if you can call a complete breakout, and this is a trending market. You could still see this reverse and trade into this range, especially ahead of the FOMC. We're seeing a hell of a Australian dollar rally from September on.
That looks pretty there.
Yeah.
From September 5th on, right? So it's been stair-stepping higher.
Absolutely.
So this is what we're talking about with dollar weakness with the CPI this morning, right?
Yep, absolutely. So if this Australian dollar, US dollar pair is going up, that means it is moving in favor of the Australian dollar at the expense of the U.S. dollar. So this is the big mover, but all pairs moving, to the degree of 0.5% in against the dollar. We also had an ECB meeting this morning. So looking at the euro dollar, we're seeing some euro strength across all currencies that they're involved in. But yeah, coming off of still hovering around this 117 level. So this range has been more boring this week so far. But hopefully next week's action will increase the volatility in this pair.
So how were you positioned for this? And I just kind of want to pick your brain a little bit, if you don't mind. So were you and a lot of the FX traders that you surround yourself around? So we're a network of traders, and I'm an investor in the FX bubble there's lots of FX traders sitting around you. How are the FX traders in the office positioned? Are they looking for a weaker dollar or stronger dollar? Because it could go both ways.
It absolutely can. And the main takeaway here has just been that we've seen pretty tight ranges. So the more interesting perspective, I think, is just trading around these ranges. We haven't seen in this euro dollar market, we haven't seen anything above 118 since we got there. And when we hit 116, it's been very rare that we trade through it. So those price levels, are more interesting than any, kind of longer term position calling for, euro 120. Of course, you have people that have opinions one way or another on long term dollar positioning, but that varies. Right now it's just looking for unique price points at extremes that we haven't seen break through. And then, that move below 116 back there in August, once you trade there with some veracity, you tend to see things slide. We've seen this pair go from 104 to start the year all the way here. So you definitely have to respect when it does break these ranges, because these can trend very quickly. But that's just not what we've been seeing lately. And so it will be very interesting to see once the cutting cycle resumes as it's supposed to here next week. I think we should get a big uptick in volatility.
Because Glenn, what do your positions look like? Like, what is? We open up Glenn's platform. What does it look like? Like, what do you have on?
I don't know if I'm necessarily allowed to say what I'm trading personally in this space.
Oh, you can't?
I don't know. I get in trouble for a lot of things, so I don't know if that's one that I could.
If we can't hear about your positions, Liz and I are leaving for Europe this weekend. We're both heading to Germany. How could we hedge all of our European spending with an FX position?
That's funny. Yeah. So if you were to get long the euro dollar right now, then you're effectively locking in that rate that we're at right now. So right now your to get 1 euro would cost you $1.17 roughly. So if you go long this pair, then when you get to Germany and the exchange rate, you go to exchange money and it's 1 euro for $1.20, then you're worse off, but your hedge here has worked in your favor. You've gotten those 3 cents back in these markets, and with the leverage involved, maybe even come out ahead.
Okay, so I just put this in. So if I want to get long it, I size $10 per pip. How much money am I putting into this? Why can't I see that?
You have to select the direction. So when you click buy there, that buy price right above the size.
One?
Yeah, click that one.
There we go.
Yeah. So
too much. Retreat.
How much was it?
I was $2,000.
Oh.
Yeah, so a one standard lot position will command a position of 100,000 euros, and margined at 2%, that'll be around $2,500 at the current exchange rate.
So I'm going to put in $1.17 into this just because. How about that?
I just brought it up to
Yeah.
just for fun. But it is kind of, I mean, we're up at high levels. This would assume we're going to keep
Let's
going.
do it. Let's hedge our Germany position. So I'm going to do this. I put in, and then it's already 10:15. We're gonna. Glenn's a very busy FX trader, so he can't keep his time in. So I'm going to put in 0.10. So if I'm looking at this correct, I'm buying it. So I'm buying it. We're hedging our euro position. It's $2.34.
Now, if we put in an order to sell it, then if we buy it here and put in an order to sell it at 118.
Yeah, that's what we're going to put it in.
Okay.
Take profit. Can I do that now?
Yeah.
Okay, so do I pips away or should I just put it in for one? Can I put in 118?
You can put, I'd go pips away, or you can hit the drop down and do US dollar profit. So if you're looking for, once this hedge.
I want pips away. I want to get out at 118.
Okay. Yeah. Then I would just I'd put in, 60 pips away.
Okay. So
65.
Right. Because if we're at 173.
Yeah.
Yeah.
And then you can edit it on the chart afterwards.
Perfect. I'm placing this trade. So we're going to get out when it pops up to there. I'm only taking profits. I'm not stop lossing. Okay. Or do we want to stop loss at 116? Because that's the range. Once it breaks under that level.
Maybe 116 for the stop loss.
Okay. So stop loss, that would be, what would that be? How many pips away is that? Somebody do the math. If it's 117 to 116, it's going to be
130.
130 pips away. That's fine. That's exactly what we're doing. Like double the.
Yeah, that's good. That's good.
All right. Look at this. Place trade. We're in.
All right, you're getting to be a pro at this, Liz.
Yeah.
I don't know that I would say pro.
But now we could go and spend freely in Germany, not worry about the exchange rate going up. We've hedged ourselves with this.
There you go. And if you would have told me about your trip in January, you would have been in a much better place, locking in near parity.
So, Glenn, when we are drinking our steins of beer in Germany, we'll send you a picture because we know we got a good price. How about
All
that?
right. That sounds like a plan.
All right, Glenn, thank you so much for coming on. Yeah, it's already 10:16.
Thank you guys.
Have a good week, good weekend, good week. Liz and I won't be here next Thursday. We'll be in Germany, so you're off the hook.
Oh, nice. Well, I'll be in New York with Tom and Tony if you're coming out for that show at work at 11. San Francisco was a ton of fun. A lot of people there. A lot of fun meeting everybody. And Tom and Tony killed it, as always. So if you're in New York next Friday.
You're a crowd favorite. We learned this when we had people come in for the At Work by 11. Lots of people. So good. I'm glad you're traveling with them. So keep them in line. It's your job to keep them in line next week, okay?
Will do. I mean, I didn't do such a good job last time, but we'll get them in the second half.
It's hard. It's hard. All right. Thank you so much, Glenn.
See you guys.
Bye, Glenn. Okay, that was fun. We've got a new position in our FX.
We've got a winning position in FX is what you're supposed to be saying.
Hopefully.
No, it is. Look at it. It's the only green position.
Oh, up by 80 cents.
Yeah, we've got
the
a green
other
position.
ones, we talk about the decade that Tom was rolling his bonds. Remember he rolled his bonds?
The 10 years. I remember that. Yeah.
So if you've got enough capital in your account, you can just roll till you're right. It might take a while. Or
you don't even need to roll those, do you? You don't need to roll your FX positions. You just sit on them.
No, we just stay with these. But and also remember we had one viewer who said I sold the 205 calls in Apple, and Apple was trading 3 something, and it eventually came back to 205. I remember the day.
Oh yeah. It did eventually. Okay, so Jenny, we've got a lot of stuff going on. We are going to be taking live tweets. Put the hashtag LIZJNY on there. We will be going there. We also we're going to take a look at all the trades we put on yesterday from What's Your Assumption and see if any of those can be managed. Coin is now a loss.
Okay, so that's all right. Look at Tesla. So Tesla we put on yesterday. Coin and Tesla, similar positions. We sold a put spread and bought a call spread. You can't, when you're doing that, when you're selling a put spread and buying a call spread, and you're doing it for even or small debit or small credit, you can't focus on the P&L open percent.
No, with those, I was focusing on, and the reason we were talking about this is because coin was a $70 win earlier, but I think that has to be wide markets. But when you're looking at this, I'm not looking at the percentage open. I'm looking at, we put it on yesterday. We made $100. Let's take it off.
Yeah, Tesla, that's only $5 wide. It's only a $5 wide spread by $5 wide spread. It has $500 in profit potential, but $100 overnight, we're gonna get $500 in buying power back from this trade. And we're, we used a lot of buying power yesterday. So
Good. The other thing I wanted to show you, we were kind of talking about this earlier, all symbols, hold please, yesterday. So our natural gas position that you had put in, the broken wing butterfly, filled at 108 yesterday. So we're going to go in and look at that. And so here's the Tesla position as well. Everything else was pushed out.
okay, and I'll get that out to the follow page. Can you go to natural gas, the curve view now, and take a look at our position since we were filled? Now we've got a bigger position in natural gas, but an easier way to look at it is on the curve view. You can see the green flag is where natural gas was trading.
That's where it's trading right now. I just want to show, I'm just going to move over a little bit. So we have locked in, no matter where it goes to the upside, a $30 profit. We had locked in a $50 profit. We realized we gave it up. So we gave up $50 in profit potential to come down. And keep in mind, natural gas is one where you can just let it go because no tankers of gas will be delivered to your home. This is something you can let it go until the end. I don't know what time it closes though.
We have 2 weeks and we're going to leave this. We'll just leave this because now to the downside, if you take a look, if you keep scrolling or shrink this so you could see more of it.
I'm going to shrink it just because it gets kind of wonky in this. So if you go to here, what we're playing for is we are now bearish natural gas. This 2.85 would be our ideal range, and we'll make $1,000 there. We cannot lose. Here's what was the valley of death that Jenny has turned into a $30 profit somehow. By maneuvering the strikes. So you can't lose here. And then what we gave up is our peak here. It used to be $1,000 at 2.65, but that's what we gave up. It's now only 500, but I'm okay with that.
Yeah, because it was so far away. It was so far away and such a low probability of getting there. So we moved and added like a new peak in between where natural gas was trading and our original downside butterfly. So and our risk to the very, very far downside is 470, right?
It's the most that we can lose. And we don't start with them. 470 will be lost anywhere under 2.55.
And when was the last time we've seen natural gas under 2.6?
Oh, it's been there.
It's been there, but it feels like it's been a while.
So hold on. It's
after the dollar sign.
It's been there. But it's not under it. 2.55 is right here.
Oh, but I said below 2.66. Below 2.6. I don't think it hit it.
Oh, it has hit it here.
I know. I mean, in history, yes, but not the recent time. Yeah. Now, where are you?
This is the end of last year.
Okay. So again, we want.
The only reason I know that is I love natural gas, love it, and I loved it down here.
It makes it easier. It makes it easier to trade. Way easier to trade when it's in the 2 handle than in the 4 handle. That's
true. Look at this market. Can't stop, won't stop. A SPOO's up 50 all-time highs.
SPOO's up 50.
We hit it. We did it. Get your hat. Get your rally hat.
You know what? I have a lot of tricks over here. I've got and this is red. I don't know if it'll show up.
Oh my God. She's got her party hat on and you can't see it at all.
It's not gonna show up. Red party hat.
Get your hat on. Get your party hat on because we did it. All-time highs.
Get your rally hat. Get your rally hat.
That's pretty funny.
All-time highs. Check the cues. Let me see the cues. So here's what I've seen lately. Whenever we put on a bearish trade, if we get a day that it's profitable, we have to get out.
100%.
And we had a couple like diagonals or calendars or whatever. I think maybe a diagonal and SPY or calendar and Qs. And we got out on a down move. I think we put those back on. And then one small down move, you have in order to get out of them again.
So let's do, and I know it was in triple Qs we did it. We did that. Let's do it in SPY.
Yeah, let's look. I mean, so in triple Qs, we did a short-term calendar, kind of like a pool medic style.
So that's what we did in triple Qs. I think it's going to be expensive here. I'm actually going to go 650 an 8-day, and I'm going to go 22 days 650. I just want to try to get it cheaper. That's not bad. $2.50.
And we're at 650, which isn't I don't know if that's far enough. Is that far enough?
Well, it's a short term. I went 8-day, 22-day. So all I'm looking for is a little bounce down. Now you can do it farther than that. So I didn't even go to the expected move for this cycle. You can go 648. And then if you want to pool medic style, go here, go 648. And we're spending 340. That's fine. It's the expected move for the cycle for the 8-day.
Here's what I'm shocked by. This is what I'm shocked by. Can you just go to the 8-day again? And what I'm shocked by is that in 8 days, the expected move for the SPY is only $8.88. For between now and next Friday, the expected move is over only $8 when we're up $5 right now. So where's the VIX in the 14 handle?
The 14 handle, right? So as the VIX shrinks, that expected move, because SPY is based on the VIX or VIX is based on the SPY, that expected move shrinks.
And will you go back to SPY for a second? I think like we're back to where these options are so cheap. The straddle in the 8-day. So how much is the 8-day straddle?
It's going to be $8. It's going to be the straddle in the 8-day is going to be this
right around that. Just I mean, it's going to be a little more. It's a little more.
That's a good gauge of how much you're going to pay for the straddle. So the straddle is usually going to be the expected move.
That plus a little bit more. So that to me it's crazy that we think that we're not going to move between now and next week, not more than 890.
Especially because Glenn's Christmas is coming with the FOMC meeting.
I know. And Liz, we're going to be in Germany. What's our airplane trade? Buy the 8-day straddle and get on the plane.
It is, but I want to do it in something that I don't have to. I want to do it in SPX.
It's going to be $9,000 instead of $900.
For you, that's nothing, kid.
Let's look at XSP because that'll be cash settled. It doesn't matter. It doesn't matter where we are. It'll be cash settled. So it'll be the same thing. It's the same thing as SPY, but.
Oops, sorry. Bye.
I think I might. I think I'm going to buy the 8-day straddle just for fun, just for kicks. It just seems so cheap to me.
It does. We're not going to do it in this account just because, but it does seem pretty cheap, meaning that you're paying $900 and you don't think it's going to move outside that expected move for the FOMC meeting. I agree.
And it jumped out at me when you pulled up that butterfly and I looked at, I know with the butterfly or the calendar, when you're putting on a calendar, you're going to the expected move of the cycle we're selling. And when I saw that it was only $8 away and we're up $5 right now, we could be at that strike by the end of the day today. Like that's not that far away.
No, we could, but what it's saying is that it could go up there one day, come back down the next, go up there one day, come back down the next. So you got to keep in mind that we've seen these ranges. And I will tell you, the VIX is low and these odds makers, and I'm kidding about odds makers because it's just the market, is pretty freaking good. When it's a liquid product, they're you could find they're pretty good. We've seen wild. Remember, we were looking at it the other day. We were looking at the expected move. The expected move was 50, and we moved 50 up and 50 down within the day.
But I'm going to say the expected move today was much less than $50.
The day's not over.
Yeah.
You know what I mean? The day isn't over. It was less than $50. You're spot on accurate there. But we've seen this before. We've seen it up 50, and then by the end of the day, be like unchanged.
When the VIX gets so low, so low, this is the reason we have like less risk on when the VIX is so low. Because you're not getting paid by these options. You're not getting the move that you're getting paid to take the risk on is much smaller than when vol's high and it's giving you much more room. And so, if we want a bearish position, if we want to add some bearish positions at all-time highs, I don't like that calendar because it could easily blow right through it.
Oh, it can easily blow right through it. But if you want to make just a bearish position, you go triple Qs, you sell a call spread because that's all we can afford in this account. Go to here. If you're going to make $50 anyway, go to the 290, 295, 155. That's a bearish position. Now, can it blow right through it to the upside? Yes. So, but this is a true bearish position, meaning that we will only lose if triple Qs goes up.
I would rather give ourselves more time than 8 days.
So you can go out farther. We were just using the 8-day. That's the example, but that's the only way. You want to do, it's a baby trade. We're going to make a little bit of money. You're going to go 600, 605. You can make 154 on the 600, 605. That's high, but 600 is right here, and that's for 30 days.
Yeah.
Sure. We'll add a bearish trade in. We don't have any bearish trades in.
Yeah, and that's why we have no bearish trades. Except Meta. I think Meta is our only bearish trade. So.
And Meta is down 4 cents today. Congratulations on your wealth. It's down 4 cents today, but we put it on yesterday. Yes, yesterday. I want to sort these again. Let's go back through all the things we put on yesterday. I also wanted to take a look at it doesn't sort by that. So these are the things that have 0, which were the one day. We closed one. Meta coin is back in the red. So we're back up $31 on
Back
that.
in the green. Back in the green.
And, back in the green, yeah. And then iBit is what we put on yesterday, but that's fine. We have our GTCs. Let's at least put GTCs in for all these.
Oh, yeah, because is next Friday Expiration Friday?
Yep.
So next Friday is Expiration Friday. It's going to be an interesting week since we're going to be live. We'll be Monday's the travel day. We'll be not quite in our hotel yet. And Tuesday, we'll be doing our show live from Germany, live from Munich, which will be a lot of fun, but it'll be a different kind of show.
We do in here, and we will look at this. I mean, typically we try to just trade during our show. That won't be the case because both of us are actually out of town. Usually that is not the case. One of us is here monitoring the situation.
Right.
Typically. So this is going to be an interesting week where we'll keep an eye on it. Whatever we do, we'll push out.
So, but I would say between today and tomorrow, anything that we have that's expiring next week on expiration, we roll out.
Well, and that's why we took off the one. It was the 8-day, the test that we just put on.
Right.
Yeah.
So that's something we'll just work on between today and tomorrow. Anything we have that we still have in here that's expiration Friday.
And to be honest with you, this is something that Jenny and I might do. I'm not saying by ourselves, we'll go through this, but anything that we do will be pushed through. So don't think that it's going to be, kind of shot under there. I wanted to give gold and silver are going in the right direction. I was laughing about this. So we're up $1, $1.19, and $1.92.
But I will say we did this just very, very, very small scale. 1 share of GLD and 10 shares of SLV. So it's very small scale. If someone had it on larger in GC, SIL, like the what's your assumption example gave us, they'd probably be out of this today.
Yeah, you would be. If you had a larger scale in this, you'd be out of it. Okay, I'm going to pop into Twitter real quick, and then we'll pop in the platform. So Twitter, I'm going to go top down. I can see Jackie. We love Jackie. Okay, Scott Zomer, our international man of mystery, is back. Permission to ask you to go back in time. What are your memories? Oh, what are your memories at 8:03-ish on September 11th, 2001, as you prepared to trade?
You know what? I didn't even realize that today was September 11th until Scott just posted that.
So I was standing in the trading floor at 8:03 when the plane crashed. I know you never made it to the floor that day, right?
I was in the board of trade. I was on the 14th floor. My office was on the 14th floor of the board of trade. I was sitting there. There were 3 traders in our office, and we were all sitting there getting ready for the day. And we had the TV on, and so we're watching it on TV. And then our backer called us, and he was in the CME. So our backer called us and said, "Get the hell out of the building." And the 3 of us, just like left the board of trade and just started running to the train station. And I remember seeing people downtown, like literally running to the train station. And I was running past the Sears Tower, just kind of looking at it and running to get to the train station.
Yeah, a lot of people were running to the train. It was the craziest day because I watched both planes crash into the buildings, and we were the last ones to leave the trading floor. And I don't really know why. Nobody said you had to stay.
I think your firm was like, oh, yeah, like I don't think
the firm didn't make us stay. I just remember standing in the DPM and looking, like I'll never forget locking eyes with Derek, being like, "What is happening?" Do you know what I mean? Like no one knew what was really happening. The firm didn't make us stay, but we just kind of. And I lived downtown at the time, and I know you lived in the suburbs. So we were the last ones there, and I walked home. I walked to Lincoln Park, and it just was like one of the most surreal days of my life. And it was just when we got cell phones, by the way.
Yeah, you think so?
It was just when we got cell phones, for sure, because it was 2001. Yeah, I didn't have a cell phone until I was in my 20s.
No.
23? Yeah, we got cell phones. I got cell phone at 22 or 23, and we had just gotten cell phones. And I lived in a high rise at the time. I lived on the 36th floor of a high rise. So talk about going home. I was like, what am I supposed to do? So I went up, and I literally was like in a high rise looking out the window.
Wait a second. I thought you were on your honeymoon.
I got home from my honeymoon. So I was 24 years old. I got a cell phone when I was 23. I got home from my honeymoon. My anniversary is August 25th. I was home on Saturday. I went to work on Monday. Everybody asked how the wedding and the honeymoon was. Talked about it for one day. September 11th was a Tuesday.
Okay. I mean, I knew I had so
cell phones were about a year old for me.
So I
know this. My dad lived in Florida and he was freaking out because I lived in a high rise.
I had a phone in college. So this was like, we graduated college in 1998 and I had a phone in a bag. I had the phone in the bag. So when I say like I had when you say they just came out, I remember in college having a portable phone. So
no, I mean like being able to talk to my dad when I'm standing at the bottom of my high rise, talking to my dad on a phone like this instead of a bag in the car. Do you know what I mean? I'm talking to him. He's like, thank God you have a cell phone. Thank God the phones are still working. And he kept telling me, do not go in that high rise. And I was like, well, I've got nowhere else to go. So I went up to the 33rd floor. Yeah, it was a crazy day.
And there were so many people in our Board of Trade office who were on the phone with people over in the World Trade Centers because there were, people talking to people on the phone that morning. It was.
Dan's uncle was in one of the buildings. He was in the building across the street and he had to walk. So my husband's originally from New York and he walked across the bridge with everybody. I mean, he has tales of amazing tales from September 11th. So it was one of the craziest days.
I mean, one of my girlfriends was there. One of my girlfriends from grade school, she was there. And I think she's like writing a book or recently wrote a book about her story. She works for Goldman Sachs and she had literally like was just had heels, took off her heels running down the streets, took a man's pair of shoes that she found in the street and wore those and was running down the street in these like size 12 men's shoe that she found to take her heels off so she could run away from him.
Yeah, it's crazy. It's one of the craziest days. And it's crazy how much time has gone by. So it's been 24 years.
It
is crazy.
24 years.
And I thank you, Scott, for giving us a walk down.
Thanks for bringing that up. I like, honestly, it's sad thinking about it.
Yeah.
Yeah. Well, thank you.
And then, so Mikey comes in. Happy Red Shirt Thursday, ladies. Can one of you lend Glenn Freiberger your favorite red shirt? Oh, I know. We got to lend him our favorite red shirt.
I don't know if it'll. I mean, I'm not saying Glenn's bigger than me, but I don't know if it'll fit Glenn, Mikey, because there's no stretch to the shirt. There's no stretch to the shirt. Mikey made us these amazing shirts, but there's no give. They don't stretch because your picture takes up the entire shirt. You can't stretch it.
I know, it disappears in there, and now it's just like you're doing the show with Mikey.
It's like, Mike, leave that up. Hey, Mikey, what do you think we should trade next?
How fun is that? That was awesome. We can do it at any time. I can just pin that up.
Hold it up longer so Mikey can get it. Let's go on full screen. Let's go on full screen, John. And then if we can go to full screen, hang on, wait till we're full screen. Then when we go to, okay, now hold it up. Mikey, I've always wanted to do the show with you, Mikey. How do you like being on the Liz and Jenny show?
I think he's giving a thumbs up. I love it.
I wanted to do that so Mikey could get like a snapshot or picture. So
fantastic. I love it. That's good stuff. Yes, we will. I will. Mikey, yes, I will, but I can't give mine up. So I don't know how to do that. I need it here for a prop just in case Jenny ever wants to do the show with you again. So look at this. There, Bob on Fire comes in. Here are today's potential earnings plays. Adobe is the only one.
And yesterday was Kroger, I think. What did Kroger do?
Oh, you know what? Kroger was fine. It was up 30 cents. I did a Jade Lizard in Kroger. Do you want to know why I did a Jade Lizard in Kroger?
Liz, tell me, why did you do a Jade Lizard in Kroger?
Because Kroger is the field of the UK football field.
Oh.
It has nothing to do with Kroger. I was like, Kroger, let me just put that on because then it'll remind me of my son. So yeah, all their football games are played in Kroger Field.
I get it. Nice. Can we look at...
So take a look at this. I was shocked by this. I took it off this morning. Jade Lizard worked out great. Whatever. I mean, I don't know, 90 cents. Congratulations on my wealth. But look at this. It's keeping its rank up.
That's weird.
That's what I thought odd this morning when I looked at it. I was like, huh, it's still
Yes. October. And let's see what we can
yesterday when I put it on, it was a 66 rank.
so we get 65 put for 80 cents. Oh yeah, you could do the big lizard. You can do the big lizard.
I know what I was looking at. It's big lizard with a little bit of a risk, but the markets are not bad. Because this is neutral to bullish because it's trading 67 and we have the 70, 72 and a half. So it's kind of deceiving in that.
Yeah, it's not bad. Sure.
Yeah. Then we'll think of JD Kroger, 51 rank. You don't see that every day. And we're filled. Okay.
Okay, not bad. Did you see Vanetta had news on Joby? So
I did see
we have what? Yeah, so we have Archer Aviation. Joby is another vertical lift technology, and that they're doing some deal with Uber from New York airports.
Yeah, so I think they already partnered with Uber. I don't really know. I want to look at
This news must have been out because it didn't have like a big jump, but I saw Vanetta mention it today.
And it rose Archer a little bit too. So this is the vertical lift technology, and we do have Archer in ours, but Joby was on there.
I know. JOBY.
And it's up 5% today. It's a $13 stock. It's got a 30 rank.
And Joby, can you go to the chart? I just want to see how high Joby got because it had more of a run. Yeah.
And then it came back
down. And now it's at that 14 handle. Now Archer did run up to like 14, but now it's back down to like 8 or 9.
Yeah.
And honestly, for a while I just had Archer. Then I had both Joby and Archer. Then I'm back to just Archer. But today, when Vanetta talked about Joby in the news, I just sold some puts in Joby. Figured I'll have not just everything in Archer, but a little in both. So I sold the 13 puts in
it's
October.
A good return on capital in 36 days. You're putting up $1.84 to do it. It's not bad. I don't mind being in both. Let's ship this.
No, I didn't mind it. I mean, you had only $200 in buying power.
So I do, hold on, let me see. It's working. I'll take it down a little bit. 75 cents isn't bad. 76. It's traded in pennies, quoted in nickels. There we go. Yeah. So we got price improved too.
So I've got so far Tesla and Kroger out on the follow page. Was Joby our next trade?
Yeah. And did you push natural gas out late?
I pushed that through too.
Good.
Okay.
It was the last one.
Got it all.
Okay, so let's pop back into Twitter real quick. Thank you very much, Bob on Fire. I appreciate it. Ooh, Chad Paris. Love the handle. Okay. NASDAQ 0 DTE, 2 lot iron condors, 13 delta, $20 wings, initial 740 collected before fees. Happy trading.
Take a look at it. 2 lot iron condor, 13 delta. It's the 0 DTE. So he's doing NDX for the 0 DTEs.
$20 wide. So he's 13 delta, $20 wide NDX. Let's take a look at it.
70 or what, did I read that wrong?
I'll go back. Yeah, I can take a look at it again, but I'm gonna go NDX 0 DTEs. He was the 13 delta. Right, hold on, delta. So he was a 13 delta, $20 wide. Now he's probably gonna have different strikes.
Yeah, I think he was down to the 770. See where you're at the 88.50, but he did it an hour ago, which makes sense.
Yeah, let's look at his strikes so we can see what they are. So 770 and
24070. 007.
You remember those?
Really, not quite 007, but 070. So 770. So you got to go down. It's pretty far away.
Yeah, he's doing great. 770. So they did that an hour ago, and he's $20 wide strikes, right?
Yes.
And then what was his top one?
070. There we go.
And $20 wide.
He's still out of the way. I mean, he's still,
he collected 4 something and it's 3 something. So that's pretty good. You're in good shape.
Did you see Tom going over Jacob's study with the directional spreads?
I did not.
Oh, I mean, I don't want to like laugh at his hardship, but it was kind of funny because he's like, yeah, that's what I'm going to do. I'm going to sell call spreads. Yeah, I'm going to sell call spreads. And then
that's what he was looking at? That's what his takeaway was?
Well, before he saw the results,
Okay.
Then when he saw the results, Tony's like, I don't think you want to sell those call spreads.
Oh, those are the only things. Like when I looked at that study, I don't know that I'm going to do that. You know what I mean?
Yeah.
Now the OG Jack Tucker comes in, 3 tranches, 0 DTE SPX, collected $17,350 in premium.
Oh, where's his short call? Let's see if he's got room.
He tweeted us or texted us 1 hour ago. Tweeted us.
60.
580.
Okay, 6580. SPX. Let's take a look. 6580. We're right there. It's 6581. So we're right there, Jack.
Fine. He's going to be fine. I have every faith in the world in Jack Tucker's trades.
Remember we like fingers crossed and blinked twice, tried to get SPX to close at Mikey's center. Did that happen?
I don't know, but Jenny, I tried to tell you about this one yesterday as a post-earnings degenerate trade in Oracle, but you misread it. A reverse big lizard, and this morning was able to fly it off and lock in 103 profits and have a free shot close at 3:35 Friday for more profit.
Mike, I'm sorry I missed it. Costing us money, Liz. Costing us money.
Okay, and then Jackie, this is an hour ago. SPX sell call spread 35.70. Victorious. So the call spread, right? But he's out already.
Sell call spread. Victorious profit at $110 done for the day. So Jackie did just a call spread after Jacob's study yesterday, Jackie.
Whew. You know what though? But words of Kenny Rogers: every trade's a winner and every trade's a loser. It's all about how you manage it, right?
Managing early, taking small profits.
Managing early. That is awesome. It's so funny that you cannot see the shirt around it.
I know. Because it's red and we've got this red background. I think that's why. It blends right into the background.
Love it. That is so fun. Okay, Frank Walsh. This is from, thank you very much. This is from the chat. How about a 62.61 put credit spread in CL for September 26th?
Sure.
Let's ask you.
From Andreas. Sure.
CL, was there a cycle?
62.61. Oh, to say October? I think October.
So September 26th.
Oh, September 26th.
Ooh, look at 62.61 put spread.
Ooh, that's close, but hey, it's not going to be that much risk because it's so close. We're collecting so much. So max profit 440, max loss 560. What I don't like with this margin is that this is using $1,290 when our risk is only 560.
Yeah, we're not gonna take it. What are we talking about this? Because this is defined risk.
I know. Let's go to some other oil product that won't do this. Let's go to like USO or something.
Yeah, but you know that there's a reason we haven't looked at USO in forever. I'm gonna go to September.
Go to September 26th and just do the at the money. It's the same type of trade, right? Same type of trade, but we're using $127. You can multiply the contract size, but we're not using $1,200 to put on a trade.
No. Yeah. That was ridiculous. And the reason for that is futures margining or span margining, as it becomes the at the monies, it holds up as if when it gets nearer to expiration, I guess 15 days, that's why it holds up so much too. But nonetheless, I don't like it. So yeah, I'll ship this. Bullish USO. I'm going to put it.
Quick quiz. Who's saying we're not going to take it? We're not going to take it.
No idea. No idea. Who did it?
I'm not sure. I think maybe Twisted Sister.
Maybe. You know, I have a disconnect in my brain. I can sing you every song, but I will not be able to tell you who sang it. I've been like that my entire life. I mean, even legitimately, I will not be able to tell you who sang it.
I'm going to guess Twisted Sister, but I could be way off. Way off.
Oh no, but it's the greatest line ever. No, we're going to take it. What year did that come out?
In the 80s.
So chat, Twisted Sister for the win.
Oh, nice. Twisted Sister. Thanks, John. John knew.
Next up, somebody tell me the year. I bet it was, let's guess.
84. John's got it. 84. Thanks.
Okay. John wins that round, chat. Sorry.
Maybe that's we're doing an event and they asked for a walk-up song. Maybe I'm going to change my walk-up song to Twisted Sister. We're not going to take it.
Yeah, that'd be a good one. Okay.
All right. And if you want, okay, let's send two. So we're like,
well, this is what I was going to say. Zero DTEs, we talk about this all the time. We talk about, this is not zero DTEs. I'm just going to have a discussion. This is 15 days USO. I went with her same cycle. She wanted September 26th. That's the only reason I'm in there. With things.
And I'm not sure if Andrea's a man or woman.
We'll go their strike. So their strike. Now, when there is duration to your trade, there is something to be said for if you're going to do two, widening it. That is not the case in the 0 DTEs. So you see what I'm saying? If you're going to double it up, so here we can
Only a 2-week trade. It's only a 2-week trade, and we don't need. You don't have to double it up. I was just trying to like not use $1,200, but achieve a similar effect.
Yeah, we use one lots here, so I'm just going to ship this.
Liz has to keep me in line. If she weren't on this show, this account would be all different sizes. But Liz keeps me in line. Only one lots.
Yeah, because if we had this account, you'd have two positions in it, Jenny, because you'd have all the buying power in one CL position. No, that's not us keeping in line. To be honest with you, that is a compliance issue. We have to trade in one lots for purposes only. That's compliance issue.
I mean, the show is for this. This is not my account. This is not Liz's account. This is our show account where we'd rather put on many trades than just have a few. So that's why we're just.
No, this isn't a rather. For compliance issues, we trade in one lots.
Nobody told me. Nobody told me.
Yes, they did. So, ladies and gentlemen, your rule follower does not want to follow the rules because I'm usually the rogue trader and she's the rule follower.
I'm going to try to find a certified badass card for myself. Anyway, let's take a. It's fine. It's fine. It's what we've been doing for 15 years.
Take a look at this. Jack Tucker's gonna be in great shape. We're now down 44 instead of up 51.
We're down. Okay. I mean, what was the expected move up to today? According to Liz, we'll probably get there because the options never lie.
They don't. I don't say they don't lie. I just say they're really good odds makers. Yeah. It's shockingly amazing how good at it they are because efficient markets are pretty efficient. There are rare days when it's outside the expected move, very rare, but a lot of times, 9 times out of 10 or 8 times out of 10, it's within the expected move, which is crazy to me.
1050.
Let's go back to Twitter. I want to make sure we get to everybody. Scott Somer, Stay Hungry is the album. Love it. May of 84. Good job, Jenny Andrews. 84.
It's nice to see Scott Somer back.
You know, he is back. I love it. So Andreas, we did it
in USO.
Okay, good.
Scale. Smaller scale. I don't know if we're filled. I don't think we're filled on that. What is a big mover today? You know, Hims was a big mover today.
Is it in your direction?
He was a big mover today. Oh, it's only $1.70.
That's not bad.
What else? I thought I saw. I mean, there were a lot of big movers yesterday. Did you see Nvidia? How much Nvidia was up yesterday?
Oh, what did it do?
It was up like $7 or so. How much
was that on the Oracle? Oh, it was Broadcom that was up on Oracle, AVGO. I'm going to see what Oracle's doing today, too. Yeah, AVGO had a big move yesterday. And, well, I guess all of them did, right? But I want to see if Oracle's continuing its move. It didn't give much up. I mean, it's down 2%. It's down $9, but it's not like it's out of the range. It traded there yesterday.
Would you be interested in 4 trade ideas on September 12th?
What are you talking about?
Do you see this popped up?
Popped up where? Oh. Wow. Is that in the middle of us right now?
Let me see. Let's see what's going on.
No, it is not. I think that's just them getting ready. I don't think anybody else can see it.
Oh, okay. It was all I could see.
Oh, because you can't see our platform, can you?
That was all I could see. No, hang on. All right. So anyway, let's take a look. Let's take a look at some new trades.
This is what we've done today. I mean, let's go today. So today we closed our Tesla. We sold a Kroger. We sold a Kroger Big Lizard Ask with a fat tail. We sold a Joby put, and we did a put spread in USO. And all those are pushed through. We still have a buying power slight issue, but I think we're doing okay. Is there anything else that needs to be managed? Because I think we should
be interested in like an upside broken butterfly in Oracle. I think
it's what Fazia did yesterday.
Yeah, but right, what Fazia did yesterday. Because we just have on our earnings trade, which you have to scroll really far to find that. But I might be interested in upside broken butterfly.
So upside broken wing butterfly, what cycle would you like to go? Because I like them a little bit more near term.
All right, look at even next week.
But we're not going to be here.
Okay, then do 2 weeks.
That's my only issue with these is the short term. So if I'm doing a broken wing butterfly, I'm probably going to put my shorts at the expected move, right? Let the odds makers do their job.
Okay. Yeah.
I can actually take it up like this if you're going to break a wing and go, I mean, that's 46 cents.
I want to collect more.
There's
$1.20.
120 risking 600. Your max profit is 370 if it goes up to the expected move for the cycle. Let's look at this on the curve page.
I know Fazia brought it to us yesterday. I think our show was almost over and we had run out of time. Wait.
Our other trades are in there.
Oh, yeah. Go to analysis and take off our earnings trade.
I gotta take off the ones that are today. 1, 2, 3, 4. Okay, so you take those off, and then this is what it would look like. We will make money up to here. There's a giant peak there, and then it's defined risk of 630 here. Anywhere.
Yeah, and if we come back from Germany and we can keep that 120, we've made our loss on the earnings trade back almost.
Yeah, if that is true. Yeah. I don't mind an upside broken wing butterfly. Where is it? Oh, there it is. Okay. I don't mind it. I'm going to ship it. We'll see if we can get filled. I would like to state, if you take a look at this real quick, Jenny, because I was looking down here, 87-cent credit at 151.
Well, do 115. Do 115 and see if we get filled.
That's a pretty wide market because you're looking at 30 cents, 25 cents, 25 cents. So that's why it's so wide. But filled immediately and price improved by a penny.
And then we're in this like crazy oracle move.
And what's interesting about this is it is bearish. It's neutral. The broken butterfly is an interesting thing because you can make more money if it goes up and it sits there. The reason that Jenny and I would never sit on this is we'll take our profits, but we're going to be gone. So maybe we'll ignore this.
Oh yeah, we're going to be gone. So we can come back and maybe it's a full 120 winner.
Maybe it will be.
We'll see.
So everything is pushed out. It is 55. Anything else we need to manage while we're in here?
I'm just glancing at like P&L percentages.
So we're going to need to do things like this. Let's take a look at Marvel. We're up $91 on it.
Sure. Close it.
Let's take this because we're going to be gone next week.
I know our goal was that it would be at 72 in 8 days and we'd roll that short. That was our goal. That was our dream in Marvel. But
dreams come true. Meta gold. Okay.
Oklo, we're at 36%. Is that just a put spread?
It is just a put spread.
Let's take that too. Because I swear, Oklo has been bouncing between 70 and 80. You know, we're almost at 80. Those are my numbers. When it hits 80, I throw my collar on. When it hits 70, I take my collar off. 80, collar on, 70.
So Oklo we're filled.
So, and it seems to be bouncing in this range.
Yeah, it has been since July, it looks like.
Okay, well, 70 will put something back on.
Okay. And it's good to clean up before you leave, right? Okay. We pretty much have no bearish trades except Meta. We didn't get filled on our triple Q's call spread, but that's not going to save us in a down move. That's not going to, that'll make us, $30 in a down move. So, we don't really have anything else that's bearish. Do we sell IWM? We put this on 9 days ago.
Oh, let's take off. Is the put spread? That put's not cheap enough to take off.
No, it's still $3.
Yeah.
And so here we have the 653, which is through 663. So
that's
this
right,
the middle. Yeah.
If we wanted to buy ourselves more time on that call spread, you could move that call spread out to out to November for even, if you wanted to buy that more time.
I don't know that we want to. What is this? 50?
I'm not sure. You got to sell that.
A little bit.
So 42-cent credit, maybe we do. Then we don't have to worry about that for a while.
Then it's out for even.
But then the put spread would stay short term.
We'll take, I want to walk through that slower tomorrow, just because I think that's, if we're going to roll something in November, we should really, because it's going to be, then we're going to have a put spread that's in October and a call spread that's in November. So we'll manage that one tomorrow.
That one, what can happen is if it keeps going up, if the market keeps going up, we won't be able to roll that for a credit, and we'll just be stuck with that loss. But maybe, how many days till October expiration? Maybe we just 36. So maybe we just follow mechanics and at 21-day mark deal with it.
Yeah, that's what I was kind of.
And we're getting the hook.
Oh, we're getting the hook. Okay. All right, Jenny, the hook. We will heed the hook. Everybody out there, remember to trade small, trade often.
Step with us, learn with us, and watch the Liz and Jenny show. We will see you tomorrow.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
If you've ever been curious about where to start with crypto, join me, Ryan Grace, for the Tasty Crypto Show. Alongside co-hosts and industry guests, we'll break down what's going on in the market and show you how to take advantage of crypto. No hype, no shills, just crypto know-how. Watch us live, join the chat, and fill your bag each week on the Tasty Crypto Show.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
On the subject of bonds, let me now expound. Swoons, they will, nay, must someday turn around. Oh, cursed bonds, will you not soon fall like rain? Quit this parched desert of misery, I can take no more pain. With thy nimble run, I admit I am impressed. But climb no higher, or I shall be depressed. Ye tasty traders, all now hear my plea. This position chafes worse than the bat to me. Markets, this is no time for foolish frivolity. Will ye not cease this fatuous flight to quality? Oh, if I could, I'd wave all my magic wands to sweep away regret from shorting bonds.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Rise higher, ye Taurian markets, I will thee ride. Oh, let the horned bull now be thy guide. Increase the yield, as the longs have long planned. Be not inert in flowery field like Ferdinand. Reward the longs their bulldog-like persistence. Like Lord Michael of Jordan, soar beyond resistance. Reward those who see upside positivity, as if in some ill-advised Pamplonian activity. Trip thy hooves o'er trading streets most stony, cobbled with the confidence of masters Tom and Tony. Climb with ease the line of Tim Knight's profit chart, and with thy rise make proud Slim's technical heart. Gore the matador of pessimism with thy horn. Let red capes of resistance now be torn. This market yoke to wagon now could pull to follow up the thundering of the bull. In market glory let us be arrayed. Oh, hear this exhortation now from Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Good morning, everyone, and welcome back to the show. This is Option Trading Concepts Live. My name is Nick Batista. Got my man Mikey Butler, and of course, Miss Katie McGarrigle in the house with me today. Do I say
New
McGarrigle?
title.
Do I still go with McGarrigle?
Oh, yeah. Yeah, I'm still
Yes.
McGarrigle. Yes.
It's just Mrs. now.
Mrs.
Yeah, now it's just Mrs.
Mrs.
Yeah.
Mrs.
Yeah.
And if you want to come join us, hop over to YouTube, type in Tasty Live, come to our channel, give us a like and subscribe to our videos because that helps us immensely. But more importantly, come chat with us live because we got the gang all here, ready to rock.
Hell yeah.
Congratulations, Katie.
Thank you. Thank you for
glorious time.
coming.
Yes,
Yeah.
glorious.
It was a hoot.
How do you feel?
It was great. It took me 72 hours to recover.
Oh, I'm exhausted.
I'm still dying.
It was like a week ago almost, and I'm still exhausted. Yeah.
The funny thing about coming home and leaving the house the next day.
Yeah.
I hung my blazer up as if it was a jacket on my jacket hook. Like I just put it up there. Like that's where I was at. But no, it was a grand old time.
It was.
Went swimmingly.
It really did. I was shocked. Our coordinator was like, nothing broken. I was like, that's shocking with our riffraff of friends.
Hey, Chris's boys were well behaved.
I know.
Yeah, they were.
Crazy.
I
They were.
know.
You know who wasn't well behaved? Those Irish boys you got on your side.
Brits? The Brits and the
is it
Scots?
Brit or the Brits and the Scots? Yeah, they were.
The Brits
Those
go
boys.
hard.
Those boys can drink. They're like shots here, shots there.
Oh yeah. Yeah.
Yeah.
There was I think my dad's liver is probably in permanent state of recovery after hosting them.
Yes.
Yeah. They showed up, they showed out.
Yes.
They're back in the UK. My Scottish relatives are in New York.
Very nice.
Hopping around. But yeah, dance floor was full the whole time. Our DJ was like, I have not seen a dance floor like that and done a wedding like that in a while. So kudos to you guys, and yes, very happy.
Was fun.
And now we're back.
Now we're back.
Talking markets, slinging trades.
Mm-hmm.
Couple two trade ideas today.
Of course.
Happy NFL
Thursday night football. It's
I have to
beautiful
change.
day.
I have to train my brain away from PGA Thursday.
Yes,
Technically,
yes.
it is still PGA Thursday.
Technically.
but it doesn't matter.
I know. Yeah. That's
Yeah.
It's secondary.
Definitely secondary.
all right. So what are the picks? What are we going with? How's everybody feeling?
I said 5-1 Packers onslaught.
He thinks it's Packers onslaught. I'm not sure. I think it's a closer game because it's.
I think they want you to
Daniels.
believe it's going to be.
You're repping, Packers colors.
So are you.
borderline. I know. Yeah.
We're just missing the cheese on our head.
True.
Yeah.
True.
But yeah, I think it'll be a good game.
Okay.
That's all we can. That's all we can hope for, really.
Yeah.
These days.
Yeah.
But I'm excited. It'll be fun.
Mm-hmm.
Yeah.
And yeah, I think the Packers will win though. Their defense is legit.
Offense.
Can't say the same about Washington.
Sad to see that the Bears are just in purgatory for could be the next 4 years, probably minimum 5 years.
One game in, he's writing off the next 3 years.
I know. But I mean, honestly, though, like sitting on Margin Island, like that is my favorite component of sitting there is the hype and the conversation and dialogue that goes into anything pre-Bears season. And then the narrative and the tone completely shifting after 1 or 2 games.
Yeah.
At least you have the bright shining star in Chris Grace, who had that Buffalo comeback win.
Yeah, I might join the Gracer brothers and be a Buffalo guy. Like
Can't go wrong.
It just sounds like a happier life. Like it sounds like a more enjoyable life.
To be part of the mafia.
Yeah, like it's a
Get
fun
body slammed on the
community.
table and
Yeah, like you drink and you be merry type thing. Like, I don't have to gouge my eyeballs out every time I watch a football game.
True.
So
Well, we are also chalking it up, though, to the newest addition to the Grace family name, if you will.
yes.
Ryan's baby arrived, a couple days before the Bills game. So we're saying that his baby is the lucky, the ticket.
that was the golden ticket.
Yes.
Love it.
So here's
Congrats
to
to
hoping that
Ryan.
continues. Yeah, congrats to Ryan.
Yes, a new tasty baby.
A new tasty baby has been born, a tasty crypto baby at that.
It was born in the darkness.
Truly molded by it.
Molded by the darkness.
Yes. But yeah, congratulations to them.
Yes. He's watching right now, I'm sure.
Oh, I'm sure, yeah.
I'm sure
I
he's
really hope he's
tuning in.
not. I hope he's actually truly soaking up paternity leave and making sure, his baby stays alive and all that good stuff. So But yeah. In other news, we've got Dallas coming up in a couple weeks. I was just scoping out some dinner spots. So, chat, if you're in Dallas and you have some hot spots, drop them.
Drop them in the chat.
Drop them in the chat.
October 12th, the Kessler Theater.
Sunday night, so you're going to have to watch football and us at the same time.
Oh my God. Frankie saying never fade Jaden Daniels. Frankie's
He's a Packer man.
He's a Packer guy. That's got to be a contrarian indicator.
Yeah. Maybe that's not him.
Yeah, I don't know. Did Frankie have a aneurysm or something? Who is this?
But yes, sign up, tastylive.com/events. Totally
Yes.
free event. And can't wait to see you there.
Yeah, should be fun. Get ready for the rodeo.
Oh, yeah.
I'm going to miss the rodeo.
I know. Oh,
But
yeah.
I'll catch y'all afterwards.
Yeah.
We'll be tearing it up.
I can't wait to go back to America's darling in Fort Worth.
Should I bring my cowboy boots?
You got to bring them.
They hurt my feet.
Oh, break them in. Wear them around the house the next couple days.
I just have the flattest feet ever.
I know.
It just.
Do you have cowboy boots that are,
I do.
Did you get them custom made? Or are
No.
they just like
No.
wider?
They
just hurt.
Yeah, they just hurt. It's unfortunate.
Gotta-
I could probably tough it out for like a couple hours.
Yeah.
After that, though, those dogs be barking.
We gotta. Well, we'll try to break them in before. Like, there's a million tricks to breaking in your boots. Mine are beautifully broken in after many years of wear.
Line dancing.
Line dancing. Yeah.
Well, we know
Going to
who's the
concerts.
master of that over there.
Yeah. I could teach you guys the footloose line dance before we go.
Fine.
We've got a couple weeks to really perfect it.
I feel like we tried that last time. I feel like you let us in
I know.
that.
Maybe I'll try to teach you like a simpler one.
Yeah.
Okay. We'll work on it.
We'll figure it out.
Yeah. Either way, that should be a great time. San Diego a couple weeks after that.
Yes.
It's Halloween weekend there. Should we like dress up?
Ooh. What are you going to dress up as?
I don't know. We got a 3-person. We've always like floated all these like 3-person costume ideas.
Well, one of us could be a stem, and the other 2 could be cherries.
No, I like the Dumb and Dumber one
Oh yeah.
with
Yeah.
Mary Swanson.
Mary Swanson.
Swanson is
Yeah.
me.
We
We
could
could
just
get like
bring
a
our-
short red bob.
Yeah.
We can bring our Samsonite luggage.
Yeah. The IOUs in it.
Yeah.
So good.
That could work.
That would be really good.
It would be
I think
really funny.
That's probably.
I love it. All right, we'll figure something out. Either way, Dallas in a couple weeks, San Diego November 2nd at the Music Box. Come hang.
Mm-hmm.
Sign up. Bring your friends.
Yes.
Bring your family.
Come one, come all.
Bring
Everyone.
your child.
I don't know. Sometimes they have the 18
The liquor
and
thing.
over.
Yeah, you're right.
Yeah.
Tentatively bring your child. Check with Brittany first.
Yes.
So market's up another 50 points.
Yeah. Who would have guessed?
Yeah. Groundhog Day.
Groundhog Day. It's every single day. E-mini's up 51 and change here, high of the session. No down ticks, no dips, up only forever.
Rocket ship.
Rocket ship. NASDAQ up 157. You got the Dow up 563 and the Russell up 33. Buy them all. You need them now. That's what the market's saying.
Well, as soon as I buy the dip, we're going back down to 5,500.
Oh, just
1,000
2 days.
point sell off.
It's 5,500. Okay, that would be something.
I'm just messing.
Oil down $1.28 /CL 6240 here. I might look at something there. Volatility futures 18 on the dot here. You got the VIX itself at 1488. They should just make it 0. There's no risk. Bonds up 12 ticks, 118 and change here. You got gold down $3, silver up 67 cents. Bitcoin has been a little bit choppy, but near the higher end of where it's been trading here, 114 and change on the futures and the spot as well. Ethereum has had some two-sided action. It was up about 100 at one point today. It's given up a little bit there, but certainly a risk-on day. Buy the dips.
Have the chips.
The dippy dude.
Yes, if you have the chips, buy the dip.
Yeah, the oil move is interesting. We did you close yours yesterday?
I did. I had a Iron Condor.
Yeah. So yeah, we've just been buying that dip when it goes around 62, 61, which is the recent lows. We just use the micro crude contract. So maybe it's time to get back in.
Yeah, maybe that's.
Yeah, I was thinking of doing that for my trade idea today, but the vol in there was a little tough for me to do anything premium.
In the oil futures?
Yeah.
Yeah. I was just looking at that Iron Condor that I closed yesterday. It hasn't really moved today. I closed at 43 cents, marked at 45. So certainly not pumping volatility in there.
Yeah. That's you can kind of skirt around that by just getting long the micro contract, but yeah, it's a quick in and out trade if you get it.
Yeah, 62 and change. I could
What's the buying power on it?
$1,500.
1,500.
Yeah.
Not too bad.
Not too shabby.
Too bad.
Okay.
But yeah, gold finally selling off, trying to sell off a little bit.
It was down a little bit lower.
Yeah.
Yeah.
At 36.51, but they scoopied that too. Scoopies across the board.
Yeah. Well, you'll see. That's where I'm headed today.
Ooh.
So
Very nice.
hopefully we do get a little bit of that pullback you just referred to.
It'd be great.
Other than that, I have been super hands off, obviously, having been busy. But what else have you all been covering, doing? Tail end of what? Earnings? Like, what was there? Chewy? Anything else?
Adobe has earnings after the close today.
Okay.
We've got a earnings preview on the News and Insights tab. If you want to check that out,
There you go.
I'll put it in the
Nice.
YouTube chat right now.
I don't have anything on in Adobe. I think you have a put spread, short put spread.
Yeah, I have a short put spread in the September cycle.
I have
just a little 5-point wide.
My Johnny Trader account. I have a butterfly on the downside, free butterfly, maybe small debit,
There you go.
a little something, a little engagement trade.
Yeah. Yeah, I've had the short put spread on for quite some time, almost a month, and it's just been trickling down towards the spread. So just going to leave that on. It's in the 8-day cycle. If we get a non-mover or smaller rally, it'll come in nicely. But if not, we'll have another week for it to potentially reverse. But yeah, lots to do. Lots to do.
Always.
If you want to join us on the YouTube channel, we're streaming live there. Just pop over to Tasty Live. You'll see this video front and center. You can throw in your trade ideas and questions along the right-hand side chat. I've got the Cherry Picks newsletter pinned to the top of the chat.
Oh, yeah.
That for free.
Yeah.
But yeah, why don't we hop over to the slides?
Cool.
Get you some trade ideas.
Ah.
For the 4 trade ideas.
Yeah. September 11th.
4 trade ideas, September 11th. Did I put the 12th? Maybe I did.
Oh, come on, Mikey.
We're just ready for Friday.
We're looking to the future here.
Yes.
Yeah.
Ooh, we'll adjust it live.
As we know, like there is kind of a lag as to when you should put your trades on after what we pitched.
Yeah.
You know, there's like that 24
the
hour.
The 3-day
At
rule.
least.
Pablo says the 3-day rule.
Pablo is probably just printing. We enter a trade, it's immediately a loser. 3 days later, you get in, and then
That's
Slightly better location.
That's optimal.
Yeah.
I'll get the team on starting to study that one. See if we can get a real market measure on that.
I love it. I love
contrarian
having
indicator.
you consult with that team.
Yes, with the youngins.
The youngins.
The youngins.
Yeah, they got to listen to Unc.
Unc.
Uncle Nick.
Yeah, grandpas have been, running the show forever. It's Unc. It's Unc time.
It's Unc time. Unc season. Oh my gosh.
Oh, man.
Oh, yeah.
All right.
I can't believe I'm Unc, by the way.
I know.
I'm still young.
You are.
I feel young.
You're the youngest in this
sometimes.
room right now.
Do we have the right slides? I think these are maybe not the right slides.
Did you post the wrong slides?
I don't think so.
Did you post these from 2024?
I did not. I thought I posted the one I linked you guys.
The one you gave me is the one that I filled out. So.
Oh no.
Oh,
Can you
this
resend the
is-
link, please?
Oh no.
John, I'm sorry.
Oh,
This
God.
is.
Man,
Maybe that's why it was September 12th, because that was last year.
we just can't get it together.
Oh.
Somebody send it.
I'm sending it. I'm trying.
It's okay.
Pause for dramatic effect.
Yeah.
Well, mine is pretty simple. We could show it on the platform.
We got it. We can talk.
Okay. They got the platform up. We can
Yeah. What do you want to do?
It's in UNH.
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 Up 11. 358.
Oh, you're joining Nick in his contrarian. Okay.
Good one. That video was
Timely.
timely. I also hit ETH too. That was a good one too.
Love it.
What can't he do, ladies
I had
and gentlemen?
Nostradamus.
There we go. Okay, we're back. Tree trade ideas this year. We could talk about the ones last year and review them.
That would be fun. That would be fun to just see those stock prices. They were probably significantly different than what we're looking
Probably,
at.
yeah, pre-election.
Yeah.
Indeed. UNH, it has climbed back mightily from the lows. Reached a low of like 240 beginning of August. We're sitting at 360 now. And it feels like the market wants to buy this thing. Warren Buffett already has. Michael Burry has. The signs point to recovery here. However, still keeping it small. $500 max profit here, around there. 570 max loss. That's what I paid for this calendar spread. I went out to November and I bought the 400 call, and I sold the October 400 against it. So if you look at the options chain, you can see that earnings are projected to be late October. It's not confirmed yet in the implied volatility here, but buying November for about $1,000 and then selling the October option against it for $500, it's a pretty good cost basis reduction either way. And if they do confirm earnings to be after the October cycle, I can then roll into the earnings cycle and reduce basis even more. So I'm just playing for a continuation here towards 400. If that happens in the near term, this risk graph I pushed all the way to the end of this month. So this risk graph is showing you the theoretical P&L on September 30th with no change to implied volatility. So if we get a rally, we're going to get the vol crush and premium crush in the short option. The long option will appreciate, and we're looking at around $500 max profit, we get to 400.
Ooh. Round number?
Yeah.
I mean, come on.
Yeah.
How could it not work?
That's exactly what my head is saying.
Yeah.
How could it not?
I mean,
if the stock goes down,
a little
then
bit.
it would not work.
Yeah, the stock has rallied $50, $60.
I might nibble on this with you.
That's
on the follow page.
It is.
All right, I'm just gonna go directly from there.
Here you go.
And emulate.
Emulation.
Duplicate this trade. I accept my disclaimers.
Yeah, it feels good.
Yeah.
And it's small. $500.
Let's see if I can get filled a little bit cheaper than you. Doubtful.
That'd be
but
great.
Very nice.
We'll see.
I like it.
I'm working 566.
Cool.
There you go. Beautiful.
Cool.
All right.
Cool.
Cool.
1 for 1.
1 for 1.
All right.
My trade, so this is one, I've been trading recently with a lot of naked puts, call ratio spreads in a lot of these stocks that have kind of been like mid-range, playing for upside moves. I think we did one together in HIMS.
Yes, we did.
Which-
butterfly.
Yeah, which
It's
we have
free now.
the free butterfly now. So those have been the higher volatility stocks are a little bit more interesting to do those in. So
What is this? Kamiko?
CCJ, it's a uranium company. It's one of the biggest uranium companies.
Okay. Go into those rare earth materials.
Yes. So something is happening with my computer.
Uh-oh. Sabotage.
Yeah. No, I think the team over there is doing it. Something. So CCJ, so I'm doing a call ratio spread. The stock's trading at 80. I'm doing the 85-90 call ratio spread. I'm doing it without the put. Stock has had an astronomical move higher. So I'm just doing the call ratio spread. I'm doing it in October. I did this at a 17-cent credit. It's a small credit. This would be new highs, 88% pop. I can't short anything. I can't get long anything.
Yeah.
This is my something trade.
Okay. Okay.
Yes.
Something trade.
Thing.
85-90 ratio.
J from Nikki B.
Yes.
20-cent credit.
Yeah, it's a little something. You get a little bit of a pullback. You buy in the risk on the upside, or you could sell out the put too. That's another way you could kind of play into this.
What would be like your ideal profit target?
I would say maybe like $50 to $100, but that's going to take like 2-3 weeks. You want to slow grind higher to get that. If you get a little bit of a down move, you can buy in the risk, maybe sell out a put.
All right, I will try working this. I'll give it a shot.
Yep.
Got filled at 21 cents credit.
A little something. $900 in buying power, so it's relatively small.
All right. Cool. All right. Well, as we kind of already alluded to, I am going back to the gold well, if you will. Obviously, quite a lot of storylines, at least in my opinion, driving the price of gold higher.
Mhm.
And for those that maybe are newer to gold options or futures options, gold actually kind of has like a reverse skew relative to what we typically see in equities, where the puts trade richer. So in this instance, the calls actually trade a little bit richer, which is why I did this broken wing butterfly on the call side, and therefore on the upside. It is not like a perfect, 1 by 2. As you can see here, I've done the 3800, 3810, 3840. So it's not, 3800, 3810, 3830 to make it that classic like 10 by 20, if you will. But, pushing that wing out a little bit farther just enabled me to pick up a little bit more credit if we have a sideways move. Max profit on this, of course, being 1370. Buying power, because of the span margin in futures options, is not the entire max loss of 1630 yet. That buying power, of course, can fluctuate as volatility changes, as price changes, as your options get closer to being in the money. But that is where that potentially higher return on capital comes from because of that span margin buying power requirement on the futures options. I would be, of course, happy to turn this into a free butterfly as well, and then therefore sell out the 3840 call and buy the 3820 to make it an even 10 by 10. But obviously, I've got 47 odd days in this trade, so I'm not expecting that to happen super quickly. I just want to see a little bit of sideways and or a pullback in the price of gold relative to what we've seen very recently.
Love it.
I got a little aggressive and did something
A little
in this
closer to the
realm.
money?
I did. So I did an upside butterfly, very much thinking like my CCGA trade.
Sure.
I'm going 50 points wide.
Oh, big boy.
50 by 80. So I wanted to do this for basically a scratch.
Yeah.
I did it for like a 30-cent credit. So I'm long the 3800, short 2 of the 3850s, long 1 of the 3930s. So
show it on the platform.
yeah, so
We're
we
done
could
with the slides.
we could pull it up on the platform. It only uses about $500 or $600, $800 in
Oh yeah.
margin. That's what I want to get to, but there's obviously a lot of risk on the upside. You got about $3,000 in risk, in total risk, if you were to get a face ripper, to 4,000.
Sure.
So
All
this
right.
one is kind of like, I'm hoping we get a little bit of a down move and I can buy. Yeah. I think everybody's looking for a little bit of a down move in gold.
Yeah.
Get a little bit of 50, 100 points in gold, and then you buy in that risk. You buy the wing, make it 50 by 50, and you probably do it for a net debit of like $1 or $2 or something like that. And then you have this big lotto ticket wide.
Got it. Got filled in UNH too, so
There you go.
all
3
three
for 3.
trades.
I love it.
You love to see it.
You really do.
And give us your trade ideas in the chat. I did see somebody talking about the order chains. Yes, you can reach out to Tasty Trade Support and they can reset some of your order chains if you are
Sometimes they
seeing
get a little,
clunky.
yeah.
I think it's not necessarily an us thing. It might be like the clearing.
Yeah, of how the data comes over, yeah.
Yeah. So either way, super quick. Shoot them an email. They'll reset them for you, and you should see everything kind of go back to the way you would expect.
Yes.
Lovely. So yeah, join us on the YouTube channel. I'm gonna pop over to the chat now. I'll get to yours, Adam, real quick. But the GC Brokering Butterfly. So we're talking about GC right now.
Yeah.
So I'm in the worst case scenario right now where mine just got blown through.
Where are you? What expiration?
14 days.
Okay.
35.30, 35.50, 35.90. So 20 by 40.
Oh yeah.
Bad news is it's completely in the money. Good news is it's not too far from the expected move.
You're saying there's a chance.
Saying there's a chance. If we get a down move, so the question is,
we had to bring it full circle.
Okay, but sorry,
saying
before
there's
you
a chance.
before you finish, have E and Gus seen Dumb and Dumber?
Probably not.
That is so.
Gus maybe, E no chance.
That's a problem.
That's a huge
We need to.
No, dude, we are Unc and Auntie.
We need to put a meeting on their calendar that's an hour and a half long, and then all of a sudden we're watching Dumb and Dumber in a conference room.
Precisely.
Movie day, basically movie day. It's cool.
So yeah, this spread is completely in the money. So the one thing you could do is, first of all, this is a debit spread financed by a wider credit spread. So the debit spread is completely in the money. What you could do is consider closing the debit spread portion of this trade. If you do that, you are leaving $250 on the table. That would make you super bearish. I'm not going to do that because I want that $250 to offset the max loss if it expires completely in the money, and it's not going to hurt me if there's a big gold sell-off. Like I don't necessarily care that I would lose value in that long spread because I would be also losing way more value in the short spread.
Mm-hmm.
And I have a net credit here of $260. So if this completely falls out of the money, I'm still going to make back $1,600 because this is a $1,000 loser right now. Yeah. So I'm not doing anything with this trade, but if you had a trade similar or it's a closer expiring contract and you're closer to max profit on your long spread, that is what you can do with a trade like this. But for now, I need a move. I need this thing to go below 35.90 to make any adjustments here. But
Yeah.
if we don't get that move, it's just going to be a max
You
loss.
can't do anything into it.
Yeah.
3, we talked about this the other day. Currently, the gold implied volatility is what? 15, 16%? I mean, you've seen a year-long move in a week.
Right.
Yeah.
Based on implied volatility. And put 10 to 15% implied volatility is a 1% move for the year.
Right.
And you get,
2%.
2% in a week.
Yeah.
Yeah. It's crazy. But maybe we get a little sell-off next week for a Fed decision. We'll see. All right, going back up to Adam. Any Derby earnings trades? I was thinking the 310, 312 and a half, 385, 37 and a half Iron Condor.
310, 312 and a half, 387?
85.
Little chicken iron condor.
Yeah, a little tight.
Yeah.
Yeah, you could do this.
Little engagement trade. Play for an inside move. You think the bad news is already baked in.
Mm-hmm.
I kind of like that. It's just a cheap shot.
Yeah, a little dollar.
Yeah,
$1.
$1.50.
Normally, I would go to September or October with an Iron Condor, but with a spread this small, with 1 day to go.
Yeah.
If you're willing to accept max loss, I think it's totally fine.
I'm gonna see if
It's basically a binary trade.
Yeah, I'm gonna see if I can get $1.
There you go.
Cents. I'll give up the 2 pennies. All right, I'm gonna let that sit. 98 cents. We'll see if we get filled.
Okay.
It's gonna be a tough fill because you're right at the expected move. It's a very tight spread, $300 some odd stock. So.
Mm-hmm.
I might go do a 5-point wide.
Ooh. What are you thinking? What strikes?
Just like the ones like almost right at the expected move. So maybe like the 320, 315, 385, go a little bit farther out, 390.
Yeah, there you go.
Pick up $2.
Do have a little bit of call skew here.
Yeah, I'm gonna work 205.
I like that.
Gonna try.
Why not?
Lovely.
¿Por qué no?
¿Por qué no? Let's see. Oclo crab.
Ooh, I was looking at Oclo. That was another one of these. These stocks have been going nutty. Upside, downside. What do we think?
So Brett already has it.
Okay.
I believe. 70 call in October. Short 2 of the 80s in September 26th. Long 1 of the 90s.
Okay. Right where you want to be. Right where you're supposed to be.
Yeah. Holding a slight loss. Want to stay long. Roll, close, or redo. I think you're right where you need to be. So you just need time to pass here. Yeah. And you'll be golden.
It's exactly what you want.
Mm-hmm.
Yeah, I think I just hold. Let it play out for a little bit longer. What's the high? 52-week high at 85. You still be okay right there. So as long as you're not looking at new highs, be fine.
Okay.
Do an Iron Condor in BE. You'll thank me later.
Whoever put
confidence.
Whoever put me in Bloom Energy for fast market, we did or something. I did that. I have a call ratio spread here. That's
Are those
actually,
the energy drinks? The Bloom energy drinks?
that I thought it was an actual energy company, but
I don't know.
I can look this up very quickly.
Yeah, it looks like it's not an energy drink company.
Okay, because there's literally Bloom energy drinks.
Oh.
So, okay, it's an actual energy company.
Actual energy.
Okay, carry on.
Well, I guess they're both actual energy, just different.
Different
They're
types.
renewable energy. That's what it is, you know. So, there are tons of call skew. There's probably some hidden risk that I don't know about here.
Yeah.
Stock has gone parabolic. I mean,
What's the trade?
15 to 70.
Oh, yeah.
66.
What's the trade?
Iron Condor, I assume in October. I mean, you can get a pretty wide range. You could do like a 50, 45, 90, 95 for $1 and change.
Yeah.
But this thing has such high implied volatility, you're going to have to hold that way closer to expiration than you think.
Yeah.
So
10-cent, 15-cent wide markets, don't love that.
Yeah.
But
I think if I didn't have a position, I would look at like a butterfly or a broken wing butterfly, that sort of, 70, 80, 95, or like the, 75, 80, 95, that sort of trade for 83-cent credit.
Yeah.
Play into that call skew. Break even at 85. But I'm already in. Can't sell the put now into a 10-point rally in three days. Crazy. Some of these moves.
What am I doing with my coin calendar? I closed that yesterday, actually. Wow, it's not on the follow page. What am I doing?
Oh.
What am I, insane?
that's a demerit.
Shame.
Shame.
Yeah, I still have my position here. I'm out.
Speaking of, what are you guys watching right now
Bucks.
besides football?
Invasion, Apple TV.
Invasion? Okay.
Yes.
We're watching the Alien
Aliens.
show.
Oh, is that one good? The Alien Earth?
Yeah, like the Alien show.
Yeah.
I like it.
It's of the story.
Yeah.
Of like the movie.
Yeah.
Okay.
I've enjoyed it so far.
I'm a big sci-fi guy.
Me too.
I like a good sci-fi.
Yeah.
It's pretty intense.
It's good.
You watch it too?
I've seen it, yeah.
Was there a lot? What do they call the things? What are the bad ones? with
Yeah. Clickers? No, that's a different show.
Yeah.
I don't know. I thought they just called them like aliens, or they haven't really said their name specifically yet. Anyways.
Xenomorphs. Yeah, come on.
I know.
Yeah, xenomorphs.
I'm posting this to the follow page now, but yeah.
It's Greek for strange alien.
You're making more now than I did. I closed it for $180 winner. It's trading for more than that now, for sure.
Nice.
So there you go. Yeah, I just closed it yesterday. I just started watching the runarounds. Have you ever seen this? It's on Prime.
Okay.
I think Chris might like it.
Okay.
It's like a high school kids form a band.
Okay.
And their parents want them to like go be a doctor, but they want to be in the band.
Okay.
And what's cool about it's very much like 80s nostalgia, like that's what it feels like.
Okay, sure.
But what's cool about the show is that all of the actors that play the band members, they're all actual musicians.
Oh, that's cool.
So when they're playing, you can see them actually playing their instruments.
You're not
and
phoning
singing.
it in.
Yeah. So
I respect it.
Check it out.
Okay.
Okay, so I just posted that to the follow page one day late. Oh God. But you're doing better now. So yeah, I would just close that coin calendar spread if you got it.
Mm-hmm.
How do you do a risk graph that's curved? You got to go to the Theo.
Yes.
Risk graph.
Indeed.
Yes. You can pull something up. I don't have so for a diagonal spread, I'm just going to pick some strikes here just to show it. Go to the analysis mode. When you're on the analysis mode, there's this Theo button here. So that's the one you'll want to click. It'll give you this curved risk profile on the right side. When you go to analysis, once you change parameters here, it'll adjust. So that was me moving time. You could also change volatility of the strikes. And you could see it move like that.
Yep. So yeah, this is how you can, this is what we use for earnings trades and other binary situations where we're crushing implied volatility, passing a little bit of time. Otherwise, it doesn't, like the expiration graph is what it is, but if you're doing an earnings trade, it's not going to give you the same idea in terms of profitability or potential loss.
So the expiration graph, it gives you its binary.
Mm-hmm.
So what the Theo graph, which is theoretical, allows you to change some inputs and takes a theoretical approach to the P&L. Like something like a put spread, there's going to be there will be a difference when you look at the Theo curve versus the at expiration, but it's at expiration, it's the same thing because it's one expiration.
Indeed. How do you defend the CCJ ratio if it rockets up?
Well, let's hope it doesn't.
Yeah, true.
If it does rocket up, you are naked this call, so ideally it doesn't happen in the next couple days, but if it takes a week or 2 or 3 weeks and we're trading at 100, you can buy back this call, which will be in the money. You'd roll out to the next expiration. You could sell out, the closer at the money call or the same strike, and sell put against it and turn it into a straddle, strangle, or a straddle.
Yeah.
Would be your adjustment. And I have a couple life cycle of a trade videos on this too.
Yeah.
You're synthetically naked a call. That's your risk here.
Yeah.
Your risk is $5 higher because you have that long call spread there.
Right. Yeah, you're financing the cost of your debit spread with an extra short call. So if it rockets in the money, you can sell out of your long call spread.
Yes.
Keep that credit and then roll your short call out, convert it to a short put. The credit you receive from closing your long call spread is credit added to your net credit receipt.
Yes.
So you can turn it into a strangle or straddle, and you'll have a nice break-even point because you'll have a high credit. Even though you're not starting with a high credit, if that goes in the money, you'll have $500 or close to it to sell out that long call spread. Lovely. Haven't traded too many ratios that make me a little nervous. But yeah, you could do a broken wing butterfly too.
Yeah.
You could
buy
a wing.
Yeah, buy the 105. It'll use about the same buying power here. I mean, it'll cost you net a penny or two debit, but it caps the risk on the upside.
Mm-hmm. Is there a video explaining how Theo works for calendar spreads? I'm sure we've done it.
I'm sure you guys have.
Yeah, it's the same thing we just
showed.
Yeah, we just talked about. It's you have to keep in mind that there's a variable here, which is the difference in time. So your theoretical profit on a calendar is unlimited because you have a long option that's further out in time. So that the stock could expire below the short, and then in the case of a call calendar like Mike's, it could expire below the short, so that you would realize that value and that option would go away. And then if the stock rockets after that, now you have unlimited upside because you're long a call. So there's, you can't. It's very much a variable that you have to take with a little bit of a grain of salt. What's yours? The 400.
400, yeah.
400
in UNH. But yeah, that's basically it. You just simulate time passing and volatility collapsing. That's all you're doing.
Yeah, so you can move time forward. Let's say, volatility comes down. You can adjust it by whatever number you want. I just clicked it, to do a 6-point vol crush. It gives you a theoretical P&L graph of those two things. But ultimately, at the end of October, you're long a call, assuming the stock stays lower.
Mm-hmm. What do you?
I'm looking at Tesla, not UNH. Same difference.
Yeah.
It doesn't matter.
Potato, potato.
Yeah.
What do you think about a double calendar on Adobe for earnings? Spicy meatball.
I think I'd rather just do the Iron Condor like Katie did.
Yeah. So I actually don't mind this setup. It's the 3/2400, but using the long 8 days, short the 1 day. So same thing here. If you go to the analysis mode and you throw it on.
8 day, 1 day?
8 day, 1 day.
What strikes?
400, 320.
Okay.
So you toss it on there. And all you have to do, well, there's a couple things you have to do here. You'd have to push the expiration evaluate date to tomorrow, and you'll see that P&L graph skyrocket. So now what you have to do is you have to account for the volatility crush in the 8 day cycle. So the 8 day cycle has a current implied volatility of 97%. The back months on the option chain, like October has 53, November has 44, December has 45. So what I would do is I would bring that 97 down 50 percentage points.
Yeah.
And bring it down to 47.
Yeah.
and that's going to give you a theoretical P&L.
Realistic. Because a lot of that, the premium in both these options is baked into this binary event, and the actual implied volatility number that you get tomorrow might not be 47. It might be 50 or 55 or something like that. But premium, a lot of that premium is baked into right now.
Yes.
And that's why these trades, they set up and they look real sexy, but they're, for the most part, it's a upside play.
Yes.
And because you need the move in the stock, the gamma from the stock.
Yeah. You would much rather have Adobe priced at 400 than 320 in terms of all extrinsic value remaining across the options chain.
Yes.
That's why you have a higher max profit on the upside for these trades. But if you get it and there's a move towards 400, you can make $100, $150. And of course, if the what's really sensitive about this trade is where implied volatility goes in the 8-day cycle. Like Nick said, if you crush it to 47, it looks pretty bleak. But if it stays up at like 60, it looks a lot better.
Yeah.
So it's just a matter of how big of a crush the 8-day cycle actually absorbs.
Yeah. When you're looking at calendars, like there's no like very cheap, huge upside trade that has, that like looks like this. Like if you're buying 5 delta calls or 5 delta puts, sure, you're paying very little and you have a very small probability. And if something crazy happens, an Oracle type move, you make money on that trade. When you're doing a calendar spread for $2.50, that's basically your like home run. Mm-hmm. Your home run is probably half that. So, yeah.
Indeed.
That's it.
That's it. Thoughts on RH short puts for earnings?
Oh.
Are they reporting?
They are. Very expensive furniture.
Very expensive.
Yeah, above my pay grade.
Yeah.
So, yeah, I mean.
Should have put that on the bridal registry.
Yeah.
The link directly to Tom.
Yes. Damn it. You should send that link to Tom.
Yeah. Only one recipient. It's just Tom.
Strange.
So what's interesting about, so if you have a larger account and you want to do this, I would probably go to the 1 day.
What are we thinking? Puts?
Short put. Short puts for earnings. So if you have a large account and you can absorb a move against you, you're getting so much premium in the 1 day relative to September or October. Like just looking at the 200 strike, the 1 day you're getting $500. The 8 day you're getting $650.
Didn't we get a tariff on furniture? Wasn't that a tariff? Tariff. You get a tariff. You get a tariff.
Tariff. But yeah, you're seeing a huge dispersion. You're seeing a ton of front-loaded implied volatility in the 1 day relative to October even.
Totally.
So I would just go to the 1 day. If it goes against you, you can then roll into September or October and pick up more premium. But yeah, it's a high-risk, high-reward trade for sure, unless you're trying to take stock at a lower basis, if that's what you want to do. A couple more rapid fire here.
Yes.
Yeah. We got to get out of here at 11:55.
Yeah.
Thank you.
Call diagonal spread in NVIDIA. 185. So we don't do the inverse calendar spread or diagonal spreads.
Yeah, I just got a put, long put.
If you want to do long 182.5, short the 185.
October Nov.
You'd have to go. You'd have to go long 180 in October, short the 185 or 182.5 in September.
Yeah.
Doesn't really work that well because the short option doesn't have too much premium. You'd have to go to the November.
Got an IV rank at 2.
Yeah. But yeah, we don't do the inverse calendar or diagonal spreads because it's using a lot of capital and you need like nothing to happen and then a rally.
Yeah.
Let's see. Something in CL?
Volatility is just no good in there.
I know, it's tough. Like you said, you kind of have to do like a micro or just be kind of willing to sit with like something to find risk for a good while.
Yeah.
We got like a tiny, tiny bit of volatility today, but not much.
I think I will gladly get long micro crude, but I'm looking for sub 62.
Ooh.
I want to get back to that low.
You could put it. You could route an order in.
You could throw in a
Say
GTC.
That's true.
61.99. Put that order in. Have it working.
One more here. What's up with airlines today?
Are they going nuts?
They're down, that is.
UAL unchanged. Delta. Okay.
Oh yeah, a little bit.
I had a strangle in here, but I closed it. It was the 55.65 in September. What do we think?
Good question.
52.5, 67.5?
52.5.
67.5. I don't mind that. $500 in buying power.
Not too shabby.
All right, we're gonna put that one on.
I like it.
If I get filled on Adobe, I'll post that one too, but that's still working.
I like it. That's it.
Cool.
All right. Well, that wraps up this edition of Options Trading Concepts Live. If you all want to see anything in future episodes, just tweet at us. I'm at Trader Katie. Mike, who I messed up last time, is at Trader Mikey B. Nick at Trader Nicky Bat. Good luck, good trading. Go football Thursdays. Let's go eat some chicken.
Peace.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
So I started trading in the equities market when I was 18. Real basic ETFs, mutual funds. I didn't discover options and really tastylive until about 2012. It made sense to me from a risk perspective. And so I started trading and never really have looked back. The people you see that's who they are. They're trying to be as open and clear as they can with the trades that they're putting on. Teaching a methodology, like teaching the logic behind things. It is tried, true, and tested. They back it up with research. They share that research. It's not just trust us and do this, which is a very dangerous thing in the financial world. But learning about that in a tasty universe, it starts to prove itself out, right? When you follow the methodology, you'll see those profits and you'll understand why a position did what it did. Sometimes the market wins and sometimes you have a 90% winner and you don't know, why don't I do this every day, right? This is easy. But you kind of have to reset that and just go, okay, close the trade and move on to the next one, which is really what Tasty's about.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
Rise higher, ye Taurian markets, I will thee ride. Oh, let the horned bull now be thy guide. Increase the yield, as the longs have long planned. Be not inert in flowery field like Ferdinand. Reward the longs their bulldog-like persistence. Like Lord Michael of Jordan, soar beyond resistance. Reward those who see upside positivity, as if in some ill-advised Pamplonian activity. Trip thy hooves o'er trading streets most stony, cobbled with the confidence of masters Tom and Tony. Climb with ease the line of Tim Knight's profit chart, and with thy rise make proud Slim's technical heart. Gore the matador of pessimism with thy horn. Let red capes of resistance now be torn. This market yoke to wagon now could pull to follow up the thundering of the bull. In market glory let us be arrayed. Oh, hear this exhortation now from Tasty Trade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
We're back. It's Thursday, September 11th, 2025. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Jamal Chandler. It's the smile of a guy who's along the Russell.
That's right. That's right. What a day, huh? Let's keep it rolling. Let's keep it rolling.
It is an interesting day here. We're learning a lot about what traders care about, confirming some priors, dismissing some others, learning about next week's Fed meeting, of course, where the market is still pricing in just one cut, although the odds of a second one have increased at the margin, still sitting below 10%. Jamal, this morning we had the hallowed inflation report, CPI, one of my favorite days of the month. We also had jobless claims, both released at the same time. So which one won out? I think we can say that labor trumps inflation now. As we turn to the slides here, it's clear in my view that the market reaction today, higher stock prices, weaker dollar, stronger bonds, right? That's kind of painting to a more concern over the recession potential in this market. But hey, maybe the rate cuts come and save the day before things get too bad, Jamal. So when we look at this data Dell used this morning, first, let's take a look at that inflation data, right? The month over month is up 0.4%. But where is it coming from? Is it because of the tariffs? No. In June, the month-over-month reading for core goods X vehicles was plus 0.55%. It's now down to 0.13% month-over-month. By and large, this is being driven by shelter. This is because housing prices are staying up, because rents are going higher. I don't think that higher interest rates incentivize the building of new things, Jamal. So are rate cuts the antidote to more housing? Give developers more money. Jamal, this is not bothering people today. I think the market's more concerned with this number here. Weekly jobless claims are expected to come in at 236,000. They jumped to 263,000. It's the highest that we've seen going back to October 2021. So on the downside of the pandemic, the labor market's weakening. And if the Fed thinks that we're going to look through inflation, vis-a-vis tariffs, as they've been telling us since 2018-19's episode, then they're going to be looking at something like this, and they're not going to be too happy. So rate cuts, they're coming. I don't think it's going to be a stop and start cut cycle. We're probably going to get our 50 basis points in September and October, if not in September, but definitely between those two meetings as things stand. And then that's great news for a small caps guy like yourself in this market, where just 2 days ago we were discussing the propensity for the Russell and small caps to outperform their large cap counterparts when you get 150 basis points away from the peak of the Fed rate hike cycle. And sure enough, Russell is the leader here in equity land this Thursday, Jamal.
It is a leader on a percentage basis. I got to say, this makes me a little bit nervous because when you see a chart like this for the initial claims, and like we talked about with the jobs report last week, again, it gets to the point where the Fed is having to cut for a not so great reason. Now, I mean, of course, they have the dual mandate, and this is a part of it. And so when you see this, though, it makes me nervous that the sentiment is eventually going to change to not so good reasons for cutting lead to markets falling down. That's the biggest worry. But aside from that, right now, I'm not going to look a gift horse in the mouth. Like you said, small caps are the ones that always stood the chance to benefit the most from this type of situation. And we're seeing it happening. We just can't have a situation where we're losing too much jobs, because that's going to affect smaller companies even harder.
It would hit smaller companies even harder. So let's be careful what we wish for. But the market looking through whatever rise in inflation right now and saying that's not a problem. Transitory. That's a fun word to use. Oh, it's a fun word to use. The S&P 500 here took the ball and ran this morning. 65.55 pre CPI, now up to 65.87.5, just off the session highs near 65.94. It's a 0.73% gain. But I've already been hemming and hawing about the Russell here. So let's go to that, which this is basically the session high right now. We're just a few ticks off of it, 2417.60. So Jamal, as the resident long Russell holder here, I have no deltas in it, but you do. What's the plan for folks who have been riding this to the upside now that you're at fresh yearly highs?
Well, the plan is, I don't think this, and look, the whole reason we put it on is because, like we said, we figured that they would stand to benefit the most if the Fed started to cut rates. A lot of those regional banks are the things that are pushing this Russell higher. And so I still think that there's more upside to it. We could see some pullback in the near term. For that reason, I actually rolled this out yesterday to 98 days, so out to December now, just so we give it a little bit more time. I'm still long the 2,400, 2,500 call spread, and just it's out in December now. So I still think this is a good environment that favors small caps, favors Russell 2000, and I'm just going to keep the trade on.
Well, right now in this market, it's the interest rate sensitive things that were getting hurt yesterday, now going higher today. You talk about the banks, those are performing well, both the big ones and then the regionals, which is more relevant to the Russell conversation. In fact, actually, they've actually turned negative. Oh, that's a surprise. Well, XLF is up. I suppose that's the good piece of news here for the banks, but KRE falling into the red. Otherwise, though, the home builders, those are trading to the upside still. Brief pullback yesterday. It's been this rhythm for the past several weeks. You get up a little bit, 2 steps forward, 1 step back. That's the commentary from yesterday, and you could see how we pull back a little bit today, and then we're yesterday, and now we're back on the ups. The structure here of this market, though, I think, and the volatility evolution is what's of interest to us most, Jamal. As we push into these new highs for the year, for all time, for the S&P 500, there wasn't really a subsequent drop in volatility. We're back at 15 or so, but we're starting to see vol come off the daily lows. Should traders who have been playing this market long to the upside on a short-term basis today perhaps think about getting ready to take some chips off the table?
Yeah, I mean, I think that's prudent. Risk management is important at a time like this where we've basically just gone straight up for 4 days in a row. They haven't been huge days up, but still, nevertheless, at some point or another, you expect a little what they call mean reversion, right? And so if you're super long some upside, probably doesn't hurt to take some off. I took my NASDAQ call spread off for no other reason than exactly that, some risk management, right? Looking for a little bit of a pullback at some point to be able to redeploy that same call spread at different levels in NASDAQ or whatever it may be. S&P, pick your one. But I think a little risk management, if you're super long and you've benefited here, is probably due because, dude, Next week is going to be super busy. I mean, we know that the Fed meeting is coming, but there's other, of course, policy meetings across the globe as well. And then there's a VIX expiration. You talk about volatility. VIX is fairly low. We have seen times, right, where there's been movement in the market around VIX expiration. Not only that, it's options expiration. And from what I've heard recently, it's supposed to be the largest ever, I think notionally. I don't actually know the number. I haven't seen it, but I heard it's supposed to be the largest ever, which wouldn't be shocking because it is. I think it should be a triple witching one since it's end of a quarter. So it's not the end of the quarter, I should say, but it's coming up on the end of the quarter. It's September. It's a quarterly one. So there's a lot going on next week, and I think after you see 4 days in a row where the market's been up, taking a few chips off the table is prudent.
In terms of what's really performing well here, Jamal, I'm thinking about the broader outperformance map. Tesla is the name that's driving everyone to the upside. Now, Oracle's, of course, giving some back after yesterday's astounding move. But Tesla here is the name that's poking up, and I think actually a little bit more interesting than people are giving it credit for right now. We have this high here in February. We have the highs here in May. We're starting to punch through. This is looking like a much longer term bottoming basing effort right now. And if Tesla starts going again, this has been a drag on the broader NASDAQ for how long, right? So even some of the weaker names in the rally are starting to pick things back up. I know NVIDIA's off a touch today. I know we're looking at like a Microsoft that's barely moving higher, but stabilizing, and markets broadly speaking asserting themselves up to new highs with low volume, low volatility, positive technical drift. So I just don't see a reason to get off this train right now. About, 2 weeks ago at this point, 3 weeks ago, we put on a long MES trade, and we're continuing to ride it to the upside. I see this as something worthwhile to trade further into about 6,700. I see a measured move of the recent trading range now that we've broken out, carrying us up to about 6,690. So this hasn't been achieved yet. I think we got another 100 points in the take here, Jamal. And we can run that here today, tomorrow, Monday, before the markets calm down and pull it back in Tuesday before the Fed meeting Wednesday.
Yeah, I mean, again, that we're going to throw that word around a little bit today, that risk management word, but it's probably a little prudent right now. I mean, there's a lot happening here across the board. It's been an interesting week overall. You talk about Tesla, that's been one moving to the upside. We saw what Oracle did yesterday. And typically those environments, I'm actually a little surprised that yesterday, after that big kind of blow off top move, we didn't reverse. And we did reverse actually, but I was surprised that we didn't sort of end up a lot more negative in a way, because it was a huge move, honestly. It was enormous. And there's just a lot of other things going on, a lot of these other asset classes that we're going to cover today as well. So, a little risk management here and there is probably a decent thing to do.
So we've gotten through the CPI report, right? And the CPI report, you and I, Thomas and I yesterday, Ilya and Dylan and I the past few days, we've been discussing how going into today's session, this was a market that really wasn't pricing CPI to be kind of a make or break type of report. It had lower implied vols if you were looking at the expected move than a day before than either the Fed meeting or the non-farm payrolls report. We've seen that there's been very little movement in rate cut odds in recent sessions. We get through this data release, the market has shrugged it off. Now that we know a rate cut's coming, Jamal, does next week's Fed meeting matter? Can I question that?
You could. It's definitely worth questioning. The odd thing is that I don't know the last time it was a nothing burger on the Fed meeting. I can't recall off the top of my head. That's the only thing.
We're less than 70 points. That's kind of what we're only at 70 points.
Yeah.
Through next Wednesday.
No, it's a valid question, because I feel like we do know everything that Powell could possibly say, right? There's not a whole lot of mystery this time around, it feels, versus several meetings in the past. There's just really not much mystery to it. So it's a valid question.
I think that's probably going to stay pinned there. I don't think this is going to be a market where it's like 35 points going into the CPI report like it was today. But directionally, we know that the Fed will be cutting rates. How far, how deep they cut is another story. The CME Fed Watch tool would tell us right now that the odds of a 50 basis point rate cut in September are actually lower today than they were yesterday, as the markets digested the move. And perhaps that's part of the reason why we've seen bonds and notes do what they've done. But 7.1% chance of 50, down from 8.9% yesterday. The difference is that when we look at the probabilities stretching out from month to month to month, October has now bumped up to a 99% chance of a 25 basis point rate cut. Okay, that's a small change, but we're seeing that the market's now convinced the Fed's not going to give us a one-off. How far of a change is that? Just we're talking about an improvement of roughly 10% increase in October cut odds as a result of today's data. The same thing can be said for December, up about 11%. So not 50, but we're going to get more. And we're going to get 3 this year is the market's belief. And if that all arrives, then whatever weakness we're seeing in claims, even if it's for something like a one-off due to a Texas data issue, which is an explanation I've seen people kick around today. Texas's filing claims jumped from like 15K up to 60K. So they're basically responsible for all of the reason why the claims outperformed. Maybe that's a one-off. Maybe that's a data processing problem. Either way, though, right? The market's convinced that if we don't get 50 now, we're going to get it. So, okay, that's not too problematic. 6590, S&P, NASDAQ, we really haven't looked at here. But this still looks like a chart that's breaking out. What else do we need to say about this? I don't have any exposure here at present time, but a run up to the all-time high here, 24,068.5. I mean, what are we talking about? 0.2%?
It's nothing. Drop in the bucket. And yeah, it has been super strong. Again, I chose to take some chips off the table, and that was one of them. I did choose to do that because I'm still long of some various names. And then, of course, I have that Russell position as well. So you got to do something.
You got to do something, right? It's like buying a Powerball ticket. You can't win if you don't play. So you got to play in something right now. The question is, what's the best application? I still find this to be a market where we're dip buyers. Jamal, I know that's confounding given the headlines and the news and the drama around the Fed and this, that, the other thing. But the reality is that if you ignore the noise and you stay within the mechanics, we've shared the research before. It's always worth reiterating. When the volatility, when VIX is below 15, what's the best place? What's the best trade? Is it selling short strangle? Is it a short iron condor? Is it simply just being long the market? Average daily returns are higher if you're simply long, and the volatility of those returns is lower. Standard deviation of those returns on a daily basis is lower if you're simply long the market. So this isn't a fun time if you're a vol seller. Let's just put that into context here too. This is a time where things are going well for you, and I know you've made this comment before, and it's worked really well for you in recent months, but drying some powder out, taking some profits, waiting for a little bit more vol to get back to doing the things that help consistently, hopefully make us money, right?
Yep. I think it's important every now to at least have money available for when the really good trades come up, right? For some situations, it might be a big move that happens, like an Oracle, that gives you an opportunity to either take the other side or maybe even sell vol in a name like that, to get short futures here for whatever different reason you want to do it. Like just having the ability to have some powder available for when things really, a really good trade comes up is always nice.
If you're looking at this with fresh eyes today, people are waiting for a trade post CPI. What's your best opportunity on the board? How would you express right now? Is it still long Russell?
It's definitely still long Russell. Trying to think what else. You're just saying equities wise.
Yeah, in the equity space, NQ, ESRTY.
It's long Russell for me. I mean, that's basically it. Like, again, I was long Russell and NASDAQ. I decided to close the NASDAQ round, but long Russell, I think, is just the best trade going forward. And I just still want to give it a little bit more time because I do expect a pullback at some point, Chris. Like, I mean, whether it's tomorrow or whether it's sometime next week, I do expect some type of pullback, maybe 2% or so. Like you said, we're still dip buyers in this market, but the dips haven't really been that big and they haven't really lasted very long. So nevertheless, I still want to give the idea time. It's still a little bit upside, although it's a little in the money now, I should say. I'm long to 2,400, 2,500, so we're at 2,435 in Russell. It's a little bit in the money now, which, again, it seemed like so far away when it was trading 2,200 and change. But I just like the idea of going further out in time a little bit here, and it didn't cost too much to do it.
No, and when we go to the continuous contract, I mentioned earlier that we've poked up into fresh yearly highs. It's been really clean. We've seen this stair-stepping, poke into a new high, former highs, pull back into our trend, 1 month moving average, poke up to a new high, pull back, former highs, now turn support. into a new high. So where's the next big swing high? That's going to be closer to 2480. Okay. So Jamal, I'm thinking about you, and you're thinking the RTY Z5 contract. The spread here between RTY U5 and RTY Z5 is about 20 points. So if RTY U5 is up at 2480, then you're probably thinking that the Z5 contract's at your 2500. And if we're getting a run up there in this month of September, like if ES is going to 6690 here in the next few weeks, it doesn't matter how much time is going to be on my expiration. At that point, if you hit your extension targets, like I have in the S&P 500 here, holding on to it and not taking profit on the trade structured around the very particular outcome that had already been achieved is just being greedy. And you're not trading mechanical or within your system whatsoever. So I think we have levels to work with. I think you and I are both dip buyers still. As Radigan said, not really think about it. And that's serving us well, dare I say, just kind of letting this work and sitting back and letting the technicals and volatility inform us.
Basically, and I'm glad you brought that up as far as the swing high 2480, because it's essentially what we did when we initially put this trade on. We were looking back at last year's move and seeing if it was going to get back towards those highs. I mean, it's not really rocket science a lot of the times. It's just a matter of, will the eventual thesis catch on, which in this case it has, right? The declining job market, inflation still being sticky, creates a situation where the Fed's going to cut, whether it's 2 to 3 cuts over the next several months. It should be good for small caps.
Should be good for small caps. I like playing in the S&P 500 right now. If I didn't have double barrel S&P 500 long deltas on, maybe one would be in the Russell, but it's working, and I'm not one to fix something that's not broken. So keep pressing on right now as far as I'm concerned. Equities usually take up more time for us here, Jamal, but I think most of the other things that are going in the market today might be a little bit more interesting. I only say that because we have this CPI report. We had a 30-year auction that just came out at the top of the hour. Pulling over here back to our charts. Let's head over on to ZB. 117 and 26 ticks. Let me just go down to that 5-minute time frame real quick. So we have our auction here at the top of the hour. Wasn't great. On the screws, bid to cover 2.38, which is in ever so slightly. Is it? Let me just double check that. Eyeballing it. No, it's up a little bit. 2.38 from 2.27. Indirects, 62 from 59.5, actually. This is a pretty good auction, Jamal. It's like yesterday, not as good as yesterday. The 10s were much better.
10s, yeah.
But coming in on the screw, with coming in on the screws here today and foreign evidence of foreign buyers having increased relative to where they were in August, kind of what you want to see. I think that's actually a really important point contextually, because if you're a foreign investor and you think that U.S. interest rates are going to be going down dramatically, then you kind of want to lock in your rates now, don't you? So I think there's a clear sign from the investor class, at least from the foreigners. They're not worried about whatever that trajectory we're on. They're not worried about the tariff policy or the administration's efforts to recalibrate the American economy. They want to get their hand in at 4% yields on the 10s and 4.25%, 4.5% on the 30s while they can get them. So this bond breakout, while it's not really surging today, we are definitely off the highs. We are closer to 118 and 6 ticks in ZB and ZN. We were trading closer to, and where are you? About 113 and 29 ticks, currently at 113.22. These are still very much in uptrends on that longer term basis. Mm-hmm. And whatever stall we're seeing here today, North Star, long-term bottoming, that's what we're working towards here the next several weeks and months, Jamal.
It's interesting because there's not much volatility in the bonds right now, in here at least, but there was some blips in the MOVE index to start the week. I'm not exactly sure where it is now, but what do you make of this? I mean, like you said, maybe it is that people are just looking to lock in the interest rates where they are and they're buying bonds, but is there something else kind of more potentially sinister going on in the longer end of the curve with both of these rising? It's kind of interesting, isn't it?
It is. I mean, when you see metals and bonds behaving the way that they're behaving, it screams to me like there's inflation risk creeping into the corner.
Mm-hmm.
But the MOVE index is actually quite low. It's down 3.2% today. 79.58. We were all having our freak out about the MOVE index back in April when it was trading north of 132.
Mm-hmm.
For what it's worth. So bond vol is disappearing. Now, granted, the move index is based on listed options for bonds at the 30-day strike, and UB doesn't have any listed options. So there's less volatility at the short end of the curve right now. The volatility is, for the longer you go out, that's where you're finding it. So if UB had options, I would think that volatility in the move index would be up. That's just a kind of nitpicky, unimportant thing crossing my mind. But even so, the bottoming, Jamal, technically it's clear. And if you want to be a bull in stocks and you're worried about maybe, reality is going to come hit with all the data, long deltas here help provide that cushioning.
They do. And I mentioned the other day when we were on the show, I am long a ZN call. This has been one of the longest bond drawdowns in history. And at some point or another, you figure bonds are going to bounce. Now, we've been trying to play that bounce for a while, but I just feel like when you see these blips, these are interesting times to get back in and be long and see where this takes us, especially at this time where, again, volatility is low, but there seems to be a momentum on the side of bonds. So I want to be there when they make that move.
They seem to be making that move. The continuous contract has ZB still poking out of this downtrend. That's the COVID high. This is not an insignificant chart. The highs here are marked by what? The washout that we have in early March, and then the spike highs that we have here in April 25, which is Liberation Day. I think we're going to talk about significant turning points in markets for news, for sentiment, for trading volumes, for volatility. Those are two of the most prominent weeks over the past decade. So breaking that downtrend defined by those events, or at least those cycles of events, I don't know, man. Is that going to be good for the dollar? Maybe, maybe not. Is it going to be good for gold and silver? I think so. If we're looking at that much lower yields moving forward, you and I probably have some more silver and gold to buy when we get to the next section. But this for right now, while we're in a little bit, I do think ultimately the market continues to show you that we're in breakout mode. People are clamoring for bet for whatever reason. And as long as this uptrend remains in place, there's no viable reason to get off the train. It's just not a good typical tasty trade with a 3.9 IVR. Selling puts is, you're not going to find a great risk to reward here at present time. So I think you really got to be doing what you and I have been doing, which is more of the reaching for something like a little bit more of an out of the money call if you want that exposure. Right.
I think it's like basically the only trade you can really do in here right now, honestly, or nothing at all. Because like you said, you can't sell any puts in here. There's volatility is non-existent. And I just really don't know any other trade I'd want to do, honestly. It's bonds are never going to be a momentum play. I'm not going to say that, but the upside seems to be the place where you're skating the puck to right now. So why not?
Just looking at let's find something in the 60 to 70% pop. The first time that we can do, you're going to have to do the 113.5, 113 short put spread here, 43 days out. So risking a little bit more than one to make one, sure. But technically on the chart, that means you're only giving yourself to basically yesterday's low. You're calling the low here. And if we breach yesterday's low, you start to go underwater on this position, Jamal. Right?
Yeah.
Like it's not a great trade setup. On the upside, right, I'm still playing in the 114, 115 here. If you just wanted to go back, you're still risking some. But if this is achieved, it's like you're risking a little bit less, risking one to make 2.5. Okay, I'm more comfortable operating on those bounds. And it's a 50-50 shot. So reducing the probability of profit by 17%, 67 to 50, to flip from a worse than 1-to-1 to making potentially 2.5 for 1. Better. It's not great, but it's better.
Again, these aren't levels. The levels that we're playing for aren't levels that, it's not like they're levels that haven't happened. I mean, this literally just happened back in April, albeit at a time of a lot of strife, but it's not impossible. So I like having a call here. I like even the call spread here. I think it's very, very possible to get to 114s, maybe even 115s in the next couple of months.
When bonds, like if notes get up to 114, you're going to have that conversation cycle through financial media. Oh, treasury yields are the lowest they've been since the panic during Liberation Day. What does that mean about the economy?
Yeah, right. I'm actually a little surprised we're not at 114 right now.
Yeah, me too. Because if I didn't think it was going to happen, I wouldn't have bought the 114 calls, right? But it does, maybe it is a data issue with the claims figures, right? That's ultimately why the numbers were so bad today. So perhaps the economy isn't as weak as we thought. Hey, good news for stocks though. S&P not going anywhere, still 65.88. Jamal, we can get off of notes and bonds. These aren't that attractive right now. 7.6 IVR. Wow. So if you're trading them directionally, hopefully it's on the long side. I see here that we haven't broke below our 1 week moving average in ZB. Today we touched it just like yesterday, and we have now bounced into a new high. So whatever cycle of higher highs and higher lows, it's continuing. And whatever amalgamation of data that we've seen now between NFP, PPI, CPI, I guess you're holding out for retail sales tomorrow. Michigan sentiment, I should say.
No, nobody's holding out.
Like that's no one. No one better be. Okay, so we had our 30s auctions today. Silver keeps running. It took the baton yesterday, and it's now surging up here again today, which is just delightful. Another 1.24% gain into the top of its range. Jamal, just to reinforce something that was said yesterday, I like to treat 41 here as someone who's long the 42-43 call spread with 40-odd days to go to expiry. 41 is the line in the sand as far as I'm concerned. When we zoom in a little bit and go to a 4-hour time frame, you'll see that we have numerous candlesticks here that are of the bottoming variety. We have it here on the intraday September 12th, the bullish engulfing bar or key reversal. You have your pin bar here on the 4th. You'll find another bullish engulfing or key reversal here on the 8th, and then again on the 9th. All of these wicks are coming down into this 41 to 41.15 area. So if we lose 41, silver's probably in trouble. There's no such thing as a triple top, although there is something called a left shoulder head, right shoulder. So maybe the pullback today is the start of it. Either way, we're at range highs. And so if we begin to break through this 42.40 area, you can start to see a potential path forward for a greater move up into 43, 43 and a half. So flagging continues, top side of the range. The question is whether or not it's a good time to continue buying up here. Personally, this is not where I would want to enter long. I'd want to enter long closer to 41 and get out on the long side if it drops below 41. But up here, you now need to see if we can clear the overhead supply. Otherwise, you're just providing exit liquidity for folks who are range trading. So that would mean ultimately a breach of the 42.35.5 level. Volatility is turning up though, and I think that's the important notation at the end of the day. This consolidation was marked by a decline in vol Jamal throughout September. IVRs were in the 30s, and now they're back in the teens. If we start to break out again, the bump in volatility that started to occur today, we're rounding up and out. That would be the confidence to get on board again for the next leg of this breakout if one hasn't been trading it already.
And that's exactly what I'm playing for the next leg of the breakout. I think you're right. I think 41 is a level that needs to hold each time when they have a pullback, which we likely will. I mean, with the oncoming catalyst next week, I think we could end up seeing, hopefully that gives us the breakout on Wednesday or maybe Thursday. Hopefully it's not a breakdown, but you can see we're consolidating here after the huge move that happened in conjunction with the beginning of the month. And now it's just, like you said, we need to hold 41s. There's going to be ebbs and flows over the next couple of days. Hopefully there's a huge breakout that comes on Wednesday or Thursday, and that would be really nice. Again, I have the 44-46 call spread, and I'm looking for a nice size move to 45 maybe. I think risk management wise, if I'm up, it's tough, but I'm up 20% on the trade right now. If I'm up somewhere between, it's always nice if the trade just takes it out of your hands, right? And you come in and you're up 75%, then it's like, okay, maybe this is an opportunity to take some off. So I think I take it off somewhere between 50 and 70% profit. Maybe that happens if we're at $45, I think, but we'll see. That's kind of my thought process.
Gold looks like it may be getting done with its consolidation. Maybe. And fool me once, gold, shame on you. Fool me twice, shame on me. I'm not going to miss this next leg up here, Jamal. I am looking at this. Yes, it could be a potential top. But that is a lot of healthy respect for a former swing high on September 5th in these recent pullbacks down to 36.50 or so. Should we look for more gold? Because gold has been elusive for the last $80. We're missing on getting out.
Yeah, because you're still not back in, right?
No, I have just been watching and biding my time. Because, again, last week it's like, okay, gold's in this range where it's like 5% above or 5 to 7% above its 1 month moving average. Things typically cool off here. So do I want to necessarily put on a fresh long right now? No. And then it kept running. But it's paused the last few days. So we had, I don't feel I kind of feel vindicated, like looking for a pause at some point. I just got off the train a little bit early before the train decided to stop. But we're still in that mode where we're running up. And the premonitions of a gold rally, given the technicals we've outlined, show a potential target of 38.94, which is yet to be achieved. That's what the triangle calls for, after all. For doing the measured move from the recent swing levels here, lows that you have in April, high here, or more conservatively down to here, 37.50. 37.50 hasn't been achieved. So looking out to that level, 37.50 long, short, 37.75. We'll do it modestly, risking 2.5 to make 1. Yes, please. Gold needs to be back on the books, and the fact that it didn't get filled right away makes me think it's a great trade, Jamal.
And I like what you did there too, because earlier, right? Earlier, meaning a few months back, we were doing more like 50-point wide spreads. In this case, now you're tightening it a little bit because again, you're looking at where it is, and it makes sense. I took off the GC contract call spread that I had last week. I rolled it into GLD just because I have the silver contract, the futures. I have that call spread in there in SI/SI. I had a GC call spread as well. Both of them were pretty sizable. Both of them were about, I think the silver was not quite. Actually, when I put that on, it was about $1,500 it cost. The gold contract was over $2,500, and I kind of have this rule about anything being 10% over the size of my book. So I decided to go into GLD. If we're still going to get this measured move, it's going to work just fine in there as well. But look, there's nothing better than pure exposure in GC contract, that's for sure.
It's been working. 35.93 is when I got out. So I'm remiss to say I missed the last few bucks, but that's not what we care about. We care about is just making sure we're on the right side of the trade. We've seen that this tendency since August 22nd, we hugged that 1 week moving average. Yesterday, we bounced off of it. Today, we hit it again and bounced off of it. That's a nice little lower wick there. So as long as we're holding through, again, 36.50, longs look appropriate. And if we're below 36.50, you know what? Take this off, small loss. I would rather take a small loss trying to get back in long gold than miss more of the move, just because of how psychologically broken and tethered I am to gold being part of our joint personality, Jamal, over the past 2 years.
I mean, look, sometimes we got to protect ourselves from ourselves, right? I mean, I do that all the time.
We should do it. Doesn't mean we are doing it. Do you mind if we take a brief detour over into the world of soft ag? Because we're kind of running through the show quickly, but these things are so unrelated to what we normally discuss. And I noticed that there were some huge volatility readings on the board here today.
Really?
This is usually something we talk about with the Westwater, but soybean futures have a 93.1 IVR and just today bounced off the midpoint of the year-to-date trading range. Can you speak a little bit about why traders should perhaps diversify strategy, time frame, product assumptions? You really tuned me into why it's important to constantly think about reducing the beta-weighted deltas of your portfolio.
Yeah, you don't want to have too much concentration risk in a lot of different things, right? Or I should say in the same similar things. I mean, if you're in a lot of tech names, which something I had to figure out just yesterday, a couple of days ago, I said, you know what? I have a lot of decent amount of tech here. I was still long Apple. I did have a CRM position. I also had the NASDAQ call spread, not to mention the Russell call spread. And yeah, they might be moving for a little bit of different reasons, but they're still equities, right? And we all know how correlation works, or you should know. When volatility really starts to ratchet up, correlation ratchets up, and most things kind of move in the same direction, typically to the downside. So having something like soybeans or wheat in your portfolio, and again, I think the cool thing about it is when there's actually time. Like we don't need to discuss this every day if there's nothing going on, but when there's volatility in there, that's when it really gets interesting, and that's when it's important to take a look. And that's what's the cool thing is about our IV rank, right? Like, you don't necessarily even have to be a soybean trader to understand vol is a little bit high, and just look at it from a risk standpoint and look at your risk to reward on any given trade. So I think it's a good time to look at these when there's something going on. I always like doing that.
You know, we're afforded a unique opportunity where it just so happens that over the next 43-day trading window, if we're going to operate under the assumption that we want to be directionally neutral because the market has, by and large, just been choppy and directionally neutral this year, we start 2025. So we close December 31st at 1,025.25. We're currently at 1,034.75 here in the ZSX5 contract, the November expiry. So we've done nothing at all whatsoever. Thinking about the highs and lows, right? Closer to 1,075, the low for the year closer to 970. We can go right out there on the 1 standard deviation move right now, and 10 points wide, get risking a little bit worse than 3-to-1. If we wanted to just tinker with this somewhat, we can get in that 3-to-1 neighborhood a little bit closer. I think this is a decent idea, Jamal, right? We can find a trade in here that's uncorrelated to anything else that we're discussing.
Mm-hmm.
The buying power too. I always like when we're doing something, buying power close to the max profit, if not over for the max profit, then pretty darn close. $50, less than that $45 difference, fine. Let's hopefully get filled. Directionally neutral, Westwater would be proud. But thinking about, he always turns me to this stuff, and I think he has a point. I went to beans first because you're not seeing it here in wheat, and the patterns in wheat. I mean, if we want to be a bottom picker, I guess you could do that. In corn, it's a little bit better vol.
I'd say that part is harder personally, and I know, you know, like you said, Westwater's our guy on that. I have never been able to fully reconcile all the stuff that that help to know when it's a good time to get long some wheat because it's going to bounce, right? Like you got to follow a lot more. You got to follow weather patterns. You got to follow a bunch of things, right? So I'd be less inclined to do that versus the directionless trade for the most part.
Oh, I hear you. And I'm looking at corn, though, with its 53.8 IVR, and whatever this consolidation is here, we break out and we're holding the breakout now.
Yeah.
That's the downtrend from April. There's a nice strong uptrend here in recent weeks. Corn, 43 days, looking below recent. Well, just go out to the 1 standard deviation, $10 wide. You can find something that's perhaps viable.
I know you almost do have to go $10 wide. There's a lot of volume, by the way. Look at the volume in these. I mean, you know, especially there's a lot more volume on the downside than anything, but there's a lot of volume.
That's one of the reasons why the ags are nice to look into, because there's legitimate reasons to be trading ag in America, whereas like silver, gold, we're not big gold and silver miners. So you have impressive trading volumes, a lot of open interest in some of these contracts. Playing it below the recent swing lows because just the volatility is different. A short put spread here, you're looking at 414. If you wanted to do short the 415, fine, but this is your 70% pop in that risking 3 to make 1 kind of neighborhood. I personally prefer the soybeans, just given the trade setup that we have in front of us. Better than calling a bottom.
I do got to call out a pretty good one I see in the chat here. A guy, Theta Trader, he said, "Don't worry about running out of content, Chris. If nothing else, Jamal can espouse his views on the relative merits of New Glarus versus Milwaukee Brewing, Spotted Cow versus the rest of the world." He's actually right. I do get a fair amount of Spotted Cow, if you ever heard about it, but it's this brewery in New Glarus, Wisconsin. And you can only get it in Wisconsin. And you know what? I heard a friend of mine who's, he's in his 60s, told me that once upon a time, Coors Light operated the same way, that you could only get it in Colorado and you couldn't get it out anywhere else. I didn't know that.
We were at a wedding in Telluride a few years ago, and we went to the bar, and they're like, "What can I get you?" And I said, "Give me your best local beer." And the guy's like, "What's that?" I'm like, "Coors Light." The bartender did not find it funny. So, all right, maybe wheat gets filled today, Jamal. We'll have something to do there. Gold gets filled today. We'll have something going there. We can make our way over to energy, which is getting hurt a little bit, which, of course, we do that to ourselves when you trade something like natural gas.
Did you do it?
Yeah, of course, because I'm very stupid. We have 47 days to expiration, the 2.9, the 2.85. So this is already getting to a place where, look, if we get below the 2.86, it's the low that we have on September 2nd, 2.869 monthly low, then there's no reason to hang on to any short put spread here. But I'm taking the shot. We fell back into support yesterday. Once again, though, I think the defining feature of this recent downtrend, you see that 50-day moving average here, the blue line, test in June, test in July. We tested it here in September. We fell against it again. So
would you
going
sold
up.
Downside?
Yeah, I sold downside.
Okay. Maybe I might sell
Nice.
upside. Just so at least one of us was right.
Yeah, we're playing it both sides. So who's come out on top?
Yeah.
I would see, Jamal, like if we're looking at this with fresh eyes today, if I was looking at this with fresh eyes today and didn't have the position on, I see why there's an upside selling a call spread case right now. You're reasserting back into the downtrend after testing the more prominent trend level of the 50-day, which has been so instrumental to serving as resistance here over the past 3 months. So I don't know how long I'm going to stay here in natural gas. Can't believe I convinced myself I was worth trading again. But crude oil here, chop, 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 chop. That's exactly what needs to be happening in this market. I find it really interesting that crude oil today, without any significant headlines coming out of the Middle East, is immediately on its back foot. Volatility is falling back apart. So much for the Israel-Doha attack being a new wave of geopolitical risk, or even the Russian incursion into Polish airspace the other night. That lasted what in the oil market? 2 days? We gave up the gains of Tuesday, Wednesday already. So there's a lot of pressure right now. Higher jobless claims for good reason or bad. That means less demand in an economy, and demand in our economy is highly correlated with oil. So I'm playing for more chop, but if I had to be directional here, the downside is looking a little bit more appealing than the upside. Not that I'm doing this, but I see a market that's failing to get back in its uptrend off the April lows here.
It's interesting how life works. I mean, I think I've barely traded crude oil this year, and I mean, I traded during those two. I always like to trade it for moves, I would say. Of course, I mean, if volatility is right, that's nice too. But those are the only 2 times I think I traded it this year was during those 2 moves right now. And so each time it starts to get a little bit interesting, like it did a couple of days ago, you see the reversal or you see some type of turnaround, and it's like seems to be landing right back in the, low 60s. And I guess that's just kind of what oil has been for the last several months now. It really has not been that exciting.
Has not been that exciting, but it's a trade that keeps working, which is, I think, at least from my perspective, it's really nice to have things on that are boring. It's 35 days to expiration, 50, so we're at what, the 55, 57, 70, 72. Okay. Would this still be viable today? You probably have to pull in the strikes, if only because the volatility is dissipating. So you're not going to be able to get the exact pricing that I did, but if you were going to put on this same position, you went over to the follow page and said, you know what, this makes a lot of sense. It's still a 66% probability of profit. The problem is we're slipping a little bit away from this being an attractive risk to reward where you're really risking more than 4 to make 1. That's just not my preference on how I'd like to do it. And we are tilting to the downside. So maybe the downside strikes are still appropriate, but if I were to sell the upside again here, going 67, 69, let's get rid of you, 67, 69, makes it more of a 3-to-1 risk to reward. And you're still playing, broadly speaking, for the chop that's defined this market for the past 3 months. So you can do something here. It's not correlated with the metals. It's not correlated with equities. It's certainly not correlated with bonds in any meaningful manner. Mm-hmm. Although if the oil's going down and you're a bond bull, you're probably feeling good because it means you're not worried about those inflation expectations getting pumped into the long end of the curve. So thinking about this holistically from the macro sense.
The Iron Condor has been the main trade, and you've been all over it, man. It's been working, so keep it going.
We have 10 minutes left here, Jamal. We can kind of meander around into the world of currency if you're good to move away from energy.
Absolutely. Let's do it.
You and I got some splaining to do, Lucy. 3rd day in a row, we asked the question, is the dollar turning a corner? If you're someone who's looking at the ECB rate decision today, you couldn't help but notice that the ECB bumped up growth and inflation forecasts. Surprise, surprise. So the euro's up. Euro's up to 1.17325, which that's a lot of digits, Jamal. We'll call it 117.33. The important note is that we rallied off of the uptrend from the yearly low, the February low, the swing low that we have here in August. It's a low that we find again here today. And we're on pace to close above yesterday's high, which technically makes this a key reversal or a bullish engulfing bar, having cleared yesterday's low and then again moving above yesterday's high. The dollar doesn't look too hot all of a sudden right now, Jamal. This has been meandering around support for a few weeks, really, since the middle of August.
Mm-hmm.
This is not all of a sudden a market that looks healthy. This is a reversal off the 1 month today. We tried to get through it. We couldn't. All the moving averages are tilting down. I mean, I guess for the bonds and metals bulls inside of us, we're delighted. But how are we managing dollar bullishness right now, considering we're not getting any traction or tact in our favor, directionally speaking?
Yeah, it's I think I did this on Tuesday's show, but I decided to make it a put butterfly with the center strike being at the 115, and I'm in January. So again, I think, normally I wouldn't do a butterfly so far out in anything, but at the end of the day, this is a currency and there's not huge moves that often. So if I am still playing for downside. I just expect that downside to happen a little bit more slowly. Playing for downside in the euro, that is, not in the dollar. I'm still playing for upside. So basically, I'm still playing for the downside in this euro. I'm playing for it to happen slowly over time. 115 will be sort of this area that we touched earlier this year, and not even that long ago, actually, back in late July, early August. And it makes it easier for me not to have to worry about the trade that much every day. It's not as much premium, a lot more slower trade, which you kind of typically would expect out of currencies anyway. So that's how I'm playing it.
That's how you have it structured, 1 point wide around 115?
3 points wide, actually. So 18, I'm long the 118, short the 115, and 3 points wide. I mean, if you will.
3 points wide.
Yeah, that's it.
This is an interesting trade setup.
Mm-hmm. Yeah.
4-1.
Yeah, because I figure, if we do get the move down, you're definitely going to probably stall out around that 115 area, which is what we did earlier, about a month ago. It seems longer, but it was just a month ago.
That really intrigues me because I'm sitting short. Where are we at here? Yeah, like 22. So this has been a trade that was working a little bit earlier. Now it's not. It's lost $75. We're at 22 days to expiration. I need to get something else going on here in the euro. I'm not tethered to being a horizontal man like our friend Ilya is, but I just, the euro looks like, if this was a stock chart, Jamal, what would I be doing? I'd be like, oh, this is going to break out.
Yeah,
This looks just like, it kind of looks like this kind of looks like the NASDAQ here a little bit, right? Just in terms of the tone and tenor, you have a decline and now you're starting to see a market that's poking out of that decline. And we had that just a few days ago here, right? Starting to poke out of the decline. And now you're starting to see the acceleration. So the dollar doesn't look too hot under the collar. But this is the issue I have. We're now at 3 cuts priced in for this year. Are we going to go to 4? If we're not going to 4, what are we doing with the dollar? What's the case to drive yield differentials further away from the greenback right now that underpin currency markets? I still think that we're gasping. Look at the yen here today. I know the yen was a lot weaker earlier in the session, but the yen is not able to make any tact of these lower U.S. yields, as it were. So I'm not convinced that the dollar is done. I really like the Canadian dollar short exposure. Still, it's a 44.8 IVR. So, unfortunately didn't roll 2 days ago when volatility was a little bit higher. Nevertheless, this is a market that's been weak, very weak. It has not showed any sort of strength when the pound or the euro or the yen has been holding up. So it's a high volatility mark. We can look out. We can go to 57 days. We can do our little short 73, 70 and a half, 74, excuse me. Is that going to work or fly? Probably not. So taking it in, better than 4-1, 62% probability of profit. The bet there is that the highs that we have in June do not break. I will take that any day of the week.
What's up with the Aussie? It's a pretty big move in here today.
Yeah, it is. Chinese economy seems to be turning the corner in a number of ways. I know that they still have deflation, but the reality is that there's a lot of demand for coal right now. There's a lot of demand for metals right now. This is part of our macro thesis, Jamal, about central banks diversifying away from the US dollar. Incrementally, they want to get real assets, hard assets, base metals that they can use as stores of value. If they're not going to go into the pound or the euro, the yen, the Chinese yuan, they need to put it into something. And countries like China, among others, have indicated that they are going to stockpile things like copper and iron and nickel to diversify their reserves. And there's one country that tends to make a lot of that has a currency ticker in the futures market. So this move in metals that we've seen recently, I put the Aussie on the back of that. Chinese stocks have been doing well. You don't want to ignore that. Aussie gets a lot of proxy exposure for China in the currency world. It's a carry trade proponent. But it's not the place where if I was trying to get long the dollar, I would be doing it right now. The pound is sitting at resistance, up against 136. You're through 136, game over. Good night, dollar longs. Good night, pound shorts. But risking 27 pips to potentially catch a top, for some, that may be a worthwhile endeavor.
I think it might be, for sure. It was just a huge move. I was just kind of curious. I mean, honestly, it just seems, but you seem to be all over it.
There is a story here where the pound, this most recent pound trade for me has not worked out well. We're sitting at 20. This position is going to be liquidated at like a $200 loss. Okay. But if we wanted to trade against this high, the high is near 138, Jamal. So taking a stab here, this is almost a 2-to-1, 57% pop. This is where I'll be going tomorrow. I think the dollar is still in this bottoming process. I don't know where we're going to get more juice for it to go to the downside. You're going to see a lot more optimism out of Europe, out of the UK, out of Japan, and blah, 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 to drive those moves moving forward. Because if we're at, as the CME FedWatch tool tells us here today, I just want to do a quick update before we go out on the show. We're currently looking at, for the month of October, 99% chance of a cut. And then for the month of December, a 92.07% chance of a cut. So, Jamal, we could squeeze that last 7.93% to get fully priced for 3 rate cuts this year, or we can operate as if the fuel that's driven the dollar this low may be spent. And it's a market that's still very, very short the US dollar.
The dollar really didn't move as much as you would have expected on these inflation reports. Just looking back over the last 2, I mean, there was a lot more movement versus this week. Just kind of interesting reaction, I would say, overall to these inflation reports.
Really interesting. Not moving, stocks running.
Yeah.
Stocks have not moved, by the way, since we got on the show. It's still 65.89, 65.90 in the S&P 500. So low volume, low volatility. Let's see what the rest of the day brings. The calendar tomorrow, UK GDP. So if you're trading the pound, something to keep an eye on, and their economy seems to be stalling. So hopefully it's a miss. No offense to our UK brethren, but I'm short the pound. So I want to see your currency go down, and that means weak data right now. That's what being directional does to you, Jamal. You root for entire countries to have poor economic data. Michigan sentiment, it has been moving the markets recently. You and I can say it doesn't matter. It matters to some, not mattering to us, but it matters to some. I watch the inflation expectations. That's the biggest part. If consumers are saying that they're not so worried about inflation moving forward, then the Fed's getting cuts without the stagflationary backdrop. After all, they're worried about inflation expectations long-term from becoming unglued. So if they're staying glued, party keeps going. Jamal, you and I are back in a little bit. You're 48 minutes out from returning with engineering the trade. I am an hour and 48 minutes. Nope, just kidding. More than that. 2 hours and 3 minutes away from coming back for overtime with an Ilya who's got some splaining to do after his performance yesterday on the handoff. And then, of course, Dylan Radigan, who has, as my guru, been telling me for weeks, Chris, stop thinking, just buy stocks. Comforting it is not to think, Jamal. But we're going to have to think about that later. You and I are done. Dr. J's up next. We'll see everyone later today here on Tasty Live. Stick around.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Success is a combination of lots of non-correlated or lightly correlated underlyings to reduce risk.
It's better for your investments to trade volatility than it is to own S&P index funds at Vanguard. That's what you're saying.
I can't sleep at night as a passive investor.
Why not?
Because I think the risk is too great. Here I am, I'm a derivatives trader. I have hundreds, if not thousands of positions on, and I sleep fine because I know what I've done. What we do, it's a mathematical equation. What asset other than fear is mean reverting? And it requires no additional capital to play both sides of the market, then why would you even be directional in the first place?
The problem with what you're saying is it makes a little too much sense.
Yeah, it's logical.
And so it raises a lot of
scares the crap
skepticism because it makes a little too much sense.
Tasty Trade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
I'm Jim Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast, man. Welcome to the Thursday edition of what it is that we are trying to do. Welcome to the man. We made it through PPI and CPI edition of what it is that we are trying to do. I really can't believe it. I really can't believe that I get to be here with you all today on this Thursday. So thank you guys so much for being a part of what it is that we do, because it's only because of you all that we can do what we do. So if you're watching over on the Tasty Live Network, I would actually bounce on over to YouTube, because you can join the conversation and join the discussion, and of course celebrate with your fellow bulls and commiserate with your fellow bears as the market rips even higher, with the E-mini S&Ps now making an all-time high. So John, bring us in here. Yeah, I think, did they get 6,600 earlier? I think they maybe did. E-mini S&Ps up 52 on the day. Risk-free instrument, also known as the NASDAQ futures, extremely high risk product, up 151. You've got the boomers up 622, and then you've got the Russell 2000 futures index up 41 on the day. So lots of green on the screen. Even the metal. Well, now metals are a little bit of a mixed bag, actually. I mean, you've got bonds up, you've got notes up. Obviously, you got UB40 up. Oil getting hit a little bit, down $1.20. But you've got gold actually down $8, and silver actually up 58 cents. That's a pretty big divergence. Like, normally, I feel like we've had this conversation like way too many times over the course of the last month or so. Like, historically, gold and silver are going to follow each other. They're not going to be as highly and as tightly correlated as like a NASDAQ E-mini S&Ps or, you know, NASDAQ E-mini S&Ps or something like that. But they're pretty tightly positively correlated. And so the fact that they've been a bit more divergent, I feel like the last 4 to 6 weeks is kind of interesting. I don't know what that means. I'm not sure that it means anything necessarily. I'll let the metals bros and brosets take that one and run with it. But yeah, gold actually weak today. Silver actually quite strong today. That's pretty interesting. Pretty interesting indeed. And so if you look at volatility futures down 30 cents. And then, of course, you've got the spot volatility, the old VIX. That guy is probably also going to be down a good amount. Yeah, down 45 cents. So down to 14.90 on spot volatility. So volatility getting hit today makes sense. Market strong today makes sense, because why wouldn't the market be strong, right? You've got one imaginary print yesterday morning. You've got a second imaginary print this morning, and that's all you need, man. That's all you need are two fake numbers, supersetted together like a little buys and tries, a little chest and back, maybe a little quads and hams if you want to kind of really get after it there. But yeah, man, market loves it. I don't even know what the number was. Does anybody know what the number was this morning? I know yesterday's PPI was super cold, right? This morning, I don't think it was as cold. I didn't really have a chance to take a look at it because I had other things happening. But let me know, what was the number this morning from a CPI print standpoint? I don't think it was as much of a miss as yesterday was, but maybe so. I'm not sure. You guys let me know in the YouTube chat, because then if for no other reason, you guys will be helping push this content out to more people by, again, fooling the YouTube algorithm into thinking that this is quality programming. So let's go in here, though. Let's take a look. Let's see. Did ES get to 6,600? I'm not sure that it did. Man, I mean, it couldn't be closer, though. Is that a daily chart? Yeah, that's a daily. Man, look at that. Wow, man. Now that is a candle. That is the final boss, or like a late stage intermediate boss right there. You've got EMA/SMEs up 52. So on the highs, they were 65.95, and they're at 65.92 right now. So 3 points off the highs. Really, really crazy. Just some wild stuff, man. EMA S&P is just crazy. NASDAQ, I don't think has been, yeah, I mean, it's a little bit off its highs too. I mean, the highs are, yeah, so they're basically following each other. I mean, the NASDAQ, I think, had a higher print, a couple of weeks ago. You can see back in August, I guess a month ago. I mean, your high is 24,068. The high today is 24,046. And so you still have a little bit of work to do on the NASDAQ to kind of get back to the highs, but you're not that far off. You're not that far off at all. And so, again, I would like to know a couple of things. A, what happened with CPI? And also, B, how does this change the Fed funds futures picture for next week? Because Emmett, thank you again for helping us yesterday. It was 90%, 25 bips, 10%, 50 bips. I'd like to know now what it is, based on the new information that came this morning, which again, it's completely disconnected from reality and it's totally imaginary, but still everybody's looking at it, right? Like all eyes on the old CPI print. So anyway, there's some market commentary, which is not going to help you too much, but it's very much on par with what you would find elsewhere. And so at least we're consistent in that regard. But if you take a look at the portfolio, man, we got to talk about Oracle again. I mean, it's down $20 today, but guys, look at this move. So, I mean, I talked about this yesterday with Errol for today's assignment, which I'm with him on Wednesdays. And so that's why there was no From Theory to Practice on Wednesdays. Which, by the way, a little birdie told me that might be changing in the future. But stay tuned. Stay tuned. I can't say any more than that. Just stay tuned. Stay tuned. Stick with us for the next 1 to 27 months. And there might be some things coming on down the chutes. But anyway, Oracle down $20. So Oracle down $20 today after, I mean, now that is a gap, right? Now that is a gap. And you know what's crazy about this gap? Like, I know there are a lot of, bros and bro sets they're trading gaps. Like, their whole life is about gaps. Like, they just wait for the gaps, and that's what they trade. And I think that's amazing. Like, I think, anything that gets you in the arena, man, I have mad respect for you, and my hat's off to you for kind of putting it out there, taking a shot, and trying to, blaze your own trail through the forest. But what's funny about this gap here is, I mean, look at this gap. This gap's like what? I mean, if you go from there to like there, that's like 100 points, right? 80 points, right? You've got 320 up here, obviously, and then you've got 240 down here. Again, I mean, we're just approximating, but that looks like about an 80-point gap. Again, you can never be exactly sure, so we'll go with the approximation symbol. But what's funny about that is the move today. Now, I'm not sure. I mean, the gap traders out there that might be watching the show, welcome aboard. You guys let me know. Does this count as filling the gap? Like, if it gets into the gap, does that count? Or does it actually have to, does it have to get all of this filled in? Like, am I going to need to see some more, red boss candles to fill this guy in? And of course, with Oracle, I mean, it's never going down again. Like, I mean, they basically came out and said, hey, we didn't make any money and we didn't sell anything, but man, we got some good stuff coming on down the chutes, and everybody bought it, man. Oracle up 80, 90, 100 points. Just crazy stuff. Does this count as a gap fill, though? Now that this candle has gotten into the gap, I think, and again, I'm kind of just speaking from a pretty significant state of ignorance here because I don't know that much about gap theory and those kinds of things. But I think that usually the gap has to be completely filled. But you guys let me know. Oracle down 20 bucks today, which is a bit of a surprise. It's a bit of a surprise just given the significant momentum. So, of course, you know, we tried to get money back in Oracle, and all we did was cost ourselves more money. All we did was essentially, you know, just increase the tab of the money that Oracle owes us. And so we may just have to write that guy off. We may just have to finally just say, hey, let's let bygones be bygones. Let's maybe call it a truce with Oracle. I don't know that we should keep going down that road because it doesn't typically end well for us. And so Oracle, yeah, thankfully, man, we were so close. So go back. Actually, guys, if you want to, oh man, wow. Man, it could have been really bad. So go back to 9.9. So we just did this trade. If you're brand new to the show, I mean, you can go back and you can check out $14. Did I buy that for $14? No, that's not right. And so a little issue with the Allison chains, but I mean, hey, I mean, they haven't had a hit for like 25 years. So you got to cut them a little bit of slack. But go back to the 9.9 show. So this was just 2 days ago. We did this trade and we did it at 233. I almost sold a naked call. Like I almost went in there with a naked call. But it was a little bit high on the buying powers from the buying power standpoint. And thankfully, I opted for the at-the-money vertical. Like, man, I mean, had we sold a naked call, wow, that would have been really, really, really bad. So if you've been watching this show for any length of time, like let's say the last 6 to 8 months, you've seen me kind of cheat the system a little bit. Like you've seen me kind of zig and zag and dance between raindrops a couple times by selling calls. And I think we did it once in Disney. I know we did it once in Amazon. And I think they both worked out. One of the things about selling calls, selling naked calls, you got to be really, really careful. You got to be really, really careful because obviously, I mean, what happened in Oracle could essentially happen. I mean, if it can happen to Oracle, it can happen to any stock. I mean, Oracle, isn't Oracle like in the Dow? I mean, Oracle's been in the Dow for like 45 years. Oracle's like, we're not talking about, you know, we're not even talking about Amazon. We're not talking about like NVIDIA. Like Oracle was like pumping out like the original computers like back in like the early 60s or like mid 70s or whenever it was. And so we're not talking about some stock that just, you know, burst onto the scene, you know, a couple of years ago. We're talking about something that's been around for a long time. So if it can happen to Oracle, then it can essentially happen to any stock, in my opinion. When you sell a naked call, though, there's a couple of things that you want to remember. So number one, you know, we talk a lot about selling puts and selling naked puts and how that's, you know, it's arguably my favorite strategy. And one of the reasons why is if it doesn't work, you take the stock, you play the positive drift. We're doing it in Chipotle. I know we're getting crushed. We're doing it in Best Buy. I know we're getting crushed. But it's like, hey, chances are we're going to have a chance to get out of this stock at some point in the future when the market recovers and the stock follows suit and all these kinds of things. With a short call, obviously, you don't have any of that. Obviously, you don't have kind of that safety net of the positive drift that is going to be a wind at your back should things go awry with that position. You don't have that. Okay. So now naturally, one question that a lot of traders have, and it's one that I got, you know, a couple of times in just the last couple of days, which is like, all right, Jim, you don't like naked calls. That makes sense. But what about a strangle? So what about a strangle where you are also selling a naked call? You're selling a put, but you're also selling a call. So, I mean, what about that type of strategy? Isn't that the same thing? In my humble opinion, no, it's very, very, very different. And the reason why, yes, you still have the face ripper risk. You still have, you know, incredible outlier risk to the upside. That's all still there. So Oracle happens, it's going to take you down. You know, a huge move in NVIDIA happens, it's going to take you down, you know, whatever. But it's a very different ballgame because by selling that put, you're typically bringing in so much premium because oftentimes there's, you know, volatility skewed to the downside. Puts are generally expensive. So by selling that put, it changes the dynamic of the strategy in a very, very significant way. When you're only selling the call, you're just bringing in premium from the call side. But when you're also selling the put, you're typically bringing in even more premium than you brought in from the call side. And so that's going to buffer your break-even points. That's going to really help you over time and on average. Now, is that going to necessarily help you in a significant way against a move like this one? No, it's not. Like you run into $100 Oracle move, $100 NVIDIA move, whatever, like it's going to be a significant amount of pain. So what is the solution? Is the solution to never do strangles? No, I don't think that's the solution either. The solution is position sizing. So if this is something that you're really concerned about, and I think everybody should be concerned about this to one degree or another. Some people are more concerned, some people are less concerned, but this is something that should be on everybody's radar. If you're thinking, man, I really don't want to run into another outlier, you could, of course, focus on defined risk. That's totally fine. But if you start thinking longer term, you start thinking about, not the next trade or the next 2 trades, but the next 10 trades and the next 20 trades and the next 100 trades. The reality is you're going to realize, and all the Tasty research points to this, like all the Tasty research supports this, you're going to realize a higher level of effectiveness if you lean more heavily on undefined risk. But you have to control your position sizing. And so maybe you don't like being up around 7-8%. Maybe you feel a lot better at 3-4-5%. That would be one remedy that will be at least some type of safeguard against this. Now, to some degree, you can't avoid this. It's going to happen. It's going to come for each and every one of us at one time or another, where you have to contend with an outlier move. But on average, over time, a short strangle, very different strategy than a naked short call, because you are bringing in the premium from the put side. And so in my opinion, that changes the game quite significantly. And so there's my soapbox. Man, that was like 7 minutes on the soapbox. Man, we got up there and we got comfy cozy up there. But there's some Oracle commentary, and take it or leave it. It's entirely up to you. So the rest of the portfolio, man, look at Best Buy up $1.94. That's some good stuff. Look at Chipotle up 36 cents. That's some good stuff. And so the P&L Open Bros are going to have to kind of quiet down a little bit today, as we are making a comeback. In Best Buy, at least. I mean, Chipotle and Starbucks don't look so great. But the rest of the portfolio, SPX, man, we missed the mark on this one completely. And so, wow, if it went the other direction, we would have been going to Bonefish tonight. But sadly, it looks like we're cooking at home tonight. So unfortunately, this might have to be a tuna fish and applesauce night. And that's just the way that it is sometimes. Like you go in with all these grand plans and you come out on the other side with tuna fish and applesauce. Sometimes that's just the way that it is. And so, again, I don't make the rules. But we still have a day left. I mean, a lot could happen in a day, as evidenced by, today's market move. But, we would need SPX down about 100 or so. It's not impossible. I don't necessarily see that happening on the radar. There's no significant news events coming up either, I don't believe. But somebody can maybe check me on that. I don't think there's anything in the morning. I think you've got that Spanish durable goods revision forecast estimate that's coming out. But that's not usually a market mover. We know the Canadian one is a big market mover, but the Spanish one, the market normally just kind of shrugs that guy off. And so, but as far as everything else, the only thing I want to do is I do want to adjust our IWM strangle. And then I want to get to you all, man. I see you guys in the chat. Man, I appreciate you guys in the chat. Man, look at Ranchers in the house. Man, look at True's in the house. Brian Dowdy's in the house. Man, look at you guys. Look at you guys. Sergio's in the house. Man, this is some good stuff. Half Unlit's in the house. Half Unlit says gaps don't mean anything. Thank you, Half Unlit. I think I kind of agree with you. But I'm not trying to throw shade at people, man. I'm not trying to throw, whatever at anybody. It's like, man, if you're in the arena and you're doing whatever you're doing, like as crazy as it might sound to somebody else, if it makes sense to you, man, give it a shot. Like, give it a shot. There's so many ways to be successful in this thing that is the market, in my opinion. I mean, yes, we have our preferred way, and I have my preferred way and all those things, and we have all the reasons why we feel the way that we feel. And if you watch the show long enough, trust me, I will tell you about all of them. Like, I'll tell you about all the ins and the outs, all the gimmies and the gotchas. But I just have so much respect for anybody that puts themselves out there and gets into the market and takes an active approach. I mean, even passive investors, man, like they're in it too. I mean, they're obviously in a very different sandbox than the one that we're playing in. But it's like, hey, man, you've got your capital at risk. You're doing what you think is best for your financial future. I have a ton of respect for you. Totally. Even if I don't see it the same way that you see it. And so let's see. Man, I see Stefan's in the house. Man, look at you guys. I see Joe's in the house. Man, look at you guys. Good. I see Bobby Lewis in the house. Bobby Lewis, I'm going to surprise and delight somebody before I even surprise and delight somebody. Bobby Lewis saying, time for some tuna and cottage cheese. Super Bear. Isn't the stupid a Super Bowl, though? Yeah, the stupid is a Super Bowl, right? That's where you buy a call spread and then you finance it with a short put. And so are you saying that we should put on a Super Bear on tuna and cottage cheese? I mean, that's an interesting strategy. And I think that would obviously be the chalk. That's the expected move. But tuna fish plus cottage cheese, I think that's what Sam L was talking about. He used to mix together back in yesteryear. That is such a power move. Like, that is such a power move. That is just saying, like, listen, all I care about are gains. That's all I care about. I don't really care about the people around me, obviously. I don't really care about, family, friends. These are all second tier. These are all second rate next to the gains with a Z. And it's like, man, that's a power move. Like, this is somebody that's very, very serious about, squats, deadlifts, serratus. things like that. And so for that reason alone, I don't know that we can be bearish. I don't know that we can get away with a bearish strategy. Maybe a neutral one. But I appreciate you, Bobby Lewis. So let's go in here, though. Let's see here. What I want to do is, I want to go to this IWM strangle. So 219, 233. So I think that the time has finally come to adjust the untested side. So IWM up, almost $4 today. Obviously, it makes sense. The Russell's super strong. Apparently, this morning's print really kind of cemented some upward momentum in the small caps there. But let's go into IWM. Let's go to the trade page. Let's go to October. And, there's a very, very simple way to adjust a strangle when you've been tested on one side. Now, again, you could make the case I should have adjusted this before, I'm too late and all those things, and I don't necessarily disagree with you. But the way that I generally like to handle my strangles is I am a little bit more patient. I do like to give the market a little bit more time to kind of, find its way and see how that might materialize with, my given position. And so I'm willing to let it go a little bit beyond kind of the strike being tested. Usually around the break-even point is typically where, if I'm going to be patient, sometimes I'll adjust it at the strike. I wish I could say I was just robotically consistent every single time, but that would not be true. That would not be true at all. And, a little inside scoop, I'm not sure that any of your favorite traders are robotically consistent to that degree. We're all kind of, off in the wild, wild west to one degree or another. Usually, though, I will wait for the break-even point. This time, it's beyond the break-even point even, and that's just kind of a product of, it kind of slipped through the radar, and I missed it the last couple of days, and obviously yesterday we weren't even on the show because there was no From Theory to Practice. But for our purposes here, there's a very simple way to adjust a strangle where you want to move the untested side. All the simplest way, just take your strike where it is. You can see right here, we're at the 219 strike, and just roll it up to the edge of the expected move in the same cycle that you're in. Like if you don't really want to roll out in time, or you don't really want to add duration, because right now you can see October still has 36 days to go. So you might be thinking, all right, I don't really want to go into November with, 70 days to go or whatever, 65 days to go. That's a little bit, longer duration than I typically like to trade. And that's where I'm at right now. I don't really want to roll this out to November just yet. Let's stay in October, but a very simple way to roll the untested side to where you're not having to necessarily analyze deltas and look at specifically how much directional risk you're cutting or keeping or whatever. Just roll to the edge of the expected move. It's very, very simple. So right here, you've got IWM at 240. I've got the 219 strike. I can roll that guy up to, it looks like right around the 228 or 229. I'll probably go 228 just to leave a little bit more distance between, my short put and my short call. I mean, right now I've got the 233 short call. Ceteris paribus, I'd like the most width between the short strikes that I could possibly muster. And so choosing something that's a little bit wider as opposed to something that's a bit more narrow is going to be my preferred mode of adjustment almost every single time, I would say. And so this is going to leave me with a tighter strangle. This is kind of the MO. This is kind of the modus operandi when it comes to the adjustments on a strangle where, it's gotten away from us and one side has been tested or it's even through the tested side, which is the case right here for IWM. You start with a wide strangle, then you go tight strangle, then you go straddle, then you go inverted strangle. That's typically the three-step process if everything checks out. If all the stars in the sky align perfectly, that's kind of the roadmap that you would follow. Now, sometimes it doesn't work out that way because the move in the market is so significant. The move in the market is just so explosive on one side or the other. You have to skip steps. You can't go, regular strangle to tight strangle because it doesn't do anything for you. You've got to skip right to the straddle step. That happens. That absolutely happens. Sometimes it's so explosive, you've got to skip over the tight strangle and the straddle and go right to the inverted strangle. That can certainly happen too. And so that hasn't really happened yet, though, because if I go to the, if I roll from a 219 up to a 228, I'm going to pick up a little bit over $1 for doing that, maybe $1.20 or thereabouts. That's a nice adjustment. I mean, I've already collected, let me see, what have I collected on this position? Let me bring up my, my chains here. Have I rolled this trade? Let me see here. Interesting. So I did this trade. Okay. Wow. So we've collected a ton on this trade. Yeah, I guess so. We did this trade on August 7th. So it looks like the chains are back in action. That's good. Got a little man in the box kind of saving the season here. That's some good stuff. We did this trade on August 7th for $4, $4.01, which is $4 is fine. August 25th. So, this was a couple of weeks later and a couple of weeks ago, of course. We rolled it out from September to October for another $4.85. So we've collected a total of $8.86. So that's really interesting because I'm actually still inside of my break-even point, which is crazy because I'd kind of forgotten that we had rolled this strategy one time. And so I've been off the blueberries for a couple of days and now I'm paying the price for that. But 886 on the total trade package is really nice. That puts the break-even point on the upside, 233 plus 886. Let's just call it 233 plus 9. That looks like about 242, give or take. So you've got 242 at a stock price of 240. We're still a little bit inside. We could actually get away with not doing anything today. But man, we've put in so much work now. Like, I don't really want there to be nothing to show for this. I want there to be a little something to show for this. And, we don't always adjust our strangles as aggressively as some of our own brethren on the network. And so this is a good example of kind of our going through the adjustment process. And so I think we'll go ahead and we'll go ahead and move forward with this adjustment. But I'll tell you, it would not surprise me at all. It would not surprise me in the least if IWM sells off a lot tomorrow, Monday, Tuesday, and we're going to find ourselves kind of saying, I wish I had stuck with, the original wide strangles, not adjusted, whatever. I mean, that's the gimme gotcha exchange, right? It's always there, right? It's ever present. It's always gimmies. It's always gotchas. And so that's the thing. When you're rolling up the untested side on a strangle, you have to understand the gimmies are more credit. The gimmies are wider break-even point. The gimmies are less directional risk. The biggest gotcha is the whipsaw risk. The biggest gotcha is you're not going to be in a position to benefit from some type of retreat in the stock or in the index like you would have been had you done absolutely nothing. And so that's part of the reason why I prefer the do nothing strategy and try to milk that guy for as long as I possibly can. And so let's go ahead though. Let's see. Yeah, I'm gonna roll up from a 219 to a 228. I should get about $1.20. Yeah, $1.17. That's fine. So let's go ahead and do this though, because we put in so much time and so much effort that I think it'll be good. So let's go ahead, $1.17. We'll try $1.15. All right, so we got filled for $1.16 actually, so we got improved a little bit. So that's good. That's IWM. We went ahead and rolled that. So yeah, and then UNH, we're getting crushed on UNH. We sold that call spread. We're doing okay so far, but GLD, we're hanging in there with GLD, which is amazing, right? I mean, look at this short call spread, man. It is hanging in there. Again, with the metals weakness, the gold weakness, I should say. I mean, silver, yeah, silver's still doing. I mean, silver, yeah, it's selling off a little bit, but it's still looking pretty strong. Pretty strong indeed. And so, yeah, but the gold short call spread so far, we're actually up on the trade, which is kind of amazing. So, all right, so let me see where you guys are at though, man. Where are you guys at? Man, I see you guys, man. Look at you guys. So Theta Trader, I'm going to surprise into like one more person in the middle and then we'll get to the beginning, but I'll try to be somewhat swift and efficient, which that's obviously new for me. So, this is uncharted territory. Theta Trader says, Dr. Jim, I have an actual trade question. I have a 700 strike long call in SPY in the January expiration. I'm looking to sell calls, so just a few months away. I'm looking to sell calls against them in October. I'm trying to figure out how far out of the money to go. How about 670? So this is so interesting. So you have a leap, basically, right? I mean, it's 4 months away. But it's out of the money. That's so interesting. Normally, leaps, unless there was a typo in your question, which I didn't see you follow up. Let me see if you followed up shortly after. No, you didn't. Okay, so I'm going to assume that, okay, so you've got the 700 call in January, and you're looking to sell premium. Did you say what cycle? Yeah, in October. That makes sense. I probably wouldn't do September now. It only has 8 days to go. That doesn't make any sense really at all. You do October with 36 days to go. That makes sense. I mean, Theta Trader, I mean, the default setting here is going to be the 30 delta, right? And you even said, how about 670? I mean, look at that. Man, it's almost like you've been doing this for a while. Like, it's almost like you've been here for a while, and you have, right? You have certainly been inside the tasty sphere for quite some time. But the standard is going to be right around that 30 to 35 delta. Like, that's going to be, where we typically look to sell premium. Now, what's interesting about your strategy, and I don't really have, other than making this observation, I don't really have any like subtleties or nuances that I can add to this, other than it is quite different that you have an out of the money call as the long piece of this strategy, as opposed to having an in the money call. Because when you have an in the money call, it serves as a stock substitute. The deltas are typically, close to 100, and that means 75, 80, 85, somewhere around there, maybe even 90 potentially. And so that serves as a nice stock substitute that turns us into a little bit of a covered call. You kind of have a short call spread on, actually. You don't really even have a covered call on because the long call at the 700 strike is so far above, the short strike that you would be choosing here. This changes the dynamic of the strategy so significantly to where, from what I can gather, you don't want the market to rally. You don't want the market to go up above your short call, which just changes things. So I guess maybe I do have at least one observation or half of an observation. When you have a poor man's covered call or some type of covered call synthetic, you want the market to rally, of course. Here, you don't really want the market to rally because you don't want the short call to go in the money. And there's so much distance between the short call strike at 670, the one we have queued up here, and then the 700 strike of your long call, that it changes the dynamics quite significantly. So this is a bearish strategy from everything I can gather. And so best of luck, my friend. But yeah, I would say that right around the 30 to 35 delta is probably where I would still live on a strategy like this. Although it does change the game a lot because, again, it's not really a poor man's covered call substitute. And so hopefully that helps, my friend. But going back to the beginning, Sam L, what's going on there, Sam L? Doc, Oracle got you again. I know, man. I can't believe it. I really can't believe it. Like, it's an unbelievable stock. Not even as a stock, but just as like an idea, like a philosophy. It's an unbelievable thing, Oracle. It even roped Tom in this time. Oh, man, was I on the same side as Tom? Y'all got to let me know that. Which, again, I guess you couldn't have let me know because I do my trades before he does his trades. And so he was probably feeling a bit uneasy being on the same side as me. And so I guess it kind of goes both ways there. But it looks like Oracle's got a vendetta against your P&L. Yeah, it does. Again, I think we're going to call it a truce on Oracle and just let bygones be bygones, I should say. Sam Else goes on to say, Doc, CMG opening in South Korea by 2026. Yes, that's what we needed. That's what we've been waiting for. Finally, burritos with a macro label, 400 grams of protein, 80 grams of carbs, and still no gains on your P&L. No, but we got a little something today. I guess they're exporting your P&L losses overseas. Yeah. What is the currency in Korea? Man, I can't remember what it is. We got to get Glenn back on the show. I've been meaning to, but I mean, with the educational stuff, and we're gonna do another little series next week. I think I'm gonna do a little two-parter on theta. Again, a lot of it's going to be beginner style content, but I do want to offer up, a 6 to 10 minute deep dive into whatever it might be. So maybe it's more than just a surface level, like, we're peeling back a couple layers on the onion. So you might not necessarily be sobbing, but there'll be a couple of tears running down your face as we do indeed uncover the inner portion of that onion. But I think I'm going to do, maybe like a positive and negative theta. I think that would be good. But yeah, I don't, as far as the currency of Korea, I have no idea what it is. You guys gotta let me know what that is. But Theta Trader says, I'm a spotted cow rum runner. Oh, that must be a previous conversation. And then Theta Trader says, put your order in early, Dr. Jim. I'll throw an extra case in the trunk for you. Thank you. I don't even know what that is, but I like it, man. I like it a lot. And so I appreciate you, my friend. Thank you so much. Brian Dowdy, hey, Dr. J, what are we doing for Adobe earnings? Adobe earnings? I got to trade Adobe earnings, ADBE. Okay, so the good news about Adobe earnings is it's a $350 stock. So, we can't hurt ourselves that badly because it's too high priced for us to do something undefined risk. Now, it is a Thursday going into a Friday, right, Brian? And so, and from my calculations, you still owe us some money from Woo Woo Women. And so, actually, no, it's from Lululemon. We should have been trading Woo Woo Women, but you are the one that put the idea in our minds from the beginning. And so Adobe, let me see here. What if I do a one-day cycle? Adobe. Guys, I think we got to go back. I think we got to go back to if you can't beat them, join them. I don't really think I'm done overthinking this. I'm done trying to beat the system. I'm done trying to be the smartest guy in the room. It's if you can't beat them, join them. Right? If you can't beat them, join in. We're doing everything to the upside. Everything to the upside from this point forward. And by that, I mean, by come time Monday, we'll probably have 2 or 3 bearish trades on. But with Adobe at 350, I don't know, man. What if we did a 355, 385, and a 415? Expected move butterfly. Only 474. Wow, that's nice. Man, I'm shocked at that. I thought it was going to be $6 or $6.50, and I was going to have to kind of pare down the wings and make it a bit more narrow. But man, this looks really, really good. It looks pretty solid. 355, 385, and then 415. You got the stock at just under 350, so we'll call it 350. The expected move on the top side goes up to 382 and a half, almost exactly. If you're listening to the show today, thank you so much for the audio only crowd. I really appreciate you guys. Yeah, I really like it, man. I like it a whole lot. Now, again, don't let my beat 'em, join 'em philosophy fool you. Don't let any conviction that you might hear in my voice or in my words fool you. You need to be on the opposite side of this trade, right? So, Brian, you put the idea in my head. You are responsible for this trade. But you yourself, in your personal trading, you know what to do. Like, you know how to use this information to make your family's financial future a little bit better and a little bit brighter. But yeah, 355, 385, 415. I mean, this is it, man. I think this is it. $4.80. I mean, I don't know what more I can do for you guys. You know, I've given you a very clear fade. You know, you could be doing monovision, you could be doing multifocals, but it's clear as day. I'm still doing the multifocals. Not sure how I feel about them. It's kind of clear, like kind of fuzzy, and I can like kind of see close up, but I kind of can't. And so I don't know. Like my eyes are still trying to figure out what's going on. And so I'm just going to show up with the Mr. Magoo glasses here pretty soon. Give it maybe another 2-3 weeks. But let's go ahead and let's see. Let's try 475. No takers at 475. Let's see. We got to get something. Let's try 478. Adobe might have some liquidity issues, maybe. All right, so we got filled at 478. So there you go, Brian. There's our Adobe earnings trade. Again, the reason why I love the expected move butterflies, I know I do them a lot. It tends to be my go-to trade for earnings. But it's like, hey, I mean, when you hit a home run, which we have done before, and hopefully, you know, if luck would have its way, we might be able to enjoy that experience again. But it's a nice way to take a shot. Like, again, that's only 1.5% of the account. So if it doesn't work, if we totally miss the mark and Adobe crash boom bangs tonight, it's not that big of a deal. Like, it's not naked call and Oracle type of situation. And so that's why I love those strategies because, you know, especially the Thursday going into Friday, it gives you a chance to take a shot. You take a shot. It's very low pressure. Like, you don't have to feel like, oh, man, I really need this to work out. Like, I'm not levering up to like, you know, 10% of the account, 20% of the account, you know, for an expected move butterfly. You know, we're just kind of, it's just easy as it comes, man. And so, so there's your Adobe trade. Thank you there, Brian. Hold on. I got to write that down. Brian. Adobe. All right, got it. Done. Thank you, Brian. Let's see. Scramble everything. Dr. Jim, time to pump the Adobe back up with some upside trade. There you go. For their earnings with their triple-digit IVR. So there you go, Scramble everything. We did it. I didn't even see that comment. And I just naturally, again, gravitated to the upside. So if that's what you yourself were feeling, I'm not sure what that means for you. It's probably not good, but I'm going to let you kind of figure that one out on your own. But thank you there, Scramble everything. I appreciate you so much. Let's see. Oh, Brian Dowdy says, he went on to say, I think I'm going to sell a put in Adobe. Oh, that's brutal, man. That's brutal. I didn't see that either. But I think Dr. J may be going long. Wow, look at you. That's a scary spot for you to be in when you're able to kind of, when you and I are like aligning, right? When you're able to predict what I'm going to do and you're correct, which is that's no small feat. But then your own personal feelings line up with that. Like, I don't know that that's a positive outcome for you. Like, I don't know if that's a flex for you. I think that that's something that you should probably revisit. I think that's something that you might need to do a little internal work on to hopefully unravel. But Wolf's in the house. What's up there, Wolf? I appreciate you, RC. What's going on, RC? Sergio, what's up? Soul Train in the house. What's up there, Soul Train? Appreciate you. Joe says, Dr. Jim, I routed a Kroger diagonal for a credit for earnings. What is the gotcha for this gimme? This trade seems too good to be true. Yeah, I don't typically do diagonals for credits. I'd have to know the strikes, Joe. So if you want to, because I mean, we've only got 7 or 8 minutes to go. If you want to follow up with an email, Joe, and tell me the strikes, then I can maybe give you some more commentary around that. I don't typically do credit diagonals. And the main reason why is this. When I think of a diagonal spread, I know some traders like to do credit diagonals, which is kind of more like a high volatility play. I like to use diagonals and keep them in my toolbox for low volatility environments. And so I'm almost laser focused on debit spreads for diagonals. So buying my diagonals, paying for my diagonals, and trading them that way. When you sell a diagonal for a credit, it changes things and it changes the whole risk return profile and it changes kind of the adjustment mechanics and what you're going for and things like that. The reason why I don't personally like to do that is simply because, there's so many other good strategies with high volatility that, selling a diagonal is not necessarily something I'm going to look to when IVR spikes, volatility is elevated. Like that's when I'm going to look to sell a vertical spread. That's when I'm going to look to sell a strangle, given the soapbox discussion we had just earlier today. That's where I'm going to look for these more effective short premium strategies, in my opinion, ratio spread, iron condor even. I don't know, I may put a short diagonal above an iron condor, but you get the point, right? You get the idea. I'm looking to do other things when volatility spikes. And so you'd have to let me know the strikes there, Joe, and I might be able to give you a bit more insight and commentary. But man, yeah, Kroger. Are they today? Oh, they were this morning. They already happened. Yeah. Okay, so they already had earnings, and there wasn't much of a move at all. And so, but yeah, Joe, if you email me the strikes, I can give you a little bit more insight there. And so let's see. True's in the house. Stefan's in the house. Good afternoon, Dr. Jim. Please take the market down 100 points and give me a pop in volatility. Please and thank you. Yeah, I don't think I can do that, man. I'm trying my best. We're doing butterflies. We're doing this. We're doing that. We're trying to talk it down. We're doing all the things we can do. And yet, all-time highs, man. All-time highs. 6,600. It's pretty wild. Wow, it is crazy to think. So if you go to E-mini S&Ps again, just for a second. So if you go back to April, right, Liberation Day, of course, it's pretty crazy to think that we were down to 4,800, right? 4,877 was your low. And at the time, this is how it always works though, right? Like when it was down to 4,870, look at those candles that preceded it, right? Gap down, gap down. I guess the second one wasn't quite a gap, but that was scary, man. That was some ugly stuff. And so when it printed 4,877, I'm sure there was one or two people out there that was like, okay, this is the low. I'm planting my flag in the ground. Like, here we go. But none of us were really feeling that way. None of us were like, wow, this is it. This is where you load the boat. This is where you YOLO the calls. Like, this is where you kind of, just really start to push all your chips in the middle. And then look at this rally, man. Like 7,000. Wow, it is within distance. Man, it's within distance. That's so nuts. If I go to, hold on, let me go to December 31st, 2025, not Christmas Eve, but New Year's Eve. What is the delta on the 7,000 call? Look at this. This could not be more feng shui. The 7,000 call, feng shui in its own right, delta of 25, which puts, I should say, its probability of a touch at 50-50. This is feng shui on top of feng shui. This is tuna fish and more tuna fish. This is applesauce and more applesauce. This is cottage cheese and more cottage cheese. If you really, really like doing things that are just not that much fun. The 7,000 call. Wow, that's crazy. 50% chance it gets touched. I can't believe that. Like that is some wild stuff. It's really, really crazy, man. But again, I learned this from the great, the one and only Mr. Tom Sosnoff. They don't ring a bell. Like nobody rings a bell. Again, after the fact, they're going to tell you that it was that Spanish durable goods print because it was so obvious, of course, right? But in the moment, you just never know. Like today, if we sell off, let's say we sell off and we finish unch today, which would be crazy. Like there's no reason for that to happen, but it certainly could happen. It has happened before, and it will happen again in the future. Whether it's today, tomorrow, 4.5 weeks from now, whatever, it's going to happen again when nobody really expects it. And so it's just, man, you never know. You never know. But that's crazy that it's 50-50 that we hit 7,000. But Joe says, Brian, you are so brave. I'm never selling naked on earnings ever again since the Chipotle incident of 2025. Oh, so you must have sold a put on the Chipotle from just a little while ago. Yeah. It was, that was some tough sledding, for sure. But True's in the house, says, Dr. Jim is awesome. Man, I appreciate you, True. I'm going to send you that cash that we talked about for you planting this comment in the stream at this very time. So thank you so much, my friend. Theta Trader says, this was the surprise and delight. All right, so I got back there. a couple of them. I see Bobby Lewis with the Super Bear on tuna fish and cottage cheese. But let's see. Half Unlit says, you just keep trading bullish until we have a dump. Me? I've been bearish. You might be talking to somebody else, but I'm now finally joining them. Right. So if you ever needed a clearer signal that this has to be the top, right? We got to be close, man. Because now I'm like, you can't beat them, join them. Here's another signal that we might be very well at the top. So my eye doctor, she's great. I love her, right? We've still got some work to do to figure out what's going to be the solution for me, but she's really, really awesome. But she was asking me about Bitcoin the last time I was in there. Now, I've been seeing her for like 4 or 5 years. She's great. She's amazing. We've never had conversations about Bitcoin. She knows what I do. I don't expect her to remember necessarily, but it might be in my chart, might be in whatever. And so she kind of remembered what I did that day. And she was like, well, what do you think about crypto? What do you think about Bitcoin? And I'm like, man, we gotta be close to the top. Like when your eye doctor is asking you about Bitcoin, like I just need a couple more like people that aren't really in the world of finance to kind of come out from the woodwork and be like, hey, what do you think about, I just need one person today, tomorrow, this weekend to say, what do you think about Oracle? Like, man, what do you think about Oracle? Once that happens, guys, it's got to be close. It's got to be close. And I'm not trying to throw shade at her or anyone else, but by and large, the average investor tends to buy tops and sell bottoms. Like they tend to get, bearish at E-mini S&P's 4,800, and they tend to get bullish at E-mini S&P's 7,000. And that is just not the time to do it. I mean, if you're going to play, kind of the longer game with investments and with stocks, you just got to buy and hold, man. You just got to buy and you got to stew in the filth like my father-in-law does. You got to buy Tesla and you just got to ride the wave, man. You just got to ride the ups and the downs. And so anyway, that's the second time on the soapbox today, man. I didn't even know that we get on there a single time today. And here we are. And so Brian Dowdy says, I think CPI came in hot. Okay, Scramble Everything says, yeah, it came in above expectations. That's really interesting. Huh. So we had a little bit of a mixed market then, a little bit of a mixed bag where, CPI hot, PPI ice cold, and CPI hot. That's really interesting. I wonder if, so I would imagine then the Fed funds futures, and you guys may have let me know in the chat. I'll check it out when the show's over. That's crazy. Man, that's so crazy. You guys may have let me know, but I would think that would not increase the odds of the 50 bips, of course. It might leave it the same at 10%, or they may have even gone down a little bit now. 25 bips is probably going to be cemented in there because I don't think there's any more big news coming out between now and FOMC. Again, we got the Spanish stuff and the Canadian stuff, but the big market movers, I think, are over and done with. Joel James says he's falling asleep in this market. Rancher says, hola, Dr. Jim, what's going on there, Rancher? I appreciate you. And then Brian Dowdy says, no, that's not filling the gap. LOL. Okay, well, I appreciate you, my friend. Thank you so much. I didn't think it was, but I wasn't sure. And so I just kind of wanted to say, hey, I mean, you guys let me know. You guys are the experts. You guys are the pros at this. I am not a pro at trading gaps or anything related to gaps. And so, guys, I'm done, man. I can't believe it. I can't believe we made it to the end of the show. I appreciate you guys, man. I appreciate you guys so much. If I can ever help you guys in any way, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter where I am at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Jamal come up next with Engineering the Trade. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys tomorrow.
The beauty of Thinkorswim was that we were different. From the name to the front-end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80+ Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
What's going on, everybody? Inflation is still in the system. That's right. It hasn't gone anywhere. We'll talk about what the CPI report told us today. Opendoor. This stock has been on the roll, and it is on the move today. We'll talk about what's going on there. And finally, Alibaba and Baidu up pretty big. Got some interesting news going on in both of those stocks. So we'll talk about those three things and more. I know Adobe has earnings, among other things tonight, but there just seems to be so much going on in this market. You got a new IPO, you got Tesla running today, you got bonds making moves. We'll talk about all of it here on the most dangerous show on the Tasty Live Network. It's Engineering the Trade. I am your host, Jamal Chandler. Played some golf yesterday. I'm getting a little bit better. I tweaked one little thing, and I've noticed some really good results more recently. Got a charity event I'm playing in next week, so kind of, trying to amp up the skills a little bit before we get into that. But you know what? Let's get to the platform. Let's get to the slides. I got a bunch of things to talk to you guys about today. Lots happening here. You can see the CPI report came out this morning, and it's up month over month. We're seeing some signs of those tariffs starting to get into the system. It's interesting, though, that the market is moving the way that it's moving after that type of news, right? But that's been the environment. Higher inflation, all coupled with jobs data, and guess what? Now the weekly jobless claims that come out every Thursday, they're going to have meaning again. And we've seen this in the past. And you remember I've talked to you guys before about like different macro data, how most of the time it doesn't matter, right? Doesn't. And we built a whole network here based off of that whole thesis. But there are times where certain data matters because it's influencing what's coming down the pike. For example, inflation reports. Since 2022, they've mattered because inflation was hot in the system, and the only way to fix it was for the Fed to raise rates, which they did, which changed everything, right? Changed bonds, changed how the way equities traded for a while, changed volatility. And now we're at a point where those still matter, but then also jobs reports matter that much more, and they have been since 2020. Honestly, they've been a big deal. And now they really matter again when you're talking about an environment where jobs are getting a little bit more scarce and inflation really hasn't changed. And Fed has that dual mandate, right, where they want to keep inflation down, but they don't want to wreck the job market. And the reason why that works, the reason why that whole thing exists where you have to weigh the two of them is because when you start raising rates, it affects how companies do business, right? And then they're not hiring as much. And so that's exactly where we are right now. It's just fascinating that now we're having to pay attention to the jobless claims once again. And so those two coupled together create a stock market that's running to highs, because the stock market has mostly been running on this theory and this notion that we're going to get rate cuts coming soon. So this just gave that more fuel to the fire. Speaking of fuel to the fire, Opendoor. This stock has really been on a huge run more recently. A lot of people are feeling like it's meme-ish, and maybe it is. I can't help but notice it. More recently, everybody has been talking about it, and the stock is really on a huge run. It's up 74% today. They are talking about a new AI, and it's a part of it is it's a online housing platform, right? And so you're seeing a lot of these other names run, like SoFi, like Rocket, and mortgage rate related companies, where we're in an environment where, again, rates coming down. It's going, and we should preface this by saying, rates coming down doesn't markedly change like the housing market rate, right? It's still based on a 10-year note. The Fed's adjusting the 2-year notes, right? And this is something that I was talking about on Tuesday with my guest, Matt Cashman, who was a really good guest. He was here. You guys saw him. He's been here before. But we were discussing that, right? Like, I think a lot of people have this idea that when the Fed drops rates 25 to 50 basis points, we're going to see this huge change in interest rates for houses, and that's not exactly the case. It's going to change it some, but not on the order of magnitude it's going to change the 2-year yields, right? So, but nevertheless, you got a lot of names like Opendoor, like Rocket, like I mentioned, that are really making moves because of this environment, and it's kind of fascinating, really. Finally, Alibaba and Baidu are beginning to use their own chips for AI training models, even moving out and pushing out NVIDIA in some situations. So AI is here to stay, man. It is such a big area. I think at some point or another, people are going to start talking more and more about the idea of a bubble. It's inevitable that people are going to say that, but at the same time, we are using AI in a lot of everyday functions, right? And it's showing up in a lot of everyday stocks and things and names, and people are saying that they're putting in AI in just about everything. So it's not going anywhere. It's here to stay. Speaking of leftovers, ChatGPT has a stranglehold on the AI market share. Let's move to the next slide. What's going on, people in the chat? Rancher, how you doing? Big Deal Donuts. Donald, what's up, man? James Bond the 4th. That's right. It's Thursday NFL night. Thursday NFL game. Washington and Green Bay. I like Jaden Daniels. Good quarterback. I wonder if him and Juju are going to get together. Seems like that's inevitable. Too soon? I mean, I don't know. What makes my house happier is Green Bay. My wife's a Green Bay fan. Yeah, I'm a Bears fan. Should be a good game tonight. I don't even know. I'm assuming Green Bay is favored. I would imagine it'd be a good game tonight. A better question is, I had, out of 3 people, for those fantasy football people out there, I have a situation where I was trying to decide on who to play. I think I made a decision, but maybe you guys can tell me what you think. I have, if you could pick 3, you could pick 2 of these 3. Javonte Williams, running back for Dallas, David Montgomery, Detroit running back, and Deebo Samuel, who plays tonight. Pick 2 out of those 3. I kind of made my decision on 2, but I'm just curious what you guys say. I'm not going to tell you. I'm just curious. You tell me. Out of the 3, Javonte Williams, David Montgomery, and Deebo Samuel. 2 out of 3. Tell me what you think. AI chatbots. This is the market share for the AI chatbots. Currently, ChatGPT is leading the way, man. 78.1%. Google is Google's you know what? I forgot the name of it. It should be in here. It's not. It's getting cut off. But Google's does have a name. Gemini, right? Gemini. Google Gemini, 9.1%. DeepSeek. Oops, hold on. I gotta fix it. I gotta fix that later. DeepSeek, 4%. Grok, 2.3%. Claude, 1.9%. Perplexity, 1.8%, and Microsoft Copilot bringing up the rear at 1.2%. I have ChatGPT on the phone. It's probably the one I do go to the most. You see these guys, more and more of these guys are making themselves free. Take that for what it's worth. But yeah, ChatGPT, they're making themselves free to the government, and that's not, they still have free versions too, which I really find interesting. You really don't use find that often, but again, it's trying to gather data, right? So that's why it's still remaining free. I find that fascinating. But yeah, ChatGPT has a huge market share. You got to wonder what this is going to look like a year from now. Let's move to the next slide. Monty and Deebo, huh? Michael Pfeiffer says Monty and Deebo. You guys you really do, huh? I don't know, man. I don't know. Isn't Copilot just ChatGPT? I don't know. Is it? In a way, it is, yeah. But it must be something different with their. I think there's something. They must not have all the features that Chat. I don't know. I'm not exactly sure. Not exactly sure at all. The only one I use is ChatGPT more than anything. Speculators are net short VIX at the highest level since 2022. Volatility is so. How do you read this? I know a lot of you guys are like, "Wow, why are they short volatility here?" Well. A lot of times people look at low vol environments and say that it's going to stay low and it's going lower. And I'm not, this is a lot of what, a lot of big traders do. It's kind of interesting that speculators are net short a lot of vol like this, but there's a lot of people who look at low vol environments and say this is staying low and I'm just going to collect pennies in front of a steamroller, really. And as soon as the VIX big pop comes, they get beat up, but they're just choosing to, they're hoping that they don't get beat up too much that they lose whatever gains they had. Personally, I think it's a little nuts to be short volatility here. It's a little bit too low for me. I do think this probably leads to a situation of when vol does pop, for whatever reason, depending on how bad it is, it's going to be a big vol pop, right? But in the meantime, take this for what it's worth. Let's move to the next slide. Skew. This is really interesting, but also not surprising. So this is showing you that the 3-month skew in SPX is a little bit higher. Remember, skew is basically looking at the 25 delta put versus the 25 delta call. And 25 delta put is trading over by the amount of 1.3 in the case of SPX skew. In the case of 3-month skew for Russell 2000, you see it's lower than SPX. What is that telling you? It's basically telling you that people are buying more calls than puts in RTY, and they're buying more puts than calls in SPX. This is essentially what this is showing you. Kind of interesting way to look at the market. So right now, a lot of people are a lot more interested in upside in Russell 2000, as am I. I'm long a Russell 2000 call spread. I feel like Russell 2000 is the one that should benefit the most from this environment of high inflation and low unemployment because, well, they're going to cut rates as a result of it, and cutting rates actually works out for a lot of the components that are in Russell 2000. So I know it's kind of convoluted. It's a little weird, but just trust me. It's kind of the way it goes. So, yeah. People are buying a lot more puts in SPX as they're on highs. People are actually buying more Russell 2000 calls, and maybe people are actually sort of short S&P and long the Russell right now. I don't really like doing pair trades like that myself, but I could see why somebody would do it. Let's move to the next slide. There is an interesting thing happening here with bonds, right? The 10-2 spread was steepening pretty strongly until earlier this week, and then it started flattening. And if you've noticed, 10-year bonds themselves, ZB, ZN, have risen throughout this week, which means these two yields, well, the 10-year yield is going to go down. And, of course, the 2-year yield is going down because, well, the Fed is probably going to cut soon. So what does that mean? It means the Fed is stuck. It gets back to this situation where the Fed is literally stuck in between its dual mandate. It has to keep inflation down, but it also has to not drive down the jobs market. And inflation is still up, and jobs market is going like this, right? And they really kind of want it would be ideal for those two to be like this in some way, shape, or form. Jobs kind of going up and inflation coming down, but that was never really going to happen. If you have to drive inflation down, you're going to eventually drive jobs down. So they're stuck right now. It's gonna be a hell of a ride to watch all this unfold. Let's move to the last slide. So we have Adobe and Restoration Hardware. There's some other earnings, but none of them are really worth it. Hell, these two might not even be worth it, but we'll take a look anyway. Retail sales come out next week. And then we got the FOMC rate decision, of course, on Wednesday. You got September VIX futures expiring on Wednesday. You got Bank of Canada rate decision. You got the Bank of England rate decision next week as well. You also have September options expiration, which is supposed to be one of the largest ever. It should be a heck of a week. Number of S&P 500 stocks above the 50-day moving average is 312. That's good for 62%. Jumped yesterday. From yesterday, 40 soldiers. Let's move to the platform. So, open door. This stock is actually pulling back right about now. Strong pullback. Touched highs of 1033. Right? 1033 was a high. 1044. Yeah, I mean, you could call it meme, but at least there's a reason. Like, when I think of meme, I think of, obviously you think of GameStop, and that company was not producing a lot of revenue, and nobody was really nobody was buying games from there. I'm a video game head, I can tell you now. Nobody's really buying games from there. Even a few years back, it was almost dying like Blockbuster, and yet the stock was taking off like if it was a new issue. It was kind of wild. This is a situation where, it's an online lender. Rates are starting to drop, and they just started talking about incorporating AI into their business practices, and they brought back some founders to the board. So there's a lot going on with the stock right now. It's been running up for some time, but this is a huge move today. We'll see if there's going to be some follow through. We'll see. Let's see. S&P 500 futures, ES. all-time highs, folks. VIX is not exactly super on lows. Like, I mean, I know it's lows like 15. Well, this is the September VIX, excuse me. Let's look at actual VIX. This is what I was thinking about. This is not the lowest VIX we've seen this year. That was somewhere in late August. But it is substantially low, and VIX hasn't really done much. There was this little pop here, right, during that somewhat pullback on the, and it was a jobs report, right, on the 30th. On the 1st, actually, was a jobs report. 31st and the 1st was a big pullback in the market, and VIX went up. But look, volatility is low. Nobody's scared about tariffs anymore. The Fed is cutting rates. All of these things seem to be fairly bullish. Most of my positions are kind of bullish. Speaking of positions, I'll talk about the Tesla one. I literally just bought some naked calls upside. We'll see if this thing is going to keep running through Friday. I feel like it could. I'd love to see a 375 print at some point tomorrow. So I'm long a few calls in there. Another $12, $13. You know, I mean, I would love to buy. I might buy these too. What if it jumps $20 tomorrow? You never know. It could jump another $20. We've seen this type of action from Tesla at times, right? So I'm going to buy a couple more. Very low. We'll see. So yeah, this is literally naked calls. SPX, I do have an iron condor if we decide to pull back tomorrow. I don't know why we would, but a butterfly. I got a put butterfly here. 25 points wide, 65.75, 65.50, 65.25. Got that going on. What else? I still have this CRM. These are some leftover calls from calendar calls, but the real main position here is my Zebra, the November Zebra, that is, the 240, 250 Zebra. The stock has been on its butt for some time. It didn't perform well on earnings this week, and that's exactly when I decided to get in on the Zebra. So, sorry, that wasn't earnings. That was, this might have been earnings, but yesterday did have an interesting pullback, right? Along with Oracle going up. There were a lot of different names that were moving up, but also some that pulled back as well, too, yesterday on that Oracle move. Speaking of the Oracle move, it's time for me. I should have done it earlier. I need to close out this put spread. I was waiting. I think I might have been up. No, I wasn't. I was up maybe 50% at one point. I might wait a little bit longer. I need to take this put spread off. Same thing with AVGO. I bought put spreads in both of those yesterday while I wasn't talking to you guys. 330 and 330, 300 in Oracle. I mean, that's just a huge move. You expect a little bit of mean regression. So I bought it I bought the put spread. I'm just looking for a little bit of mean reversion move. Same thing with AVGO. Pretty big move. Also moved on earnings to the upside, and then another big move here. So I figured I'd buy a put spread in here. So far they're working. Just got to give them a little bit more time. Somebody's asking me why I ladder my calls like that. Well, why not? These are fairly cheap. And honestly, if this runs another $20, right? I mean, I don't know. Again, I just look at it from the premium standpoint. Right now, it's $700 worth of premium. It was $500 when I initially bought them, and I think about it in terms of premium. So, yeah, I mean, for a one-day move, these are fairly cheap. These are under $1. I'm always interested in that. And if it runs another $20 like it did today, I mean, who knows if it will. Expected move right now for tomorrow is $8, but we know Tesla has a mind of its own. So why not ladder the calls? And again, it's all about the amount of premium I'm spending right now. So I think about it as far as $700 in premium that I'm going to lose tomorrow. And that's what it boils down to. So yeah, why not ladder the calls like that? I mean, works. Silver still have a call spread in there. The October call spread, I'm looking for a measured move to 45, right? And for this silver thing, you just still got to pull this chart back, way back. And let's look at the continuous contract. This is what we're up against here. This rise and fall of silver in 2011, late 2010 to 2011, right? So during the rise, this particular week in April, it jumped basically $12, right? It was at a high to low range of $12. And then faded some, but still kind of hung around the 40-ish level, if you will, right? If you can see. Still kind of hung around this 40 level. So I would say if I'm looking for a move to 45, I think that would get me probably greater than a 50% gain on this call spread. I got some time on it, got 47 days. We'll just let it roll. We'll see. CR Core Weave, big move yesterday. I also had the zebra in here, the 85.75 zebra. I took the opportunity to sell, because, again, I was long 2 of these, short 1, right? Took the opportunity to risk manage in such a way that I sold this call and rolled it up to the 115. So if it continues to move, let's just revert the chart back here. If it continues to move, I still have some upside to it. You'd like to see if it's going to start retracing this move backwards, back up towards 130 to 140. So I still like upside in here, and I'm still out in Nove. I got plenty of time here. I could probably take this call spread off at this point, or maybe just turn. I might actually just wait until this is trading 120, and then do another call spread and make it another zebra again instead of. This up here is really doing nothing at this point. I wonder what taking it off for 195. It's $2.50 spread. It's not even 195. It's wide too. This is a $2.50 spread. It's not hurting me or anything right now. It's just sitting here. So, but at some point, if the stock gets to 120, I might turn this back into another zebra, and on we go. IBIT, also a zebra. Bitcoin has been kind of down recently, right? You've seen gold and silver making moves while the dollar is down. Bitcoin hadn't been able to make up its mind, but if it starts to run again, I want to be there, and I have the 60.62 zebra on currently in that position. And let's see what else. GLD, same deal. I know zebra has just been the trade for me. I'm long some equities, and I actually pared back some exposure because I was long in NASDAQ call spread. If you guys remember, I was long in Apple, zebra. I got rid of both of those, got out of some of the tech stuff because I realized, okay, I had a decent amount of tech, and now I'm like short Delta, a couple of tech names here in Oracle and AVGO. I'm long a tech name in CRM that has really kind of been on its butt more recently, and I guess I'm long another tech name, if you will, in Tesla. But I'm also long gold. I'm also long the Bitcoin, right? I'm also long silver. I'm long the Russell 2000. That's one of my bigger core positions. You can see just based on net liquidity, it's probably my biggest core position, and I moved it yesterday out to December. So that's going to be around for a while. And again, I think small caps are going to benefit the most from this environment where we're going to be cutting rates at some point or another. We'll see. ZN is literally just a call. So we just talked about how the 10-2 spread has really changed in the last week here, where 10-year bonds have been pushing higher more recently. 10-year notes, if you will, bonds, notes, really, it should be notes. 10-year notes have been pushing higher more recently. We've seen the yield on the 10 years drop. And so I'm just curious to see how much more upside this is going to take. Another situation where I'm further out in time. It's a smaller position. It's only $700 in premium, so it's not killing me. And I want to see if there's going to be a measured move to 115 and above. Not a crazy idea. Again, if you look further back, and I think on some of these, you're going to have to start pulling up some further off charts, because going back to 2024, we were above 115, right? Like last year this time, literally last year this time. So that's all I'm looking for. I'm looking forward to see if we're going to have another move quite like we did in September 2024. That's mostly it. Got a dollar position. I did change this into a butterfly. I do think that the euro could retrace itself as the dollar maybe rebounds. If that does, of course, my gold and my silver might suffer some. Undetermined what necessarily what happened with Bitcoin. But nevertheless, if that does rise, I kind of went on this trade. I say kind of because I turned this into a put butterfly. It was taking up about $1,400 a premium. And I wanted it to be a little, I wanted it to be a little less premium. And I also figured, look, I don't think we're getting a move in a currency like that from 118 all the way down to 112. It's not going to be like that. It doesn't roll that way. If it happens, I think we'll get at least a stop at around 115, which is exactly where my short strikes are, and then maybe hang out for a while. I would like that, and that would work. I typically don't put butterflies on this far out at all, because butterflies are just, they're mainly expiration trades to some degree, right? But I think it's kind of a nice way to have a trade on in here right now, and it kind of serves as a marker. So that's what I got going on. Adobe has earnings tonight. I don't have any plays. I kind of chilled out on the earnings recently. Looks like a 10% move. This is another one that I was interested in doing a zebra in, but I just haven't done anything. I'm kind of holding off. It seems like, there's some vol in here, 108 vol. This could be an interesting earnings for them. What did DocuSign do? Didn't they have earnings recently? No? I don't remember what they did, but I would kind of base what you expect to hear from them, from Adobe on earnings a little bit. Even though Adobe is the industry leader, I would expect them and DocuSign have, if one sneezes, the other catches a cold, right? And so they're kind of similar businesses in a way. I don't think I'm doing anything in here because I don't know. I'm worried about the prospects of this stock even going up. You know what's funny? I thought about this. My calendar call spreads, if I had done that, and I looked at Oracle, but I decided not to do it. If I had done that, it wouldn't have worked. It went up too fast. It went up way too fast. So, I guess if I don't know if this thing has a shot on going up. What do you guys think? Is it worth doing? I really don't know. Up until now, I really hadn't looked at it for an earnings play, but, the calendar call spreads are there. You know what? We're here to trade. We'll do it. Maybe we do it, right? We'll try and get a couple of these off. And again, I always ladder these as well. I always do a bunch because, again, if the stock completely takes off and these go all the way in the money, you don't really make anything. You need some of them to be a little bit out of the money. So we'll do a couple, I guess. I'm definitely doing that one. I do want to do a 400. If it really moves, I think you could see a 400 print. So we'll try and get these off. And when we do, we'll just put them in the follow page. Folks, that's the show. Thanks for watching. And as always, be smart, be patient, trade them small, and trade them often. See ya.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Good afternoon, everybody. It's a somber day, of course, for a lot of reasons. It's a terrible anniversary today, and we had the tragic events of yesterday in Mojave. Some of you know what I'm talking about there. So, pretty blue day. But this is not about psychology. It's just I want to acknowledge that September 11, 2025 is not really a day for celebration. But We're here to look at charts, and those that would be celebrating, I think, would be the equity bulls out there because we have another day of lifetime highs on our hands. The inflation data tumbled in yesterday and today, and it's just what they want to see. And in this bad news is good news world, the unemployment rate is, the unemployment numbers are going higher and higher. It's almost like the letter U. For months, they were diminishing, but in recent, like the half year or more, it's been just a bull market in unemployment applications. So that is also egging folks on because they figure next Wednesday, good heavens, how much is Powell going to cut? Because things are looking bad out there. Having said that, we've got lifetime highs all over the place, and we will thumb through some of those together. Let's jump in, and we go to the spider. A lifetime high. You're going to be hearing those words a lot. We seem to be doing these thrusts here. So we got, like here, and ease back, and here, and ease back, and we got another here going on. Lifetime highs tend to beget new lifetime highs. So it's just muscling aside it's just empty air. Everybody's a winner, no matter what price you bought at. The diamonds, I think I mentioned yesterday that I raised the white flag yesterday morning with my only options position, which was my diamond puts. We had a brief dip yesterday. Dow went down really more than anything else. It was very weak yesterday. It went down a few hundred points. I just was too nervous about this inverted head and shoulders pattern. This is a very potent pattern right here. And I just didn't want to have anything more to do with it. So I got rid of them all. And that's good because this morning, the YM, the Dow 30 futures, crossed that level, that horizontal, and never looked back. It's exploded higher. At the moment, it's up almost 600 points. So glad not to have those puts anymore. They're down about 35%. So that was a dodged a bullet there. But there's the inverted head and shoulders. It looks bullish so far. This is just another feather in the bullish cap. You'd have to have some pretty serious breakdowns to negate this pattern. It's no different overseas. Emerging markets blasting higher, about 1.37% on the EEM. And China has pushed even above this lifetime trend line. That is to say, this trend line, which had represented support, and until yesterday, until today actually represented resistance. But as you can see, it just went blasting higher. On Tuesday, it was just below it. On Wednesday, it was just below it. This was a bearish engulfing pattern, and then it was having none of it. It just jumped right higher. It opened at a lifetime high and has been going up ever since. So I'm done with FXI too. With all this economic news coming in, bonds continue to do well as interest rates get lower. And I've shown you the interest rate charts at some length. All the long-term charts I look at seem to suggest much lower rates for months, if not years. The least clean one is the long-term, the Treasury bonds, the 30 years. That's the least clean. Everything else, 5 years, 7 years, mortgage rates, corporate bonds, anything. They all have these massive tops with respect to their interest rates, and therefore big bullish setups for the bonds themselves. TLT, as I said, it's kind of a mess. It has been strong, but you could go back a good 3 years, and look at this. This is just it looks like a modern art masterpiece. This is just wild. We have had a very strong couple of weeks here, green virtually every day, but I ain't trading it. As I've mentioned many times, I'm more of an IEF guy. It's a very clean pattern. It is the best bullish setup this pattern's ever had. It spans a good 3 years and 5 months. And I'll even go so far as to set a target for it. I think this is going to ultimately get to around 109. That's my measure move on that, 109. So yeah, this is just like, as I keep saying, 2 long positions, IEF and PAL, P-A-L-L. Speaking of Here's palladium. Now, as I glance over here, gold is down. I've talked about how gold needs a breather. I wouldn't say this is a breather yet. It's red, but it's got a lot more breathing to do to digest those profits. It's down about $6. In sharp contrast to this, palladium's up about 20. And that is a 1.6% rise to add to yesterday's nice rise. And what I like about this is the past behavior from basing patterns, this being one, and then the second one, and then the best formed and largest being the one today. So this basing pattern spans a couple of years. And of course, we peaked on this back in July. And my belief / hope / wish is we're going to beat that, of course, continue a series of higher highs and higher lows. But we're getting there. We are getting there. We've had a good 5 or 6 days here, yesterday in particular. And let's see if it just keeps defying any weakness from gold. It certainly has so far. PALL, which is what I'm specifically invested in, it doesn't go back as far as the continuous contract of the futures, but you can see bullish setup number 2 right here. And then we have this one, which is a little bigger and better formed. And I've tightened up the stop on this considerably to 107, which is probably way too tight. But as I said yesterday, I did take partial profits because that was a really nice run up. But we'll see if that holds. Strictly speaking, if I was a little more bold, the stop loss would be a lot lower. Go away, tooltip. I'm trying to show them something. If this keeps messing up, I'm not going to waste your time. But what I'm trying to do here is grab onto this anchor point. Yeah, so it would have been down at a gap like so, but instead I've just anchored the line to yesterday's low. So too tight of a stop, I'm sure. 104 is probably a better stop, but I'm using 107. Miners, even with gold being down a little bit, miners are doing well again. Another lifetime high. Ever since pretty much August 4, there's been barely a downtick in sight, and especially here. Starting on the 20th, it's been up virtually every day, and a new high virtually every day. XME also doing very well, also lifetime high, and this has been a complete bottle rocket. From the 4.7 bottom of around 45, we have added about $30 to that. So whatever that is, 70% or so in the span of 5 months. So just an amazing run on XME. But as I said, you know, GLD gold, would love to see it ease back. This to me would be the ideal entry point, that gap down there. But things like palladium and silver here didn't get the memo. They just keep lasting higher. So not a lifetime high for SLV, but definitely a recovery high, and the highest level we've seen in many, many years on silver. Bitcoin is recovering also. It is not at lifetime highs. It's got about $10,000 more to add before it can make that declaration, but it has pushed back above this horizontal. And Circle Internet, the stablecoin IPO, is having a much needed good day right here. Doesn't necessarily mean the trends changed. It had a very good day right here too. Didn't mean a thing. But this has been sliding very persistently, and today it finally got a reprieve. Oracle right here, and this is in slope charts, there's something very subtle here, some of you may have stumbled across. I have to show unfiltered bars, and the reason for that is because the chart looks at what happened yesterday and says basically that can't be, and filters it out because it was it's the biggest gain for Oracle in a third of a century, kind of an outlier. This is the unfiltered raw bars, which is more accurate. So as you can see, yesterday was a huge blast higher. Today, weakening. Open strong, currently weak, down about $20. Because that mega rally was based upon projections, which maybe people are bringing into question a little bitty bit. NVIDIA also giving back a little bit of yesterday's gains, down about 0.1%. AMD, which I continue to be short. Remember yesterday I got stopped up, but I reshorted it. So far, so good. Nice red bar yesterday, nice red bar today. But SMH is green. There's enough strength still in semiconductors that it not only is it up to date, but it's at a lifetime high. So I've moved this horizontal to be anchored to yesterday's high. That is to say, the new price gap. And it may seem to have not much to do with AI, but it has a lot to do with AI. Reddit, RDDT, considered an important source for training data. Lifetime high on Reddit as well. And so all that's flowing into the cubes, which themselves are at, yes, you guessed the next two words, lifetime highs, and up about, 0.5% or so. There are a couple of little bitty bits of weakness. I mean, I've still got my shorts cooking here, and a little more than half of my positions are actually in the red today, which is pretty cool on this very green day otherwise. A couple of things to point out. Carvana has taken a nice tumble. Nice red day yesterday and today. So we're off about 2.4% of Carvana. And Boeing also, especially late today, was really showing some weakness, down 2.75%. So that was doing well as well. A couple of last symbols to wrap up the segment. Small caps, IWM, a strong day. The RTY is up over 40 points, and IWM is up about 1.7% and getting within spitting distance of the lifetime highs. It has been a long journey. Here's the lifetime high from back last Thanksgiving. We are vanishingly close to crossing that. One more day like today, and it would do the deed. So that's worth watching. But as I said earlier, what's beginning to happen is that there's evidence of the economy weakening. There's evidence of the job market weakening. And you saw the almost 1 million jobs that were supposed to have been created was an error, and so they've erased them. But as you can tell right here, for the past really gone on a couple of years, we are slowly creeping higher on the unemployment rate, on unemployment claims, and so that's going to give a pass to Powell to chop. Okay, well, it's the bottom of the hour, and we'll wrap things up tomorrow. Hope you're doing all right, and thanks for swinging by. See you on Friday. Bye-bye.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Dear Cheapo Airlines, thank you so much for sending my luggage on a magical side quest instead of my planned destination. I am glad that I had the sustenance of the single pretzel I was served on board while I was waiting for my bag to arrive. Looking forward to your reply, because surely the response can't be as delayed as long as my flight was. Warm regards, Bettina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
Every day I do God's work here.
From the smart mouths at Tastylive.
If you missed the live show, here's our cherry on top weekly recap.
My favorite time to read is when I'm away on vacation. I'm on like an island somewhere and I have nothing to do except sit under a hut. That's my favorite time. But I don't see that happening anytime soon.
You believe this shit? The favorite time you like to read is when you're under a hut on an island. That's pretty specific.
It was a great show, very inspirational and motivating.
I feel like you got to know each of the traders a lot better on a personal level. It was awesome.
This is my 10th or 11th live event. I thought the math was really complicated and it wasn't, and then it just made sense.
They've opened my eyes to many different strategies.
And I realized there's a reasoning and strategic planning that you could do to be successful. I love all you guys.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Tomas, we are back, my friend, and you know what that means. Time for a little bit more Tasty Live. And don't look now, Sadnoff. This will be the 7th day in a row where if you buy the open and sell the close, you did quite all right, Sosnoff, quite all right. Even the S&P's up 57 where they have sat while they were up around 53 for most of the day, 50 to 53 for most of the day. NASDAQ up 158, Russell up 43, Dow up 613. The Dow and the Russell are your leaders. The opposite of what's going on with the even the S&P's and NASDAQ. Volatility in by 36 cents, and bonds are up 8 ticks. Bitcoin up 800 and change, and oil down $1.39, a little over 2% move in oil to the downside. Gold down $6.50. Somebody better call the plunge protection team. But don't worry, silver is up 50 cents. That ratio moving quite nicely. Corn, wheat, and soybeans.
Thank God we got out of that little debacle. Waiting to happen.
Waiting to happen is right. Some of the market movers to the downside. Netflix has been weak all day, down $41 and change. Oracle down 17. I know you closed your Oracle position. AVGO down 9.5. Carvana down around 8. Some of the other stocks we mentioned early this morning. Affirm down 3.5, and Palantir down 1 and change. On the upside, it's pretty broad-based, Sadnoff. Looks like CRCL up 21. Tesla up 18. They can't get enough of the Tesla earnings coming out.
Why would Circle be?
Why is Circle up?
I don't know. I mean, just wondering.
Well, I mean, it's gotten killed. I mean, it hasn't done much.
Because Gemini's going public tomorrow? I mean, what?
I believe so. I think something like that.
Here's the crazy thing to me. Here's the crazy thing. It's a stablecoin company, right?
Yes.
Can you please explain the business model?
I don't know it.
Can you please explain to me, please, the business model where you make 30 basis points and it just seems something is freaking weird.
Yes. Doesn't seem sound. Adobe, I'm sorry, not Adobe. Yes. Adobe for earnings, ADBE. Any interest?
No.
Oh, okay. That was quick.
I mean, I told you ADB.
You said you were a little bit worried about the downside. Volatility is high at 112. It is a
Yeah.
$350 stock. 1 day expected move $35. I mean, if you were to do your 70-point move thing, you'd be going down to around 280 or so.
The
and
275 puts.
Okay, whatever. Either one. What are you going to go to the upside? You got call skew, so you can go way up on the call skew. What to the?
No, I wouldn't touch the call side.
Oh, 85 is the call side?
No, I'm just saying I'm not touching the call side. Down 2 times the expected move is 70. It takes you all the way down to the 280 puts. I mean,
That's exactly what I said. I had up on the screen.
Adobe has been a PIG pig, but it hasn't traded under 320-ish.
This is the lows, yeah, approximately. I don't know, 330-ish, something like that.
So the 280s look pretty good. Sell the 280s and buy a Mercedes.
Mercedes, there you go. Bada bing, bada boom.
Sell the 280s and buy a Mercedes. How many have traded today? 1,200.
Yep.
Not bad. Oh, no, the wrong one. Let's see. 280s. Oh, 3,000. They were trading. Market's only 2 pennies wide. Go for it, dude.
I don't think so.
Sell the 280s and buy a Mercedes.
Yes. If you want to.
Uh-huh. If you must. I'll just nibble a tiny little bit. Even though I'm bearish, I think the 280s are good.
Well, there you go. See that? That was easy for you to do. No upside calls, correct?
Nope, not selling any.
Even though you're worried about the downside. That's the point I want to get across here.
What's the point?
You're worried about the downside, you sold puts. Yeah, that's the point I'm trying to get across. Exactly. Go ahead. Explain to me.
I'm worried about the downside, so I sold puts because, do you know what I'm doing? I'm fading myself.
Okay, perfect. As long as you say, okay, now that's all you had to say. I've been there. We've all been there. You up is down, down is up. You question your existence, everything. I get it. Sky is falling. I understand. Completely. It makes perfectly good sense now.
I thought they were going down today. It was almost a lock. I had a lock. I locked them down at 65.30. That was my call.
Yeah.
They haven't had a single downtick the entire day. Not a downtick.
Yeah, yesterday I thought maybe we would have something. Volatility today was weak right out of the chute and never lifted up its head at all, making new lows now. 9/11, I told you, it's got to be a bullish day.
Oh, my God. Oh, my God. All right. All right, Mr. Bat, let's see what else we got here. What's jumping off the board at you? Volatility, you're right, down 50 cents. That's a pretty big move. Crude oil down $1.50, almost $1.50. That's a big move. Natural gas got killed today. Gold turned around a little bit, but the stock market never turns around. It is on its way to 1 million. Certain stocks that bounced back a little bit today. Apple bounced a little bit. Amazon's still down, but Apple came back a little bit.
That is true.
Other stocks that were kind of weak lately that, Oracle obviously up 150 million yesterday, is down $18 today. It's been weak all day. It was down as much as 23. They squeezed the calls, the upside. They squeezed the calls at 345 yesterday. They got up to 345 the stock, and then they squeezed the puts today. The stock got down to 305. They absolutely double whammied and triple whammied and quadruple whammied everybody, including me. And you're going to say, well, you should have waited yesterday. Okay, sure. When it's trading 385, then tell me about how we should have waited. Obviously, you've never traded, GameStop before.
Of course.
People forget, like 3 years, what was it? 21. So 4 years ago, GameStop was trading it at 100, and we're like, well, the 280s with 2 days to go have to be good. The answer is they're priced that way for a reason. They weren't good. So we got a lot of stuff going on. A lot of stuff. I did cover, you're right, I did cover my Oracle position. I have a tiny little position in there left. I covered it because I don't want to deal with it tomorrow if I'm not around. I also did something that I don't usually do. I sold some SPX calls into the close today because I was so bearish.
I see that, but I mean, I don't mind the play.
It's the play. It's just a play because I was bearish for the close. I sold the 58 90s. I'm sorry, 65 90s.
Oh, if you sold the 58, you'd be really bearish.
I sold the 65 90s about 2 hours ago, and I'm down a little money on them right now.
Down about a buck. Sold them for $1.25, about $2.25.
Yeah, down about a buck. But they, these are the kind of things that with 5 minutes to go, they're all air. They'll be $2.50, and they'll be a penny, or they'll be $2, $5.
Right.
But I played that game for most of my life, and I kind of like to get back playing a little bit. The big mover today, I mean, on balance, the big mover today had to be the Russell. It's been really weak lately, and it's up 41 points today, which is on a percentage basis the most, but it's also just a big move for the Russell, 41 handles.
Yes, it most certainly is.
There are some stock. I mean, it's hard for us to talk about Russell stocks because I actually don't even know. Like, I couldn't name you 5 Russell stocks, I don't think. But maybe some of the financial stocks. But you know what? Yesterday I was saying, how could the NASDAQ be this weak when Oracle's in the NASDAQ? But Oracle's not in the NASDAQ. A bunch of people wrote me last night to tell me, hey, you were wrong. Oracle's not in the NASDAQ. How is Oracle not in the NASDAQ? It's not, but how is it not? Did you know? You didn't know it wasn't in, did you?
No.
Because I was talking about it on air, say you didn't say anything. And I was like, how could...
I didn't know. I didn't know. Yeah.
I know. I was like, well, that makes sense why the NASDAQ was so weak yesterday and Oracle didn't move it to the upside.
Yep, I didn't know.
Today, I got short Reddit and traded it pretty good. I've been in and out of Reddit all day, and I actually, with the stock up $5 and me shorted all day, we actually made money in there. I'm also short Roblox. That turned out to be, it was a scratch a minute ago, now it's a small loser. But I'm staying short those 2 R stocks, Roblox and Reddit. I think they have, if I was really smart, I would add Roku to the mix and have all the R's, but I have not added Roku to the mix. So just Reddit and Roblox. I'm going home short tonight, and Google. Covered some Google when it was down $2 this morning. And
and Reddit's giving you a little bit of two-sided action today too. I mean,
Reddit's given me some two-sided action today. Roblox actually had some two-sided action today. They're looking a little heavy, even though they're up limit. And like I said, I did buy some Google today, down $2. It's up $2.70 right now. I should lay it back out because I am.
Roblox was up $3 higher than this. I'll give you that.
I am a little bearish.
But Thomas, you could have thrown a dollar at any other stock you wanted to, and you would have been able to make a buck on it. So don't you think you're fighting the?
Well, if you could tell me which stocks to throw a buck on and throw a dart on, and I can make a buck, I'll do that.
Well, yesterday I told you to buy Tesla, Baba, MU, Costco. You mentioned it was down. I said, Saj, you got to buy that. That's one of your favorites. You should probably buy that. It's up $6 today.
My biggest loser today is MU, maybe
up $10 and change. I don't blame you. I mean,
with gold down today, why is GDX up again?
GDX is up every day, Sadnaf. I am short that, and
it's under contract to be up every single day.
I die 1,000 cuts a day.
It's up under contract to be up every single day. Yep. And
I mean, from August, from around this time in August, it's gone up $12. The expected move for October is 5. It's gone up 12.
There you go, sir. There you go.
I don't know what to tell you.
Anyway, got a little more short, a little Google here on the close. And that's about it. So I'm going home short a couple of different stocks. I didn't look at Klarna today, actually. What is the symbol? KLAR?
Yes, I believe so.
KL. Yeah, down 250. It's almost back to its IPO price. That's about the first one of these IPOs
that have come back. Yeah.
Yeah, I thought Klarna was ridiculous the way they priced it at, whatever it is. But it did trade up to like $55. You can't short it. So
Right, and that's what I mentioned to you the other day, especially with some other stocks that were high flyers too. Yeah, down $2.48, 43 and change.
Yep. And
no options on here. You can only buy it, like you said. It's a hard to borrow stock, so you can't short it to open. Makes no sense. Restoration Hardware also has earnings.
Yeah, good luck trying to trade Restoration Hardware. What, 6 contracts in their trade today? I don't know. And another stock that was up big today was UNH. I just mentioning it because I have positions in there. In general, I think today was a tough one because there was yesterday we had two-sided action. Today we had nothing.
Yeah, that's true.
Today we had straight up. And unless you had like you were defending an Oracle position like me or something like that, or trying to scalp some of these high flyers, there wasn't a hell of a lot there. I did sell a bunch of more deltas today, so sold some call spreads in the S&Ps. I'm definitely sold some Nasdaq deltas, so I'm getting a little more short here. The deltas for the first time are pretty big.
And you're going away.
Well, that's why, because You're really
playing this down move thing, huh?
I do my best work when I do an airport trade and just close my eyes and go to the airport. No, just kidding. That's an old trader joke, but
old bad trader joke.
Old bad trader joke. But I do. Can I tell you one story we once did that was really one of the dumbest trades I ever made?
Sure.
So Jules and I were going. We were. Wait
a minute. Say no more, Sosnoff. Say no more. I understand the parties involved. Say no more.
So we were going to buy some office furniture, right, for a trading desk, and we decided we'll go in the middle of the day because we had an appointment with somebody there. So we figured, okay, the furniture's around 10 grand that we were going to buy. This is probably like in the 90s sometime. The furniture's 10 grand. So we'll sell enough futures that by the time we get there,
we make 10 grand.
We could make 10 grand.
Okay. No, we make 10 grand. You don't do things for could. You were going to, for sure.
Okay, we're going to make 10 grand because we both thought, okay, they're going down. We'll make a quick 10 grand. We'll get there, pay for everything, blah, blah, blah. That was the story, right?
Maybe even buy lunch.
Maybe even have leftover for lunch. We get there. How much do you think the furniture cost us?
17,000 total.
20. 20 when we covered the futures.
I could have told you that.
We're like, that was a shrewd move. That was a cocky trade. Didn't work out.
Ooh, one of my old time emailers said, hey, you want to date yourself, Sadnaf? You remember Rambus?
Yes, I do.
Well, it too is at highs now, Sadnaf, up $11.60, 15% move today, 88.75. Talking about coming for the pigs.
Is it? I didn't even know it was still a stock.
Neither did I. But you see the stock over here. I'm going back 5 years now. You'll see the stock was really never over 88. I think it's at all-time highs, Sadnaf.
What's the symbol?
RMBS. It's got good markets too. IV rank at 27 and doesn't have earnings until after October. October options, they're not that great. I take that back. I was looking at the puts and they seemed a lot better.
I honestly haven't heard anybody mention this stock in 20 years.
Nor did I. That's why I said one of my old-time emailers. Thank you, Jason. Appreciate it.
Okay, Jason. Good job out of you.
Mm-hmm. Mm-hmm. They're coming for everything, Sadnaf.
They're coming for you. Okay. The reality is that the truck is outside. They're coming for you.
Bring it.
The padded van is coming for you.
You're funny.
Oh. Is there a good situation when they ever come for you? If they're coming for you, is it ever a good situation? They're not coming for you to give you a check.
No. Well, if they are coming for you to give you a check, it's a roost. They're going to arrest you. They just want you to be in one place.
No. When we were growing up, people would be hoping that the person that knocked on their door was the winner of the Publishers Clearinghouse, $1 million, whatever it was, and everybody thought they were going to win that. Now, if somebody knocks on your door, they're they're serving you with something.
Yeah.
Nobody opens their door anymore because they are definitely going to serve you.
Agreed.
Let's see what we got going on here. Bum. As we kind of, what would you call this into the close?
Same as it ever was. Same as it ever was.
Same as it ever was. Let's see. Just taking a quick look, scan. Yeah, they're hitting Reddit into the close. That's good for the good kids. But
because you're shorted a little bit.
Of course. I'm going to bet that whenever I get on an airplane early in the morning, we're crashing. So that's what I'm hoping for.
Yeah. So that begs to ask the question: will you cover early?
I don't know. I mean, it begs to. I'll let you know when I see what I got going on.
Okay. Well, it's not going to change overnight.
I got a better question. Before the guys come on right now, do you think Ilya says this is the perfect range?
Does he admit that we're still in a range? Is the question.
Is 6,600 the top end of the range? Because we're not going down. Oh, here he is.
Oh, he can hear you.
Bring him on. We can't talk about him without having him on. We have to have him on. We have to
Gentlemen.
Gentlemen. We can't talk about you until we have you on. But I think, Ilya, for the sake of all the tasty traders out there, like myself included, that have just, leaned into a few short deltas here. Have you turned bullish yet?
I've not turned bullish, but I certainly got out of the S&P today. I'm not fighting this thing. I covered the bonds too and ended up about 3-1 to the good today. So
we don't care
care
about your other positions. We only care about the S&Ps. So
S&P, I'm out. I mean, this is obviously a breakout. I'm not fighting this. The price action has spoken.
He said it. This is the breakout. I was waiting for him to say it. So.
Tony, send the newsletter out. We're ready.
The price action hath spoken. I'm still in the NASDAQ because it did not break the high, but S&P, good night. I'm done.
Okay, that's the bell. We're waiting for that bell. We need that bell. Mr. Vecchio, is that the bell we've all been waiting for?
Yeah, the day that Ilya taps out, I'm getting messages on Twitter. Is Ilya still comfortably short?
No, he said he just tapped out.
I mean,
I know.
Yeah, I'm out.
No, but
I'm not standing in front of this. I don't care about being right. I care about not losing money.
No, but the sentiment, there is a sentiment heat check here. Like when I'm waving a sword around on air, that usually marks a top, and
I will say I didn't reload on the bonds today. I had 9 days left to expiry. I took it. And I didn't reload yet. It feels like maybe we'll get a chance to reload at better levels.
Oh my God, Tony! I just made money in the SPX one day.
I told you were able to do it only because Ilya said it was a breakout.
It's a golden nugget miracle.
You're welcome.
You're back, Sosnoff. You're back.
We're back with the 0 days. Oh yeah.
Too funny.
We're out. Finally. I haven't traded the selling the close in a while. The 0 days. I kind of like that. It's always fun. That's the old time. That's my old time.
Sold some puts to go against your calls. You were able to make money on both, which worked out good.
Both sides.
Yeah.
Something. It's hairy, but it's fun.
It's great breath today, though. I mean, looking at the equal weighted NASDAQ, equal weighted S&P 500, the small caps.
What does that mean?
It's nice that this market's being driven higher by names other than Apple and Nvidia and Microsoft.
I said that yesterday.
Yeah, and you were smart and right yesterday.
Oh, I like this kid. We can work with you. Christopher, you're a keeper.
I like when you guys pat each other on the back and pat yourselves on the back. It's so cool. People love that, Tony. When you reach around and you just like, you tap yourselves on the back.
This is what tree Italians do, Tom. This is what tree Italians do.
This is what Italians do.
Bridges do one reach
they
around.
tap themselves on the back. Good job, guys. Good job. Good job. Oh my God.
Good job out of you, Chris. No, good job out of you, Bat. Good job.
It's my pleasure, sir. It's my pleasure.
Not a problem for those of us that are gluttons for punishment.
Okay, but a broadening out of the rally, right? Volatility's coming in, volume's low. These are all the things that you want to see for a sustained move to the upside right now. So why step in front of this?
Because if you're a contrarian at some point, you pick your poison.
I prefer no poison in my diet. Just
it's
as a personal aside.
I mean, to be fair, it is extremely difficult, given the way this market hasn't gone down for 2 or 3 consecutive days, that if you don't bet on a reversal, if you try to sell into a sell-off, you had one chance this year, April. I mean, literally, there was one time when the market sold off that if you had sold them lower, that you would have made money. Like you could have sold into that sell-off. Other than that, in April, there was no time that unless you jumped on it early, you couldn't make any money to the downside. If you look at this, if you look at what's happened since basically April, 10th or 11th, whatever.
Yeah, like it bottomed in early April.
Yeah,
and
it bottomed around
and it didn't look back.
It
mid-February to April, you could sell into rallies and it was going down. After April, like early April, that's it.
So you've got April to May, June, July, August, September. You have 5 straight months without a downtick. Yeah. And let's be real about how much that is too. We're at 65.97 right now. Let's say 6,600. We got under 5,000, right, Chris? Didn't we get to 4,900?
Yeah, about 48.
48, 49. So, talking a solid, I don't know, 1,700 points, 1,800 points.
Yeah, amongst friends.
1,800 points among friends. It's a big number. 1,800 times 6 is 30%. Unless I'm doing something wrong.
I mean, I think that's where I think I'm still short NASDAQ, but not the S&P, because the one broke out and the other didn't. And so the risk reward on NASDAQ still looks like, okay, maybe it'll break out also. But then again, I'm wrong fast. But if I'm right, it's asymmetric. So I can hold both of those ideas in my head at the same time.
Well, let's see where the SPX got. It looks like the SPX is...
Well, even the S&P's trade up to 6,600 exactly, Sosnoff.
Oh, did they print it? I didn't see it.
Yes, they did. That's 666 without the 6.
Well,
we're going to take a quick 90 seconds.
Somebody called for the 666.
With more Tasty Live at the overtime.
Hold on. Who was the 666 boy this morning? Scott, right?
Yeah.
God, he's a genius.
We'll be back in 90 seconds. Overtime next. You had to get him in here. Peace. You had to say something bad about him.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
What's the most financially irresponsible thing you've ever done in your life?
Where do I start? I've made probably an incredible number of, unvetted investments that, angel-like investments that haven't worked out. Well, everything from building restaurants to backing, crazy businesses. I've done it all.
Oh boy. Try to become a larger fish in the futures pond than I had thought. I'm just a guppy, as I'm constantly reminded. A guppy in a large pond. And you can't try and short the gold market all by yourself. No one will listen.
If you missed the live show, here's our cherry on top weekly recap.
You became Chicago's most eligible bachelor. What year was that? That was the debate we were having earlier while you weren't on the show to defend yourself.
1988.
88. So Vanetta was right. Late 80s, early 90s.
You mean when I was on the Oprah show?
Yeah.
Yeah. Well, 88. I had flowing locks like Tom.
Oprah just made it.
Oh, here it comes.
I mean,
she felt bad. She felt badly for him. You couldn't get a date.
You get a car. You get a car. You get a Scott Sheridan. You get a Scott Sheridan.
I want the car.
That's right.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
How did we get here? It's Thursday, September 11th, 2025. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco, Thomas Westwater in Chicago, Dylan Radaganoff the rest of this week. Will be back with us next. Here to take you through the rest of this hour. Futures market closes at 5 Eastern, 4 Central. If you're on the platform Tasty Trade on the website, tastylive.com, come over to YouTube. Tell us what you think of this action, how you're trading it. A push by stocks after the CPI report and the weekly jobless claims data to fresh all-time highs in the S&P 500. The NASDAQ doesn't quite reach a new all-time high, but does close at what would be a closing high. The Russell is your leader here today, though, up 1.78%, a real astounding run for those small caps, which see more rate cuts coming down the pipeline. The equal weighted NASDAQ and S&P both outperformed their market cap weighted as well, just to show how strong breadth was in today's session. But a decent 30-year auction after yesterday's strong 10-year auction has bonds and notes pinned to the upside. We can make an argument, as I'm going to in a little bit, that the market cares more about labor than inflation moving forward, and perhaps already has for the past several weeks. Gold doesn't bounce, but silver roars back above 42. Energy has been breaking down, and the dollar is not down itself, but not in a great spot.
No.
Thomas, you and I have been talking the last few days. I know that you were coming into the CPI report looking short, just like Ilya was. I'm assuming, like Ilya, with today's action, you have decided to close up shop here potentially in your short call spread.
Yeah. I closed that this morning for a small loss. Didn't like the way the market was looking for that position. I tried to, hedge the reaction if we got a soft CPI by being long gold. It turns out I should have went long silver. Not too much working out from yesterday to today, but the market definitely, flashing a sign of optimism here after this event risk is out of the way, and it's like we're just greenlit for move higher into next week's FOMC.
Oh yeah, the initial reaction for stocks this morning was for weaker equity prices, but within 15 minutes we had erased those losses. Yeah. I couldn't help but notice that jobless claims showed a spike to 263,000, which is the highest level of claims that we've seen since October 2021, when we were still climbing our way out of the pandemic.
Yeah.
Are we effectively going to look through inflation now until we see signs that the labor market is not destabilizing?
I mean, it's an interesting thing because there's a lot of conversation today about that jobless claims thing being a one-off thing in Texas.
Right.
And that having kind of shaded the data. So we'll see how that goes. I mean, obviously the NFP number was god-awful, especially when you consider the revisions. We got a set of revisions that basically meant we added on net, or at least the jobs picture moved on net 1,000 jobs to the good, because we got a 22K monthly increase and a 21K adjustment down for the preceding two. So not great, obviously. The question for me really is, what about this don't we know yet? And it comes back essentially to the same thing that we've been talking about this week and for a while, that we're going to get a cut next week is not the object of speculation. There is no speculating that's left to be done there. In fact, interestingly, after today's CPI, the likelihood for a 50 basis point cut actually went down. And certainty cemented closer around we're going to get a 25 basis point cut next week. We've known this. It's been north of 70, 80% for months. Now it's cemented around 95. This is a given. So, yeah, the labor market looks weak. And the Fed is going to respond, and we heard it in the rhetoric at Jackson Hole. We know this. The big question that's left, the place where there is room to speculate, is whether the Fed will come the market's way on extrapolating the easing cycle. Because still, for next year, the market's at 75 basis points, and the Fed's at a quarter as of June. So I think what the markets want, not necessarily for the Fed to go to 75, I think that would be somewhat panicky. But if the Fed went to 50, in the summary of economic projections next week, the market would go, okay, they're seeing what we're seeing. They're being responsive. They're going to make an adjustment here. We still got another meeting, and then another meeting with an SEP update in December. this gives them time to kind of spin the narrative and see the data and come our way. But the market's going to want to see that. And if they don't see that, as some of the inflation data that we saw this week might sort of signify, were you a Fed official that's more concerned about inflation than employment per the last set of FOMC minutes, then we might be in for a risk-off kind of outcome. But I don't think there's anything in the jobs data that the markets don't know immediately. I think the real question is, what's the Fed prepared to do about taking next steps?
What I find particularly interesting about this report today is how, while we don't get movement on the 50 basis points for September, what we do see is that the market kind of solidifies odds around October and December here.
That too, yeah.
What I mean by that is, after today's meeting, we're now looking at a 97% chance of a cut in October and a 90% chance of a third cut in December. Which, how much more juice do we have to squeeze out of this, right? Like, you're starting to make a case where we have to get a fourth cut priced in for this year if you're talking about much more easing as a potential driver. So, big picture right now, though, VIX is back down to the session lows, right? We have this flash down this morning in the pre-market. We end up rallying back a little bit. We're closing down below 15. Equity markets here are up on the highs. They just had Adobe earnings here after hours, by the way. They guided a little bit higher outside of their range, but we're seeing that the share prices are coming back in a little bit now that we've had some chance to digest the move. Guidance was 2.51 billion expected. They guide to about 2.53 billion. Revenues were up 11%, which was in line with expectations, yada, yada. So we're up at 351. We'll call it at the close. Now currently 358 after hours, at a high of 382. Oracle is a company, obviously, that's been in everyone's mind this week after its astounding performance, surging, and that's ORL, not ORCL, which is what we're looking for. They were down 6.27% today, although after what happened yesterday, I have to imagine that there were some fund managers who are like, yeah, we got to reallocate away from this today and start to...
Yeah, and they did miss on earnings. I mean, the whole thing is guidance. And
Benjamin Graham rolls in his grave.
It was obviously, it was a story the market wanted to hear.
They missed on revenue and missed on earnings, and the share prices jumped 40%.
Right. Because the market's like, wait, but in the future, it'll be cool though, right? Okay, great.
And the last time Oracle had that move was 1999, and what was happening in 1999?
Yeah, I mean,
nothing.
Larry Ellison has just lapped Elon Musk as the richest man in the world. On paper, obviously.
Didn't see that coming.
What does Oracle do besides make Larry Ellison richer? It's incredible how they've remade the company, by the way, in recent years, when they went from being all enterprise and now they're going to be hosting OpenAI. Okay, Elia, so I think it was easier for me to get off of my August hesitation, where I flipped from being someone who was bullish to a bit more directionally neutral, looking for vol expansion, and it just ate me alive in the first 3 weeks of August. And I had to have my coming to Jesus moment, like, Dylan, what do I do? And he's like, don't think. Why think? You're so dumb being a thinker. Be smart and don't think about anything at all. And yet that works, and it's been working.
I mean, it works until it doesn't, of course.
Sure. So what is it going to take for the market to lose what I'm colloquially referring to as the innocent until proven guilty market, or kind of like the boy who cried wolf market?
Yeah, I mean, I think we've been talking about this really since the market got into the range that it's been in since mid-August, that it just finally cracked today. And boy, did it. I mean, NASDAQ didn't, but S&P absolutely did. I mean, just look at where you're at here in the S&P, and
the Dow as well.
Dow, I think, did Russell make a new high? I think it did.
Yes, it did.
I think it did. Yeah, so I mean, thankfully, I didn't have any exposure in either of those. I just had the S&P to deal with today. But we've seen that the market through that range was essentially reluctant to rally on good news because we got plenty of good news. All the Mac 7s reported well, some of them explosively, like Meta. NVIDIA survived. The data has been going in the direction of Fed rate cuts, which the markets want. And basically from mid-August until today, the market would not make a concerted move like it did finally. And so were we to have had some bad news, who knows where we'd be? Because the market didn't want to make hay of good news.
But
we didn't
what was
really
good
have
news?
anything.
What was the good news today for the market? Inflation was up 0.4% month over month. Maybe is it the core goods?
It didn't surprise.
Core goods X vehicles were at 0.55% month over month in June, and now they're down to 0.13%. 0.13% in a tariff category means the Fed can look through tariff inflation, if that's what this is.
I mean, I think it was very simple for the markets today. I think they looked at a CPI report that they perceived to be a risk, come out directly on the screws across the board, but for the monthly headline figure, which was a touch hotter. But the year-on-year figures across the board, and most importantly for the core, came in exactly as expected. And I think there was a collective sigh of relief. That essentially, look, the rate cut's coming, everything's okay. And we're going to see if this lasts beyond a day. Because we see the last CPI report lasted for about 24 hours. Under these same circumstances. The last update on policy from Jackson Hole, same thing. Mag 7 earnings didn't do anything. In fact, the market faded them. NVIDIA got faded. It was good for a day. We'll see if there's follow through here because I'm not sure the market's learned anything new. It was a 93% a chance, 92% chance that we'd get this cut. Now it's what, 94, 95? Huge difference.
Yeah, with respect to that data this morning, if the spike in the Texas claims might be due to some of the flooding that occurred recently. Right. Someone just sent this to me actually on Twitter right now, so thanks for that. This is on the Texas Workforce Commission's website. The unemployment assistance application for the Hill Country flooding were due a week ago. So that was kind of like the last chance for people in Texas to get their foot in the door for some of these filings. And it's an unseasonal spike for a natural disaster reason. So it doesn't mean it's superficially enough to convince the Fed that they need a cut, but it doesn't say that the labor market may actually be that weak. It could be a one-off reason for why jobless claims spike this high. And over the past several years, when we've had hurricanes, we've seen jobless claims jump into that 240, 250, 260 neighborhood, if ever so briefly on a week or two basis, and then come right back in. But we're going to have the Fed next week, guys. So are we setting up a buy the rumor, sell the news type of Fed meeting here? We have basically 3 cuts priced in, Thomas.
If a sell the news event is going to happen and you're expecting it to happen on FOMC, maybe it would make more sense for it to happen tomorrow since it's already locked in. Tomorrow, it's before the weekend that the Fed happens. It's triple witching. It's, you got the contract roll next week, which a lot of roll pressure already being going to be exerted tomorrow probably. So if it's a sell the news event, wouldn't it make sense to take off the risk tomorrow before the weekend?
I think it might. I think that's a very good point.
If you're to take the risk off tomorrow morning, why not just take it off today before the close?
I mean, you could do that too, but obviously,
because Asia and Europe have not taken stock yet, and so you're probably going to get to open relatively well tomorrow because it isn't just U.S. markets that we're watching this. Asia and Europe are going to have, in Asia especially, obviously, because Europe had some overlap with the data today. But there's no fuzz. There was an ECB meeting overnight. It didn't do anything, but there was one. And so that's a level of event risk always. So I would suspect markets probably wanted to let Wall Street digest its data. And we're probably going to get a little bit of follow through from Asia and from Europe overnight.
Sorry, somebody just said really just got in my brain. Did you say the ECB meeting was overnight?
Yeah. The ECB just met.
Yeah, at 8:30 a.m. in the morning.
Well, overnight for U.S. markets.
Okay, so do you consider like CPI an overnight release? Because they're at the same time.
No. CPI would be this morning. But for Europe, CPI was sort of afternoon, and for Asia, CPI is overnight. And Asia hasn't responded.
You didn't work on the Asia desk, Chris.
I did. For me, anything before 9 a.m. Pacific is overnight.
So
that's psychotic. Go on.
Is the macro risk now that, rate cuts are coming, but the labor market continues to deteriorate?
I would think the macro risk now is that the Fed isn't going to cut as much as the markets have already baked into the cake, and that creates a mispricing risk.
I wouldn't say you're wrong, but what are we mispriced for this year or next year?
I think we're mispriced for next year. I think for this year, I think there's room to take away some of the lean on a third cut now that we've sort of built one out. It's not that convincing. I mean, we're looking at 64 basis points that's priced in for this year. So that's 50 and 14 basis points in the direction of a third cut. So that's about a little bit over a 50-50 shot on a third cut. Once you sort of look at the cumulative picture. So 50 basis points are in, you're about another half way, a little bit more in the direction of a third. By the close here, once you sort of adjust for dates, the CME Fed Watch tool had that third cut at about 70-odd%. So, okay. I think there's some room there, maybe. I think maybe the Fed only is in the market for 50. But the big story, I think, is next year. I think the market wants the Fed to keep cutting. And I'm not sure the Fed is as ready as the markets want them to be. I mean, the markets have 3 cuts on the menu.
So do we think the dot plot, or if one or two members votes for a 50 BPS cut, does that, do you think that affects rate cuts for next year?
Well, I mean, I think today, what did we say? The rate cuts for next year were wiped out by the end of the session. Whatever bump we got in the SR3Z contract, as we see here on the screen, is completely disappeared. The moves that we're seeing are really for this year, right? The market saying, oh, no, the Fed has enough confidence to do something now, right? They're not going to have to wait until next year. The help is coming sooner than we thought.
Hence that third cut starting to look narrowly better than even odds.
But if it's for a reason like a one-off because of Texas flood insurance, and next week's the Fed meeting, I mean, how are we going to get from, I want to know how we get from 0 to 1 in like the sense that how do we go from point A to point B? What tips us into 50 for September versus how does the market not walk away disappointed at all now that we've basically fully priced in 3 cuts? Because the Fed could give us one more, so directionally we're going there. But what if the Fed doesn't give us another one because it's a 0.4% month-over-month inflation rate?
I'm saying that's the thing. I think the markets are so out on a ledge here that it'll be difficult for the Fed to kind of meet that bar. But I don't think the market wants them to be hysterical either. So I think what they'll want is motion. If the Fed comes out and goes, look, here's a 25 basis point cut. We see your weak labor market. We're less precious about inflation expectations, though we are concerned, and we're not ready to jump out the window here and say that they don't matter. but we see what you're saying, and here's an extra cut that's in the forecast for next year to kind of show you we're serious. And I think that's reasonable. I think the market wants to believe the Fed because stock markets want to go up in general. And so I think they're inclined to want to hear what the Fed says, as long as the Fed gives them something and says, here is motion in your preferred direction. Now we'll see you in October, and then we'll take another baby step, and then we'll see you in December, and we'll update our summary of economic projections then. Not unlike we saw last year, where the Fed came out really ultra dovish in September, and then once the markets started to kind of worry about what that meant, they reeled it back in December.
Guys, if the GDP readings are sitting close to 3%, the unemployment rate is 4.3% or lower, and inflation is sitting near 3%, is the Fed embarking on a maintenance, an emergency, or a recession rate cut?
At 3%, I think they clearly see that what they're doing is anticipating that inflation will not be a problem downwind, and this doesn't smell of maintenance. This smells like they're trying to respond to some sort of business cycle outturn that they want to get a reasonably timely response to, because this would not be maintenance at 3% inflation, which is well above target, were the Fed not thinking that the path downwind is going to be meaningful disinflation for some reason.
Thomas, where do you land for next week? Maintenance, recession, or emergency?
I mean, I kind of agree with Ilya. I mean, a maintenance cut, it's kind of like, inflation has been the worry about if it picks up, not, if it does it in a substantial manner, and we haven't seen that. So responding to labor market conditions makes it a little bit more of a cycle cut, or responding to conditions. So I'd probably agree more with Ilya.
I'm having a hard time interpreting it as anything other than a maintenance cut, because if you're worried about recession, you're going to do more than 25. So if they give us 25 as the markets to understand it, which quite frankly wasn't my base case. My base case was 0 or 50. But if we're going to get 25, then you view it as a maintenance cut because you have a few more tinkering of the knobs coming. And I just think the median market participant is going to look at 3% GDP and a sub 4.5% unemployment rate and think anything other than, well, the Fed must feel pretty good about the state of the economy and that inflation's not an issue, like it was last year. Not as reflationary, but certainly with that potential.
I mean, if your sense of what a maintenance cut is something whereby the Fed feels it isn't careening into a recession necessarily, I agree with you. I don't think the Fed thinks that they're careening into recession necessarily. I do think they see the labor market weakening, and they want to do something to ensure their soft landing goes well.
The labor market's basically frozen.
Right.
70,000 jobs a month.
We heard this from Powell at Jackson Hole, right? He was like, you know what? There's a kind of strange balance in the labor market where nobody is getting fired, but also nobody is getting hired.
Right. No one's getting hired. There is the hiring-firing ratio, which has started to dip into negative territory, which shows that at the margin, people are losing their jobs. Every 100 people that lose their job, only 95 are getting back and filling roles, kind of situation. So it's not great. All right, so we have a NASDAQ above 24K. We're going to have an S&P 500, maybe 6,600 again. We touched there briefly here in the market during the run up to the close. Ultimately, Ilya, it's a day where the market is led higher. It's basically every sector that's up. It's only energy that's slightly weaker. But on the top end, it's home builders, ITB, XHB, top two performing ETFs. You have gold miners, junior gold miners sitting near the top of the heap as well. But I see a lot of rate sensitive things, XRT, XLY, VNQ. While the tech names aren't the frothiest in today's session, I do think ultimately this has to be one of those signs that if I was a bear, right, there's now a broadening out of participation in this market. That sideways chop where the S&P was moving up to highs and the rest of the market wasn't. It was really just the big names doing it. RSP now, the equal weight ETF for the S&P, is now at a fresh all-time high and closing high here on today's chart. So I guess like I could stand up here and, you know, I like to review, obviously, and you like to review, and this is how the relationship works. And so when people start sending me, when people start sending me, and we have sentiment checks, and I give it, I'm self-reflective about all this stuff, right? If I'm waving a sword around on camera, you're probably near the top. But I find myself in a world where volatility is low, volume's gone. People, as funny as it is, they are sending me messages on Twitter asking me to ask you questions about your short positions, which has only happened a handful of times in recent years. And every time it does,
I'm so happy I didn't get rid of all of my short position. This is such a sentiment.
No, but it always happens near a top.
It always happens near a top. I love it.
And so
I'm so happy I didn't cover all my shorts. This is great.
No, and then like you get out of your, well, I mean, Ilya, you want me to tell you a long story here. Left shoulder, head, right shoulder. This is a big inverse head and shoulders pattern in the stock market up here. You want me to spin you a tail? You want to spin you a tail about where the market's going?
We can spin this tail too.
Right? But as people who have been looking for taking shots on the downside, which I've tried to understand, it hasn't been successful. I went back to my old ways. It's working again.
Mm-hmm. Yeah.
How do we reconcile this if this is a market that is based on inappropriate valuations, bubble-like conditions, AI hype, this, that, the other thing, easy money coming back down the pipeline? How do you time all of that out without bleeding out death by 1,000 paper cuts, which, you know, I know a lot of us are contrarians around here, but being able to stay in the game matters more than being right or wrong at any given moment.
100%. And I think that's exactly how you do it. So let's use the S&P as an example. So the S&P was in a range from mid-August until today. And when it got toward the top of that range and started to look like it was making lower lows, you started to get the sense, oh, well, okay, so I know where there is a point against which if it breaks above, I'm wrong. So I have a range top. I know that if it breaks down and the move has followed through, there's an asymmetric opportunity. Because if I'm wrong fast. We're near the top. It breaks as it did just today. Okay, it broke. Cool. I'm out. Good night. But you have to think about how to structure it, not just in terms of price, but also in terms of being covered in a risk-defined way, in terms of buying the vol when it's cheap like this. Because, I mean, an S&P put here is dirt cheap with IV rank of 10. I don't think there's any reason to want to bet that way here. Now, you just had a breakout. But I think when you get those kinds of setups where it looks like momentum is lost and vol is cheap, and you can structure it, let's say, as I did, with SPY ETFs to bring your position size down even lower than MES, and take a small kind of poke at the market and say, okay, well, if this follows through, it's asymmetric. If it doesn't follow through, it's a small loss. Okay, fine. But also, you're not operating in one instrument. My small loss on the S&P was overwhelmed 3 times over by the positive P&L I took from sitting on a long TLT position and sitting on it for almost 80 days, waiting for it to pick up momentum finally.
Okay, so if we're talking about the Fed meeting in particular next week, though, the Fed meeting as it stands, we're 6 days out, has lower IVs compared to where we stood 6 days out from the Jackson Hole speech from Powell, or from the Thursday ahead of the 6 days out from the non-farm payrolls report last time around.
Yeah,
it's almost like the CPI report and the the Fed meeting are being viewed similarly.
Well, and I think to a large extent, the CPI report was probably the nail in the FOMC forecast coffin. For
why?
Markets. I think that was the last thing that could have spooked expectations in an uncomfortable way, because I think the markets do like the certainty of it having passed without incident. They knew what they were going to get. They, I think, knew what they wanted to see as far as Fed policy expectations. Those were baked in. But there is always the uncertainty that the number comes up weird. I mean, we just saw the NFP number come up very weird by a big margin out of the same BLS. And so I think there's the event risk itself. There's no more event risk of significant consequence unless the University of Michigan inflation expectations counter that's coming out inside the consumer confidence survey tomorrow goes off the charts and the markets go, oh no, the Fed isn't going to like this whatsoever. I mean, inside this inflation report, just for the record here, we had the third consecutive month of positive and accelerating goods inflation. Moreover, it was the largest increase in core goods inflation since January, and the year-on-year growth rate in goods inflation accelerated to the highest since May of 2023. So it's not like the tariff inflation isn't making its way into the data. It is. It was services, actually, that took CPI a bit lower, or it would have been hotter. So the tariff pass-through is there. Those things that the Fed doesn't want to see, they're there. If consumers start to bug out about it, the Fed's going to start to think, well, we don't want this thing to get entrenched into inflation expectations. Oh, and by the way, we've been screaming through a bullhorn that we're never going to let that happen. At Jackson Hole, at the last press conference that Powell did in July, on and on and on and on and on it goes. They've been pounding the table saying we're not going to let this get into expectations. So I think the market saw event risk move out of its way. And unless something really untoward happens with U of M, then the next thing is the Fed, and we already know what they're going to do.
Thomas, do you think U of M tomorrow is going to be that thing?
I don't. I just don't think there's enough.
Doubt it.
Yeah, I mean, anecdotally, you look at, the public view of inflation right now, it's pretty tame. I don't expect to see that. I mean, there's a chance it could. If it did, I think, the market would definitely take notice.
It jumped last month.
Yeah, I mean,
Thomas, could you give me something else to work with besides the Fed here? I've been looking at some of the ag today. We got to get something that's not equity in our portfolio as we get into the Fed week here. I tried doing something in natural gas, which is a disaster.
Yeah, natty gas is not working today. Let's not talk about natty gas. There's WASD tomorrow. There's WASD.
Yeah, that's what I want to bring this
Talk
event risk
about
up
being
for.
gluttons for punishment. I want no kind of exposure in natural gas. You guys can keep it.
Yeah, that one's not fun to watch today. Yeah, WASD's
Nor is it
tomorrow.
fun
The
to
World
trade.
Agricultural Supply and Demand Estimates comes out every month. So the trade desk estimates, we're looking for a small drop in production for corn, and then a smaller drop in production for soybeans. So I'm long both corn and soybeans. I'm doing it through selling put spreads, with now some room under that. So what I'm expecting to see, or what I'm hoping to see, is those production estimates come in a little under the estimates. So I think we can get more upside, especially after the very long sell-off we've had in the market where positioning has gone quite extreme. And what you've seen the past month is some of that positioning roll back to more normal levels. So seasonally corn, we're going into the harvest. Seasonally, there's downward pressure because of the new crop. Everything the farmers you're going to see out on the streets, out in the fields harvesting their crops, that goes into the new supplies. So you see more supply come on this time of year through November. But we're coming after a time where, the USDA has really raised their crop estimates, ending stocks, production all up to near record levels. So this environment, a disappointment to the downside, could really be something that sparks some upside movement and gets more of that positioning that's left over from this multi-month sell-off. So yeah, I'm trading it to the long side, and at this point, I'm a little insulated from downward moves because I've had these positions on for a couple weeks in corn and soybeans, and we've had some market reaction to the upside. But this report comes out at 12 tomorrow, so you definitely expect to see some movement in soybeans, corn, maybe wheat, and then those other products we don't trade. They include things like cotton and other stuff.
Yeah, unfortunately, I tried getting a short iron condor today filled in the beans before the market closed, and volatility, the IVR was up in the 80s, but it has come off quite a little bit here. I still think it's a viable trade, though. Tom is thinking about finding things that we can put into our little bucket of holdings right now as we get ready for the Fed. Yearly high is near 1,076. The yearly low is near 970. Something like, and we'll have to wait for more liquidity to come back in the market, but something like a short iron condor trade, if we can get better than a 4-to-1 around those levels, it seems like it's something viable to play with right now from my vantage point. Just if only to, again, if you're directional in bonds, stocks, the dollar, metals, and that's really what you're doing there, then having something that's not a directional play, that's uncorrelated with everything else, can serve a benefit. So just something to think about for tomorrow and as people prepare for next week. Corn to me is the most interesting one, perhaps now at the end of the session with the 60.2 IVR and that downtrend in place from the April, May, June, July swing highs is seemingly breaking. So when commodities go, they tend to trend. They tend to trend for a long time, and maybe this downtrend is wrapping itself up right now. We'll have to stay tuned for more. Ilya, are you still holding long gold today?
Yes, I am.
I got back on.
Me too.
Yeah, look at us.
There we go. There we go. Come on in. The water's fine.
All right.
Yeah, I don't see any reason to get off this boat. I was actually kind of encouraged that gold didn't have the best of all days today. If it had a big ripper of a day, you'd think that everything is kind of priced in, and the idea that the Fed is a buy the rumor, sell the fact kind of a thing starts to be a concern. Gold hasn't been very responsive to sort of Fed-related things the past several weeks. I mean, this rip in gold obviously is going all the way back to the beginning of this month, stands in stark contrast with how long it took the bonds to get going and how long it took stocks to get going. S&P really only got going today. The situation in the dollar, which still is kind of bottoming-ish, it still hasn't made a fresh low since July. So I'm looking at all of this, and that gold didn't revel in this today actually gives me a little bit more confidence that it's off on its own mission and the trend is there and it will continue. So I'm sitting there. I did take the bonds off, and part of that was I was coming up, I was 8 days to expiry on my 80-day verticals. And so it was time to make a decision. And obviously bonds have had a monster run. So I figured it was only right to take that off as well, alongside the S&P position, which ended up being a nice day overall. But I haven't reloaded on those. Were I to think that there's going to be a follow through, I probably would have. ZB now looks a little heavy, maybe. At least,
Thomas,
at least heavy enough to kind of take a step back for a second.
Thomas, I got out a few days ago and was feeling some serious FOMO, but the action where since April 22nd, we've seen these tests of the 1 week moving average, and they've served as a springboard for gold just to continue trudging up. We had another one of those today, so I used the opportunity to get in back on a long position here out at 47 days and a little bit more constrained than usual, not quite the $50 or $100 wide strikes, but only $25 this time. The long, the 37.50, short 37.75. I say that because where do we stand in this potential breakout? We do have a triangle that's formed here, and if we use the swing lows post-liberation day up to the high, back down to the low, 37.47 we'll call it, is your extension target, just eyeballing it. And so playing for a little bit more of a rally here to the top side is of keen interest. Why did you get into today? If it wasn't for my 1 week moving average, and I'm going to hold this until we break below 36.50. If we're below 36.50, I'll get out and reconsider. Why did you get in? What did you see today that made gold appealing to you?
I'm trading this kind of like a bull flag pattern. You know, we had the big move up. You get some consolidation.
Like you called out on silver the other day.
Yeah. Which, you know, said I'd rather be in silver, but I looked at them, picked gold. I think the better thing to say is there's a smaller chance of going down than there is up. So, you know, we have rates coming down, naturally good for gold. You have a stock market that is, you know, you could argue is potentially getting kind of frothy. You have political instability, and in Europe as well. I mean, you have deficits rising. So, I mean, structurally, this looks like a really, you know, strong time to be gold. Not only short term, I'm you know, my view on gold probably extends into at least the second half of next year. So I think, you know, the move we've seen over the past 2 months, it could just be really the start of the market seeing what's going to happen over the next year or two and starting to price this in.
Thomas, silver's at the top side of the range. You were calling out this being a flag a few days ago, and I made a case yesterday here, Elliot, that 41 is the line in the sand. As long as we're above it, there's nothing to do but be long silver. Thomas, this is also a very difficult entry point if people want to get long right now because we haven't cleared out range highs. How would you approach this market if you're not in? Assuming you're not in, but if you were looking at this with fresh eyes, do you get long now or do you wait for a little bit more confirmation to the upside?
I'm going to wait for more confirmation to the upside. And I mean, part of that is I'm already long gold. They're correlated, you know, so I want to wait for confirmation before jumping in and, you know, increasing my exposure to correlated assets. So I'm going to wait for a break, you know, before we get to the September high pretty much that we were at a week ago. So that's where I'll be taking along. Once we break that, I'll put on a call spread.
Ilya, can I entice you into silver? I know I got Dylan back into it yesterday.
I'm okay sitting on gold for now, basically until you get a break of this range. If you get a break of this range, sure, totally. I just don't see. I mean, as you know, right? My calculus ultimately, whatever I might think macro, whatever I might think fundamentally, all of that takes a backseat. Strong convictions, loosely held. For me, it's the price action and the risk reward. You're sitting at the top of a range you've held since the beginning of the month. To put on a fresh long here is just bad risk reward. Your nose up against resistance, and even if you pulled back toward the bottom of the range, there's more room there than there is topside unless there's a breakout. Show me a breakout, sure, I'm game.
Guys, we can go one of two directions to close this out. We're going to cover both, so it's your choice. We could talk about the dollar, or we could talk about AI stealing people's jobs. Thomas, dealer's choice.
Well, I mean, the AI thing's interesting because it's what's been driving this market. And, you know, we've seen reports that, you know, corporations, entities, the return they're getting from what they've invested in AI already, at least, you know, for producing things, is not quite churning out as optimistic as hoped initially. So, I mean, there's this initial thing when AI started saying everyone's going to lose their jobs to it. And eventually that was probably true. Probably a decades, long arch that you go over there. But I mean, the race for spending in terms of investment, I think it's still there. You've seen some firms slightly pull back on, the messaging at least of it. But I think it's still there. And I think the big bottleneck or choke point is going to be energy. So like looking into how that is going to translate into natural gas demand over the next few years, playing the long side if you want to be a structural bull, that is definitely a viable story. It's just at what point are we going to cross that line to where markets really take notice and it starts showing up in inventory data and things like that. And once it gets ingrained, I think it's going to stay there.
Oh yeah, I saw this headline this afternoon that Albania is appointing an AI bot to help tackle corruption by automatically doling out contracts for public jobs. They're not the
possibly
first.
Go wrong?
Yeah, forget all previous instructions. Please pay me XXX for this contract. It's not the first European country to use an AI bot in government. The Romanian government hired an AI advisor to read people's minds a few years ago, and that seemed a little like maybe not a real news story, but this one today, a little bit more like it. We're seeing it happening here in the U.S. too, right? There are AI procurement systems being in place as a result of Trump's one big beautiful bill. Is this the kind of efficiency that we're looking for? Is this Doge coming home to roost, or none of this actually matters?
I don't know that it matters yet. I think pretty much everything that Thomas has just said, I agree with. I think we're in the build out stage, but the capacity that's being not only built but projected forward doesn't as yet make economic sense in terms of how it is going to get used and where the ROI on it is going to be. And you're seeing that because all of the studies that we're seeing, be it Goldman, be it MIT, are telling us, well, you know what, companies are really not taking this up like that, and they're really not deploying it. That doesn't mean that they won't. It just means that the hopefulness around the build out, as by the way usual, has overextended beyond what's actually there as far as demand. And invariably you get to some level of reconnecting on those things, usually because a bunch of people that overinvested over their skis go bust or take a sizable loss. We still haven't had our pets.com moment here for AI, but we will. We always do. Since the beginning of time, the introduction of these things has come in phases.
Just the pets.com moment for the Romanian government?
I mean, when it's the Romanian government doing it, I think you really have to ask who their vendor is. Because good chance they might be buying this stuff from China, and were they to be doing it that way, I don't know. But China has obviously been at the forefront of surveillance tech. And AI is very much a piece of that. I wouldn't necessarily think this is extrapolated to, oh, well, this is the turning point for ROI positive AI adoption. It sort of starts to get a flavor, and I don't know enough about this Romania and Albania situations to downplay them, but it starts to sound a little bit like Nayib Bukele and building a crypto city in El Salvador. Yeah, okay. Okay, man. Cool.
Oh, that's why Dylan's not on the show. I just posted a picture with him and Guy Adami getting drinks in Italy. Okay. Cool. All right. Yeah. Appointing an AI minister is one thing. Listen, the jobs, I always go back to what's happening in the labor market right now with recent college graduates. where the unemployment rate for college graduates, particularly for men, is starting to rise above those with only high school diplomas. Those in the STEM field, right? Last month, we saw the major tech companies' job listings coupled with overall firings, layoffs related to AI numbered around 10,000. It's a lot of people.
Yeah.
It's not nothing.
It's not nothing at all.
So if you know someone who's entering college, do you tell them to still go to college, or do you say do something like go to HVAC school or become an electrician?
Do HVAC schools have fraternities?
No, I think you tell them to go to college. Because I think the biggest premium after AI is human ingenuity.
I see. I think college is more important now for networking and meeting people in a certain social and economic and financial sphere of life.
And for learning how to have original thought. So I think it's less important to learn how to code. It's more important to learn how to write a really great essay.
I think it's more important to learn how to socialize.
That too.
That like to me is the whole point of college, like learning how to socialize and get along with people that
how to speak publicly, how to engage with people.
Put 55 guys in a fraternity house with no laws and see how that sorts itself out, like Lord of the Flies.
There you go.
Right? Like
there you go.
That was more meaningful education than anything in the textbooks, because quite frankly, they didn't teach any of this stuff in the textbooks about interpreting presidential tweets and how it pertains to Fed policy, which I suppose is a way we can go out. President Trump here is going to the Supreme Court to get Lisa Cook fired, requested an emergency meeting on Monday. So maybe one fewer Fed governor available for next week. But Lisa Cook, listen, if she's really this corrupt person that people say she is, wouldn't she vote for more rate cuts so the mortgages on all of her homes go down?
You'd think, right?
Huh. Hell yeah, Thomas.
See, you're thinking again. What has Dylan told us about this? You got to stop.
No thinking, just doing. And we're done here on Overtime. We'll be back tomorrow. No, just kidding. Next week, because it's Thursday. We're here every Monday through Thursday, 4 Eastern, 3 Central, right after last call. So for Ilya Spivak in San Francisco and Thomas Westwater in Chicago, I've been Chris Vecchio in New York. Good luck trading. See you next week. Come back for more, though, because Ilya Spivak's still here. He's with Macro Money.
See you there, everybody.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily, covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com. In the money. It seems pretty easy to understand. If I'm in the money, I must be profitable, right? Not quite. In the money is in reference to the option's strike price relative to the current price of the stock. An in the money option is an option which has intrinsic value. For a call option, that represents an option with a strike lower than the current stock price. For a put option, that represents an option with a strike higher than the current stock price. Being in the money is a good thing for long options. It's not so good for short options.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at Tasty Live.
If you missed the live show, here's our cherry on top weekly recap.
I made smash burgers, and well, I can tell you what I do. That's a game changer. I took it from TikTok. You freeze a stick of butter, and then you put it through a scraper. You know, one of those things, a grater.
A grater, cheese grater.
Yeah, cheese grater. And then you put a little butter on the, mix it in with the, you know, when you smash them. It's great.
Mix it in with Tony. You mix it in.
This is a second language. I mean, you take you freeze the butter. It's like all that, and you take the thing and you freeze the butter.
We are back looking at a stock market that has finally found some momentum. S&P 500 jumping higher to a record and actually managing to close near there in the wake of today's U.S. inflation data. So are we off to the races? Are we in the clear? How does this impact our positions and what we're trading going into next week's FOMC meeting? Those are the things we're going to tackle here on Macro Money. This is Ilya Spivak, head of Global Macro here at Tasty Live. And we'll start with a conversation about how the markets performed today and why, what the CPI data showed us. Take a look at a little bit more of the event risk still looming in front of us from today into the end of the week with the University of Michigan consumer confidence data and the inflation expectations baked therein, and wrap it up with a look at our positions, how today's action changed things, what we took profits on, what we took some losses on, and what we still have going as that FOMC meeting next week gets front and center. Let's begin here with a look at the performance today. Obviously, a much more spirited rise for stocks here, and a much more spirited one for the S&P than it was for the NASDAQ. 0.8% added for the S&P. NASDAQ up almost 0.6%. The S&P, as we mentioned just moments ago, breaking out to a new record high. The NASDAQ not so. The NASDAQ still testing its high from mid-August, incidentally in the wake of the last CPI report before this one, and not making an effort to really clear it. So interesting kind of sogginess here from the index that contains the market leaders. Of course, it is still up, but while the S&P broke to a record high, as did the Dow and the Russell, not so much for the NASDAQ. So interesting to consider, but certainly a risk-on day. Yields down a bit more, bonds higher, especially at the long end, the 10-year down almost 0.5%. The front end of the curve holding basically steady because, as we'll see in just a moment, today's data did virtually nothing for near-term Fed policy expectations for specifically next week's meeting, but there was a little bit more moving around in the longer end. Crude oil, again, back down toward the bottom of its range, but ultimately not going anywhere, still oscillating. And gold not really finding the kind of support you'd think from a dovish kind of read on inflation data. A little bit soggy, but ultimately not getting away from recent levels and more so consolidating than falling. The dollar a little bit softer, interestingly, more so against the euro, where there was an ECB policy announcement overnight where the Bank of the European Central Bank, signaled that they're probably done cutting rates. The yen echoing what we saw at the front end of the yield curve and basically flat. Bitcoin a touch higher in the sort of risk-on overall theme here, certainly emanating from stock markets. Yen, interestingly, steady because this is probably the most nakedly yield sensitive of the major currencies against the dollar, and it seemed not to find a strong lead today. On the week, we do have a decent Bitcoin rebound. Yen ultimately a little bit higher, the euro a little bit higher, but only just so. The dollar really holding impressively here, all things considered. Gold up about another 0.5%. The real big story, the strong push in stocks, needless to say, almost 1.6 in the S&P, 1.4 in the NASDAQ, and the sell-off for rates at the long end and the push higher in long end bonds. That's really been the story of this week, as though the markets are sort of envisioning rate cuts downwind beyond what we're about to see. In fact, as we can see here at the front end, yields actually came up a little bit, whereas last week we can clearly see both the front end and the long end were looking at significant adjustment north of 3% apiece in a more dovish direction. So what was it that this data that we saw here? It came in exactly on the screws. Core inflation 3.1%, headline inflation 2.9%. Now, these were not sort of in absolute terms good figures in the sense that we're again above the Fed's target and moving ostensibly in the wrong direction. 2.9% would be the highest since January. 3.1% matches July, but that July was the highest since February. So you've essentially seen the core rate match a 5-month high, and the headline rate set a new 7-month high. But I think the important thing for the markets here was that it wasn't worse than expected. It was right on expectations. If we look at the breakdown here, we can see we do get the rise from 2.7 to 2.9 on headline. We get the hold at 3.1 on core. The bulk of inflation, not surprisingly, still sitting in the service sector. But notably, the changes in the mix here start to get interesting. Let's step aside for a second and gloss over this rise in food because the Fed can't do much about the global cost of food, though, of course, there seems to be a tariff influence here. Certainly when you start to consider, for example, a 50% tariff on Brazil, the source of coffee, then things start to get interesting, especially considering that the U.S. actually has a trade surplus with Brazil, but not in coffee. And so maybe this is a part of that equation, though, of course, there's been a global rise in food prices more generally, and that's a part of this equation, too. On the energy front, things are basically unchanged. We're sort of hovering, and that echoes what we've seen in crude oil itself. This, however, is noteworthy because clearly services here are going in one direction and goods in another. And that may very well speak to an economy that's broadly weakening and straining under higher costs because, of course, services are where most people work. Services is by far the larger contributor to the economy than any other sector, and most of it is serviced by domestic firms. So this is supposed to be the largest component of inflation just because more economic activity is baked over here. But also, this is where the consumers are. And this is where the tariffs are. And so this dichotomy here is certainly something to keep a close eye on. In fact, if we look not at the aggregate contributions, but at the change in those contributions, we can see core services actually saw disinflation in August. Goods rose again. We do get that slight rise in food, the slight rise in energy, and what seems to be occurring here, if we look at the trends, is a kind of sense that the goods side is starting to get a little feisty. So on a monthly basis, as we can see from the top panel here, this is the third consecutive month that goods inflation has gone up. It's also gone up by the largest margin since January. So there does seem to be something of an escalation here. And then if we look at the year-on-year rate for goods inflation, that comes in at 1.49%, which is the highest since June of 2023. So we're looking at a more than 2-year high on goods inflation. Whereas services inflation, and that's the middle panel, that's been going down now for 2 months and has barely budged this time. Moreover, if we take a look at what's going on here year-on-year terms, we see that services inflation is really kind of anemic. It hasn't really gone anywhere in a few months. It's certainly rebounded somewhat from the kind of minor swing low in March of this year, but on the whole, since the beginning of the year, it hasn't really gone very far. It's kind of pinned around that 4%-ish rate. And so the story does seem to be shifting here, and the makeup of what's going on seems to be shifting. This didn't really have a material impact on Fed policy expectations for next week's meeting, and shock of shocks. As we can see here, yesterday we had a well over 90% chance that we're going to get one cut. We can see that that was the case a week ago as well, so we haven't had much movement here. Today we're a little bit more convinced that we're going to get that cut fractionally. Not really anything that makes or breaks the story, surely. We've gone from maybe 93% chance yesterday to 95 now. Not exactly a strong bit of additional conviction. If anything, we moved away from a 50 basis point cut slightly in the direction of a single move. And so that's where we are for September. Today's data really doesn't create waves here. The larger issue continues to be the now increasingly building probability that there's going to be a third cut. So you can see here that while the Fed has only accounted for 50 basis points for this year, in fact has argued for that 50 basis points basically since December of last year, the market now is at 64 basis points. And that would essentially mean that we've gone 14 basis points beyond 50 in the direction of a third cut. Now, if we consider the likelihood here, this essentially means that a third cut this year is now slightly better than even odds at 56% chance. And if we start to kind of fiddle with adjusting for the dates of the meetings, the October meetings at the end of October, it's on the 29th. We're looking at that second cut there with a probability very convincing of 82%. And then for the December move, the likelihood of that third cut now is more convincing at about 77% once you kind of take the sequencing into account. So the markets have narrowly started to believe that a third cut is likelier than not. Moreover, for next year, the gap remains yawning. We've got 73 basis points on the menu, so kind of rounding errors aside, the market is looking for 3 cuts. This is now a much more dovish outlook on the whole than the Fed has actually accounted for. So here's the latest Fed forecast. We can see from 4.4, the median now, down to 3.9 gives us 50 basis points in cuts. Then for next year, down to 3.6 gives us 1 more cut. So the Fed has accounted for only 75 basis points between now and the end of next year, whereas the markets, again, as we can see right here, are aiming for almost double that. And so what we're looking at then is significant disappointment risk if the Fed doesn't come the market's way. And that perhaps starts to explain why the front end of the curve really didn't do anything today. Because this next Fed meeting isn't really the object of speculation. The question is what happens next. And with that in mind, there's one more piece of data that we have to contend with this week, and that'll be the University of Michigan Consumer Confidence Report. Now, the expectation is that we're going to get a little bit of a come down on all of the components here, including baseline sentiment, though that's expected to hold relatively better. The biggest drop-off here seems to be, at least as far as expectations go, that front-facing index here that looks at where consumers expect things to be heading. And this is really much more important, perhaps, than even the CPI report for Fed officials. It may not react that way in markets, we'll see, of course, but Fed officials have been pounding the table, screaming that they will not allow what they still think could be a one-off increase in inflation because of these tariffs to become entrenched and to take the Fed in a longer-term way off their target. In fact, with inflation now hovering around 3%, that the Fed is going to cut rates seems to necessarily say the Fed thinks inflation will recede. But they are not going to endorse an expansive easing cycle to follow if they think there is a risk that inflation is going to once again become sticky because consumers start to bake it into the cake beyond this shock downwind. Now, we already saw that basically this consumer sentiment index is a function of inflation expectations. In fact, it's been that way since we've come off of COVID. We can see here sentiment was deteriorating as inflation expectations were rising into the middle and the second half of 2021. This is where they peaked as the Fed clearly signaled we're going to start hiking rates to beat this inflation down. Once they really get to going on that, we start to see sentiment improving as inflation expectations come down. We ultimately get them down here to this low of 2.6. Then, of course, as the year begins, this is the start of this year, we get a surge in inflation expectations, and so not surprisingly, sentiment craters. The bottom in inflation is also a major turning point for sentiment. And that's, of course, having to do with these tariffs. Now, we see that once the tariff shock starts to abate, having peaked in April with Liberation Day and its immediate aftermath, sentiment starts to improve a bit. But the trend is down because inflation expectations are up. And we see that last month, or the last time that we got this survey, inflation expectations started to go up again because that pass-through of inflation costs that we saw in July's PPI data, it's a little bit different in August. Margin squeeze took that number down. It's debatable whether that's a good thing as far as consumers are concerned. But at least for the moment, August's data told us consumers saw inflation expectations rising again, ostensibly because they saw that inflation coming and appearing on actual store shelves. And that was a move in sentiment lower across these indicators. So the question now likely to be, if inflation expectations jump and they keep going higher from the 4.8 that we just saw, does the Fed feel comfortable not so much in doing this cut, but in extrapolating forward still more of them next year especially? Because if the Fed sees that consumers are getting concerned, then it isn't going to compromise its credibility by allowing inflation to build, especially in expectations. In fact, this was the early tell in the second half of 2021 that the Fed was going to have to get off this inflation is a transitory thing song and dance and actually do some hiking. It was the appearance of inflation in these consumer inflation expectations that was the first tip-off that the Fed was wrong. And so when we look at this now, and sort of given how forceful the Fed has said we are not going to allow this to get sticky, not like last time, it seems like the path of least resistance is for the Fed to be cautious if this goes the wrong way. Now, we've done this over the past several days, but we'll do it again. Just how much easing is still on the menu is obviously a huge influence on price action. Because we can see here, since the beginning of the year, there's the spot where stocks, this is the S&P 500 here, take out their range and start to trend lower. As we can see, policy expectations move in tandem. They likewise bottom at the same time, as it appears that the White House has a sense of market discipline, and once they spook everybody from mid-February into early April with this tariff rollout being a growth risk, which is how you get the S&P 500 and policy expectations moving in the same direction. Once they sort of figure out that the markets think all of this is being done in a way that endangers the economy, they step back. The president says the bond market is getting yippy. There's a 90-day pause on tariffs, and the panic eases. Now, we can see the growth risk receding in policy expectations, but that stops here in mid-May. From there, we get more dovish. That also lines up very neatly with where we end up in stocks at the same time. We recover exactly to the same spot where the sell-off on growth grounds actually kicked off. Then, naturally, one has to wonder, well, what about the rest of this stocks rally? Well, it appears to be moving inversely with an increasingly dovish outlook on monetary policy. The idea that whatever risks you may be thinking about, valuation mismatches, AI hype running out of steam, 2 wars ongoing, whatever you like, uncertainty about the tariff regime as the Supreme Court weighs it, doesn't matter. Name your risk. There's no shortage of them. But all of those risks are much more digestible if money is cheaper. Because then if you get one of those things wrong and you lose some money, then it's cheaper to borrow it back and go again. So it isn't shocking, seemingly, that you have, with this increasingly dovish outlook, after whatever shock, and not on its grounds, but clearly for other reasons, that on this basis you have a building in risk sentiment. In fact, if it were for the same reasons, stocks would be going down at the same time, but they're clearly not. So the markets clearly think the easing is going to be risk positive. Now, if suddenly we end up with a situation where inflation expectations are doing the opposite of what the Fed said they're going to ensure is going to occur, well, then getting this forecast here for 75 basis points to look more like this forecast, almost double that, is probably not a strong sort of case to make for Fed officials. And ostensibly, they don't have to do it all at the same time. The markets would just need to see some movement in their direction. Let's say a forecasting of 50 basis points for next year instead of just 25. At least some momentum in the direction that the markets are attempting to pull Fed officials. But if that doesn't happen on inflation expectations, well, then maybe it doesn't happen. And then we have ourselves something of an issue. Because then some amount of this, whatever amount is contingent on this, looks wrong. And perhaps the dollar is sniffing that out already, because it hasn't made a new low since July, despite all of these dovish prognostications that were showing up in Fed funds futures and certainly empowering the markets as we see today. Now, a quick update on positioning here. Obviously, the S&P 500 broke higher today, so I took that position off at a small loss. We also had the surge in bonds today, and that was coming up on expiration, just 8 more days to go. So I took both of them off, and happily, the bond position made 3 times what the S&P position lost. So risk management worked there. I still have a little bit of exposure to the long side of the dollar as it continues to bottom. Clearly, the Aussie was not a case of that working today. So that was actually the more painful of the positions that I took off today. But so it goes. A little bit of a loss there, though we end up the day in positive overall because that bond position really did come together after almost 80 days of holding it. Then we still have a little bit of long exposure to Brazilian stocks, but this is a long-term thing aiming for year-end. Not much there. Still long gold, which didn't really hurt today either, but also didn't make a big run. And still a little bit risk off in those assets where there was no break like there was in the S&P. NASDAQ didn't take out its high, and Bitcoin didn't really make a concerted break out of its setup in the direction of maybe downside continuation either. So still have those. With that, we have macro money for today and this week. As ever, we are here Monday through Thursday, right after overtime, a show that I co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and where things may go therefrom. Likewise, writing for the news and insights portion of tastylive.com, commenting at Ilya Spivak on former Twitter and on Blue Sky. If you're watching this on YouTube, like and subscribe. Macro Money is back next week. Happy trading.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Forbes called us best online for options trading. With stockbrokers.com, we're #1 for options and futures trading. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
He gets to break as many computer mice as he wants. He can just smash as many as he wants on the table.
If you had to swap jobs with anybody in this office, who would it be and why?
I would like to swap roles with Vanetta for a day, just so I can, talk smack about Tony and Tom for like a full hour in the morning. That would feel kind of nice. Just like a roast to start my day off.
Oh, God. That's a good question, actually. For a day? Forever?
Ever.
Forever? Oh, no. I mean, Tom has a hard job. He's got to wake up really early. But he gets the privilege that he gets. He gets to break as many computer mice as he wants. He can just smash as many as he wants on the table. He can pretty much yell at anybody. He gets first dibs at the lunch line. I think I would, maybe Tom, but I probably wouldn't last very long, yeah.
Probably Dylan Radigan, because he lives in Italy. And I live here in Chicago, so yeah.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
People are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here.
And everybody's waiting for my podcast tomorrow. Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast.
Option Trades Today. Are you listening to me? Option Trades Today comes out every day around noon, every Tuesday and Thursday. You too can stick with the bat.
What is going on, everybody, and welcome back to another session of Risk and Reward. Today's Thursday, closer to the end of the week. We've had CPI this week. We've had PPI this week. How are we holding up so far, Gus? How are we doing?
Doing all right. UNH just keeps on pumping and keeping the portfolio afloat, and then Paramount Skydance just keeps on making good moves. I think that they said that they're looking to acquire Warner Brothers today, as I recall, but they're up big on that news. So the two, I would say, like highest risk profile trades I have on right now are UNH and Paramount Skydance. Both just naked calls, long-dated naked calls, and so both of those have been ripping, and it brought this week. Well, we're not at the end of the week yet, but they're bringing this week to a nice close for me if things can stay where they are.
Nice, love that for you. I'll live a little vicariously through you, especially on the UNH move there. But UNH still going strong. Hope everybody else is doing well. Hope everybody else is doing well in their UNH positions. Today we have a little bit more of an interesting topic today. We're going to touch on AI, of course, not a surprise here, but some of the effects of AI, especially with the younger children. Was this a topic that you ever pondered on yourself, Gus? Just with seeing AI, recognizing certain tech that we didn't have as a young kid, seeing how we would have used some of the tech as a young kid if we had it then, but also we never really talk about the other side of things. So excited about this topic for today.
Yeah, I never really considered it in the context of children. I don't want to get too deep into my talking points for later here just yet. But I'd never considered it too deeply, specifically in the context of children. No, I'd obviously considered the dangers that these chatbots could have, and we've done whole segments before about how parasocial relationships are at an all-time high, and these streamers, children are really forming what they believe to be personal relationships with these streamers. But I never really stepped back and thought about it in the context of children. I'll be honest, I don't really think about the implications on children with most things. I am a 23-year-old single single childless male, so it's not children usually aren't on the very forefront of my mind, but there are definitely dangers here, especially with how imaginative kids are. And yeah, it's an interesting topic and something I'm excited to get into.
Yeah, let's dive into the first
time where I
slide.
agree with the government as well. We're about to talk about a rare time where I am going to say the government made a good move.
Yeah, no, so. I mean, even pondering on the topic for today, I was thinking along the same lines, pretty much. Like, we always hate when the have to step in some way, because I just think about how we're in a free market. So it's like you can produce the most amazing tech products that you can produce until it starts to hurt the masses for whatever reason. But an interesting angle to talk about it. So are chatbots dangerous for children? Let's get into the first slide. Take us away, guys.
Let's dive right in. Yeah, so today the FTC announced that they are issuing orders to 7 high-profile companies. So we're going to outline those companies a little more deeply on the next slide about the potentially harmful effects of their chatbots. And more specifically, they want the FTC isn't directly investigating the harmful effects of these chatbots. They are instructing the companies themselves to internally investigate these things. Alphabet, Meta, OpenAI, XAI, and Snap, which is Snapchat, are among the companies named in the probe. Another one that was in there that I had heard of before, I've never used it myself, is called Character AI. I guess it's pretty popular among kids. You can like pick different celebrities and people like that to talk to. I shouldn't even say pick celebrities. You can pick AI chatbots that are meant to emulate the speaking patterns of celebrities to talk to. And yeah, the FTC is primarily concerned with the effects that human-like communication and interpersonal relationships may have on children and teenagers, childhood development, developing social skills. And this has, been a thing. We'll get into it a little bit more later, but, the interpersonal relationships have been on the rise as of late, and also in-person communication has been falling off for some years now, and that already is hurting childhood development skills, so it's interesting.
No, it is, and I forget who brought up this perspective one time, but I brought up the perspective about how there's going to be a lack of social skills being developed because of the fact that we have all this tech nowadays to not have to communicate as much as we used to. Somebody brought up the point one time that some people are communicating more than they would have originally with the use of a lot of these tech and a lot of these tools that we have nowadays. I know we have things like Discord.
This was a discussion that you and I had, and I would bring up the same counterpoint here, which is that I think that communication is certainly at an all-time high, but I think the connection is kind of falling off with it, which is interesting.
That's a great point.
That's one way of looking at it. But yeah, I think that with the rise of digital communication, we are seeing personal connections sort of suffer as a result of that.
Yeah, very ironic considering the topic today, because some is making personal connections through tech. We'll jump into the second slide there.
It's true. And it absolutely can work the other way, too. I'm not sitting here just talk down on technology. Last year, I went to a wedding of one of my gaming buddies that I've been playing with since I was 14. It was the first time I'd ever met him, and it's awesome. And that's something that a connection that I never would have made without technology.
Met them in real life.
Yeah. It was really, really cool. Yeah, flew up to Boston for it, whole thing. I'd known the guy like 8 years, but it was our first time ever actually, seeing each other in person, and it was for his wedding, and that's cool. That's a friend I never would have made if technology and digital communication did not exist. So it absolutely can work both ways. But and I'll elaborate more on this later. But it's like there's a reason. When you're in 6th grade, it's easier to text a girl to ask her out than it is to do it in person, and it's because face-to-face communication does carry some weight. It is that important. Lord of the Flies. I hate to give any credence to that book because I was so annoyed when I had to read it, but it's true. When you take the face-to-face element out of things, it hurts communication.
I mean, it sounds like the root of it is fear of rejection. Because if I think about it, fear of rejection can look like many different things. Can fear of rejection be like not getting the response that you hoped for? Missing the mark on your expectations, or you didn't get the reaction that you wanted, or the feedback that you want, or just whatever it might be. I know we'll get a little bit deeper into these topics as we ponder on these other bullet points. We'll go ahead and jump into the next slide and go from there. But the FTC wants to know what steps these companies have taken, if any. And that's one thing I was wondering. I was like, if these companies are going to investigate themselves, I might walk up in there too, we checked, we're all good, all clear. We're not doing anything that might be harmful. So protecting kids online is a top priority for the FTC, and so is fostering innovation in critical sectors of our economy. So that's where it gets kind of funny too. It's like, we got to be extremely creative, right, in a free market, but at the same time, it's like, it feels like there's now a little bit of guardrails there, and of course, we're going to have to step in whenever it's needed. But broadly, the FTC is worried that these companies are getting caught up in the chatbot race while not considering the negative consequences. I mean, Yes, that might be the case, but I would say that's the case for pretty much any founder in any literally almost every single industry. I would say this is the same type of human behavior that we typically see. But I just think that AI kind of cuts a little bit deeper than a lot of the other tech that we've originally seen.
Yeah, I mean, I think as time has gone on too, we've just gotten. I think you make a great point. I should lead with that. This absolutely happens in any industry, anything that's new and exciting and buzzing. You know, these companies lean more and more towards not considering the consequences and only considering the future and the profits and all these things. But I think that we as a country and as a government have just gotten a lot better with time about jumping on that sooner and sooner and sooner when we can start to see it happen. Because you know, I mean, we had you go back 100 years and Standard Oil is a monopoly, and they got 8-year-olds working in the oil field and all this good stuff. And it took decades before anyone stepped up and was like, hey, we should maybe do something. The government should maybe step in because this is clearly a monopoly. And now, you know, we're only a few years into the advent of AI here. And I would say only probably 2 years into like chatbots being a super duper mainstream thing that everybody is consistently using on a daily basis, maybe less than that. And it's only a growing number of people. So I think that this is pretty fair timing for the FTC to step in. And it is very important to protect children. I agree. We should never be advocating for making profits and advancing the future of technology over children.
No, I mean,
so I'm with this decision for the FTC. Yeah, I mean, I think it's the right call.
Yeah, I know.
And especially with how accessible some of these things are and how low hanging it is. Like the Snapchat AI is crazy. That's been around for some years now. But I remember me in high school when that first popped up. I was like, who is this? Who is this?
The
person?
Snapchat AI.
Yeah, and I was pretty quickly able to figure out, oh, you know, it's Snapchat AI, whatever. But if you're 7 and you're on Snapchat, which 7-year-olds
you might be
probably
like, "What's up,
on
bro?"
Snapchat to begin with, but there absolutely are many out there who are. And all of a sudden, there's this person just talking to you that's incredibly agreeable and well informed, and you might not even ever put those dots together. It might take you a while. So it's yeah.
And to the point that T-Port made over here in the chat, he had just said that the human mind and the child's mind is a lot different. And I mean, I think especially with individuals that are in their 20s, especially after each year in your 20s, I think you start to recognize how much those younger years really do shape you. And I think you learn so much more about yourself as you get older too. Like, especially for myself, I know sometimes I'll do something and I'm like, whoa, that really reminded me of my dad. Or, oh, that really reminded me of my mom, whatever the case might be. But we're just so completely different. But when I really look back at these things, the things that were said, the environment that all of these things really shape your mind on a deeper level than you might realize as you get older.
Yeah, it is really funny. And I joke all the time, like I'll all of a sudden come to some broader realization about like my entire life or my childhood or why I act a certain way or a different person acts a certain way. I always say the joke like, oh man, my prefrontal cortex is finishing. Like I can tell that it's finishing developing. But I mean, for real, like as you progress through your early 20s, and that does actually happen, your prefrontal cortex actually does finish developing around that time. All of a sudden, I'm like, you know what? Maybe 21 is the right drinking age. Like maybe this is a really smart thing. Maybe, you know, it's all these things. Maybe we should raise the driving age to 18. That does seem to make a lot of sense to me. So, you know, funny little things like that. Bob, with positivity for Lord of the Flies. Look, I understand the nuance of Lord of the Flies and the psychological take that it has on human nature and everything. Just kind of felt like it was forced when I had to read it in high school. You know, like I felt like the whole book is like, I don't know. I like Great Gatsby more.
Honestly, all the books I read in
American high school literature goes, I'm a Great Gatsby guy.
I don't know. Great Gatsby's fire. But no, I was going to say, you know what? All the books felt like it was forced. But I take that back. You know what? One book I really did enjoy. I don't know if you read it, but it was Hatchet.
Hatchet was fire.
That was a great book.
Middle school type vibe.
It wasn't.
That book was
I read it in middle school. I tried to sneak it in there, but it was middle school. Fire book. Fire plot.
Hatchet was excellent. I think I might have just read that for pleasure in like 5th or 6th grade. Actually, I don't know if that was ever a like sanctioned reading activity, but anyway,
we can jump to the next slide here.
Jumping over here. So here's what the FTC is specifically looking for as they dive into these investigations. They're seeking more information about how companies develop and monitor user engagement, develop and approve characters, users share personal information, monitor and enforce compliance with company rules in terms of service, and then most critically, the point that we've been talking about this entire time, mitigate negative impacts to users, particularly children and teenagers. So that's just a quick synopsis there of the other things that they're looking at, which leads us into our final slide here, where where we are going to raise these questions, and this is where I will actually start saying all of the things I've been saying I was pushing off until later. But I'll kick it to Errol for this slide first.
No, but I mean, are chatbots really dangerous to children? Children's social skills have deteriorated as digital communication and virtual interactions have grown more prominent, as we've seen in society. And if you're a parent, you might have seen these things firsthand. Interpersonal relationships are at an all-time high among children and adolescents. This is something that has always occurred within younger individuals. I remember even one of my younger siblings. One time I had said something about some play friend something, and it caught me off guard for a quick second. I was like, oh, this isn't just out of the movies. Like sometimes people develop and a week later, never heard of it again.
Imaginary friend. I'll step in. Yeah, I had one. I'll talk about that later. You can go on. I had one.
Absolutely. When I seen that firsthand from my sister, I was like, oh, it really just gave me, it just reminded me how young and impressionable kids are. I think as we get so much older, we forget where we once grew from, and it made me just recognize how sensitive these minds are. I forget the point I was getting to, but let me finish these bullet points. Children are inherently imaginative and have underdeveloped critical thinking skills, which I would highlight as one of the most important bullet points. And then there are a growing number of adults that have formed uncomfortably close or even romantic relationships with chatbots. So younger individuals are more prone or more susceptible to being manipulated. And the question at large here is, can an AI, a chatbot, manipulate a child? In my opinion, absolutely. I think these are great issues to start having, great things to start investigating, because I see certain, I don't know if you've read these things, but even into adult years, these chatbot things can be very interesting. I think even with the adult mind, there are cases where these interpersonal relationships are also being developed. So if that's the case, we see that even with brains that are a lot older, above the age of 10, above the age of 20. It's like anything below that I think is even more impressionable if people are still building these interpersonal relationships with these type of tech.
Yeah, absolutely. Something that comes to mind right away here, I'll tell the imaginary friend story in a moment, but really weird comparison to make, but I think it's a really sharp one here, is Furbies. You remember Furbies? I don't know if Furbies are still around.
That is ringing a bell. That just struck a chord. Help me remember.
There was like a little talking stuffed animal thing, and you could talk to it, and it would talk back, but it had no intelligence or anything. It would kind of just say like generic pre-done lines, but it had like 100 lines saved in there. But you hand a 5-6-year-old a Furby, and they will think that thing is alive. So I can only imagine what you're getting into when you have a full sentient, so to speak, chatbot that is communicating directly with you, is actually responding directly to what you say. That does get really dangerous. I mean, we've talked about on here before. When you're a kid, you think the stuff on TV is happening behind the TV.
Right. I thought WWE. I thought people were getting the SmackDown low key when I was young.
I thought Dora was happening in my living room behind the box. I'd be looking
Blue's Clues. I thought that
exactly. Yeah. So you're talking about that level of critical thinking skills, and then suddenly you have to interpret. I couldn't even explain what's it called? LLM.
Large language models.
Large language model. I was looking for. I was going to say limited language. LLC, I guess. Anyway, LLM. Yeah, I can't even comprehend a large language model. I couldn't really effectively explain it to someone, or machine learning, or all of these things that go into creating these chatbots. So trying to explain that to a child, or even more exaggerated in the case where a child is trying to rationalize it themselves, I just don't think that that's going to compute. And as I said earlier, I had an imaginary friend when I was a kid. His name was Coyote. I don't know why that was his name, but it's a true story. And when I was like probably 3 or 4, I don't think he was really around anymore by the time he moved to Ohio, and I was like 4.5, 5 then. But when I was real young, I had an imaginary friend, and I totally, fully thought he was real. It was like not even a thing. It was like, this is a real person. Which, if an adult starts saying that, it's schizo. But when you're a kid,
everything's fine. It's cool. It's fine when you're a kid, but all of a sudden I get older, it ain't okay. People are asking if I need help.
You keep your imaginary friend until you're 25, and suddenly
it just shows I'm consistent and I'm loyal. I keep the same friends. I'm loyal. No, but it reminds me of not too long ago. I went to a baby shower. One of the kids there, he might have been 5 years old. I think I brought this up a few weeks ago. He might have been 5 years old. We were talking about the topic of AI and how real some of these things are. I think it was the bunnies jumping on the trampoline. I know all of y'all got. I know everybody in the chat section. I know we've seen the video of something on the trampoline, and it's jumping, and it looks real. We find out it's an AI video. we continue on this topic of AI, and I think he might have been 5 or 6, but he brings me his phone. First of all, crazy. 5 or 6 years old, has a cell phone to show me. Crazy. I know. Shows me the phone. It's a cat. And he's like, can you believe this is AI? Look how crazy AI is. And I'm like, yes, I absolutely can believe that's AI. It looks so fake, right? But I just humored it a little bit. I was like, wow, that's crazy. AI is getting crazy. But just to see that in the moment, just again, highlighted how innocent and naive the young mind is and these children are, because if he thought that was real, I just can't imagine and everything else that these AI models are producing nowadays. I mean, it looked like a drawing. I don't even know how to describe it. It just threw me so off. I also think that because we had that conversation, this is why children's minds are so complex. I think also it looked more real to him because he heard adults having a conversation that AI looks so real. So it's almost like he had to act as if this is so real as well. And I'm just like, what is going on in the brain? Does it now look more real to you? Does it not? Whatever the case is. But this did get my brain going and just thinking a lot after that incident.
Oh, absolutely. And bye, big deal. Have fun with your nephew, by the way. Meant to throw that one out there. Yes, but absolutely. Yeah, because this is only the chatbot side of things. I mean, this isn't even getting into images or, the broader social media picture, what children can stumble into there or see and believe is real. And man, I'll tell you what, I have seen recently, like in the last week, 2 videos where I had to get to the comment section before I fully realized that it was AI. Like I was sussed out because it seemed to be unrealistic, whatever was going on in the videos, and I went to the comments to confirm my suspicion rather than completely blind. But things are starting to get convincing enough that I am almost fooled. And if the videos that I were seeing weren't of such irrational things, because one of them was like an elephant doing tricks. I don't know if anybody's seen that one recently, but there's a really, really good one right now of an elephant doing tricks, and it's like there's a trainer woman standing there, and it's giving the elephant commands, and elephants are very smart animals that are, honestly, usually abusively, but can be trained. So all the points are there, and she was having the elephant do these tricks, and there was like 3 of them where I was just like, wow, this is a really impressive elephant. It could roll over. And then
this is a flexible elephant. Yeah.
Yeah. No, the 4th one, it stood up on its hind legs for a minute, and I was like,
that's when you're like, all right.
Yeah, and I was like, okay, I don't think elephants just do this. If they do, I don't think you could train an elephant to just stand on its hind legs and chill, but it was doing it. So then, I had to go to the comments to confirm. But if it cut before that 4th clip of the elephant doing the unrealistic thing, I probably would have just continued scrolling and been like, wow, I can't believe they can train elephants to do that. And that's how misinformation happens. And AI is very dangerous.
And that's how misinformation happens. Fast.
Yeah, and I am a grown man. So I cannot imagine if I were a child with a sharp lack of critical thinking skills, what I would have thought stumbling across that video.
I mean, exactly. I mean, the comment section is such a lifesaver sometimes. Like, what I thought was so hilarious is I found another video. It was the same trampoline video, but it was a different animal jumping on the trampoline. And then someone in the comment section was like, I'm not falling for this one because the bunnies jumping on the trampoline got me last time. And then someone commented underneath that talking about those were fake. Like, all those have been fake the whole time. So sometimes that comment section can come in clutch and bring you back to reality.
The pictures can be even crazier. I saw one recently where a guy prompted a thing and it said, make me a picture of a Royal Caribbean cruise ship, but make it blurry as though the person was moving while they took the picture. It should be hyper realistic and indistinguishable from a photo taken on an iPhone. And the output was like insane. I mean, it was so perfect. You never would have known that it wasn't a real picture before. Bob, to your point, this is another great one. AI stuff that I'm most concerned I'm amazed at that I've seen are sports press conferences where the athlete or coach says crazy stuff. Yes, those are absolutely on the rise as well. And honestly, as it stands right now, if we were never to advance any further, I kind of think they're pretty funny. It's usually them saying pretty off-the-handle things, but that is incredibly scary, that side of things, because we could make politicians, foreign leaders, whoever, say whatever we want. And say you're North Korea, and you could make a video of Donald Trump right now saying, we are going to come at North Korea with full force and we are going to nuke them. And then you could use that on your populace to send them into a foreign country on some kind of invasion with completely false propaganda motivation that looks 100% real. And that's a very scary thing as well, not even just in the context of children. I'm talking adults, everybody.
No, I would say That is exactly what has probably. I mean, I wouldn't doubt that those type of things. There was an attempt at those type of things by some curious individuals, at least. But no, as we were getting into that, we're just going to do a quick run. I was just looking at some of these futures, doing a quick rundown on how the market was closing for the day, especially with all this AI talk.
Yeah, pop over. What you got?
Yeah,
Show me Peace Guy, man. Let me flex.
You said a piece?
No, I said a Peace Guy, like Paramount.
Oh, what is the Paramount ticker again?
That's what it is. Peace Guy. Letter Peace Guy. Yeah.
Say that one more time. What's the ticker?
PSKY.
Oh. That's what you said earlier. I was like, Peace Guy, what is he saying? Peace Guy. AI and Peace
Yes.
Guy.
Sorry. But yeah.
Let me go to this
Gap
5
City,
minute.
man.
There we go. It's not a nothing burger. We're ripping to the upside. Reminds me of Adobe too. I know we had some Adobe earnings after the bell.
Yeah, Oracle. I saw Oracle had a sharp drop today.
Oh, Oracle went ham the other day. I was surprised that.
Oracle.
Oh,
I wanted to do the classic earnings make it go up so I get short trade on Oracle, but I was like, man, Oracle is just too hyped right now for me to do this, and I regret not doing it.
I thought Oracle was going to be another one of those that kind of just drifted me along to higher highs or whatever it might have been with that short position. So I was kind of in a similar boat there. Other than that, we'll see what we get for tomorrow. It's been an all right week. I know one thing I wanted to look at was ES. If I'm not mistaken, I believe ES continues to put in more highs easier than NQ has been able to, which is really interesting to see. NQ trying to come to its highs here now. Let's see, we're selling off a little bit here now. ES closing strong. No. We'll see how the markets keep up with the rest of the week. We just got 1 day left. So is there anything else you want to add on before we start to wrap here today, Gus?
No, I wouldn't have anything else. Don't give your children a chat bot until they can think critically, I guess, would be my line of logic. And social media as well, and honestly, maybe just a phone in general.
I mean, I think
for coming to my TED Talk.
I think our generation is going to have to be really careful. If anything, I think our generation is most equipped to be able to handle these new types of technology that we have. For example, it's going to be our kids that are going to be growing up with AI out the womb. I mean, literally, it's going to be our generation that grows up with those things that our children are going to be able to have access to. So I think you've always had to keep young people safe, right? There's always been guardrails on all of us since when we were young, but it does make you think when we start having these conversations, because they're pretty real conversations that we're going to have a year from now, 3 years from now, 4 years from now, 5 years from now, whenever that is. I don't plan to have kids in the next year unless you do, Gus, but I'm sure we'll circle back around to this conversation within the next 5 to 10 years.
Yes.
Maybe
I'm sure. I don't think it'll take us that long.
Maybe you
to
do
be quite frank. I'm interested to see what this investigation from the FTC yields, how dedicated these companies are to actually holding up with this FTC order, and how deeply they're going to dive into evaluating their own safety systems. I mean, there's all types of things to unpack here as this situation develops and as AI continues to develop in general. Ben, to your point, yeah, P-Sky, UFC, that was actually my original thesis of why I bought it. That's why I have the year-long leaps that I mentioned, just naked calls. Steve Jobs wouldn't let his teenage daughter have an iPad.
Look,
Bang.
I mean,
that's sharp.
That's speaking volumes.
Another great one. Who could be a better judge of that than Steve Jobs?
Yeah. You know what it kind of reminds me of? Telling these tech CEOs to, pay attention to their company, do some investigation, seeing the effects of these things. It reminds me of the meme with the security guard where he's like barely patting people down, and he's like going. He's like barely patting people down, and then just lets them go.
But he's not touching them.
Yeah, that's what that's like. What this pat down for these companies is going to feel like.
I know what you're talking about. Oh yeah, and Jackson, to your point, I think AI is good. I don't want this to be perceived as though this is some kind of anti-AI.
Yeah, it's
broad
just too good. It's a little too good.
That's not what I mean at all. In the same way that I think the internet is good, and all of these things that I have vilified a little bit throughout the course of this stream are good. I think they absolutely have good applications. I think that they absolutely will advance the world further. But it's just you have to be very careful with what slips into the hands of children, because they are curious and sneaky, and they will figure it out if they have the tools to do so.
The definition of curiosity is children. So that's gonna wrap it up for today's segment. The AI talk. We'll see how that pans out. We'll see what these companies actually do anything, and then we'll see how the last day of the week plays out with PPI this week and CPI. That's gonna do it. Jackson, Ben, Bob, Sala, Grumpy Mike, Big Deal, everybody else. Thanks for taking the time to hang out with us. Be sure to stay tuned for more segments coming on next. We'll catch you guys next time. Peace.